market. More importantly, they continue to sell in index futures as well. So on Wednesday, they sold close to around 1,200 crores with a lot of long positions being unwound. What this does is the FII long exposure, if you remember at the start of the series, was 40%. Sometime last week, it went to about 30%, and now it's down to 22%. So the FII long exposure has been structurally coming down this series so far. But if the market moves higher, there could be a case for these shorts to cover their position. So the FI long exposure now comes up for you on the screen at 22%. Shorts are 78%. If we move higher, then are these shorts going to cover their positions or not? The question is, with the GIFT Nifty indicating a 450-point uptick, what should you do? Should you chase that gap up? Perhaps not. Why do I say that? Because the 23,000 call writers are still fairly active. So if the market crosses that 100 mark, only then will you see the elements of short covering. And Street is positioned for that with the purchase of 23,500 and 24,000 calls. At the same time, where the market opens has resistance in the form of the 50 and the 20-day moving average. So keep an eye out on that. We'll just watch out for a couple of levels. On TCS, the 3,700 call and 3,000 put have maximum open interest. So that's the range for today. And we have Nalco, which has entered F&O ban. So watch out for that stock.
Okay, Mangalam, thank you so much for that. But on that note, let's also look at TCS earnings. They kick-started the Q4 earnings season, this time subdued performance actually that came in from the company. The company's net profit and revenue came in below the street expectation, while the revenue in US dollar terms declined by 1%. And this was on a sequential basis. Rima is joining you with us to give us a fine print on this one. Rima.
So TCS, as you pointed out, it's a bit of a subdued quarter as the macro uncertainty lingers on. The company's constant currency revenue growth has declined by 0.8%. Dollar revenue is down 1%. So sequentially, revenues have declined for India's largest IT major. But revenues ex of the BSNL, according to analysts, has gone up by 0.6%. But where the street could be a little disappointed is the margin performance, because margins for the company have fallen by 30 basis points to 24.2%. And this is despite lower revenues on a sequential basis from the low margin BSNL deal, some productivity benefits. And the company's, when you can see the numbers, there has been an increase in the other expenses. So some tactical investments made by the company, which have hurt the company's margins. Margins on a year-on-year basis are down even more sharply, because Q4 of last year, margins were at 26%. So deal wins are quite strong. So deal wins for the company have actually gone up 20% on a sequential basis to 12.2%. BFSI is strong, but there is pressure seen in the consumer vertical. The company in the press conference has indicated that while the clients are not panicking, you are seeing, and there is no major impact per se in terms of decisions of deal ramp-ups or deal ramp-downs or cancellation. You are seeing delayed decision-making. So clients are in a bit of a wait-and-watch approach. And given the macro uncertainty, the company's also decided to pause on its wage hikes, which would have otherwise been effective 1st of April.
Well, thank you so much for that, Rima. But here is what the TCS management had to say on their FY26 growth and margin guidance when quizzed by CNBC-TV18. Let's listen in.
On last quarter also I mentioned that we said CY25, we expect this to be better than CY24. We still believe, based on the order book that we have announced and kind of deals we have signed, while there could be some short-term uncertainties, FY26 would be a better year than FY25. While till February we were quite positive, and we were seeing very optimistic about the quarter, we started seeing some amount of some uncertainty creeping in March, and resulting in some project delays, some decision making delays. We have not seen any major project cancellations. There are some ramp downs here and there, but there are some delays in decision making, and that's what we observe at this time.
Now stay tuned in for the management interview at 8:45 a.m. today on the Q4 earnings and the way forward. Okay, on that note, we'll slip into a very short break, and after the break, we'll get you what's happening in the world of commodities. So stay tuned in.
True. Also, uncertainty provides an opportunity, and we'll use this opportunity from a cost optimization perspective as well. Sequentially, the tactical interventions were about 100 basis points.
And what were they?
They were mainly linked to promotions, merit-based promotions.
Rima, the hiring we have onboarded 42,000 trainees in FY25, and FY26 number will be similar or little higher. Regarding wage hikes, considering the uncertain business environment, we'll decide during the year when to make that happen.
Welcome back. You're watching Power Breakfast on CNBC-TV18. US President Donald Trump announced a 90-day pause on the imposition of new tariffs. However, the baseline tariff of 10% remains in place for all countries, including India. Prior to the announcement, Home Minister Amit Shah expressed confidence that the tariff situation would stabilize soon. Let's listen in.
देखिए, असर का आकलन करने के लिए बहुत जल्दबाजी होगी। सिर्फ अकेले भारत पर टैरिफ नहीं डाला गया है, ढेर सारे देशों पर डाला गया है। हमारे कितने ऑप्शन खुलेंगे, अमेरिका में भी हमसे ज्यादा हमारे स्पर्धक है, वो देशों पर टैरिफ डाला गया है, तो इसका असर क्या होगा? हो सकता है कि हमारा सामान ज्यादा भी जा सकता है, कई सारे देशों में हमारे सामान जाने की व्यवस्था भी होगी। बहुत कॉम्प्लेक्स मसला है, इसमें इतनी जल्दबाजी में इसका असर का आकलन किसी को नहीं करना चाहिए। मुझे लगता है कि देश की जनता ऐसे पैनिक में कभी आती नहीं है, ये थोड़ा मीडियाबाजी होती है तो असर तो होता है, असर नहीं होता है ऐसा नहीं, मगर धीरे धीरे संभल जाएगा।
Okay, on that note, now it's time to go across to Manisha, who's waiting by to tell us what's happening in the world of commodities. Good morning, Manisha. Again, a lot of updates coming in from Trump, and this time a pause. So what's gold doing? What's happening to crude? Everything in the world of commodity.
Oh, well, absolutely. If you look at the gold prices, we are at an all-time highs yet again. $3,200 an ounce has been taken now. So absolutely, you know, every day it's a $80 to $120 of a move that you are seeing in case of gold prices. Unprecedented, clearly. We are in uncharted territories when it comes to gold. And all the concerns, whether it has been about trades and tariffs and China, geopolitical tensions, all seems to be playing well in case of gold. Gold actually is on track for the best week since November 2024. Also supporting gold is the weak US dollar index, the tariffs, and the safe haven buying as US-China trade tensions escalate. Crude oil prices, while are headed for a 4% weekly decline, prices still trading near 4-year lows. The markets have seen the US crude oil exports to China decline and the US crude inventories rise. That is what is weighing onto the prices right now. A quick word on copper, and we saw 4% of gains on Thursday as markets cheered the U.S. pause on reciprocal tariffs for 90 days for the world, excluding China there. Copper, while still is 20% off from its record highs, but expectations that China will now come out and unveil an aggressive stimulus measure is what is supporting the copper prices right now in Asia.
Well, thank you so much for that, Manisha. But, you know, that's all we have on Power Breakfast this morning. Don't go anywhere because Bazaar Morning Call comes up next.
I did a 90-day pause for the people that didn't retaliate because I told them if you retaliate, we're going to double it. And that's what I did with China because they did retaliate. So we'll see how it all works out. I think it's going to work out amazing. I think that our country is going to be at the end of a year or shorter, but I think we're going to have something that nobody would have dreamt possible.
90-day pause.
Well, I thought that people were jumping a little bit out of line. They were getting yippy, you know. They were getting a little bit yippy, a little bit afraid, unlike these champions, because we have a big job to do. No other president would have done what I did. Look at the bond market is very tricky. I was watching it, but if you look at it now, it's beautiful. The bond market right now is beautiful. But yeah, I saw last night where people were getting a little queasy. I think everything had Well, the big move wasn't what I did today. The big move was what I did on Liberation Day.
In a major reprieve for markets worldwide, US President Donald Trump has imposed a 90-day pause on the reciprocal tariffs for all nations except China. In the case of China, the tariffs have been hiked to as high as 125%. The list of countries getting a reprieve also includes India. But this is not a blanket reprieve. The baseline tariff of 10%, which came into effect for all nations on the 5th of April, will continue. It is only the additional tariff which had come into effect on the 9th of April, including the 16% additional tariff for India, that has been put on the back burner for the next 3 months. India is still hopeful of getting an early trade deal. In fact, we hear from sources that the government is looking at concluding a deal in tranches. And while there was a plan to have a bilateral trade agreement in place by September or October this year, when Donald Trump visits India, it's quite possible that we may have an early harvest deal in the next 3 to 4 months. And the hope is that this would put an end to the reciprocal tariffs completely. Now, coming to other nations, the Chinese tariffs will be as high as 125%. The Section 232 tariffs on steel, aluminum, and the automobile sector, which are as high as 20%.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Surabhi. And guys, good morning.
Morning.
Somehow, it doesn't look like we are coming out of a holiday, right? It just looks continuous. Like It never ended. We never went anywhere. We were right here because markets are doing exactly that.
I was wondering, Prashant, what you've been up to between Besant and Navarro and Hesset and Trump, and then Musk is saying something and someone's speaking on CNBC, someone's speaking on CNN. I gave up trying to follow beyond the point. But Prashant is our man. He'll keep us up to speed on everything that's happening on that roller coaster.
Well, that's right. And at least with all the cues that we've got, at least a positive start is what we could brace ourselves for. And it'll get very, very interesting from there.
And Surabhi, we were talking about today's Friday, right?
Yeah.
So the Wednesday morning, the last day, we were talking about
one headline
time,
away
right?
from things turning.
Yeah. No, I was talking about the bond market thing.
Yeah.
Which we started discussing at about 9 o'clock.
Because the yield had shot up to about 4.5.
I think it was about 9 o'clock, 9:05.
9:30 when it was midnight and those tariffs hit, suddenly markets were 9:30. They started moving, big time.
That is essentially what has caused this. Apparently, that is what has caused this U-turn, this pullback, back from the brink, or whatever you want to call it. But it's not all settled. And I think that's the important point which we will take forward, because it's all incremental. I mean, unless you've been living under a rock, you know that the sort of tariffs have been paused for 90 days for all countries except China. So let me just quickly recap things, just a change, right, on the equity indices and macro markets over the last 2 days, because we'll be reacting to US on Wednesday and US last night as well. So the S&P is up 6%. These numbers look much bigger if you were looking at them yesterday morning, but we were not around yesterday morning because indices rallied 10, 12, 13%. But last night they gave up 4-5%. So this is the net change. S&P 6%, NASDAQ about 7.85%. The CBOE VIX, came off very sharply. I think it fell 35% the previous day. Yesterday it went up some 20%. So the net change is minus 15. The CBOE VIX. And the other markets, right? The 10-year yield is up 12 basis points. You have the dollar index, which is down about 2.3%. And Brent prices, again, have seen, 4% swings, 3% swings. So that's 1.7% net change higher. in terms of the reaction that we've seen. Now, before I get into some of the other stuff which I think is relevant from here on. So yeah, I mean the net change is positive. So you will get that reaction today, and the market will look a little better as compared to where we left off on Wednesday, because I mean you're going to be reacting to 5-6% changes net over the last 2 days to US equity indices. But I think the bigger story, and this is the reason why what gives people is giving people a lot of cause for worry, and why people are saying we are still in a flux, is the bond market, and this quote should come up. Which I think is very instructive. I mean, it's not from now. It's basically back from, the GFC, the global financial crisis. Timothy Geithner, if you remember, was the U.S. Treasury Secretary from 2009 to 2013. And, this is what he said. I used to think that if there was reincarnation, I wanted to come back as the president or the pope. But now I think I'd much rather come back as the bond market. You can intimidate everybody. And I think that very, clearly and in a very pointed way tells you what really happened. So let me just quickly run you through that, right? So Trump basically did acknowledge, and we don't have to go by hearsay or, by kind of sort of trying to interpret things. He very much clearly, the graphics will come up. He said, the bond market is very tricky. I was watching it. I saw last night where people were getting a little queasy. Not the most eloquent way to describe what was happening in the bond market, but he acknowledged it in his own way, that it was the bond market which forced him to pull back at the last minute. And of course, maybe, discussions with Secretary Bessent, who's a market veteran, etc. So this is very clearly the issue. Bond yields were ripping higher. And the issue is this: in times of risk off, when equities are selling off and there is stress generally, yields should bonds are a source of safety, especially U.S. treasuries are a safe haven. But they did not act like a safe haven. They were actually, yields were higher, and they were going higher and higher, and prices were falling, which is not what should be happening. And I think this is the basic underlying worry. You also had comments from, Federal Reserve representative, disruptions, and this is from last night, by the way. Disruptions in treasury market were instructive, watching treasury market minute by minute. So this is from last night. Now, U.S. bond markets are still very much in focus, as we speak. That is because over the last 2 days, Wednesday and then yesterday, you have had two successful auctions. One in the 10-year, the second is the 30-year tenor. So two successful auctions. What should yields do? Yields should fall, right? Well, what has happened? Yields are higher, especially on the long end. If you look at the 30-year yield, it's up 13 basis points last night, and we are very close to 5%. I mean, so that is not falling. And I think this is essentially basically the issue. Now the fundamentals, U.S. growth concerns are still intact. The effective average tariff rate 2 days back was 25%, right? Pre-Trump, when Trump came into office, it was 2.3. It went to 25 as he kind of sort of attacked everybody. He's pulled back from everywhere except China. The effective tariff rate is still 20. It was just 25 72 hours ago. So these growth concerns are still there. Many global banks still have a recession forecast. The odds are they've brought a little lower. And of course, US and China are moving into a full-blown trade war. It's 145%, by the way, on China in terms of tariffs, which Trump clarified. And of course, will there be reconciliation? Hopefully there will be. On Wednesday, I was saying perhaps it's a 10-12-day problem and this will get resolved. Will the same happen with China? Hopefully, fingers crossed, yes. So Trump essentially has said that, a phone call will happen at some point and we'll be off to the races, his comments. But he's also promised at the same time tariffs on pharma, semiconductors, agriculture, etc. But I think generally the sting has gone away, especially with regards to tariffs, because he tried something and it didn't quite work out as he thought it would. So just to circle in the levels, tying the levels here. So the Nifty 40-hourly exponential moving average is 22,642. That's about 250 points away from where we are. But beyond that, the upside level for the Nifty is 22,806, which is and then 23,057. I put these levels on Friday. These are not moving averages, so they don't change their retracement levels. And that's the 50 and the 61.8% retracement of the fall. The Bank Nifty resistance, similarly, is the 61.8% retracement, which we almost got to on Tuesday. 50,848 is that number, and then after that, the swing high comes in, which is 52,063. So that's the picture. GIFT Nifty will come up on your screen, and effectively it'll tell you how we are likely to start. It's 460 points on the GIFT Nifty compared to Wednesday's close? Surabhi.
Prashant, you're saying queasy. Queasy is a proper word. It's an English word. I went back and heard that soundbite so many times because I couldn't believe that's how he's describing it. He's saying people in the bond market, you know, they were getting a little yippy. Yippy. So, I don't know. I've heard yippy with a very different connotation up until, what was it? Thursday. Yeah. Thursday morning. So, yippy was what perhaps made him change. Anyway, let's talk about the reaction that we're getting across Asia. The markets now here, because we had the fall overnight and the fact that US futures are lower, markets across Asia have resumed a bit of their slide. So Japan surged 9% yesterday on the pause. This morning, it's down 5%. So it's given off a little more than half of that gain. If I look at some of the other regional markets as well, the Australian markets are down about 2.5%. Let's look at what's happening across Hong Kong. Hong Kong slightly lower, 0.7% lower. Shanghai is, on its own path. Shanghai is actually, flat, which makes it right now the best performing market. It's not falling too much. Others are down. Singapore is down about 2%. South Korea is down. All those markets are down quite a bit. Okay, now beyond that, we have to look at where the final sort of numbers lie. What we know as of now is it's the tariff levy is 145% on China. On autos, aluminum and goods which are not part of the US, Canada and Mexico trade agreement, the tariffs remain at 25%. And for the rest of the world, including for us here in India, the tariff now is at 10%, and this 90-day window has opened up for negotiation. By the way, the EU, because of this 90-day pause, the EU also decided to halt its retaliatory strike. The EU had, geared up with slightly higher tariffs on specific targeted products, but they've held off from it for another 90 days as well. What's interesting is that in all of this, between last night and this morning, gold has surged. The dollar has absolutely nosedived. The dollar index is, look at that, just about 100. And gold continues to charge higher. There's simply no stopping it. Levels of 3,200 plus on the precious metal. Now, where are we in this entire market fall? Just to put this crazy April in context so far, we're down about 5.5% at the headline level, index level. Nifty is down 4.7, mid-cap is down 4, small-cap index is down a little over 5, and it's the global-facing sectors, metals and IT, they've taken it on the chin. Look at the cuts there already so far, not even halfway through April, and we're down 13.7% on the metals index and about 12% on the IT index. Will this stop? Will this slide stop or not? Let's talk about the fund flows. Well, that's not where we're getting any help because FPIs have been continuous sellers so far in April. Even on the previous trading session, they went ahead and sold equities to the tune of about 4,300 crores. There was, some support from domestic institutions, about 3,000 crores of buying coming in from DIIs. Speaking of DII flows today, it's the mutual fund data. So that's important, very important to watch because in February, we saw the first sign of skittishness. The February net equity inflows were down 25% over January, and there was a lot of money moving out of mid-caps and small-caps. So let's see if that trend continued in March or whether it was arrested or not. Finally, obviously, we'll spend a fair bit of time talking about TCS today. I'll tell you the headline. There's nothing really exciting out there. The numbers are slightly, just a shade below very muted expectations. So what do we have? We have dollar revenue declining 1%. Constant currency growth at 2.5% is the lowest TCS has delivered in the last 4 quarters, lowest of FY25. On this whole tariff storm, what the company has said so far in the press conference, and of course we'll get more specific commentary, they're saying they haven't seen any major project cancellations, but there are some ramp downs and delays in decision making. Obviously, the company's margins have also, come out lower than expectations. And so far, no announcement of a wage hike. They're saying they'll do it, but they've just deferred it. They'll decide on it in a bit. So TCS is slightly negative Q this morning. Nigel.
Well, today, I think the big Q is not where we're going to start because everyone knows we're going to be starting off in the green. The question is, where do we end? And that's going to be the key factor for today's trade itself. We look at the Troika, and 2 out of the 3 are well behaved. The dollar index is very, very weak. The Brent crude prices are lower. Both those 2 are Indian market positive. However, the bond yields have spiked up, and that's a bit of a worry. It's a menace not only for President Trump and his plan, because otherwise the plan was working out perfectly. Yields had come down to around 4% or thereabouts. Then he had to rethink, and this is a bit of a menace for equities as an asset class globally as well. Moving on then, how much can Indian markets outperform? That's going to be important because on the way down, we did outperform. We fell less than what the globe did fall. Now, on the way up, can we do even better? That's going to be important because there are a lot of factors at play. The FI shorts, well, they have been getting added on. So if you look at the short positioning from around 30,000 contracts, in the last few trading sessions, it's moved up by close to around 4 times. And the FIs, actually, they've been successful because the Nifty as well has seen a correction of close to around, 1,000 points or thereabouts. So they've got the direction right. A short squeeze holds the key today, whether or not we can end virtually at the day's high. So the FIs covering their shorts is the most important factor for me for today's trading session. Moving on then, let's look at the options data. Call writing was very, very aggressive, as you can see. So we'll keep an eye out on some of these strikes. Do we start seeing some unwinding? That's what will tell you that the call writers are getting nervous and the bulls are fighting back. So keep an eye out on some call writing, because in the last few trading sessions, the call writing has been very, very aggressive. Which brings us to the levels. The important levels on the Nifty should come up for you on the screen. The 22,900 to around 23,000 mark is very, very important. 20 and 50 DMA come in out there. So by the end of trade, you'll want to end closer to that mark. On the Nifty Bank, well, that was doing a relative outperformance. Then it cooled off a little bit. You've got your first hurdle at around the 200 DMA, and that's going to be very, very important. If we get past that, then the recent high comes into question. But that's the important mark you're looking at. Stocks that I'm looking at metals. Why is that? Because the dollar index has cooled off, which is normally positive for metal prices. The other factor is that the metal stocks have got smashed. And for both these two names, we have company-specific triggers. For Tata Steel, they're talking about cutting costs at Netherlands, so that's a positive. And for Vedanta, we have a special situation that's playing out. Both these two stocks will start off well in the green. Let's see how they do from there, because the problem, if the globe is going to go into a recessionary trend, then that's what will weigh on there. But otherwise, both these two stocks should do quite well.
All right, Nigel, thanks very much for that. So metals on Nigel's radar as we start today's session. Let's just get you some views here. So Michael Gapon of Morgan Stanley says that the 90-day delay in reciprocal tariff reduces immediate downside risk, but prolongs uncertainty. With the effective tariff rate at 23%, there is a narrow gap between a slow growth outlook and a downturn. The US economy is still living on the edge. They maintain their outlook for no Fed rate cuts in 2025 and backloaded cuts in 2026 for a terminal rate of 2.5 to 2.75%. He adds a downturn could bring rate cuts forward.
All right, on equities, Mahesh Nadurkar of Jefferies says amidst global uncertainties, absolute index performance is difficult to predict, but India should emerge as a relative outperformer. Lesser dependence to US and China demand, relatively lower tariff incidence, lower oil prices, low FPI weights, and a pro-growth RBI stance are the key reasons. Their preferred sectors in India are lenders, power, telecom, autos, and real estate.
Jahangir Aziz is now with us, Head of Emerging Market Economics Research at JP Morgan. Jahangir, good morning. Good to have you back on the program. A lot has happened since the last time we spoke. I will ask you, of course, what your forecasts are for US, odds of a US recession, and etc. But first, a quick word on what the bond market is doing, because I think a lot of attention there. That bonds are not, US, it's not acting as risk-free. It's not acting as a safe haven, US government bonds. What's the problem, Jahangir?
Look, I mean, it's the manner in which these tariffs and the other policy changes that have been undertaken in the last, 3-4 weeks. I think we began the year and the view that, there would be extreme policy shifts under the Trump administration. That was given. However, regardless of how extreme these shifts would be, one thing that would be preserved is that the balance of these policies would be pro-growth, and the balance of these policies would be geared towards extending the expansion rather than truncating it. I think that's the question that the last 3-4 weeks of policy flip-flops, extreme tariffs, and alongside that, the other policies that are taking place in terms of, DOGE-related and immigration-related policy changes, I think that has crept in. And I think because that has crept in, you are seeing that being reflected both in a rise in the risk premium on US bonds, as well as the dollar actually doing the opposite of what it does in typical global risk-offs, which is that instead of appreciating, it is actually depreciating.
So is it a temporary thing, Jahangir? Or you think this safe haven status, dollar, US assets, dollar, etc. I mean, it's being questioned a little more permanently here.
No, I don't think that it's a permanent shift in, U.S. dollar, being the safe haven. I mean, look, there are obviously undertones in the broad strategy of the, administration that the safe haven or the, reserve currency status of the dollar had artificially appreciated the dollar over the last 25, 30, 40 years. And that has been one of the reasons as to why U.S. has a trade deficit. Now, whether you agree with that argument or not, there are, high-up members of the White House, people like Stephen Merrin, etc., who wrote a note back in November arguing this, making this argument. So clearly there's an undertone within the different things that the administration doing is that they want the dollar to be lower. And one of the reasons as to why the dollar is higher is because of its reserve currency status. I don't think that, this is a permanent shift, but I think the acts that they're doing or the actions that they're taking is questioning that, at least temporarily. And again, you do have this time two other, alternatives, euro and the yen. If you didn't have them, then I think you would still go back into dollar strength.
Oh, absolutely. And we've seen that. I mean, the move on the yen has appreciated big time, 143 this morning. Yep. And the euro, I mean, look at the euro, just march higher, 1.1 plus on the euro dollar as well. Jahangir, great to have you with us on the show today. So it seems, at least for now, the bond vigilantes have prevailed. They've managed to rein in Mr. Trump. Now, from gauging risk perspective, is the worst behind us, you think? Because he's climbed down, he's opened this 90-day window. And when he was asked whether he'll extend the window, he didn't outrightly deny that reporter question. He said, we'll see. So it's only the China issue which remains outstanding. Would you believe that the inflationary impact and the worst impact of these tariffs, at least with the rest of the world, that risk has blown over?
So think about what the average effective tariff rate is. Right. So before the pause, after April 2nd, the average effective tariff rate rose to 23% for the US. Right. Then, came the retaliatory tariffs on China, and then the pause. And after all of this, you now have an average effective tariff rate of 25%, and that I'm using based on the 125% tariff on China, not the 145. If you do that, it's probably close to about 27%. And this does not include the tariffs that are forthcoming, which is on auto, semiconductors, copper, and autos that are coming, pharmaceuticals that are coming in the next couple of weeks. You add them two together, or add these three together, and you're now pushing it close to 30% of tariff with 145 on China. Regardless of which way you cut it, if you put in a tariff of this size, doesn't really matter whether the focus is on China or not on other people, you are going to get prices to go up. So I don't see how this alleviates any of the inflationary problems that China has, that US has.
So recession?
So we are still, after the pause, we are still sticking with that, second half of the US will go into recession. That was a baseline prior to the pause. That remains a baseline. For global recession, we still don't have it in a baseline, but we have a 60% probability. We haven't changed that probability. I think people are missing out an important part of all of this dynamics. It is easy to say that, look, the focus is only on China. It is on China. But if you have 125 or 145% tariff on China, and China has a 185% tariff on US, under those circumstances, US-China trade will virtually freeze. I mean, unless you critically need something, you are not going to participate in any transaction between US and China. And if that happens, and I know that, people mention that, well, the exposure to US and China is low, or US is low, or China is low, and therefore that country is safe. Most of the other trade that people do, let's say in India's case, most of the trade that India does outside of US and China is also related to the supply chain that goes through US and China. So if the trade between US and China comes to a halt, this is a actual shock to the global trading system. The two largest traders in the world are not trading with one another. And if you have a shock to the global trading system, no one gets spared.
All right, Jahangir, very quickly before we let you go, the dollar index has weakened, and normally we would say emerging markets do well. But now there's an additional factor. The US yields are holding up. In this sort of environment, how do you see flows move, for emerging markets like in India as well as China?
The lifeblood, so leave China aside. If you look at all of the emerging markets, the emerging market ex-China, and you draw a chart, their growth rate, emerging market ex-China's growth rate and global trade, there is no daylight between the two of them. You do that for India, there is no daylight between the two of them. So if global trade is under attack and global trade actually stumbles in the next 2, 3, 4 months before, let's say, we have a negotiated compromise, then I do not think that emerging markets growth gets spared. If emerging market growth doesn't get spared, as you well know, there is no flow to emerging markets. Now, the question is, will there be outflows? Well, I don't see there's much room for outflows because there weren't any flows over the last 3, 4 years in the emerging markets for that to flow out. So I think that is a saving grace if you look at it that way.
All right.
Jahangir, just 30 seconds.
Sure.
You think they will try something new? Because, this experiment has failed. You think there will be another attempt some other way? I'm talking about...
Look, I mean, it is... Yes, I think having these kinds of tariffs on China and US on China on US and US and China is untenable, right? So clearly there has to be a solution, a resolution of this. We have no real sense of what the resolution is going to be and how long it will take. But you can't have a global trade system where the two largest players are putting triple-digit tariffs on each other. That's just not a tenable situation.
And if you think that they really wanted lower dollar and lower yields, they've not got lower yields. Temporarily, they got under 4%, but they've certainly got dollar lower. But of course, I mean, the collateral damage is confidence and everything else, right?
Yes. Yes.
So I mean, it's.
So I don't think it's.
Yeah, go on.
Yeah, look, I mean, these are thoughts that have been put out by the White House and people around the White House, in the White House. I don't think there's a very well thought out argument. I know most of my clients ask me about the consistency in the policy of this administration. I don't think you should look for consistency in these policies.
Okay.
I think what you should look for is the policy and try to figure out what the impact is going to be.
Don't try and form a coherent explanation, right, to what is going on, because maybe there isn't one, as you say. Jahangir, great conversation. Thank you very much, as always, and I look forward to our next one. And do join us more frequently. We need you with all that is happening. So thank you. Well, I think we're going to talk about individual stocks, top 10, with our research team coming up.
Continues to be in effect. The carve-outs for the pharma sector, for the semiconductor sector, the critical mineral sector, those will continue till the time Donald Trump decides to impose more tariffs on these sectors as well. When it comes to the European Union, because the EU retaliatory tariffs have not gone into effect, the EU's reciprocal tariff rate is also being paused, and they will too be tariffed at 10% baseline rate.
U.S. Steel was a very special company. We don't want it to go to Japan or any other place. So we're working with them, and I don't know if they need any money now. I'll be honest with you, they hit gold because China was dumping massive amounts of steel in my first term, and I put tariffs on it. I saved the steel industry, but now it's going to thrive. maybe like never before. I mean, if you go back to U.S. Steel from 90 years ago, it was incredible. It was the #1 company in the world for a long time. That's why we don't want to see it go to Japan. And we love Japan.
Welcome back. Okay, so we know that global markets are down a little bit. Let's see how we open up. The implied open is suggesting a 2% start because we have to catch up on Thursday as well. Let's talk about stocks now because several important names on our list this morning. Our team is standing by with the CNBC-TV18 list of top stocks to watch. And topping that list is what else but TCS. Rima, take it away.
Well, TCS has reported a subdued quarter. There was a modest miss on the company's top line versus expectations. Margins declined more than what the street was anticipating, so that's a bit disappointing. So on the top line, the company's constant currency revenue growth was down 0.8% sequentially. Dollar revenue down 1%. But if you look at the growth of the international markets, which is stripping BSNL, then this time the company managed to grow it by 0.6%. EBIT margins were a disappointment. EBIT margins declined 30 basis points sequentially. And if you look at it on a year-on-year basis, it's a fall of 180 basis points to 24.2%. The management in the press conference did allude to decision-making cycles had started slowing down in the month of February, so it did affect Q4. But going forward, it's not that clients are panicking. It's not that major ramp downs are taking place or major deal cancellations, but they are seeing instances of that. And the sectors which are most impacted on expected lines, it's consumer, retail, logistics, auto in particular, has been impacted. The company did maintain that FY26 growth in the major markets, your developed markets, ex of India, will be better than FY25. And due to the uncertain environment, at least as of now, the company is not rolling out its wage hikes, which they typically do 1st of April. They said they will decide on the wage hike cycle during the course of the year.
All right, thanks a lot for that, Rima. And stay tuned. The management interview comes up at 8:45 a.m. later today. They'll detail their numbers as well as the way ahead. I'm looking at another Tata Group company, that's Tata Steel. They laid out a plan to transform the way Tata Steel Netherlands is functioning, and they have laid out a major transformation program. Now, what the management says is that they're estimating close to around 500 million euros of savings by the second half of FY26. And in FY27, there will be another 50 million euros. So put it together, they're looking at a savings of around 550 million euros, large one. Investec, well, they say that this translates to cost savings of close to around $80 on a per ton basis for Tata Steel Netherlands. How do they achieve this? A third of their workforce, a third of this will come in from a reduction of workforce. They're talking about reducing the total number of employees by around 1,600 on a base of close to around 12,000. Besides that, they're looking at volumes, product mix, blast furnace efficiency as well. The other important factors that they clarified, they said that the direct impact of the US tariffs is limited because they barely export anything to US from any of their units. And also they mentioned that Tata Steel UK is expected to cash break even by the second quarter of FY26. So brokerages, they're positive on it. They're viewing this as a positive move. In the next couple of years, the results will show up. Let's hop across to Vinny. She's here with regard to Biocon and Sun Pharma. Vinny?
Good morning. So yes, both these pharma companies are going to be in focus. Positive news flows that have come in for Biocon as well as Sun Pharma. Firstly, Biocon, they've expanded their oncology portfolio in the US now after the US FDA has actually approved Biocon Biologics biosimilar, which is called bevacizumab. Now, this is mainly used for treatment of cancer. So this is an important drug. They already have two such oncology portfolios in the US. This is the third one. And they've been doing quite well in terms of market share over the last few years in their oncology portfolio. Currently, the market share and market size of this new biosimilar is around $2 billion, and this was in 2023. There are 4 other players who are already there in the US, but still they're expecting good growth in this one. What analysts are highlighting, they're estimating incremental sales of around $63 million in FY26 from this biosimilar, as well as $88 million in FY27. So interesting to watch out for in terms of Biocon, an important update there. Sun Pharma expecting green here as well. The US Court of Appeals for Federal Federal Circuit has ruled in favor of one of the injunctions that was going on for Sun Pharma. So right now the ruling has come in favor of the company, so they can launch this drug that is called XLV. This is an alopecia drug. It's a smaller market there, but surely a positive sign. The company was quite positive on this one. They'd spoken about how important this drug is for the company as well. Now, they've not yet decided a timeline when the launch will come in, so that uncertainty is there. But analysts are expecting maybe this could be launched in the next couple of weeks or a month is what we could watch out for, versus previously in Q4 FY27 when the patent would be lifted in December 26. So yes, important update coming in for Sun Pharma. UBS is saying that this is a big positive. Margin expansion story comes in for Sun Pharma, as well as the peak sales for XLV could be in the range of around $400 to $500 million for this drug, and important for Sun Pharma.
$400 to $500 million. That's a sizable sum. Got it, Vinny. Thank you very much for that. Let's talk about gold financiers. These stocks were under pressure on on Wednesday as well. Vamakshi is here. Vamakshi, finally those RBI draft norms, they're out.
Well, absolutely should be. They're out, and let me first take you through some of the important points of the draft rules. The LTV ratio is capped at 75%. The tenure is capped at 12 months for bullet payments. Further, they also say that NBFCs must set limits on gold loan portfolios. Now, let's take a look at what brokerages are saying on these draft norms. Well, Jefferies is saying that tight, however, higher OPEX could be considered due to end-use monitoring, but this again, they believe could be manageable. As far as gold NBFCs are concerned, they believe that they appear as a good defensive hedge in the current environment. They prefer Muthoot. They have a target price of 2,615 rupees per share on this one. Morgan Stanley remains equal weight on Muthoot. They believe that the stock could be under pressure in the near term. As far as Manappuram is concerned, they have an equal weight call on this as well. They believe that the company is better placed given Bain's open offer price. Lastly, let's also look at the note that came in from CLSA. They believe that the guidelines are marginally disruptive as far as growth is concerned. For both Muthoot and Manappuram, they're building in 12 to 15% loan growth from FY26 to 27. So overall, going with the red for gold financiers.
No, absolutely, and we'll see how these stocks move. 7% lower on Wednesday for Muthoot. Bharti Hexacom and Indus Towers in focus. Back to Rima.
Well, if you remember, in the month of February, Bharti Hexacom and Bharti Airtel had announced that they will be selling certain towers to Indus Towers. Now, in the case of Bharti Hexacom, the company has announced that due to intervention from TCIL, that's Telecommunications Consultants of India Limited, it's a Government of India entity which owns 15% stake in Hexaware. There is opposition, and therefore Bharti Hexacom is not going to go ahead with its plans to sell 3,400 towers to Indus Towers for 1,134 crore rupees. So that deal has been put on hold. So it's negative for Bharti Hexacom, but the market mood, everything's up. So let's see how the stocks play out.
Okay, all right. Rima, thank you for that. Sudarshan is here with details on Samvardhana Motherson and Ola. So good morning.
Morning, Prashant. So Samvardhana Motherson has announced that it has begun cost optimization measures for European business, and company believes that once it's completed, that's over next 3 years, company is likely to save 50 million euros per year after the completion, and that's one of the reasons that I'm going with green for Motherson. Next is Ola Electric. As per sources, we understand that Road Ministry has received reply from Ola Electric with respect to discrepancies in February sales. If you remember that Ola unit, so related to that, now Road Ministry is saying, as per sources, that it has sought clarification from the company before sending the final note, and because of that, I'm going with red on Ola Electric.
Okay, all right, got it. So Ola Electric in the spotlight as well. Back to Vamakshi then. Anand Rathi came out with its Q4 numbers. Vamakshi, how do they look?
Well, so it'll be not a great set, I would say. When you look at the AUM, that stood at 77,103 crores. This is a marginal uptick of only 1% sequentially. Keep in mind that they had guided for an AUM of almost 80,000 crores in FY25, so they've fallen short of that guidance. However, on the flip side, they've managed to meet the revenue and the net profit guidance. Let me quickly take you through the Q4 numbers then. The total revenue from operations saw a dip of almost 6%, coming in at 222 odd crores. Keep in mind that the trail revenue, that is the earnings that they earn from mutual funds on distribution of mutual funds of equity and debt, that saw a dip of almost 5%. Distribution of other financial products also dipped by almost 7% for the company. As far as the cost to income ratio is concerned, that however came on the higher side. side, it was at 59.08%, an uptick of almost 425 basis points sequentially, and that is because the employee cost as well as the other expenses remain more or less stable, growing by only 1 to 2% sequentially. The net profit for the company has seen a dip of 5% sequentially, so not a great set for Anand Rathi, but the guidance for FY26 is also out. They say that revenue could stand at 1,175 crores. This implies a revenue growth of almost 25% as compared to FY25. Net profit at 375 crores and AUM at 1 lakh crore is what they're expecting going forward. So therefore, when you look at the numbers from Anand Rathi, not a great set, going with the red for this counter.
Okay, the volatility in the market perhaps weighing on the performance. Thanks for that, Vamakshi. Let's quickly recap our list of stocks to watch today. The ones that have positive news flow around them are Tata Steel, Biocon, Sun Pharma and Samvardhana Motherson. Stocks with negative news flow are more in number today. TCS, Gold Financiers, Bharti Hexacom, Indus Towers, Ola Electric and Anand Rathi. All right, with that, let's take a very quick break. We'll come back on the other side and get some fundamental ideas with Dipan Mehta and discuss the latest with him.
Welcome back to Barsad Morning Call. Well, Dipan Mehta, Director at Elixir Equities, joins us on the show. Hi, Dipan. Good morning. It's going to be a green start. But as we said earlier, it's not the start. But where do we end? That's going to be important because the global markets are still in a bit of a tizzy. Let's talk about the top stock, though, for the day. TCS reported its numbers. You know, the global cues, though, are not very, very positive with regard to deal flows, deal cancellations, rather. How do you read the stock and what would you do post the recent correction?
Yeah, good morning, Nigel, and thank you for having me on your show. I think that even after the recent correction and if there's by chance any bounce because overall markets are higher, one must still look at exiting out of TCS and other large and mid-cap software companies. It's very clear that the world is going to slow down. US is also going to slow down. Whether there's a recession, depression, difficult to say. But in this uncertain environment, TCS and other large companies are going to find it very challenging to show decent growth. Also, there's a lot of competition coming from GCCs, and that also going to impact the prospects of the Indian software industry. So I'd be very, very cautious in IT companies. I know they are attractive, they are cheap, they give out a lot of dividend buybacks. But end of the day, from an investor's perspective, you want growth if you want to create outperformance or serious wealth, and that's just not there in the software industry.
All right, Dipan, stay with us actually, and I request you to listen into the TCS interaction. So Rima and I caught up with the top TCS management. And we will play that out in just a bit after a quick break.
अमित जी, थोड़ा दूसरे सब्जेक्ट डिलिमिटेशन की ओर बढ़ते हैं। ये मुद्दा भी बहुत गर्म रहा है पिछले कुछ महीनों में। तो डिलिमिटेशन से क्या आप आज ये आश्वासन साउथ
Welcome back. So Asian markets are seeing a slight recovery. Most of them are still down, but because US futures have recovered. When we started the program, US futures were down between 1% to 1.5%. Now they're down about 0.5%, the Dow and the S&P and even the Nasdaq. And that's why Asian markets have pulled back a little bit from a decline of 5.5%, for instance, in Japan. Now the decline is about 5%, 4.5% actually. So that's the picture across Asia for the time being. The implied open suggesting a 450 point sort of an up move as we kick things off. But for the time being, let's put the spotlight on TCS. Rima and Prashant caught up with the TCS top management to talk about the quarter gone by and more importantly about the outlook ahead. And they started off by asking about how the tariff war is impacting business.
We've also been watching the news like you've been. Our customers are also doing that. But what we are saying is many of our customers are also in a wait and watch mode in terms of what is the end game going to be. But good thing is, like whatever we have seen so far, as much as the rhetoric, we have not seen our customers panic. Like there are maybe some programs what we thought that they would kick off, but some delays in decision making. But we are not seeing any major cancellations or no major project ramp downs. Like there are few, but no major. So I don't think there is any major negative reaction so far.
You're saying this after the pause, or even when the tariffs were imposed and it looked like it could go on, you're saying no one really panicked, or it was wait and watch?
I have not seen leaks. I have not seen any major panic. Like there have been some, like some industries where it's been difficult. Like for instance, consumer business has been going through a tough time. Our airlines have been. But if you look at financial services have been doing okay. We have not seen any major disruption, like few delays here and there, but nothing major.
Have you spoken to clients in any segment after the pause?
After yesterday?
After the...
I had to prepare for a board.
I don't think anyone was sleeping, so...
I think you need 100 kritis to speak to the 100 clients that...
But have you got any feedback in that sense? I mean, from your team in the US?
No, I have not had a chance to speak to our team since yesterday. But I also don't believe that there is any instant reaction is going to be of...
The reason I say that, I'm just going to press this a little bit more and then we'll get to numbers, that, you know, after what was announced, and even, I mean, this is the latest, economists, large bank economists are still predicting a recession, the probability of which was 80% 24 hours back, but now say it's 50%, 55%. A recession, real economic recession. So that's the context I ask you that question. What is your assessment, your own assessment now, on how this is going to play out for your business?
Prashant, that's what. I'm not an economist to predict anything.
No, but if those forecasts come true...
I will look at what my customers' immediate reactions or reactions the last 1 month has been. See, when I came and met you in the early part of January, I was sounding more optimistic. We were very sure that some early signs of recovery we have started witnessing. But as the quarter wore down, like we did see the uncertainties in the market, all the trade discussions, uncertainties. So made our customers sometimes delay the decision, pause some of the what we were expecting to start, or some of the programs that are awarded not start. So they wanted to, wherever they can wait and assess the situation before they have certainty. So there are such instances. But have I seen any major budget cuts? I have not seen any major budget cuts. I have not seen any major project cancellations. There are some tactical ramp downs here and there, but I won't panic at this time.
Was Q4, have you managed to steer clear in Q4 of this macro uncertainty, sporadic instances of ramp downs or project cancellations, or did Q4 also see an impact?
So the positive side of Q4, okay, all the major markets grew. Probably I think this is the first time in this year where all our major markets had a positive growth. And even from the business verticals, if you look at, of course, BFSI has been growing. BFSI, like every time I've been reporting BFSI in North America, but this time BFSI in Europe, UK also grew. And we had growth coming in energy resources and even comms. So we had, of course, comms and all grew marginally, but of course, all of them had a positive growth. So overall, if you look at from a major market perspective, it's been a good number. But was there an impact? Yes, there was an impact. There was an impact.
What was the extent of the impact?
See, I'm not going to quantify how much was the impact, but there's a marginal impact.
Okay. And what happens to the early signs of discretionary spending that you spoke about 3 months back? Where are we at?
See, if I look at this quarter's, the other indication could be our order book. Okay, our order book has come in still strong, in fact, better than last quarter. Our order book is at 12.2. And of that, almost close to 7 billion has come from North America, 4 billion in BFSI, and close to about 1.7 or 1.6 coming from consumer business. And if I look at the discretionary spend portion of that, it remains same as the last quarter. And the good thing is, all this 12.2 billion has come in without the support of any mega deals also. If I take mega deals, this is actually the highest TCV in our recent history. So, so where I'm coming to, discretionary projects have not died down. There are probably some pause, and clients are thinking, should I start now or should I wait for a couple of more months till some certainty emerge? But otherwise, there is no major disruption to the overall situation.
What's the percentage of discretionary? What would you call discretionary as a total?
I would say about 30-40%. Like, I don't know.
We are not calling it out in the overall portfolio.
But roughly in that 30 to 40% or band, possible, right?
Possible. I say the ballpark could be.
Okay. Fair enough. Now let's just talk about Samir, the BSNL, and we always do this. So there was some expectation that margins would perhaps be higher. Because, and you've guided this as well, BSNL, you've said the margins are in single digit. As it ramps down, margins should get a lift. But that has not happened. Margins actually have come off a little bit. Can you explain what happened?
Sure. So our margins at 24.2% in the quarter, sequentially declined 30 basis points. BSNL overall, or through the ramping down, did give a 40 basis points benefit. We actually had 50 basis points benefit also coming in from operating leverage and support from currency giving us 40 basis points. The investments through the quarter, so we did tactical interventions, mainly merit-based interventions that impacting us by 100 basis points, and another 60 basis points on elevated non-employee expenses, the likes of travel, events during the quarter, and higher CSR expenses.
So this is the other expenses, which...
It would come
Because the
into
other-
travel as well as other expenses is what you will see on the...
Because the other expense component, the run rate used to be about 7,500 crores, has gone up to about 8,000 crores.
Correct. So that's reflected.
that's
the marketing expenses also reflect.
And what would that number be in the future? What should we expect as a run rate? Yeah.
You can expect it around that. See, it's not a significant increase. If you take it's a 100, 200 crore, 300 crore increase sequentially. So it is still in that ballpark range.
Got that. And what about constant currency growth? I mean, is it possible to quantify that XF sort of BSNL?
So overall, we, as Kriti mentioned, all our major markets have grown positively, and I think the only degrowth you will see will be coming in from the India perspective.
So the constant currency is down 0.8%.
Yes.
And the estimate that I have is X of BSNL, actually there's a growth.
So if you were
almost
to
0.5%
calculate the major markets growth, it would ballpark be in the positive 0.6%.
Milind, Q1 wage hikes on track, and given the uncertainty, will the increment amount be similar to last year or lower?
Given the uncertainty, you said, we will decide when to do the increments.
So typically, you roll it out 1st April.
Yeah, but this year we will decide when to do it increments based on the environment.
So you're deferring wage hikes as of now?
I'm saying, I will not use the word defer, but yeah, yes, it will decide it when it happens.
Okay. And what about your plan? You typically hire 40,000 freshers.
Yeah, so we did 42,000 FY25.
Last year.
FY26 will do either equal or a little more.
You know, for the last so many years that I've been looking at TCS, your talent management was best in class. Your attrition was always lower than peers by a couple of basis points, sometimes 500, 600. But this time, the gap between you and your peers has narrowed. This time, as in the recent past. What explains that disconnect?
I think it is the way LTM is calculated. We peak, different companies peak at different times, right? If you look at our quarterly annualized attrition, we actually has come down significantly this quarter. So I'm not much worried about that.
Not much. Kriti, while you're not majorly concerned and you're not seeing major disruptions, major cancellations or ramp downs, there are some instances of it. Sure. Give us some more nuance on that. Which are the verticals which will be most impacted?
As I said, consumer business, auto. These two I hear most often. Like as I said, comms I want to, while we had a growth, but I need to see whether it sustains. Tech business has grown, I think last quarter also it grew, right?
Yes.
But going forward in terms of headwinds?
That's what I'm saying. Like tech has a professional services could be within tech, like we also include professional services. There could be a softness in professional services. So I would say from order wise, like consumer business, which includes retail, CPG, travel, airlines, and auto, and professional services. I would say these could be softer. Core banking I am finding so far resilient, and there are good opportunities in pharma and healthcare.
And last time you also said that FY26, so calendar year 25, looks better than calendar year 24, especially for the international markets. Do you hold on to that?
So if you look at our FY25 growth, it's been better than FY24 growth. However small the difference is.
What about this year?
That's what I'm coming to. So I believe FY26 will be better than FY25.
Stripping out BSNL.
I would want to do it with or without BSNL. I want it to be better, but definitely still.
I asked this last time also. So 3% is BSNL is about 3% of revenues.
Yeah.
Overall, CC growth for this quarter is 4.2%.
Yeah, but so that is going to wind down by the end of the year, FY26.
Yeah, it should be. The current contract should be winding down in Q1.
So there is that, and then there is all this trade uncertainty, etc. But obviously, I mean, you're kind of factoring all that in when you say.
If you say it will be better, definitely our international market will be better.
Right.
Okay. Whether if I after XBSNL, definitely we hope that it will be better. And I should not say definitely. We are confident it will be better. Okay. Including BSNL, there's every likelihood that there's an aspiration to make it better.
But it's very rare when TCS decides not to roll out wage hikes on the due date.
That's primarily because he's been talking about is yesterday better than today. Okay, there is so much of uncertainty. Like we just want to ensure that we are in the right place to offer the.
But if all this kind of settles down, it's possible, right? There's a 90-day pause which has happened, and who knows? I mean, maybe the outcome finally is much better than what we know now. You will roll this out. I mean, this is
absolutely.
So this is primarily on account of this uncertainty.
Yes,
Milind.
yeah, absolutely.
Right. In the US, in terms of hiring in the US, your employees, I mean, all that. Is there anything which has changed from the last time we spoke?
No, we continue to hire there. We actually had a good hiring this quarter itself, and that model is very robust for us. So we continue to hire both from the market and from the campus.
Because you keep hearing all these, some legislation has been moved to do this, to do that. I mean, just a lot of noise. I'm not sure how much of that actually is happening on the ground.
Yeah, that matter is under litigation, so I will not be able to comment on that. But as it comes, I'll update you.
Kriti, the feedback seems to be that ex of BSNL last year, your growth in developed markets was weaker than peers. What would you attribute the reason to? Is it less aggression on sales? Are you focusing too much on margins? Is Gen AI deflationary? What explains the underperformance versus peers for the international market?
See, two things. Okay, not two things. First, like you say, you take BSNL out of our revenue. You take the inorganic growth out of the revenue of our competition, then you compare. Like most places, I would guess, it's whatever the difference you see, like BSNL, it's more or less equivalent to the inorganic growth others had. So if you take BSNL out for us, you take the inorganic growth for others.
So you don't think you've underperformed?
I don't think we have underperformed. It's either the inorganic growth or the BSNL.
Okay, well, that's the TCS top management. The headline seems to be that there are some tactical ramp downs, basically people deciding whether to start projects now, 1 month later, 2 months later. But those projects are there. There is no cancellation. There are no ramp downs. None of that is happening at this point, according to TCS. There has been a lot of short covering in this space, the IT space. Stocks have been smashed. The question is, will we see some covering today? And I think the answer perhaps is yes. In a minute or so, we'll start with the pre-open session, and we'll have the rates come up quickly when they finally start to settle down a little bit. All right, Manisha is here with the roundup as far as commodities are concerned. Manisha, gold, I think I want to start, why don't you start there? I mean, high to low, gold prices fell 7% over the last 3-4 days. Prices are back up?
Oh, absolutely. If you look at the last two trading sessions and, do not miss it out, but you've seen gold prices at an all-time highs yet again. Trading above $32.100 an ounce. We've seen $100 of a jump up in last two trading sessions each day, and gold is on a track for best week since November 2004. Well, the US dollar index at a 3-year low clearly has been a supportive factor. The safe haven buying amid escalating US-China trade tensions is another thing. So this is an all-time high on gold on your screens, whether it's US dollar, it's Indian rupee, and various other major currencies as well. Some bit of a rebound is what the copper prices also seem to be holding. It was a 4% of gain yesterday. The markets are cheering US pause on reciprocal tariffs for 90 days. And the street does expect that the China will come out with aggressive stimulus measures. That seems to be supporting copper prices, which is off its 3-month lows that we saw it trading yesterday. The only thing that is headed for a very sharp decline is the crude oil prices. 4% down for this week. Prices are trading at around 4-year lows. The markets will, of course, watch out for the US data, and you have plenty of that coming in with the day-to-day. That would give you further direction.
Okay, all right, Manisha, got it. Thank you very much for the updates over there. So getting set for the commodity open as well. Let's welcome in our technical experts, quickly get a sense of how to look at Friday's trade. Mitesh Thakkar with us along with Shrikant Chauhan. Gentlemen, morning. Good to have you on. Hope you got some good rest on the midweek holiday, the Thursday holiday. Mitesh, now what? I mean, today we might be up because the fact that we missed, Thursday's action, but generally the mood is a little soft and somber again.
That's right. I think, it's been difficult in the sense that it's been very news driven. So I think, you're getting gap ups, gap downs, and I was hoping that some volatility will settle down with the indicators kind of turning sideways. Again, with this pause news, we had a big move in the GIFT Nifty yesterday. Still, today is showing about 400 points positive. I would still now look at 22,800 as the key level. I think a close above that would add to strength. Otherwise, we might see that as the near-term support supply pivot. And therefore, I think, we will open around that level. So I think post-opening, if we don't see a follow-through, I would be keen to exit any long positions on the stock side, which I have, and wait for the market to come at lower levels. In case we fail to do that or get past 22,800, then I think we are in a broad range of about 22,200 to about 22,800.
By the way, right now, these Nifty rates are a little all over the place. Nifty is suggesting a 70-point downtick. The Sensex pre-open rates are actually on the positive side. But like I'm saying, some of the pharma stocks, 9%. Tata Steel, you're getting at 4.5%. Tata Motors, 9-10%. So let's wait for it to settle. Though the question is, there was one market holiday where we were not trading. The rest of the world fell big time. We thought in the morning, oh, good, chalo, bach gaya. We escaped. But by the evening, it was down. Now we want to believe we missed the rally on the way up, so we should have our share of it, right?
I just want to say one thing. I think what's happening is that US futures, they're down sharply now. So we were looking at that.
0.5%. When I saw them, they were down 0.5%. Let's see if have they declined even more.
I think the S&P 500 futures are down very sharply. I think about we'll have to maybe put the rates up and we will do that. But I think 3.5%, 4% lower on the S&P 500 futures.
Okay, I'm getting about 1.3% down, which again is a very sharp nosedive. It's been yo-yoing very sharply in a band of 0.5% to 1.5%.
Yeah.
Actually, little all over the place.
What we'll do is we'll ask our team to put the futures rates as well, because I think there is, what's happening.
Now they're showing positive on my screen. I don't know what's going on.
I think that's the head, and the rest of the market, of course, is the tail. So that's the lead, and we are kind of sort of in a way following. So I think the cues will come from there. So maybe
just
we should
one
put
thing,
that up as well.
Hormuz is telling me that actually the Dow futures, we'll have to recheck it. It's turned positive actually.
It has, yeah.
It's recovered all of those.
So let's actually put, let's just put those rates up at the bottom of the screen.
I don't think we have it right now, but I think it's turned positive. Yeah, it's recovered 600 points off the lows.
Yeah. So then, and let's just put the Nifty up as well now. 4 minutes into the pre-open. And
Nifty is also positive now, about 0.25% higher. So in step with if the US starts recovering, then Asia starts recovering, then maybe we eventually do get that green on the screen.
I think it's nice. On big days like this, if you remember when the pre-open was introduced, it was exactly for days like this.
Yeah.
When the book is built and by the time it settles by 9:08, you get a real sense of, and it kind of avoids this just open and then market is up 200 down 200 300 or whatever. So but yeah, it's starting to reflect this a little bit more now. So 140 points higher it should be. Let's just get views now and trades as well. Gentlemen, good morning. Mitesh, why don't you tell us what to do in terms of specifics?
Yeah. On the stock side, Prashant, I have 3 buys to a sell. ICICI Prudential is a buy with a stop at 560 for targets of 595. Factor the gap in and see if the reward is still better than what is to do, because I think the closing was around 568. Same strategy on IDFC First Bank. Keep a stop below 58. Look for targets of 63.5. ACC is a buy with a stop at 1963 for targets of 2050. And one sell call, that's IGN on a bounce back, sell around 177, 178. Keep a stop at 181. Look for targets of 170.
Srikanth, what about you? What's the index view and what are your trades?
Good morning, Prashant. Good morning, everyone. I think, what you said is absolutely right, that US is ahead and we are all like tails and we are following to the overall news flow, which is getting span out. But if we consider the overall performance of our markets and response to the overall developments, I'm of the view that our markets have seen its worst on 7th of this month. Say on Monday when the market was down and it was around 21,700. So the chances of moving higher are very bright. But the thing is that it is going to consolidate. It is going to remain volatile within the broader range. And the strategy should be to buy if there is any correction in the market. But at current levels, let's say in case if we see the market is opening somewhere close to 23,000 levels, then there we should look for taking some profit on long positions, or we should look for reducing long positions. That should be the strategy. But at current levels, based on the developments, we should focus more on metals. In that, we like Vedanta, we like Hindalco, we are expecting some short covering in Tata Steel. We like pharmaceutical stocks in that Sun Pharma, Syngene, PPL Pharma, these are the stocks to buy for. But specifically, Sun Pharma looks good at current levels with a target close to 1750. It is, I think, opening around 1700 level. So maybe 1750 or 1800 is the next level to watch out for. And from the metal basket, we like Vedanta, which is around 370, 380 levels. There, I'm expecting stock to move towards 410 or 20, and we can keep a stop loss around 365.
Okay. All right. Got that, gentlemen. Thanks very much. We'll come back to you closer to market open. Just checking some of the stocks that were in news. Biocon seems to be reacting well to some of the drug announcements that they made. Muthoot Finance is still down. Muthoot and Manappuram, they were wobbly on Wednesday as well, but Muthoot is still carrying a cut of about 2%. I think we've got Deepan with us. Deepan, very quickly on these gold financiers, what to do now if you've seen the draft norms?
Yeah, Surbhi, I think that, yeah, definitely, I think it'll impose some additional restrictions. But end of the day, it is very good for the industry as a whole. And with gold prices where they are, I think that there's enough prospects for these companies to expand their gold lending business. And I think end of the day, it provides more security and safety to these gold companies, which is always good for shareholders. It's a great product per se. So I think at corrections, I wouldn't get too nervous. And maybe if they correct even further from these levels, if you have a 3 to 5 year type of a view, these companies could turn out to be outperformers.
Okay, all right. Dipan, if you don't like something at 100 rupees, it's okay. But will you like it at 80 rupees? I'm asking you about metal stocks. Today, they're likely to open up in the green. You didn't like them higher, but they've seen a big correction. Tata Steel is talking about turning things around at Netherlands. Vedanta, we know there's a special situation, that's playing out. Excites you now or not at all?
See, I think, Nigel, money is always scarce. And in markets like this, when they are correcting and tomorrow, who knows, there could be a capitulation. You want to go for solid businesses, India-centric businesses, companies which are not impacted by global growth, slowdown in global growth. So from that point of view, I think I prefer many other sectors over metals. But yes, I think in Vedanta, there certainly is an arbitrage type of an opportunity. And look, if you're an expert in metals and you understand the industry well and the tops and the bottoms, then certainly you could trade in them because they are volatile and they offer a lot of trading opportunities. But I prefer to go for stocks where I can hold for 3 to 5 years or so, and I don't see those kind of prospects in metal companies.
Okay. All right. Deepan, got it. Thank you very much for joining in. Shorter chat today, but I really appreciate you being with us. Let's quickly put the spotlight on the pharma space. Now, that's where a sword is hanging. President Trump has said tariffs are coming. We just don't know what, how much, and when. We have Bino Pathamparampil, head of research at Elara, joining in for some quick thoughts. Bino, thanks for joining in. So obviously, we have no numbers to really work with, but in terms of just exposure to the US as a percentage of total revenue, which are the companies that are at maximum risk as of now?
Hi, good morning. So most of the large Indian pharma companies have a pretty high exposure to the US generics market. Maybe after the Indian market, they are all exposed to the US market. If you name a few of them, Dr. Reddy's Labs, Zydus Lifesciences, Aurobindo, even Cipla and Sun Pharma, all of them have 30 to 40% of their revenues coming from the US market. So to that extent, all of them would be vulnerable if at all any significant tariff is imposed on Indian pharma by the Trump administration.
Okay. So most of the generic players would be impacted, but some also have facilities. I mean, Sun, for instance, Sun Pharma, they have manufacturing facilities either in the US, some could be in the zone of Canada, Mexico as well, where there is still a trade agreement in place. Do you expect any immediate supply chain changes if, let's say, Trump goes ahead with a 25% levy on pharma imports?
Supply chain changes in the pharmaceutical industry are pretty laborious and takes time. The US FDA approval for pharmaceutical products come tied to the facility from which they are manufactured. So if tariffs come through, it's not that from next week onwards you can more manufacture the product in the US or Canada or Mexico and stop or reduce manufacturing in India. The switch of manufacturing is a laborious process. So for the time being, the additional cost of tariff will have to be borne by somebody. We believe that most of it, maybe 80-90% of it, that will get passed on to the end customer. But still, there could be a small part of it which may hit the margins of the generic company manufacturers.
Okay, all right. Bino, aside from Trump's tariffs, I want your view on Cipla. Binny has sent us an alert that they've received the US FDA approval for Abraxane, and I believe it's come sooner than expected, and I believe that this is used to treat cancer, namely breast cancer. Any view on it? How much of a positive is it?
This is an approval which has been expected for long. It was getting delayed because of the issues that Cipla had with their manufacturing quality at their Goa plant. The plant has now been cleared, and following that, the US FDA has approved the drug. The contribution from this drug is possibly already built into the current earnings estimates for Cipla. So this per se does not increase the earnings estimates for the coming couple of years. But at the same time, there was risk of further delays, which has been alleviated with this approval coming through. So it's a positive development.
All right, Bino, we'll sort of continue to track this closely, but appreciate you joining us this morning with those sort of specifics and that view and that commentary which is coming in at this point. I think we've got 2 minutes to go for the pre-open, for the market open to kick off, and I think it's higher.
300 points up?
300 points. I mean, it's a respectable 1%. Yes. I mean, the opening was a little, skittish here and there, but that's the purpose of the pre-open. I mean, the book gets built and then you get a real sense of how things will start by about 9:08, 9:09. And it is slightly higher.
Even TCS, I was just checking, yeah. TCS, despite its subdued commentary, even the fourth quarter has been a bit of a washout, but it's all about forward-looking. Yeah. The stock's up about 1.5% because it's already fallen so much, so how much more?
And the commentary was not bad. It's very uncertain, etc. But it's not. It was not downbeat. 26 will be better than 25. Definitely ex-BSNL, maybe with BSNL as well. And there are no cancellations, etc. yet. That's coming through. It's not a big growth story. The point with IT, there are good stories in IT as well. Coforge, for example, stocks fallen 40% from highs. But for the larger guys, heavily shorted sector, stocks have fallen. So maybe at a trading level, there is a little bit of a bounce here. So we'll see. 1.5 higher on the Nifty is what you have. The Nifty Bank is up about 1%. 1.25 now, so picking up pace. Small cap index is up 2.4%, and I think you'll have the mid cap index, which will come up 1.7% higher on the mid cap index as well. So 22,750 is where the Nifty is starting, and 50,850 is where the Nifty Bank is starting. The heat map is up on your screen, and it'll give you a sense of how we are looking. It's all green. HDFC Life is a loser. Otherwise, it's all up and about.
Absolutely. Like Nigel said, I think that's the statement of the day. We all know we'll start in the green. Where we end is the bigger question. For that, we have to wait till 3:30. Anyway, for now, Pharma is actually leading it on the way up. Sun Pharma, Reddy, Cipla, all of these pharma stocks are seeing a relief move, 3 to 4%. Maybe hoping that the pharma tariffs also get delayed. What else is higher? Tata Steel, JSW Steel up and about. There's some buying on ONGC, Hindalco. In general, the commodities universe is doing well. There's Wipro, 2.5% up. Infosys, tech is rebounding. Tech Mahindra is up. Let's see TCS. Amidst this tech rebound, TCS is actually down. TCS is down about 0.25%. So the positivity isn't quite rubbing off because the commentary is subdued. There's nothing very much to take home from. In fact, TCS is the only negative stock on the Nifty as we speak. Where are the financials? The Bank Nifty is up about 1.2%. So it's looking pretty okay. ICICI Bank is up 1.1% at this point in time. HDFC Bank is up about 2%. Kotak also higher. Most of your private sector names are up and about. Axis is very flat. SBI is also doing pretty well. So banks up, IT is recovering, but not TCS. And the global-facing sectors like pharma and metals, they are definitely having a good start.
Well, that's right. Tata Steel is in the green. They've laid out a plan to reduce costs at Tata Steel in Netherlands. And that's what could result in big, upgrades if it actually fructifies. For the time being, Investec was one stock that had upgraded the stock to hold. Earlier, they had a negative rating on the stock, so that stock is well in the green. Vedanta, that's bouncing back as well, up close to around 3.5%. You have Nalco, another metal stock that's seen a sharp correction from around, I think, 200 plus levels. It corrected to around 140, seeing a bit of a relief rally. Tata Motors is up 3.5%. Samadana Motherson as well is higher in today's trading session. Goldium, just pull up that stock. That's up close to around 15%. The reason is that US tariffs have been deferred. That's a positive development. The stock, I think, had half from the top. Remember, they get meaningful revenues coming in from the United States. So that's why this tariff deferral is actually very, very beneficial. That explains why that stock is now flying away, up close to around 15% as we speak. So a good start to trade. Metals doing well, IT is doing well, and some of these stocks like Goldium seeing a good relief rally. A good start, Prashant.
No, it is definitely a good start. What is happening with Muthoot? I'm just seeing. Muthoot is, on my screen, is showing a 5% cut right now. Yeah,
Oh, yes.
it is down 5%.
It is down.
It's got massive volumes as well at this point in time. Remember, on Wednesday, the stock was down 10. It ended 7% lower and is down another 5.5% as we speak. We'll try and have the management of Muthoot join us as we go along, but that is the stock on the downside that I think is playing out at this stage. Otherwise, I can't spot very much with volumes on the downside with any meaningful price move as well. I think on the upside, we've kind of highlighted bulk of what's happening. Maybe just one or two more names. Avanti Feed, the shrimp player, 6% higher. And surprisingly, we don't see it on the volume leaderboard, but it's the third largest volume name on the NSE right now. Look at that, about 400,000 shares. PI Industries, specialty chemicals, 6.5% higher on PI Industries. So 3,500 coming through there. LT Foods is up 5.5%. I think these are individual, tariff relief kind of plays which are coming through. Camlin Fine, another name there in the chemicals pharma space, 12% higher on Camlin Fine, 150. So yeah, this sector, chemicals as a space, also was perceived to be impacted a little bit more than others. But here you've got some gains which are coming through.
Just one note on Manappuram, on Muthoot, sorry. I'm reading an Ambit note. They have gone ahead. They were very positive on the stock. They have turned sellers. They've cut the target price by around 24%. And they've cut the EPS estimates as well for the next few years. Because of the lower LTVs, they're saying that the lower, now there's a level playing field on LTV norms. That's what will reset the long-term growth expectations. And that's why they believe it warrants a D-rating. So they've gone ahead, cut big target price cut, and they've turned sellers.
So I still remember this conversation that we had with Mr. Muthoot. At that point, they had maintained that while NBFCs are not capped at 70, at that point, NBFCs weren't capped at 75%. Industry practice was keeping LTVs as high as 90%. But I remember him saying that they, in general, try and limit it to a level of banks, which is 75%. But clearly, that's not the case. The other important takeaway from these draft RBI norms is the fact that the gold itself that you're leveraging, RBI said that you have to treat all gold as 22 carat purity gold. A lot of times the ornaments that are coming in are lower than 22 carat. So it doesn't matter. You can't, overlend if the gold is not of that purity. You have to take the value as if it was 22, reduce the value, and then lend. So perhaps some of this is going to...
We'll try and invite Muthoot, and we'll try and invite the Ambit analyst as well on this, because this is the stock of the day on the downside, which is coming through. Devina Mehra is with us, founder, chairperson, and managing director at First Global. Devina, good morning. Great to have you with us here on the program. Thanks very much. Where do we go from here? What next for markets here in India, Devina, for our Indian audiences?
Good morning. My advice actually has not changed very much. This Monday, which was supposed to be a manic Monday, I had breakfast at a 100-year-old cafe just to remind myself that there are many things that happen which in the moment appear very tumultuous, but eventually, the golden mantra is that this too shall pass. And to some extent, India, in any case, even when the tariffs were imposed before the rollback, was relatively a little insulated, one, because we don't have that much external exposure, and two, on a relative basis, it was a possibility that you could actually be gainers because the tariffs were vis-a-vis the US and all your competitors had higher tariffs. But for the moment, that's on the pause button has been set on that. So my advice remains pretty much the same as it has been for the last 10 days, which is that if you Whatever is your equity allocation, which should never be 100%, you should remain invested. But in a steadier portfolio, if you had invested in the themes of 2024 or were overexposed to small and micro caps, you have to recalibrate. So don't try to make it up from the same stocks or the same strategy or the same scheme. That's what I always say, that just because you bought something at 100 and now it's 60, don't try to go back to 100 with that, because the market has no interest in what your purchase price was. So broadly, I would still say remain invested, because the risk of a crash for the large cap steady state is not very high, which is not to say there's absolutely cannot be any downside in the indexes from here, but the risk reward is in your favor, in the sense that the percentage the market can fall is probably less than the percentage it can rise. And when there is anxiety, when these questions come that should I pull out of the market, should I stop my SIPs, is usually in hindsight the very time that you should remain invested.
Devina, just one more question, and then my colleagues will come in. Since diversification is a big theme, and obviously at a larger level it does not change, but this is a more near-term kind of question. U.S. assets generally have seen, it's like the U.S. passport, right? Extraordinary privilege. Same with U.S. assets. Do you think that is taken a bit of a knock after what we've seen? Or again, as you began by saying, that 100-year-old cafe, this too shall pass and nothing. But then, in that sense, nothing ever matters.
No, the US, I think, has taken a knock. First of all, let's first look at the US market. So first of all, this is also a mantra I keep repeating, that the global does not mean the US. US may be the largest market, but global diversification doesn't mean that you buy an S&P or a NASDAQ ETF and that's not good enough. And while in the near term, we also think that if the US doesn't do well, nothing will do well. But if you look at, let's say, the period between 2003 to 2007, and that was the time US was not coming off a high. It was already in the doldrums after the tech crash. And yet in that 4 or 5 year period, it did practically nothing. For the entire period, it was up only 65%. Remember, the NASDAQ high of 2000 was not taken out till 2015. And in that 2003 to 7 period, the emerging market index went up 3.5, 4 times. India went up 6 times. Brazil went up 10 times. So there can be a disconnect. So that's the market part. But and US has been outperforming for about 12 years. So anyway, I'd been watching that sometime that outperformance would end. If you'd asked me 6 months ago, I would have said that we are watching, but nothing looks imminent. But I think Trump has hastened the end of the US outperformance. And more than that, whatever US has done has hurt, I think, even on a long-term basis, the US dollar's position as the reserve currency of the world and the trade currency of the world. People will start to look at alternatives. 2 years ago, I made a video saying de-dollarization will not happen in a hurry, because reserve currencies don't change in a hurry. But I think Trump has shaken something fundamental about the trust in US, because US was not just a rich country. It was a country where the world looked up to for its rule of law, its institutions, all of those things, intellectual freedom. It literally attracted the best and brightest from around the world. And that part, it is changing. Like, for example, a lot of East Asian countries did become much richer, but they did not attract the talent from the world because of all these things, that they did not have this reputation of great institutions and freedoms, which US did. So, there's some permanent damage to America for sure, but that doesn't mean that you should not, as an Indian resident, diversify, because, again, putting all your eggs in one basket is never a sensible strategy. And this is not something for a 6-month view. It is something you have to do over a period of time.
Hi, Devina. Good morning. Good to see you, Ben. On Monday morning, people are talking about a Black Monday. I saw your tweet at that point of time, and I'd rather be with you at Cafe New York, having that delicious breakfast. That said, you've already answered a couple of my questions with regard to India or in emerging markets could outperform. And that's a possibility. The US markets don't perform that well. And over the last few years, you've seen the US market capitalization as a percentage of the total global market capitalization has actually gone up. So maybe it's time for them to unwind some part of that outperformance. That said, the SIPs, we're keeping it going, and I think most investors as well, they have faith. But what would your asset allocation strategy be as of now? Because maybe in the next 12 months or so, your fixed income could give better returns than equity. Just maybe, that 8 to 10% return or thereabouts. So what do your asset allocation advice be to a lot of our investors?
I normally say that don't change your asset allocation too frequently because it's very difficult to time that. So it is usually a good idea to decide broadly on your asset allocation. Don't tinker around too much with it because what you end up doing mostly is chasing the last asset or last strategy that did well. So that's what you will end up doing. And that if you do it systematically, you systematically bring down returns. So we have, like for equities, all these calculations that this is how equities compounded for 20 years, 30 years, I'm talking even for India. But if you look at the mutual fund data, you will find that most people do not remain, majority of the people, more than 50% of the people do not remain invested for more than 2 years. So that's the data. So that's what causes the actual underperformance. As I said, the time you are asking, the time to ask this question actually usually is when you are absolutely gung-ho and you think that the equity markets are going to do brilliantly, which was the case for most of 2024, let alone small investors. I had family offices coming to me, saying that, why are you so risk averse? We want to take high risk and get high returns. I said, only thing certain with high risk is high risk of losses, high returns are not guaranteed. And the other was that, no, we don't have extraordinary expectations. We'll be happy if you give us 30-35% compounded.
Wow.
When you are in that mode is when you should probably look at cutting back. And sentiment is always a contraindicator. Again, studies around the world have shown it, not just in America, but every continent, every country, this study has been done. It shows that sentiment is a contraindicator. When there is fear, anxiety, question marks, then the next period returns are higher. And when everybody is gung-ho, the next period returns are lower. So that's how it goes.
Devina, I'll be very happy with that low to mid-teens returns. I keep my SIPs going, most of what I earn. And people say, Nigel, you didn't see 2008. I don't want to see it also, and I hope I don't have to see it. But probably this could be the best phase to build a longer-term portfolio. So that's my hope.
Absolutely. Devina, you said it, I think. That's going to be the new reality check for a lot of newer investors. I'm hearing that in some of my friend circle as well. Market doesn't go up. And the idea of, 12% returns compounding being good returns, that idea is very alien and very new to a lot of the youngsters who came to the market post-COVID, right? But we'll see. The market is the best teacher, they say. And I'm sure people will learn.
They say you're smart if you learn from other people's mistakes. But at least learn from your own mistakes.
Absolutely, absolutely, Devina. Great chat. Thank you so much for joining in. You have a great Friday, and we'll connect again soon. Well, we're staying with the market. By the way, it's about a 380-point up move right now. It's a nice market in cruise control mode, at least right now. 22,770 on the screen. Nilesh Shah is with us from Envision Capital, of course, to get some more perspective in. Nilesh, it's dizzying, it's crazy, it's up one day, it's down another. Within one night itself, it's, so many different cycles. But my question is that now that there is this 90-day pause, and we know his mind has shifted, he's understood that you can't completely destroy markets, Mr. Trump. Do you think we're past the worst?
It's hard to say we've passed the worst because clearly there's so much of volatility. Every day, decisions come, new decisions come, previous decisions change. So till we do not get to a stage where countries sign up on these bilateral trade agreements, it's always going to be hard to kind of really say whether the worst is behind us. But I'd at least say that the kind of uncertainty which has unfolded in the last few days, and the fact that the markets have already kind of been on a consolidation or a correction mode for almost now more than 6 months, I'd say that a fair bit of the damage is already done. I mean, I haven't seen the sentiment as bad and so many words of caution coming in versus what we have heard in the last maybe 3 to 4 years. So to that extent, I'd say a fair bit of the damage is done. In fact, maybe investors run the risk that if there is basically a final settlement to this chaos, you're going to be caught off guard. So clearly, I believe that a fair bit of the damage is done. Valuations are turning attractive. It's just more now getting into more of the bottom-up mode to kind of build a more long-term portfolio. So I'd say that, yes, a fair bit of the uncertainty is behind us, but you can never say that it's entirely over.
Sure. Nilesh, so one specific question on IT services companies, and we've discussed this in the past. You're obviously very bullish on digital and internet businesses, but traditional IT services, I mean, look at TCS. I'm not getting into what they did in Q4 or not. And Q4 was their worst quarter in FY25. But even if you look at backdated numbers, in FY23, the company, this was just after COVID, company, came off 13-14% kind of growth. FY24, TCS grew at 3.5%. You can argue there was base effect over there. This year, it's ending with a growth of 4%, minus any tariff or global uncertainty. How should investors look at the IT exposure they already have in their portfolio?
So if you're not a benchmark indexed investor, you're not hugging the benchmark, then there's actually no reason for somebody to be in the large cap IT space. And this is not just a recent phenomena, but clearly with the huge base effect, even if I were to kind of look at it for a very long period of time, when the US has been on a roll, technology spending has been quite phenomenal, our large IT services companies have probably been growing in mid to high single digit, at best 10% in local currency. So if you actually remove the currency depreciation, the growth is even lower. So clearly, these are businesses which probably have been growing at about 5%. And you kind of mentioned that data point even for the most recent times. But I think that's true for a very large part of the last 5 to 10 years. And I don't see this changing meaningfully unless any of these companies do a very big pivot. And I think they've now grown just too big that I think it's going to be very difficult for them to do a mega pivot. So to that extent, unless you are a benchmark kind of oriented investor, honestly, I think within the world of IT services, there are many more other bottom-up opportunities in the tier 2, tier 3 space, which are doing some really specialized work. So that should really be the focus segment. I would probably think of the large cap IT to be more like kind of a value play, where you suddenly see it too beaten down, you want to participate in the market, maybe at some point of time it becomes a good value play to kind of buy into and maybe hold it for the next 6 to 12 months and see stock prices go up and you exit out there. But beyond that, these are single digit growth businesses. Of course, these are fabulous companies, the kind of capital efficiency they deliver. So they are great companies, but probably not great investments.
Absolutely, and I think I put it right there. Nilesh, hi, morning. So talk to us about one or two bottom-up ideas. It's been so much macro last few days. But it's at the end of the day, if you're going to make money, you're going to buy some stocks, right? And I think it'll be helpful for our viewers if you can. Just, of course, with full disclosure.
Yeah, without getting into individual names, but clearly, Prashant, I think the 2 or 3 opportunities where I'm still kind of extremely excited about, and they've got nothing to do with a global slowdown or a global recession or anything to do with tariffs, but clearly one is the whole digital space, and there are plenty of fintechs out there. There are some of these consumer internet companies, which I think continue to kind of do well. No matter how much of bashing that we do around food delivery or quick commerce, but this is really probably the fastest growing segment that we have in India. Clearly, payments is again a very, very exciting opportunity. Clearly, where the whole
Fino payment is. I mean, if you allow me, is that name? Which you like? I mean, you already own it.
What we own are both Fino Payment Bank and Paytm. These are the 2 companies that we own. One is a bank, the other is essentially a payment platform, but getting into essentially a whole range of financial services. These are the 2 businesses that we have been owning for some time, and we continue to really like their long-term prospects. And these stocks prices have corrected meaningfully without any kind of an impact from a US slowdown or this whole tariffs thing. So they're clearly domestic-driven opportunities where penetration levels are low, and the growth potential is quite massive over a medium to long-term horizon. So these are some of the spaces that we we like.
Just very quickly, a follow-up on payments, Nilesh. You would have seen this, right? One of the regulatory issues that came out from the monetary policy was finally RBI saying that maybe we should have MDR for UPI transactions now, at least large UPI transactions. They're still, I think, considering it. They'll figure it out and decide how it needs to be shared between NPCI, merchants, etc. But could that be a big kicker for a stock like Paytm, or do you think it will be only marginal at the periphery?
No, it will be a very big kicker. It will be a very, very big kicker. And the company had also been guiding that they would turn EBITDA positive in the quarter gone by, and maybe at some point of time, they would also turn basically positive at the net earnings level. And I think clearly one of the things that will drive that will be basically the ability to charge MDR to large merchants. And that's going to be massive, because currently it's not that through other modes of payment, the merchants don't pay MDR. They do pay MDR for credit card transactions, and those numbers are quite meaningful, quite significant. So anybody who has a business which is relevant for merchants, and especially for millions of merchants, I think that's a big kind of an opportunity. The other essentially is the optionality that they sit on, that when you are serving payment products to millions of merchants, you essentially can cross-sell many other financial services products. And a start has already been made in that direction, but basically there is a significant optionality that is sitting out there. So these are the kind of businesses which I would probably think are relatively immune to the current, the not so favorable external environment.
All right. Hi, Nilesh. Good to see you. And as always, Nilesh, for this week itself, the FMCG/consumption pack has made a comeback. And normally in times of uncertainty, the FMCG/consumption index has done better, barring this time around, because in the last 7 to 8 months, it's actually underperformed what the Nifty has done. What's your view on this sector? Because it's got some tailwinds. Commodities have crashed, so packaging cost will come down. Demand is expected to come back because Indians will have a higher amount of disposable income. So that's the hope out there. And at least as of the recent predictions, the forecast suggests that the monsoon is going to be pretty okay. Your view on this theme?
Clearly, consumer is likely to outperform. I think it's very well poised to outperform. I clearly believe the roots of that were laid out on the 1st of February when, the massive tax exemptions were extended to India's growing middle class. So clearly that was the first trigger. And second is now basically the crash of crude. Clearly augurs very well for them. That's going to help them to expand gross margins and the operating margins as well. And that's been a space which has not done so well in the last few years. So I think it's poised for a fair bit of outperformance. And the trick is going to be to essentially identify select categories. I mean, of course, there's a broad consumer staples as a category, and businesses around soaps and maybe shampoos probably are relatively more mature and are highly penetrated. But some of the other emerging categories like beauty, personal care, feminine hygiene, maybe dairy products, that's really a segment which is still very, very early in terms of the penetration. And those are the kind of categories which will witness significant acceleration in the years ahead as India grows and as the average Indian becomes more aspirational. So clearly, consumer as a space is poised for some really decent outperformance.
So, Nilesh, what's the final advice? I mean, if we talk about, okay, let's say the next 12 months, right? 12 months, how much do you see the market rising? And let's not take Nifty 50, let's broaden the scope, even if it's a Nifty 100, but at a broader, index level, what do you see ahead next 12 months?
At the cost of going wrong, Surbi, but I would think that basically the markets would be higher from where we are today. I clearly believe over the next 12 months, a lot of this dust would have settled. I would expect, the government of India and the policy makers to unleash the next round of reforms. Third, inflation is trending lower. Interest rates would essentially be lower. And some of the most recent policy initiatives will begin to play out over the next 1 year. So I clearly think, and on top of that, I expect foreign investors to come back, given the kind of headwinds that they see in the United States. I would see increased allocation for emerging markets, including for India. So I think on the whole, be it fundamentals, be it liquidity, or be it sentiment, a combination of these three things, based on that, I would expect the markets to be higher a year from now versus where we are today.
All right. And Nilesh, on that positive note, we'll leave it here for now. Thank you very much for coming on this morning, talking markets and what you like in the markets at this point. We take a quick commercial break here. A very interesting and special conversation with Najib Shah coming up. He's former chairman of Central Board of Excise and Customs. Last time we spoke with him, we were in the middle of the sort of entire reciprocal tariffs bit. Actually, we spoke to him the day after the reciprocal tariffs were imposed. So what next in terms of India-US negotiations? Coming up. Welcome back. I think we're approaching the 2% mark on the Nifty, and it's looking good overall. We started with about a 1.25% gain, tentative, but things have picked up since. Now, noted American economist Jeffrey Sachs has warned India about getting closer with the US at the expense of its ties with China. He was speaking with my colleague Shireen Bhan. He said India should not be anti-China to please the US to try and get a better trade deal. Listen in.
Market capitalization in 2 days, you're probably on the wrong track. The United States is on the path of wrecking the world economy once again. This is not U.S. policy. This is not congressional policy. This is not U.S. public policy. This is Donald Trump's policy. He is single-handedly wrecking the world economy. And I think the damage is going to be done before it gets undone. India really needs normal relations with China. And India should appreciate this is a great civilization, and this is a country that's going to play a huge role in the world in the 21st century. I mean, a huge role in the world on all sorts of things, on culture, on economy, on technology, on global peace. Yes, have good relations with the U.S., but don't be played by the U.S. Don't be anti-China because that makes the U.S. feel so good and speeds your agreement. It's the end of American leadership, I would say. It's the end of other countries looking to the United States as a stabilizer, as a rule-based order, although that was quite frayed already, but now no one could utter those words with regard to the United States. Similarly, China was not in any way isolationist. It was the major trade partner of probably 150 countries in the world. But China has aimed for the last decades to be a responsible participant in the international system. China now has to take a more leadership role. I think China will have to enable the renminbi to play a more international currency role. It's been very gradual, step by step, but I think it's going to have to accelerate.
Well, those are strong views, and of course, I mean, those things will play out over a long sort of period of time. Of course, Jeffrey Sachs has maintained some of those views for a while now. They're not new. But that wrecking the global economy, maybe that wrecking ball has been sort of reined in for now with that 90-day pause. We have Najib Shah, former chairman of Central Board of Excise and Customs, now joining us. Mr. Shah, thank you for joining us back on the program here. Prashant this side. We've been talking about global economy and world trade, etc. But now it's a pause which has come through. And I think Scott Bessent did mention a list of countries that the US will negotiate first. There was Japan there was Korea there was India there as well, right at the end. What should India do now in terms of trade negotiations? And where is it? It's a very fluid kind of situation. But just give us what you think.
I think the Indian negotiators is in a very unenviable position because US has repeatedly now shown that it can disregard trade agreements. Canada, Mexico, South Korea, Australia are all examples. So this is one thing we need to constantly keep in mind. Having said that, the fact of the matter remains that the US market is important for very many of our exporting products. So, and mind you, any free trade agreement, if we were to get into with USA, will open up a whole host of non-tariff barriers. And in the latest USTR 2025 report, has a whole litany of grievances about India's non-tariff barriers. They have concerns about our imposing our BIS standards. They have concerns about our government procurement policy. They have concerns about our IP and host and so on and so forth, about our rates, of course. So they will be pushing for all these. Agriculture is a major area of concern for them in their non-tariff barriers. Now, are we willing to open up all these sectors? And these are sensitive sectors for us. So I personally feel going into a bilateral trade agreement, while it is a good option forward because it doesn't violate the MFN WTO principle, with a country like USA, right at this juncture will be difficult. We need to identify products. The EU has done that, identified products where it feels it can reduce its tariffs and work towards convincing US that this is the markets you wanted. We are reducing the tariffs there, and we'll take it forward from there. The bilateral trade agreement itself will follow all these things. But remember, when we reduce the tariffs, it has to be MFN. It should not be US specific. It should be across the board for imports from all countries. That is what will be advisable. The Indian importers have to, Indian manufacturers have to be cognizant of that. We have to be cognizant of China coming in a big way. Again, you should not forget that China is the #1 country as far as all our safeguards and anti-dumping duties are concerned. So we should be cognizant of the impact such Chinese imports, which can follow a reduction in general duties across the board.
You wouldn't read this pullback, this pause as a bit of, it's a reprieve, right? And they're kind of pulling back from an extreme position. You started by saying Indian negotiators are in an unenviable position. But in a way, US has kind of given in. I mean, they're not saying 26% now. It's a baseline 10 and then to be negotiated. Of course, 10 is higher than where they were earlier, but you don't see it like that.
You see, when we were at 26, we were happy that we had a comparative advantage vis-a-vis our competitors. That advantage has been done away with now. We're all at 10. And Indian exporters will find it difficult to compete with Bangladesh and China, whose cost of production perhaps will be lesser than India's. Bangladesh and Vietnam, I'm sorry, not China. China, of course, has this, whatever, 125, 145, depending on what you want to look at. The comparative advantage which you thought we had has been wiped out. So while this may be a reprieve, it's not the end of the road. There's still a long way ahead. The uncertainty will be killing for the Indian exporter and the businessman. What should this pricing be? What should this costing be? And how much will the government of India be able to support in terms of whatever the drawbacks and the remission of duties, which the schemes which we have? How much can we support to make sure that the goods continue to be competitive?
Mr. Shah, the other thing is with now a full-blown trade war with China, and that obviously also can be, that there can be a thaw there, and we'll see how that pans out. But for now, it looks like, 84% tariffs, 145% tariffs, it's a full-blown trade war there. And if it kind of stays at that high level, Chinese goods need some place to go. Our Indian tariffs, you briefly said, most of our sort of, barriers are aimed at Chinese goods. Do you think across industries it's sufficiently high, or we'll need to be on guard there as well in terms of second-order impact because of US and China?
We will need to be on guard. China has historically been should I say, found to be depressing the cost of the products, which is why anti-dumping and safeguards have kicked in. So we need to be on a safeguard. When we are going to reduce our rates of duties for US as part of our bargaining chip, and I suggested that it should be uniform across all imports from all countries, then we have a situation where the Chinese goods can enter in again in a big way. Dumping can be a possibility. So we need to negotiate with China with caution. They are a big economy, obviously. Our exports to China are nothing compared to what we import from there. So we need to negotiate with China very cautiously. Again, if you remember, that was one of the reasons we stepped back from ROTTEP, the large-scale treaty agreement, which was across ASEAN countries, Australia, New Zealand, and China, simply because of the fear of what Chinese goods how they can exploit the trade agreement if such a trade agreement was there.
Got that, Mrs. Shah. Useful conversation and gives us a roadmap on how to think about these negotiations as they proceed. Really appreciate you coming on this morning on CNBC TV18. Thank you for your time, sir. Appreciate it.
Thank you very much. Thank you.
Thank you. I think just a quick look at the market, 450 points, 22,850. And overall, it's 10:1 in favor of advances if you look at the NSE market-wide breadth. Nigel.
Well, it's a beautiful looking screen actually, because we started off with a gain of around 270 to 80 points and we're built on those gains. You like a market like this, but now we're approaching that crucial zone where we have resistance. That's around the 20 DMA, which is 22,900 or thereabouts. So need to keep an eye out on that. And the Nifty Bank, by the way, is at the 200 DMA, which is the other crucial mark that we're tracking out there. Let's move on though. Global uncertainty has hit crude oil prices. Crude oil globally has fallen to the lowest we've seen in the last 4 years. Is there more further downside for crude prices? We also have domestic news with the government increasing excise duty on petrol as well as diesel, but they've also gone ahead and hiked LPG cylinder prices by around 50 rupees per cylinder. To discuss all this and more, we're joined by Mr. Surana, the former CMD HPCL, and also joined by Mr. Gaurav Moda, the partner and energy sector leader, EY, who joins us. Hi, gentlemen. Good morning, and thanks a lot for joining in. Well, Mr. Surana, let me come across to you first. The oil minister says that OMCs normally carry inventory for around 45 days or thereabouts. The question is, maybe by May, should we be bracing for a price cut in petrol as well as diesel?
Good morning to you and Mr. Gaurav and all of your viewers.
Morning.
So there are three aspects which we need to consider before we reach to this judgment that after the inventories are over, whether we should expect another price cut or something like that. If you remember the past discussion which we had and the past narration, there are under recoveries on some products. There are over recoveries and under recoveries simultaneously happening at different points of time in some products. One may try to infer that there is a cross-subsidization of products. Probably that is right. But India is a heterogeneous country and there is no one-fit solution to that effect. The increase in the excise duty or increase in the LPG price, while it may look an antithesis on the first glance, but it looks perfectly logical because the volume share of the different products, let's say MS, HSD and LPG, is not the same among all the market players. There are some companies who are not in the LPG business, but they have the MS, HSD volumes. So we can't have a situation where there is somebody who is a beneficiary of the margins, higher margins on some products, and some companies only are bearing the under recoveries on the LPG. So the way the government has thought of increasing the excise duty and not passing on to the consumer, it's a smart solution in my opinion, which has got something for all the three stakeholders, that is the consumer, the companies, and the government. Now, it also solves one issue that because we are incidentally in the April month and any downward revision, the price would have led to inventory losses also. So that solves that problem also without allowing the companies to continue to retain the higher margins on these two products. Now, come May, whether it should be reduced, it will depend on two things. One thing is the base objective of covering the under recoveries, which the minister has said that 41,338 crores. whether that has been reasonably reduced, number one. Second, how the oil prices and the product prices behave in the international market, because all said and done, the prices have not been aligned to the international markets over last few years. So these two components should decide, and the third part will be that the OPEC's move on the crude prices, because as we have seen, they have accelerated the rollback of the voluntary production cuts, which they have done earlier, and almost what the production should have come in July has come. But also then we should expect that the prices should be heading downwards.
You expect globally crude oil prices to head further south?
Yes, I would say that. Of course, it did touch 60.89, I think the lowest thing, and has come back to 63 point something today morning. But I think I don't expect it to go beyond 7. So the base, which was in the range of 75 to 80 earlier, I think it is shifted to now 65 to 70 or 60 to $70 in the near future. And that can be seen with the market structure of the derivative market, where in the Q2 and Q3 of 2025, we see a reasonably supplied market.
Okay, all right. Just to clarify, sir, you said that, it's perfectly logical what the government has done. That's hiking their excise duty as well as hiking the LPG prices as well. Do you expect another price increase on LPG? And do you expect them to deregulate it?
If you would have heard the minister's press conference, he did mention that from July 23 to February 25, I think there is a 63% increase in the international prices. So as of today, this 50 rupees increase is not covering the under recoveries which are there as of today. So even now, there are continuing under recoveries. That 41,338 crore was the past under recoveries which has got accumulated. Now, so this increase will cater to part of that under recoveries for the phase which we are going in. But still, you will have some more under recoveries coming in. But it is a reasonable solution where the 2 rupees increase on MSHSD, where the margins are reasonable. That covers, I was told that 32,000 crore or so in the will mock up, and 4,000 to I think 6,000 will come by LPG. But we still have got some component of the LPG under recovery which is ongoing, because it is not covering the full market price.
Okay. All right, Mr. Surana, coming back to you, I want to ask you about Delhi's EV policy as well and what that could spell for the industry. But let's get in Mr. Gaurav into the discussion. Hi, Gaurav. Thanks a lot for joining in. Well, a lot of moving parts. Give us your take first, based on what's going on in the globe and also the government action.
Sure. I mean, very simplistically, as Mr. Surana has also mentioned, the global crude prices, which were averaging $75 to $80 per barrel, are now in the lower 60 range. So there's a 20% drop on averages. And this is reflected in the Indian crude basket as well, as we buy from Globe. So 20% drop is good for India, given we import almost 80%. But what that also means is some of this is to be passed to the consumers who've been bearing 90 rupees, 100 rupees per liter of petrol and diesel. At the same point of time, if you look at the back end, which is the refineries, and majority of the refineries happens in India, they will be under cost pressure. And therefore, cost optimization programs may get started to improve refinery margins as the crude prices come down. So it's a double-edged sword as far as the Indian oil sector is concerned. Good for the consumers, but the players need to see how they make money out of this.
Okay, all right. Mr. Surana, what do you make with regard to the New Delhi EV policy that they laid out? IGL is the one that gets most impacted because of the exposure they have to Delhi. Do you think they can go the distance and implement it?
The policy is still right now at the draft stage, so it needs an approval. And the Delhi narration of the pollution, I think, is slightly different than the whole of the country. So we cannot implement the similar solution all over India. But considering all the noises which we hear about the Delhi pollution, and which comes every summer season, so targeting the 2-wheelers and 3-wheelers towards the EV, which is easier to do than the 4-wheelers part, I think this may be one of the solution, but and because it is more towards the last end connectivity of two-wheeler, three-wheelers. So this is a move in the right directions. Now, to what extent it gets implemented and how quickly it gets implemented, we need to see, because what is being said is that the new two-wheelers will not get registered about after 15th August 2026, which are not EV, and the three-wheelers beyond 15th August 2026. And there is a plan to, over a period, phase out the CNG run and petrol run and diesel run two-wheelers and three-wheelers.
Okay.
So let's see how what fashion it comes ultimately. And
Got it. Okay, all right, Mr. Surana, before we let you go, I wanted Gaurav's opinion as well. What do we see next? Another hike in excise duty from the government on petrol as well as diesel? Or do we brace for a cut? Because that will be of interest, not just to the shareholders, but also to the common man. Gaurav?
Yeah, I think before that, just a quick perspective on the EV view. If you look at the total transportation fuel in the country, almost 50% of that is diesel, 20% is petrol. Now you're looking at most of the EV impacting the 20%, where almost more than half of it is two-wheelers and less than half is four-wheelers. Effectively, all the conversation we're having on EV is on the 20% bracket, and within that on two-wheelers, which is 12% of the overall transportation fuel. 50% of transportation still sits on the trucks, and majority of that is the large trucks flying on highways. Unless we come up with a solution on the diesel side, which potentially may be hydrogen fuel cell in distant future, EVs will have a certain impact within the city, but not beyond a point.
Okay, all right. And you want to give me the answer to the other question that I asked you? With regard to what do we expect, excise duty hike or a petrol price cut?
Difficult to comment on that, on government policy. But the government has shown in the last 8 to 10 years that they want to keep the market stable. And therefore, sometimes excise cut to manage price hike versus excise increase to manage crude oil prices coming down is the balance that government needs to maintain. Overall, a 20% decrease in global prices should reflect somewhere to some extent. In fact, even if you look at the global forecasts for crude for the next 18 months, it's downwards. So somewhere it'll reflect. How much we'll have to see, how to best balance.
Okay, all right. Thanks a lot, gentlemen, for joining in and giving us your perspective. Wishing you all a good day ahead, and we look forward to chatting up with you all again on the show as the entire situation does evolve globally as well. Wishing you all a good day ahead. Well, the markets are holding well in the green, 450 points, no worries on that front. The breadth of the market as well is as good. So it's a good start. It's a good Friday morning. And when we started off this week, the fear was of that Black Monday. Well, that's not really taken place. And in fact, we could possibly end the week more or less flattish, which will be a good outcome. Let's focus on a couple of stocks. Vinny's here to tell us about the pharma names, Sun Pharma as well as Cipla. Vinny, take it away.
Hi, good morning. So Sun Pharma, we've seen that it's opened up in a green, holding on to some positive side. Why? Because now it has got a positive news flow coming in for the Lexelvi drug. There was some court case that was going on. US Court of Appeals for Federal Circuit has ruled in favor of the company. So the preliminary injunction, this was there, that has been lifted. So now they can launch this drug. Yes, the court case is still going on, but they can launch the product coming in. The company had mentioned also in its con call last time that this could see a launch coming in as soon as they win this. There would be a launch in the next 2 to 4 weeks. So yes, we could expect that coming in the next month or so. Now, obviously, do not forget the patent for this drug is ending in December 2026. Analysts are highlighting that this is a very big positive for Sun Pharma. $400 to $500 million sale is what one could expect from this drug as a peak sale coming in, and EBITDA of around 50%. So very positive news flow coming in for Sun Pharma. Other one, Cipla, that's a positive news flow as well. They've received a US FDA approval for generic Abraxane for their company, which is used for the treatment of breast cancer. Now, this product was expected to be launched in the second half of FY26. This is a positive surprise that has come in, given that the US FDA approval is coming now, and they will be launching the product soon, H1 FY26. Now, Elara has also already penciled in a $20 million revenue for this in FY26. Currently, there are 4 other players, 3-4 other players who are there in this as well, but a big positive for Cipla on this front as well.
All right. Thank you very much for that, Vinny. Muthoot Finance is the stock which actually is selling off. Ritu is here with the changes the RBI has made with regards to gold financiers. Ritu, morning.
Good morning, Prashant. 98% of Muthoot's AUM is gold loans. So, yes, it is one of the most impacted. But the headline from these draft rules really is they're not as bad as feared, although there may be some near-term impact. Now, what do the rules, the draft rules say? For bullet repayment consumption loans, the tenor has now been capped at 12 months. They also say gold now has to be valued at 22 carat purity. LTV changes or loan to value changes are some of the most significant that will impact NBFCs like Muthoot. Now, what RBI has said is that this 75% LTV has to be maintained throughout the tenor of the loan, something that was already applicable to banks, but it is now being made mandatory for NBFCs as well. The other additional factor is that the accrued interest has to be factored in when calculating that 75% LTV ratio, which means, at the time of sanctioning of a roll, you can't, the dispersal amount cannot breach that 75%, including the interest that was to accrue. So the origination LTV may actually have to be brought down lower. And if this breach in LTV continues for 30 consecutive days, there's also a 1% additional standard asset provisioning that will apply. So what it really does is reduces the arbitrage between NBFCs and banks, which is why you're seeing the likes of Muthoot getting affected. Now, brokerages say that this can affect, growth in the near term, immediately after implementation, but they also say, the outcome is slightly better than expected because, for instance, markets were talking about, people in the street were talking about bullet loans itself being scrapped. Morgan Stanley believes Muthoot's countercyclical business can still ensure strong earnings, building in an ROE of 20% for this financial year, 18% for next financial year. And CLSA says this will be marginally disruptive for Muthoot and is building in a loan growth of 12 to 15% over this year and next.
All right. Thank you very much for that. The stock tag there, of course, is Manappuram. But just look at Muthoot and what that is doing. 5.5. So it's off the lows by about 1.5%. Ritu, thank you for that. Mitesh is with us now with what he'd want you to do in terms of specific trades. Mitesh, over to you.
Yeah. Prashant, the market is quite good, and I think we're just holding on. We're not actually selling off from 22,800. So still, trading with some long bias. Grasim is something which I would recommend a buy. Keep a stop at 26.20. Look for targets of 26.80 to about 26.90. And Paytm is another one which opened a gap up and sustaining. So we'll take a very tight stop at 8.20 or just 819 here and look for a target of around 855, 860.
All right, Mitesh. Thank you for that. We'll speak again soon. Appreciate it. Well, we'll take a quick break. Back on the other side.
हैं कि डील लिमिटेशन से उनकी सीटों पे कोई कमी नहीं आएगी प्रोपोर्शनेटली।
देखो, मेरे कोरे आश्वासन से शायद साउथ के हमारे भारतीय है वो नहीं समझ पाएंगे। मैं थोड़ा कहना चाहता हूँ। जरूर। हिमाचल में कांग्रेस की सरकार है जी, वहां डीलिमिटेशन के लिए कुछ हो रहा है? जरा बोलो ना भाई।
जी जी,
नहीं हो रहा है। कई जगह इंडिया अलायंस की सरकार है, वहां डीलिमिटेशन के लिए कुछ हो रहा है?
नहीं।
सिर्फ तमिलनाडु में क्यों हो रहा है?
चुनाव आ रहा है।
चुनाव है। अभी डीलिमिटेशन सरकार ने घोषित किया है क्या?
जी नहीं।
नहीं। एक सेकंड।
हाँ, जी जी।
डीलिमिटेशन एक्ट हमने बनाया है क्या? नहीं बना।
जी नहीं।
डीलिमिटेशन कमीशन में किसी सुप्रीम कोर्ट के जज को अपॉइंट किया है क्या? नहीं किया है। तो आज है क्या? क्योंकि रैंपड करप्शन कर तमिलनाडु की जनता आपके खिलाफ हो गई है, इसको ढकने के लिए ये मुद्दा आज उठा रहे हो। आज बुरहत क्या है?
Okay, welcome back. We've been talking about stocks and equities all day, but let's talk about commodities now. And of course, gold is glittering once again, bouncing off very, very sharply over the last 2 days. Manisha, take it away.
Oh, well, absolutely. You know, there are various concerns in the international markets right now. And even as the equity markets have gained today, gold is not left behind. We're looking at all-time highs coming in and continuing for the gold prices. $3,200 an ounce is a level that we've been talking about for a very long time in this year as an year-end target. But there you have it. 32.20 is what we've seen in the Asian markets, in the markets today itself. So with this, gold is on track on best weekly gains since November 2024. And we also have seen gold prices hit all-time highs, not just in the US dollar terms, but in the Indian rupees, where we are trading above 92,000 rupees. Gold is also trading at an all-time high in Japanese yen, Australian dollar, Euro, Chinese yuan, all of those currencies as well. Very strong gains continuing, and that's also on the back of the US dollar index, which is trading at a 3-year lows. That clearly has been supportive for the gold buying there. The markets also are looking at strong ETF investments globally. Those numbers have continuously seen inflows for the last couple of quarters, and April has started no different, and that has been supportive. Well, the markets are looking at escalating US and China trade tensions, with various tariff missiles being thrown on both the countries, and that has been bothering. Tariffs on China is now 145%, and China tariffs on US now stand at 84%. There have been various calculations from various sectors on what it would really mean in sense of businesses between US and China, where the costs have gone up really high. So the inflation concerns has been one of the reasons that we've seen gold prices continue to do quite well there. Well, there are bullish cues coming in from the US markets itself. The US March CPI data that came in yesterday has been on the lower side, pushing for a rate cut as early as for the month of June itself. And then it also has been about the high US national debt. $34 trillion is what we saw passing in the month of November itself as an all-time high, and it only has grown since then. That has been supportive. The markets also are looking at COMEX gold holdings, which are also near record highs. The markets have been buying ahead for eventuality like this one. So strong buying continuing on physical markets and investment buying as well. The next chart should tell you on what the global banks and brokerages now believe that the gold prices can go up to. Well, 3,000 almost done, 3,015 also done. Deutsche Bank has talked about 3,140. And in extreme scenarios, they've talked about 3,700 on the higher side as well. That's going to be a level to watch out for. 3,200, again, we are standing at those levels as being put by ANZ and UBS. Remember, these banks had put these targets for the second quarter or the second half of this year. We already have seen that happen. Now the higher targets. Goldman Sachs has talked about 3,300 and 3,350 is what Bank of America is talking about. Citi says if investment continues stronger and there are extreme chances, you could be looking at 3,500 into this year as well. De Beer has talked about 3,300 and an eventuality can take the prices to 4,500 on the higher side. And this, the last one, is the most bullish of all until now. This comes in from Swiss Asia, where they say they're anticipating gold prices to continue to gain in the next 2 to 3 and 4 and 5 years as well. They have a gold target of $8,000 an ounce until 2028. Well, so everywhere that you look, we have banks revising their gold targets on the higher side, and it continues to be very, very bullish.
You know, Manisha, $8,000, we're at 3,000, right? 3,000 to 8,000 in 3 years.
Yes.
That is almost a 40% CAGR return, 40% compounded.
And if you look at the last 1 year, it's gained up by 40%, Prashant. So we've seen gold prices gain up by 40% in 1 year. This is about 3 years of a target. So,
and, you know, we'll see. But it is absolutely the go-to in that sense, a safe haven, and so many other reasons why gold's been doing well. Time for a quick commercial break here. We're going to come back, special segment. It's the economy. Latha in conversation with Brian Colton, Chief Economist of Fitch Ratings. We discuss what else, but Trump tariffs, the pullback, the pause, coming up.
मगर आपने कहा है, मैं स्पष्टता कर ही देता हूं, दक्षिण के किसी भी राज्य ने, किसी भी मतदाता ने, किसी भी पॉलिटिकल पार्टी ने चिंता करने की जरूरत नहीं है। भारतीय जनता पार्टी का वादा है कि किसी को अन्याय नहीं होगा, आपकी प्रोरेटा सीटें बनी रहेंगी।
तो मतलब अगर 7.5 सीटें होंगी तो प्रोरेटा के हिसाब से उनकी जो बनती है 180
मैंने कह ही दिया भैया, पहले भी कह चुका हूं, मगर ये सुनना ही नहीं चाहते जी। क्योंकि ये शोर शराबा बंद कर देते हैं तो उनको करप्शन का जवाब देना पड़ेगा, उनको परिवारवाद का जवाब देना पड़ेगा। चुनाव मुद्दे पर वो चाहते नहीं।
तो जैसे 750 सीटें अगर हो गई तो उत्तर प्रदेश की सीटें भी बढ़ के 110 120 हो जाएंगी, तो ये बहुत बड़ा नंबर है।
राहुल जी ऐसा है कि डीलिमिटेशन कमीशन का हर बार एक्ट बनाना पड़ता है। अभी तक की एक्ट का आयुष्य 25 तक था। अब नया एक्ट आएगा तो वो भी समझते हैं, हम भी समझते हैं, पार्लियामेंट में आएगा। छिपा कर नहीं हो सकता। इसके पहले ऑल पार्टी कंसल्टेशन होगा, एक्ट आएगा, शायद समिति को भी जाएगा या डायरेक्ट भी होगा, तो चर्चा होगी ना जी। अभी कुछ आया ही नहीं है और आप हो अल्लाह कर रहे हो क्योंकि आपको चुनाव में मुद्दा चाहिए।
मैं ये कह रहा था कि अगर उत्तर प्रदेश में इतनी ज्यादा सीटें हों तो जैसे मायावती जी एक समय कहा करती थी कि उस प्रदेश का विभाजन होना चाहिए, चार टुकड़ों में उसको बांटना चाहिए।
देखिए, वो वोट बैंक के लिए कर रहे हो, आप टीआरपी के लिए कर रहे हो। अभी भैया आया ही नहीं है डीलिमिटेशन, काहे को डीलिमिटेशन करते हैं।
Recent trade tariff related measures have exacerbated uncertainties, clouding the economic outlook across regions, posing new headwinds.
Welcome to It's the Economy. US President has once again thrown a surprise at global markets by pausing the tariffs. Of course, globally, stocks have responded enthusiastically. But does that improve the prospects for global growth? Does it decrease the fears of recession? For some of these basic questions, I have with me the chief economist of Fitch Ratings, Brian Coulton. Brian, thank you very much indeed for joining us today. The world and investors all round are confused. What's your first impression with the tariffs being paused for a good 90 days? Does it improve the prospects or at least reduce recession fears?
It probably improves the prospects relative to the beginning of yesterday. But big picture, this has been complete chaos, and clearly the market adjustment has been too much for the White House team to bear. And particularly, I think the volatility in the equity markets was something that they seem to be able to stomach, but the bond market sell-off in the last 48 hours, I think, was something that was probably quite a concern. So, it's been a kind of dose of sobering reality, really. The rules of economics still apply, and you can't make these very, very aggressive policy changes without markets getting really concerned about it and without real material impacts on the outlook for the economy.
Okay. Well, since you touched on the bond markets, can you explain a bit? The chatter across all markets, all major markets, is that it was the spike in bond yields to 4.5% and the devolvement of the US Treasury auction on Tuesday that rang alarm bells. Can you just connect the dots for us?
Yeah, I think the context here is the US government is still running a very large fiscal deficit, despite the economy having been very strong the last two or three years. And so the backdrop is that the market concerned about the amount of supply that it's going to have to absorb. Remember, the Fed's no longer buying. They're not reducing their portfolio bonds quite so quickly. Maybe even pausing it for a little while. But that's the backdrop here. And when you see this sort of volatility, one other key development I think has been that if you look at the ownership structure of US Treasuries, we have an increasing share of what you would call like non-traditional holders there, in terms of sort of pension funds, insurance companies, more hedge funds, more money market mutual funds, more sort of slightly more flightier money, and I think that has been something that's created volatility. Normally when the market generally and the media generally is talking about a rising US recession risks and slower growth, what happens is that bond yields go down. So the fact that they started to go up pretty rapidly, I think, was a shot across the bows and was a signal that the market is concerned about supply. We had evidence of that in the last 12, 18 months. Other occasions when the Treasury has raised their borrowing requirement, we've had a rise in bond yields, got nothing to do with the outlook for the economy going in the opposite direction. So I think it was a bit of a shock.
Okay, but what do you think caused that buyer's strike on Tuesday and even Wednesday for that matter? Yields even after the president announced that he's pausing the tariffs, didn't quite fall below 4%. They are still high. So what is causing the buyer's strike? Is it these short-term hedge funds who are now scared that there may be immediate inflationary fears? Or is it, you know, the big buyers? Japan holds over $1 trillion of US treasuries. China owns $760 billion from the last data I picked up from the US Federal Reserve. Are these people striking?
I don't think it's possible to sort of to tell. I mean, I know that's been the narrative, and clearly, you know, central banks in Asia are big holders of treasuries, and the trade war, you know, naturally leads to this speculation that there might be some sort of buyer strike. But this is a big and very, very liquid market. You know, we just don't have the information to know if that's what happens. I think maybe a more credible story is that, you know, these non-traditional investors, which include hedge funds, you know, they're leveraged investors, and we know they've been taking positions on something that's called a basis trade, the difference between the synthetic bond yield from the swap market and the cash bond yield, and with the volatility in the market, those leverage positions have been exposed, and I think there's, you know, a lot of you know, market commentators that are following the market in detail a lot more closely than I am, but you know, there seems to be this story that there's been an unwinding there related to the leverage positions, and this has been something that we've seen before in the March 2020 sell-off in the bond market, when with the outlook for the economy was collapsing under the pandemic shock, and we actually saw bond yields rising back then. The Fed had to step in, so we know this unwinding of leverage positions is an issue, has been an issue in the past, and there does seem to be some credibility to that story, that this was part of what was going on in the last 48 hours.
Yes, we did hear the chatter about this basis trade and, you know, over-leveraged positions there. But to zoom out back into the global economy, what's your base case now? Will tariffs come back in some fashion? Will it remain this 10% which has been imposed on all countries? And what may be the consequences of that? Are we going to see, nevertheless, a recession in Europe or a slowdown in Asia? What is your base case?
I think the only thing you can say with complete certainty is that under this US administration, we're not going back to anything like the US trade tariffs that we saw before they came to office. So the US effective tariff rate was 2.3% at the end of 2024. Now, depending on what you assume, you know, it looks like we're in the region of somewhere between 25 and 30% now. That's a massive change. You know, even with the 10%. The 10% rate rather than the additional reciprocal rate on all those countries that got hit with the additional rate on Liberation Day, even with that going back to 10%, because he's pushed the China rate so high, and, you know, China's a huge trading partner. You know, we're still at, you know, 28-30% is the number. That's a massive change, and that is going to have definite negative impacts on US and global growth. Now, whether we get an outright recession in the US, 2 days ago that was looking pretty likely. I think the pause has probably reduced that likelihood a little bit. You know, one thing you do need to remember is that the US government is going to get quite a lot of extra cash as a result of the tariffs. You know, it's not going to be possible to shrink the volume of imports that quickly. So the higher tariff is going to lead to some additional coffers, you know, maybe in the hundreds of billions of dollars. Now, is the US government going to save that money? So that's a direct drag on the economy, or are they going to recycle some of that money back into the US economy? And I think it's probably more likely to be the latter. So we'll see those extra tariff duties used to fund some tax cuts.
Well, before I run out of time, how would you look at it from an India point of view? Our own exposure to the US in terms of exports is only 2% of our GDP, and we are unlikely to lose all that in terms of markets. But will you have to mark down our growth because of an overall global slowdown?
Well, you're right in saying, you know, India's not such an open economy. I mean, the US is a pretty important market of the exports you do. I think it's a pretty big chunk of India's export base, but exports are not that large a share of the economy. So that's certainly true. You know, relative to some of the other countries that got hit with the other countries that got hit with the reciprocal tariffs, it's much less. It's a much bigger deal for a place like Vietnam, for instance. But we're talking about relative losses here. Even if it stays at this 10%, with the pause that we've got, even if it stays at 10%. 3 months ago, a 10% US tariff on China would have been seen as an absolute shocker, right? So, you got to keep that perspective. I guess, what's in India's favor is that access to the Indian market is something that I think the US administration would see as a highly valuable prize. So there is definitely something for India to offer if they are prepared to bring down those tariff rates, which are obviously much lower than the numbers the US published. The 50% they published is kind of based on some kind of fantasy economics, but even so, it is quite high. The MFN rate is 12%. So if there is a bilateral trade deal which brings that down, I think you can see prospects for some sort of negotiation there. So India may be, I wouldn't say a relative winner, but may be. I don't think there's any winners from this trade war, but it may not lose out as much as some of the other Asian countries that got whacked with the reciprocal tariffs.
Okay. Well, the Reserve Bank of India announced its own forecast of GDP growth this year, and they have brought down the GDP growth forecast by only 20 basis points from 6.7% earlier to 6.5%. You think there's the downside risk?
We haven't reworked our numbers on this, but there are some countries where we'd be looking to bring down growth by quite a substantial amount. I think India is sort of at the lower end of the spectrum. So quarter point, that sort of range doesn't off the top of my head seem completely out of line.
Okay. Finally, would you expect a currency war? We did see China's the PBOC adjust the fixing lowest in a couple of years, we are told. So do you think that there can be competitive devaluation? Is that a danger?
It's certainly a danger. It's certainly not my base case, but if China's looking at ways to offset this really dramatic, super aggressive US trade policy approach, and they wanted to support their export sector and enable them to gain market share in the rest of the world to offset that, the shock to that $500 billion of exports that go to the US, slashing the RMB against the US dollar would make sense from an economic policy perspective. If they were to do that, that would unleash a huge amount of volatility in the emerging market currencies. I'd be surprised if they go for it, to be honest, because I think they would see that would raise the risk of creating sort of instability in the capital account, and a major risk of, would create instability.
Thank you very much, Brian Coulton, for joining us in this conversation. Well, that's it on this edition of It's the Economy. Time for a break. It'll be Chartbusters thereafter.
Global growth and inflation. After a detailed assessment of the evolving macroeconomic and financial conditions and outlook, the MPC voted unanimously to reduce the policy repo rate by 25 basis points to 6% with immediate effect. I repeat, the MPC voted unanimously to reduce the policy repo rate by 25 basis points to 6% with immediate effect. Real GDP is now projected for this fiscal 25-26 at 6.5%, with Q1 at 6.5%, Q2 at 6.7%, Q3 at 6.6%, and Q4 at 6.3%. While the risks are evenly balanced around these baseline projections, uncertainties remain high in the wake of recent spike in global volatility. CPI inflation for the financial year 25-26 this year is projected at 4%, with Q1 at 3.6%, Q2 at 3.9%, Q3 at 3.8%, and Q4 slightly higher at 4.4%. The risks are evenly balanced.
The Indian markets open higher, shrugging global weakness after a one-day holiday as it catches up with Trump's 90-day pause of tariffs. The key indices are up close to around 2%. The market breadth in favor of the number of stocks advancing. Metals lead the gains on the back of global relief rally and the lower dollar index. Additionally, Tata Steel has announced transformational proposal for its Netherlands unit. The stock is one of the top gainers on the Nifty. Cipla is up close to 3.5% as the company gets a US FDA approval for a breast cancer drug. Brokerage Elara Securities says the company has the potential to generate up to $50 million from this product. Other pharma companies climb. Sun Pharma is up 3% after the US court lifts the injunction on the launch of a hair loss drug. Biocon as well is up close to 3% after the company expands its oncology portfolio in the United States. Coal financiers Muthoot Finance under pressure after the Reserve Bank of India releases the new draft rules on gold loans. The stock is down 5%. Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 News Studio. I'm Nigel, and in a short while from now, Mangalam will be joining in. Well, the markets are holding well in the green, so let's get a technical check. Manas Jaiswal joins in on the show. Hi, Manas. Good morning. Good to see you. Well, the Nifty is very, very close to that resistance level of around 22,900, 22,950. What would you do at this juncture? Would you take some money off the table or would you ride your longs? Also, give us your view on the Nifty Bank because that's leading the way over the last few trading sessions.
Good morning, Nigel. So the positive point is both the indices, Nifty and Bank Nifty, have given confirmation of higher tops and higher bottoms on the intraday chart. So that is definitely positive. But I'm still cautious because in this range, 22,800 to 23,000, in this range, three important moving averages lie. 10-day, 20-day and 50-day moving average. So I would like to create long position aggressively only if Nifty breaks 23,000, not before that. I am still cautious. But yes, in many stocks, you can create long position where you see some sign of reversal. However, if I want to take a position in indices, I would prefer Bank Nifty because here Bank Nifty has broken 10-day moving average also. So here one can create long position, keep the stop loss below 50,600. And I think Bank Nifty can test 51,500.
All right. So that's your view on the Nifty and the Nifty Bank. Individual stocks, you did say that there are a couple of opportunities there. Manas, what are you looking at here?
Good morning, Mangalam. So two recommendations, both are large cap stocks. First is Bajaj Finance, Bajaj Finserv, where stock has given a confirmation of higher tops and higher bottoms. It is trading above 10-day, 20-day moving average. So one can create long position in Bajaj Finserv. Stop loss should be around 1924. Target would be around 2020. Second is a buy on NTPC, where stock has regained 10 and 20-day moving average. It has given a fresh breakout on the intraday chart. So NTPC can be bought with a stop loss of 352. Target would be 365.
Okay, all right, Manas, thanks a lot for joining in, filling us in with your take on the Nifty as well as individual stock calls. Well, let's shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Sachin Pal of moneycontrol.com joins us to talk about a stock he's tracking. Sachin?
Yeah, thanks. The stock in focus is here, Sensex, which is a leader in both the faucetware as well as the sanitary industry. Well, for the first 9 months of FY25, the company has reported a flat top line on a YOY basis, mainly on account of lackluster demand trends in the real estate market. Margins, on the other hand, have witnessed some contraction due to increase in raw material costs as well as dealer discounts on account of sluggish offtake across the retail channels. However, the company has undertaken some price hikes both across the faucet business as well as the sanitary business, which should pave the way for margin recovery to almost 15 to 16% at the operating level in the next couple of quarters. Well, the overall demand trends in the real estate market continue to remain lackluster, and therefore the management has put the plan of capacity expansion in sanitary at hold for the time being. Well, overall, the demand trends remain lackluster, but the company has seen a strong correction of 50% in the stock price from its all-time highs and is currently trading at around 28 times FY26 estimated earnings, which we believe is very reasonable for accumulation from a long-term standpoint.
All right, with that, we'll slip into a short break. But just before we do that, just keep an eye out on a couple of these stocks. One from the pharmaceutical pack is Divi's Lab, a big mover, maybe participating in the relief rally that took place, after all the global markets have taken a, bit of a leg up on account of the pause that has come by on the tariffs. The second pack we're looking at is the real estate pack. So we have Prestige Estates, which moved higher. We have Oberoi Realty, which has moved higher. So maybe lower rates, a more accommodative RBI policy could be positive for the real estate space. We take a short break. On the other side, we speak with Ashish Rai, who's the global CEO of Orient Pro Solutions, to discuss their business outlook and a lot more. Stay with us. Welcome back. You're watching us here on Chartbusters on CNBC-TV18. IT is the sector of the day. There's a bunch of news that is, focusing around IT. One side you have TCS, the management commentary along with the results. On the other, you have the prospect of slightly better than feared macroeconomic situation on account of the 90-day pause in tariffs. Orient Pro Solutions is one of those stocks on our radar, down about 15% year to date. We're speaking with the management of TCS earlier. They did highlight that there was some impact in the fourth quarter due to macro uncertainty. Is this a broader view for the IT sector itself or not? To discuss this and more, we have with us Ashish Rai, who's the global CEO of Orient Pro Solutions, joining in. Ashish, thank you so much for joining in. Good morning. And that really is the first question. There is macro uncertainty. TCS did say that certain projects which were expected to start haven't because of delay in decision making. So the question is for you, how was the fourth quarter? Are you on track for that 40% growth guidance that you had earlier given? And are you witnessing delays in orders?
Yeah, hi, good morning. First of all, thanks for Thanks for having me. Look, I would not comment so much about the IT services play. We are a very focused products and platform vendor that operates across the globe. I think for us, the demand environment, I don't think there is any change. We have, I think we've grown at about 34-35% now for 4 years. So there is a strong trajectory of growth. Demand environment remains reasonably strong. I would not specifically comment on Q4 because we will, when we come out with the results, our guidance has been that we'll grow between 30 and 35%, and we'll declare the results. Then we'll come to you with more specifics. But for the last 4 years, we've grown at 34-35%, and I think the demand environment remains pretty good. Now, to the extent that and US is less than 10% of our revenue, so it's not really a big market for us. I think that will sort of do what it do. If the entire world goes into a slowdown or something, then I suppose it affects everyone else. But for now, we don't really see much change in terms of demand.
Hi, Ashish. Good morning. Good to see you in. This is Nigel on this side. US is a smaller market for you, but in the past, you've said that, say, in the next 4 to 6 quarters, you expected to get to around mid-single digits. Is that plan still on? Say around 5% of your mix should be coming in from the US?
Yeah, Nigel. So in the products business, it does stay enterprise software business. It takes time to grow into the mature markets. I think US is coming up to double digits now for us in this year. And we made a very significant bet on Europe over the last 6 months. And over the next 4-6 quarters, we expect even that to get to double digits. So I think by and large, over the next, I would say 6 to 8 quarters, we would expect US to stay in double digits, Europe to stay in double digits, and Asia, by and large, to get to, let's say, between 75 and 80%, right? That's the mix we are going for. It takes time for us to grow in those markets, but I think by and large now we are getting there in terms of the initial references, in terms of the sort of traction in the market.
And what about the next year? You said that obviously you can't speak a lot about the fourth quarter because of regulatory issues. You're in silent period when it comes to that. But, we see close to around 1,300 crores in terms of your order book right now. If you could, update that for us. And what does that set you up for growth in the next year? Are we looking at 30-35% in FY26 as well? Or could you do a clip better?
Yeah, so look, we will come back with guidance when at the end of the year we'll look at it. But by and large, I think you pointed out the right thing. The order book is in a very strong position right now. And typically, the next 4 quarters revenue, more or less, order book is sort of the single biggest factor. So that is in shape. Growth trajectory has not meaningfully changed for us for 4 years. I think by and large, it will stick around the same thing. We are very, I think we are in multiple segments, each of them, whether it's lending transformation, whether it's transaction banking transformation, whether it's payments, whether it's data center. We have built out some of the most competitive product stack in the world. We have exceptionally strong win rates. So to the extent that there is demand in the market, I think we'll continue to take share. For us, demand really has not been a problem last 4 years. It's really been how can you grow cautiously in a way that we keep the delivery reputation intact, we take our clients successful. Products business are complex because you have several moving parts. So you need to grow at a sort of steady rate rather than try to really grow very fast. For us, that right level has been about 30-odd%. And I think we will continue to try to do that. So demand, really has not really been a factor in growth. It's more how much do you want to grow? How much can you scale capacity? How much can you scale execution to service the demand? And for us, roughly the last 4 years, what's worked out for us is a number around 30-odd%.
Ashish, what the street took heart from the fact is that, before you took over at the helm, you already had a good stake in the company. It always helps when the person who's heading the company has around 7-8% stake. Now, my question to you is, brokerage is pointing out in the last 3 years, revenues have doubled from the time you have taken over. Do you think with the visibility that you'll have, you'll run an SBI contract, you had that Panvel contract as well, all those will start flowing through. In the next 3 years, do you think you can do more than 2,000 crores of revenues? This year, you should end in the vicinity of around 1,200 crores. And would that mean that profitability as well, the PAT number for 2028 will be closer to that 380 to around 400 crores? Is that doable? Revenues of more than 2,000 crores and profitability around that 380, 400 crores?
Yeah, so Nigel, good question. we don't give out forward guidances that far out. This is what I'll say, right? We have, when we started our pivot 3.5, 4 years back, FY21, we did 375 crores. This year, our guidance is to do between 1150 and 1200 crores, right? We'll see where we land up. We have a stated Vision 2030, where we have sort of the external articulation is qualitative. Obviously, we got an internal articulation of Vision 2030, which is quantitative targets and all that stuff. So we have numbers going from now till 2030. We've so far tracked ahead of it. The stated ambition is to be a top 3 global player in each of our chosen spaces. So for us, really the focus is get to product superiority, get to the best product in the market, and scale.
But Ashish, qualitative outlook, which is external, everyone knows. Quantitative, which is internal, we just want to know a range. What is it that you're thinking? From now to 2030, do we see revenues doubling from what they have already? Is that a possibility, or will it be a little more than that?
Look, if we keep going at 30% from now till 2030, it would be probably 3 or 4 times, right? So
exactly.
and an Excel sheet exercise would take you there, right? We don't intend to slow down. Right? We will not publish a number 5 years out, but we don't intend to slow down. So roughly, I think we will try to keep the growth trajectory we've been on. The difference in the statement, I would say there is this, right? Each of the spaces we are in are double-digit billion-dollar spaces, right? So if you are a top 3 global player in those spaces, you are a very, very large player. You would probably not get there by growing at 30% from now till 2030, right? So for at least some of the products between now and 2030, I would expect we hit some sort of an inflection point where you hit an hockey stick, right?
Yeah.
But it would differ product by product, right? But by and large, I would say we intend to keep the growth trajectory going.
You don't give us a number. You don't give us a number. Let's let us, give a headline number. 2030, 5,000 crore on the top line. Is that achievable?
Look, if you are a top 3 global player in the spaces we are in, why not?
Okay, interesting. Why not? And margins will continue to be your target is to stay in this 20-22% margins. Is there a downside risk over there, or is there an upside risk?
So, Nigel, I think in the product business, what really happens is as you scale, the economics improves.
Okay.
So typically in a steady state, if the growth rate comes down, I would expect the margins to go up. But the slight catch there is we very clearly guided for the next 2-3 years, we do not expect to improve the margins because the way we operate is we are product builders. We invest a lot in R&D. This year we'll invest almost 9.5% of the top line into R&D. Next year it will go up. So, and we expense all of this R&D, right? So the way we will operate is as the economics improves, at least for the next 2-3 years, we will pour the excess back into R&D, build more products out for Europe, for US as we're expanding. After 2-3 years, we will see what we want to do on the EBITDA side, right? Till that time, we will not try to max out the EBITDAs.
Okay. All right. Very quickly, you'll have done some inorganic growth in the last few years. What is the current cash in the books? Is there more in store?
So I think the cash levels are healthy. We are obviously zero debt. Again, we'll publish out the number when we publish the balance sheet in a few weeks. But I think the way we are looking at it is all our R&D by and large is expensed out. So whatever cash we generate after that is available for M&A, which we will use for inorganic acquisitions as we go, right? Because most of the organic investment is already taken care of in the P&L, right? So that's how we operate.
And just a follow-up on that. When you give us your 2030 target, assuming you do X billion dollars or, closer to that sometime around that itself, what would the revenue mix of the company be? How much would be organic? How much of that would be inorganic? Fenexys, how much would that contribute to your overall pie?
So Fenexys is a key piece for us in Europe, but it is a means for us to scale all the other product lines in Europe as well, right? So I think we don't really acquire for revenue. We acquire for IP and we acquire for the quality of the team, and then we grow the rest of the business organically, right? So I think inorganic, from the standpoint of what will it be as a percentage, I think it will always more or less stay single digits unless we find some opportunity to really acquire meaningful. But we typically acquire for the quality of IP rather than for revenue, right? Revenue, I think we know how to grow, and it's more a question of where do you have gap in the strategic blueprint for a particular area, and then we fill that gap with a piece of IP.
All right, Mr. Rai, always good speaking to you. Thanks a lot for joining in on the show. We're going to hold you to these numbers, and hopefully at the end of Q4, we can squeeze you a little bit more to get the near-term outlook. But as you said, by 2030, you're seeing a big runway in terms of revenues, and you're protected for now because you don't have that much exposure to the United States. Well, time to slip into a short break. On the other side, we'll continue to focus on markets. Don't go anywhere.
Right now, China's paying a 104% tariff. Think of it, 104%. Now, it sounds ridiculous, but they charged us for many items 100%, 125%. Many countries have that.
Welcome back. Markets still holding with a 400-point gain. I'll tell you what, the Nifty Bank actually is doing a relative underperformance, and that's facing some resistance at the 51,000 odd mark, which is the crucial 200 DMA. So that's the mark you need to track. For the time being, we come off a little bit from the top. But Vinny joins us. She's tracking a few companies, and she's joining in here on Chartbusters. Vinny, tell us.
Hi, good morning, Nigel. So what I'm keeping an eye out on today right now is Biocon for the pharma space. Now, they've received a US FDA approval for the biosimilar, which is called bevacizumab. Now, this is an important one in terms of biosimilars because it's used for the treatment of a type of cancer. Do not forget, Biocon already has 2 more oncology portfolios in the US market. Now, this is the 3rd one coming in. So they are increasing and expanding their oncology portfolio. So market size of this biosimilar is around $2 billion, and this was as of 2023. There are already 4 players in this, Amgen, Amneal, as well as Pfizer, and 1 more company, which are already present in the US market. Now, what analysts are highlighting, they are estimating the drug to generate incremental sales of around $63 million in FY26 and $88 million in FY27. So a positive coming in for Biocon after this drug approval.
All right, we take that point, Vinny. Thank you so much for that. Meanwhile, a couple of other stocks which are spiking as well as we speak. We have Nippon Life India, which has moved to the high point of trade. It's up a 5% move that we're seeing. Lotus Labs is the other one which is spiking. CCL Products, that's the one which had seen a bit of a dip. That too has moved to the high point of trade, along with a couple of these fertilizer and chemical names. So we have FACT, which is up around 6.5%. Paradeep Phosphates is the other one, which is up 7%. And we are seeing some recovery in a couple of these quick service restaurant names. So we have Restaurant Brands Asia, the one that runs Burger King in India, is the one which is up close to around 4.5%. With that, I believe we're out of time on this edition of Chartbusters. Thank you so much for watching. From Nigel and me, the entire team. Take a short break, come back on the other side. You have the team of Trading Hour coming up next.
Left and right. Well, today it was announced that China is reducing its currency. Did you see that? Big, big. In other words, they're going to make up for it. They got every trick in the book. I'll tell you, they are great. You got to hand it to them. You got to hand it to them. They're manipulating their currency today as an offset against the tariffs. Not supposed to do that. The game isn't supposed to be played that way. It makes it very hard for us. But in the end, it's not good because they have to buy oil. See, we don't need oil. We don't need oil and gas. We have more than any other country. They have to buy it. That's where it hurts them when they do that. It costs them twice as much.
I just spoke to the president about this, and he believes that China wants to make a deal with the United States. He believes China has to make a deal with the United States. It was a mistake for China to retaliate. The president, when America is punched, he punches back harder. That's why there will be 104% tariffs going into effect on China tonight at midnight. But the president believes that she and China want to make a deal. They just don't know how to get that started. And the president also wanted me to tell all of you that if China reaches out to make a deal, he'll be incredibly gracious, but he's going to do what's best for the American people.
So China has to call first?
The Chinese want to make a deal. They just don't know how to do it. But the president will be implementing these 104% tariffs on China tonight.
By buying more oil, more energy from them, are we going to be able to offset this entire tariff thing, sir?
But why are you so mesmerized by this tariff
No,
thing?
we're not mesmerized.
No, but why? When there is a young leader, 54-year-old Yuva Neta, who made some statement because the last public event I went, they asked me, उन्होंने ये कहा, मैंने कहा मैं नाम लेता नहीं किसी नेता का, उनको बोलो पहले अपने आप को समझें ये टैरिफ क्या चीज़ होती है. देखिए वो जो देश है जहाँ पे टैरिफ, every country is free to determine its own economic policies. But we are part of a multilateral system. We were original signatories to the GATT, General Agreement on Tariffs and Trade. WTO आया, वहाँ पे कुछ negotiate. Somebody wants to change it because they think short, right? Don't comment on it. You have to deal with it. भाई साहब, आपके 40% exports to services में है. The services sector is not covered by tariffs. Tariffs are applied on goods as they cross borders, but services तो चली जाती है. It can go ऊपर से भी और साइड से भी, सब जगह से चली जाएगी service. You can be different kinds of service.
Good morning. Welcome to Trading Hour. It's a Friday morning. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Reema. With me is Vivek Iyer. The Sensex has surged 1,200 points. The Nifty is above 22,800 as India participates in the relief rally after US suspends the 26% tariff on India by 90 days. The biggest sectoral winner today is metals. The Nifty Metal Index is up more than 3%, 3.5% as the dollar index has cracked sharply. But other sectors too are higher, whether it's pharma, whether it's auto, it's defense. IT too is largely up in the green, up 1.5%. But that said, there's so much to track today. You've got the AMFI numbers, so we'll get a sense of the investor sentiment, though March was a month of a rebound after the weak month of February. Then you've got the US PPI later. Back home in India, you've got the March inflation number and the February IIP number. So there's lots to track, even as we head into the long weekend.
Data heavy day. March, one thing we have to keep in mind is, especially when it comes to AMFI, number one will be the SIP number, like you mentioned. Number two, March, generally you see higher ULIP entries coming in. So it needs to be seen whether April, there's any month-on-month moderation or whether it sustains. So that will be one important thing to track. But overall, we'll look at what exactly is transpiring as far as markets are concerned. First up, you spoke about the metal index, clearly the top gainer there. But look at the pharma pack. It's been a very sharp rebound. A lot of positive news flow too that's come in over the weekend. So names like Sun Pharma, names like Cipla, Biocon, these three stocks have seen positive news flow gaining significantly in trade. Along with that, other generics like Granules, Laurus Labs, all of these stocks doing very well. Agriculture, chemical stocks and agrochem stocks. These are the stocks that were beaten down the most on account of higher tariffs, but they've all seen a relief rally today. PI Industries, SRF, UPL, Navin Fluorine, all of them amongst the top gainers. PI Industry clearly outperforming, also had seen the significant amount of follow. Lastly, auto anchors, although there's not been relief per se for the entire space, especially in the auto pack. What we are seeing today is a bit of a rebound. M&M, one of the top gainers as far as the Nifty is concerned. And lastly, on the negative side, Muthoot Finance, we did get a sense of it day for yesterday, that there could be tightened norms as far as gold finance lending is concerned. But Muthoot Finance today, the back of slew of downgrades, has actually seen intensified sell-off even after the sell-off we saw the day before. The back of that, gold finance companies, Muthoot, top laggard today.
Indeed, Ambit has a sell. Kotak Institutional Equities has downgraded it. Lots of brokerages sounding the alarm bells on Muthoot. But let's talk about the stock of the day, and that's TCS. While you're not seeing too much of a reaction, but bear in mind, TCS share price has already fallen 20% from the beginning of the year. Now, Q4 numbers were subdued. There was a modest miss on the company's top line. Margins contracted more than what the street would have liked. So the company's top line has declined in Q4 by 0.8% on a sequential basis. Margins are a bit of a worry. Margins have come in at 24.2%, 30 basis points down quarter on quarter. Year on year, margins are down 180 basis points. You know what the street would have hoped for? Margin expansion. Because if you remember, TCS, the whole year was getting a lot of revenue from BSNL. BSNL was seen as a low margin deal for TCS. But now the incremental revenue contribution of BSNL is coming down. So therefore, that should have boosted margins, but that has not played out despite there also being a rupee depreciation. So the street is a bit concerned about the margin performance. That said, the macro uncertainty weighed. We had a chat with the management. We did that interview. They said the decision-making cycle has started slowing down since the month of February, which impacted growth in Q4. They've seen some sporadic, project delays, decision-making delays, but there is no major ramp down or project cancellation or even tightening of the budgets. The company also said that they believe FY26 will be better than FY25, at least for the major markets. And last year, according to estimates, the major markets grew 1.2%. But due to the uncertain environment, the company will decide on the wage hikes. So they're not giving wage hikes effective 1st of April, as they always do. The company will decide on that. Now, UBS says the company is currently, TCS share price is now 9% below its long-term multiple. There is comfort on valuations, which is why they have a buy call. Ambit, on the other hand, believes that the current market price is still very expensive because Ambit says the current market price, prices in an 8% top-line growth. And we all know companies and analysts expecting 2-3% kind of a top-line growth. So, Ambit has a sell call on TCS. Jefferies has a hold, and they're expecting only a 2% revenue growth for the company from FY25 to FY27. JP Morgan also neutral. They're saying that, because there will be a lower contribution from BSNL, FY26 growth will be affected, and therefore, TCS will underperform peers like Infosys and HCL Tech. But the company has a very strong capital allocation policy, and that will be supportive, especially in a low interest rate environment. So therefore, investors could flock for safety to TCS. So mixed picture, JPM is got a neutral call on the stock. In fact, we will, get to... Okay, we will slip into a very short break on that note. We'll come back and talk commodities. Stay tuned. Don't go anywhere.
Some of your sectors are just now not covered, like pharmaceutical. Look, I'm not a trade, I'm a student of trade negotiation, but just now when Piyush ji comes tomorrow evening, you ask him. My view is that he will exude a quiet confidence. We are one of the countries which is dealing with this, and as my colleague Jaishankar ji said, we are hopeful following his discussions with the Secretary of State Rubio yesterday. we are hopeful of concluding an early trade agreement with the United States. So I think we are on track.
You're on track. So you don't think Bharat is going to be adversely affected?
अरे भाई ये adverse क्या होता है यार? मतलब समझाओ तो
अच्छा,
सही. हर एक challenge में opportunity.
ये disruption अच्छा है कि खराब है?
अरे अच्छा खराब तो कुछ नहीं होता. अगर आप में दम है, resilience है, तो you take advantage of an opportunity, of a challenge, and you utilize it as an opportunity. मेरी जिंदगी में तो यही हुआ. जब किसी कठिनाई का सामना करना पड़े उसमें से अच्छे निकले. अरे मैं बताता हूँ, मुझे माननीय प्रधानमंत्री जी की overall his capacity to navigate this and his team is second to none. We will come out winners in this.
आज दुनिया की नजर भी भारत पर है और दुनिया की उम्मीद भी भारत से है. कुछ ही वर्षों में हम दुनिया की 11वीं से 5वीं.
Welcome back to Trading Hour. Well, some sobering news on the screen. We have the AMFI data, or the mutual fund data. This is for the month of March, which is the last month of FY25. And on account of the significant volatility that we saw in the equity indices, there's been a clear moderation as far as flows are concerned. We are seeing moderation across all of the key fund launches. So if you're looking at the net equity inflow, that's cooled off significantly at a little over 25,000 crore versus over 29,241 crore. This is on a month-on-month basis that we are seeing the moderation. The total AUM at 65.74 lakh crore versus 64.73. So there's been an uptick as far as the AUM is concerned, but that takes into account all of the fund categories. Large cap fund inflow has cooled off significantly, close to 2,480 crore versus around 2,800 crore on a month-on-month basis. So again, significant moderation over there. Net equity inflow, like we just mentioned, that's cooled off. Even the mid-cap and small-cap inflows have cooled off. Rima, this is something that we were anticipating, given the fact that in this particular month, the markets, the equity markets had cooled off quite significantly. And generally we see when there is a significant correction as far as markets are concerned, you do see a moderation of flows. And this is something, what will be most important to watch out for will be the SIP number. That will come out a little later on the call.
Indeed. So these are the numbers as of now. The total equity inflow has come in at about 25,000 crore rupees, lower than the 29,000 crore in the month of Feb, which had already seen a correction of 25% compared to the high of about 40,000 in the month of January. So for 2 consecutive months, we have seen the total equity inflows dip. It was about 40,000 in the month of December and January. It dropped to 29,000 in the month of February, and it's further come down by 14-15% in the month of March. February anyway has lower days. Plus, we had seen the market, correct significantly. In March, markets had rebounded. And yet you can see, the equity inflows. But there was so much uncertainty surrounding Trump tariffs. You didn't know which way it's going. Plus, it's year-end. You could have a lot of tax adjustments that you would have liked to do as well. Large caps have seen a bit of a drop. Mid caps have been stable month on month. Small caps have seen a pickup in terms of the inflows. Surjana Borthakur of Mirae Asset Investment Managers is now with us to react to the numbers. Thank you. Suranjana, thank you for joining in. Give us your initial take. Is it a bit disappointing or is it par for the course?
Hi, good afternoon. I think if you see in terms of the numbers, it's not a very significant drop, I would say. I think the volatility in the market has been quite dramatic. I would say, in the last month also, if you see, there had been a lot of volatility through the market. But if you see in terms of the total flows, like you mentioned, I think from 40,000 about 2 months back, it had already dropped to about 29,000. But now a 25,000 number is, I would say, not a very significant drop. What is good to see is, I think, while large cap category, there has been a little bit of a drop. I think there continues to be inflows in the small cap category. I would think hopefully the investors are investing for the long term and not taking a call on near-term returns. I think also the fact that the hybrid flows have, I think, dropped quite significantly. That is what is a little worrying, because from 6,800 to somewhere around 940 crores or so, which is a large drop, I would say. In fact, in these volatile markets, if we see, it is actually best to stay invested in also hybrid categories, because they would help investors to ride these waves. Hybrid categories within hybrid, there are a lot of options, but I think it gives an opportunity to be able to manage the emotions of investors also, because as movement of market happens, I think changes within the different asset classes happens at the fund level. Therefore, even the taxation, is very limited to the investor. It is actually at the fund side. So, which is where I think that's where maybe the concern is more. The equity, I don't see a very large drop. Looking at the scenario in the market, I think looking at what has been happening in the last few days also, there will be some amount of impact on the inflows, and which is what I get to see here.
Thanks so much for that, Suranjana. Well, we are also joined by Anthony Heredia, MD and CEO of Mahindra Manu Mutual Fund. Thank you so much, Anthony, for joining us. What is your first take as far as the month of March is concerned? Is the moderation in inflow along expected lines? Any one-off factors? And what is the typical year-end impact that we see on ULIP flows?
Hi. No, so it's not a surprise. That's my first comment. Having said that, I think if you read beyond the numbers, I see a couple of things. One, I think clearly investor preferences are moving towards large cap. I don't see it only in context of large cap fund inflows. If you add up the flows into flexi, multi, large and mid and large, that's about 55 to 60% of the net flows, right? So I haven't seen that as a trend for close to, I would say, 18 months now. So to me, investors are clearly biasing to some degree towards large cap, which I don't think is a bad thing given relative valuations. Two, the fancy for sectoral and thematic clearly seems to have died. I see the net flow numbers here reflecting that. Three, which is a bit of a surprise to me, if we are talking about investors being a little wary, I find it surprising that we've seen net outflows in the equity savings category, which is the one hybrid category with the least net equity exposure. You would think that if people were wary on equity savings would get relatively more money than aggressive hybrid or multi-asset, but that doesn't seem to be the case. So that's the one data point that I find a bit puzzling, but otherwise, I don't think we would be too concerned with the flows. It's on expected lines. The fact that people are choosing more diversified, large cap tilted portfolios is again not a surprise. And I would expect this kind of a flow situation to remain. I am actually very encouraged by the fact that we continue to see close to 26,000 crores in SIPs continuing in the month of March. I think it's a reflection of the majority of the retail investor. And that's, I think, my biggest source of encouragement. So that would be my initial comments.
Can you give us some indication, Anthony, of what the first 10 days of April have been like? We've seen so much yo-yo, tariffs on, tariffs off. What have you, at your fund, at Mahindra Manulife, what has been the behavior of retail investors now looking at April?
So again, surprising to me, slightly better than March. The last few times we saw sharp drops in the market on a day basis, for the first time I saw investors not necessarily coming in and buying in droves. At least that was my experience in the last 6 months, and I was a little perturbed by that. But for example, on April 3rd, for us, at least was our best inflow day for perhaps the last 5 months. It's kind of tapered off, but to me, the first 10 days of April, both from a net flow perspective and an SIP perspective, is actually marginally better than the month of March. I'll say this though. You got to caveat it for the fact that SIP flows, which tend to be a significant portion, come much more in the first 10 days of a month. So my expectation is at this juncture, April looks to be similar to March is my read.
Okay, Anthony, so April looking very similar to March. So again, maybe a month of moderation is what we could see. Suranjana, what we are now used to is seeing monthly SIP inflows in excess of 25,000 crore. what would be the number you would be looking for, especially if you take into account the kind of volatility that you're seeing? Above what number will there be no panic? And do you feel that, especially with the kind of environment that we've seen, sectoral thematic funds are definitely behind us?
Very rightly said. I think I also agree with Anthony, the fact that there was this whole craze around sectoral products and where, a lot of new products were getting launched. And last month, we actually saw that in spite of like 7 NFOs that happened, the inflow in this category had gone down significantly. I think somewhere around 2,800 crores happened in this category. But so, which is through the NFO route. So I think that craze for a new product and a differentiated product is somewhere people are realizing that the volatility in the market does not play well when you beef up too much of volatile products as a core part of your portfolio. I think it is also the SIP flows. If you look at it, I think if it remains above 25,000, I think last month there was a 400 crore drop that happened in the book, but that was largely to do with February being a shorter month. I think the fact that this month is a complete month, possibly the number above 25,000 would be okay number to look at. And I think if we continue to see this trend, we see a significant upside from about a couple of years ago. So which is where even if you look at 1 year ago, the numbers, I think they have come up very strongly. This shows the long-term commitment of the retail investor. And like Anthony was mentioning, I think even in this month, if we see in terms of corrections, one of the things which actually shows us also the maturity of investors is, I think on very volatile days, we see our ETF trading going up very significantly. So whenever there is a large drop in the market, we see quite a significant upside in terms of volumes that are traded. So which is where I think, and this is not only to do with the major benchmark products, it is also to do with differentiated products. So I think the buying on dips is something that is being taken a little more seriously, and any investor who has a long-term commitment is willing to stay the entire ride, is what we assume.
Thank you very much, both of you, for joining in. We need to get into a very short break. On the other side, we're going to address another important issue. We'll get an update on the microfinance industry. Alok Misra will join in on the other side to gauge what FY26 looks like and whether we are seeing any improvement.
सबसे बड़ी इकोनॉमी बने हैं बहुत कम समय में। अनेक प्रकार के ग्लोबल चैलेंजेस आए, लेकिन भारत रुका नहीं। भारत ने डबल स्पीड से दौड़ लगाई और 1 दशक में अपनी इकोनॉमी के साइज को डबल करके दिखाया है। और वक्त कानून में संशोधन का बिल पास हुआ, यानी सामाजिक न्याय के लिए एक और बड़ा और ठोस कदम लिया गया। ये 100 दिन 100 फैसलों से भी बढ़कर है। ये 100 संकल्पों की सिद्धि के दिन है। साथियों, परफॉर्मेंस का यही मंत्र राइजिंग भारत के पीछे की असली एनर्जी है। आप जानते हैं, अभी 2 दिन पहले ही मैं रामेश्वरम में था। वहां मुझे ऐतिहासिक पंबन ब्रिज के लोकार्पण का अवसर मिला। करीब 125 साल पहले अंग्रेजों ने वहां एक पुल बनवाया था। उस पुल ने इतिहास देखा, उसने आंधियां सही, एक बार सुनामी ने, साइक्लोन ने उस पुल को बहुत नुकसान पहुंचाया। सालों तक देश इंतजार करता रहा। लोग मांग पड़े।
Welcome back. As promised, let's talk commodities, and we're focusing on precious metals. Manisha is now joining in. Manisha.
Thank you for that, Reema. Well, very, very strong gains coming in for gold and silver both. When you look at this week, we are looking at 5 to 6% of gains coming for gold and silver both. But the big story clearly is in gold, where we are trading at an all-time highs in various major currencies. In US dollar terms, we've seen $30 to $20 an ounce take on the higher side. And with these gains, we are now for this year up by 23%, even as we are still in the first half of this year. This is in comparison to last year's gains, where we saw gold prices gain up by 28% as well. So very strong gains coming in, as I said, in dollar terms, in rupee, in Japanese yen, in Chinese yuan, Australian dollars, euro. Various currencies, gold prices are trading at an all-time highs as we speak. Well, it is about safe haven buying amid US and China warring with tariffs there. And that really tells the market that with two major global economies putting tariff missiles at each other, it perhaps could lead to weakening in different other economic markets. And it could also lead to inflation, even stagflation in US for that matter. And that has been supportive. The other factor is about the US dollar index, which is trading near 3-year lows. We've seen 100 reach at one point in time as well, and that has been supportive. The markets also are anticipating more stimulus measures to come in from China, and that in turn has been supportive for metals. This is where the silver prices also seem to be gaining strength from. I want to bring on your charts on what we've done in this week in sense of gold and silver prices. While gold is up nearly 5.5%, silver has gained 6% in this its week till time. If you look at the past 12 months, then gold clearly outperforming silver there with gains of 38%, while silver is up 13% at this point in time. I also recently spoke to Jio Keener, and he is very bullish on gold, says that 3,300 is what you could be looking at. But important level coming in from Jio is about $8,000 an ounce of a possibility in next 5 years or so.
I think that the trend will continue to go up and accelerate. And when I mean acceleration into July, I think you could easily see somewhere between 3-5 and a few $100s above that for this year. And probably prices in the tune of $5,000 to $8,000 in the next couple of years. Real mismatch on the West versus East. We see as well huge spreads. So you could actually sell silver into China at $3 spread. I think in the low 30s is a great time to buy. And you want to be testing at least the $50 mark, which is basically would be a triple top in the short term, and then we'll see where we go thereafter. But I think that's about the trading range, $30 to $50 for probably the foreseeable future.
Well, that's the view coming in as far as the precious metal market is concerned. But moving on, Mitesh Thakkar now joins in for a quick technical check on the market. Mitesh, it's been a very strong Friday start that we have seen. Do you think markets can sustain at current levels? Do you feel that there is now a bottom in place, definitely at least as far as the Nifty is concerned?
So, I don't have a confirmation of a bottom being made yet, but I think it will sustain for the simple reason that we're getting past 22,850, which in the near term was an important pivot. I think we are showing strength, such as that this bounce back might even extend about 23,050, 23,100 zones. So I think stay positive. And only if it starts breaking below 22,700 would I start getting worried, and we might then come back into the zone. But in the immediate term, which is about next couple of days, it looks like there's a higher chance of us getting towards 23,050 to about 23,100.
Got that. What about stocks? Anything that you have on your radar?
Yeah. So I have a buy on Kotak Bank. I think, that's a stock which has bounced back very well today. Kotak Bank is a buy with a stop at about 2,100 for targets of around 2,200. We may eventually look at higher levels, but that's the near-term target. And on the other side, I also have a buy on Hindalco with a stop at about 213 for targets of 225.
Thank you so much, Mitesh, for joining us, giving us a view on the market as well as the individual trading bets. But it's now time for a short break. Alok Mishra from Microfinance Industry Network will join us next.
लेकिन पहले की सरकारों की नींद नहीं टूटी। जब हमारी सरकार आई तो नए पंबन ब्रिज के लिए काम शुरू हुआ और अब देश को अपना पहला वर्टिकल रिप्ड रेल सी ब्रिज मिल गया है। साथियों, परियोजनाओं को लटकाते रहने से देश नहीं चलता। देश चलता है परफॉर्म करने से, तेजी से काम करने से। डिले इज द एनिमी ऑफ डेवलपमेंट। और हमने इस दुश्मन को हराने की ठान ली है। नवी मुंबई एयरपोर्ट पर भी 1997 से चर्चा शुरू हुई थी। 2007 में इसे मंजूरी मिली, लेकिन कांग्रेस की सरकार ने इस पर काम नहीं किया। हमारी सरकार ने इस प्रोजेक्ट को भी तेजी से पूरा किया। वो दिन दूर नहीं जब नवी मुंबई एयरपोर्ट से कॉमर्शियल फ्लाइट्स भी शुरू हो जाएगी।
With China, as you know, against my statement, they
Welcome back to Trading Hour. Well, let's now shift our focus to the microfinance sector. In a recent report, brokerage firm Investec said that the current cycle of Indian microfinance appears to be approaching its conclusion. It added that asset quality indicators have started showing improvement across various MFIs. They also expect the recovery to be gradual, leading to consolidation within the sector. To discuss more on this, we are joined by Alok Mishra, CEO and Director, Microfinance Industry Network. Thank you so much, Mr. Mishra, for joining us. First up, finally it appears as though some of the dark clouds are spreading. What's the on-ground trend as far as the MFI space is concerned? Has there been marked improvement as far as collections are concerned?
Thanks for having me here, and apologies for a bad throat, first of all. Well, I fully agree with what the report has read, but not what full part of the report. I think the dark clouds, I had spoken on this show for many times, and I have always said that these are not dark clouds. These are temporary blips which happen due to a host of circumstances and not due to only microfinance, which had happened. But yes, it is correct. If we look at the credit data, I am not talking about individual companies, but about the sector data. And the last data available to us is of February, while listed companies have also given data in public domain of March. From October onwards, it peaked the credit quality, whether you see in terms of 1 to 30 days or 30 to 90. It peaked in October. Since then, we are seeing a gradual reduction. We saw it in month of November, in December, in January, as well as in February. So yes, the credit quality is getting better. And the loans which are being disbursed currently are showing much better portfolio quality.
So, Mr. Mishra, how much better is February, the data that we have, versus October, which was the worst in terms of asset quality?
Yeah, so I will tell you if I take a measure of PAR 1 to 90 days, anything below NPA, in October it was 5.38%. In February it has come to 4.65%. So that's, you can say, nearly 80 basis points reduction. And within that bracket, 1 to 30 days, 31 to 60 days, there are different measures. But overall, in 1 to 90 days, there has been a steady decline. And it is a gradual decline. And let me also tell you, because many times we forget that these numbers, if it would have been a normal year, these numbers would have looked completely different. What you're seeing as 4.7, that would have maybe looked at 3.5. This is because of what we call as the denominator impact. Because in the last year, that is 24-25, the disbursements have been slow. And as we know, that in March, the sector had a portfolio outstanding of 4,33,000 crores. But now when we are sitting in April, but I have the data for February, the sector shrunk by 15%. So when you take out the portfolio quality, any portfolio quality, number of loans which have overdue, say 1 to 30 days, you divide it by entire portfolio, the portfolio has not grown that much, or rather it has shrunk. So these numbers seem to be elevated. But in actually, if it would have been a normal year, they would have been even seen as much lower.
No, we get that point completely, Mr. Mishra. Mr. Mishra, the other significant problem that's been highlighted by industry and especially by players with exposure to the state of Karnataka has been the significant guardrails that have been imposed and also restrictions in terms of actual collection. So Karnataka, what is the on-ground situation? When do you see that improving? Will players, with higher exposure to Karnataka, wait for a longer period of time to actually see a bit of recovery?
Yeah. So first of all, Vivek, let me clarify that guardrails have nothing to do with Karnataka. They are pan-India.
Right.
And they were announced way back in November, and when the Karnataka thing started in January. Now coming to the Karnataka situation, while we saw a small uptick in the months of February, but now from March onwards, what the field reports I get, because see, one is the data which the institutions have reported. One of the large NBFC MFI, which has a significant presence in Karnataka, has already reported the data. Data is in public domain. It shows things are stabilizing, nothing to worry. And we also keep a tab on the field incidences and also have a close connect with the government. Things are smoothing out. We don't see any major hiccups. And I think Karnataka should be back to normal in next 1 to 2 months.
Mr. Mishra, the recovery it's been gradual and it's not broad-based. There would still be players who are struggling. Some have improved, the performance has been better than others. In the coming year, in FY26, do you see consolidation opportunities, some M&As taking place?
Well, as in head of SRO and industry body, I would not like to comment on consolidation. I would leave it to the market forces. I can only say I don't see any policy imperative or any, you can say, the pressing factor in the domain of ecosystem, which is pressing towards mergers and acquisition. But if two companies decide to come together to bring the synergies together, is the individual company's choice.
Mr. Mishra, you briefly alluded to guardrails 2.0 that has been put for the MFI space. FY26 onwards, how will that impact the industry? Do you see any concerns as far as growth is concerned? And also your view on over-leveraging by customers. That has been something that has been constantly flagged off by the regulator.
Yeah, I think, Vivek, give me some time. I've clarified 1 or 2 points here.
Sure.
One is that the guardrails, the first guardrail which was introduced in July, July and August last year, wherein we said that it should not be more than 4 microfinance lenders. And now from 1st April onwards, with a due notice of 4 months, we have reduced it to 3 lenders. And the results which we see is improved credit discipline. And it would be too early to say that the improved credit quality is a result of the guardrails, that I would not hazard to say so. But what we hear from the field that it is imposing discipline and the underwriting and the money supply becoming a little scarcer. So the credit quality is getting better. Discipline is returning back. So that's a good point. But on the side of over leveraging, I think in the last year, when your chips are down, when the credit quality went a little poorer compared to what microfinance generally has, there were a host of reasons beyond that, and we have elaborated on it in various forums, whether it was the heat wave or it was the stagnant rural wages, but everything was put as if the sector has over-indebted. But the real situation is that even if we have put a strict condition that not more than 4 microfinance lenders, the number of clients which have more than 4 microfinance lenders is only 3.2%. So that's not much. It will not have a major impact. And let me also say that now what we are witnessing a situation wherein all these borrowers are increasingly having retail overlap. So while retail, even if we do all the best from microfinance side, if some retail player comes and lends a retail loan, then the whole discipline goes down. Our space is shrinking. And that is why in our guardrails, we have also said a maximum cap of indebtedness to a borrower of 2 lakh rupees. That is in addition to the lender cap. And we have said that that 2 lakh will also include unsecured retail loans. So our space may be shrinking because of other players, and they might be over leveraging the client. But we are trying to emphasize on the discipline, even if it reduces the space for microfinance.
Thank you so much for joining us, Mr. Mishra, giving us a view on quite a whole host of details regarding the MFI space. We'll get you back on the channel soon. Well, we'll now take a short break. Up next, we'll discuss market fundamentals with Anirudh Garg of Investec PMS.
Tariff on above what their ridiculous tariffs were already. And I said, if that tariff isn't removed by tomorrow at 12 o'clock, we're putting a 50% tariff on above the tariffs that we put on. So they've gone for years. They've become a rich country because of people, again, that were in the White House that allowed this to happen. Hundreds of billions of dollars a year they'd make on us on trade, and it shouldn't be that way. And I have a great relationship with President Xi. I hope it's going to stay that way. I have great respect for China, but they can't do this.
Welcome back. As promised, let's invite Anirudh Garg on the show now. He's from Inva Asset PMS. Anirudh, thank you very much for joining in. We just saw the mutual fund data for the month of March, and despite the rebound, the inflows into equities have fallen by 14-15% compared to February, which was anyway a very tough month. What are you all doing at Inva Asset PMS? Have you all also retreated from investing in the market? And do you think this rebound that we're seeing today is sustainable? What's the advice now, and what are you doing with your portfolio?
Good morning, and thank you for having me. I think we at Inva Asset PMS focus a lot on the behavioral finance part of the market. And we feel that, as I mentioned last time on your program as well, that we are now very bullish on the markets. The only fear that we have right now is that if it is only about tariffs, then it's okay. Things will be all right. I think the market may have even bottomed out. But sometimes what happens is that a systemic risk sometimes gets, gift wrapped in some other situation, and the things are avoided. And America, if we see, has been at the forefront of it every time. So we are not predicting any bear market from here, but we are being cautious also, though fully invested.
Understood that. Anirudh, I believe this indicates a very marked change as far as your own stance is concerned. Last time we spoke to you, you were sitting on very high levels of cash. So what actually has triggered the change? Is it mainly on the back of the fact that the market correction has made valuations very palatable?
Yeah, absolutely. So there are 2 points. When we sold off, we were one of the only funds in India who went to 100% cash. The reason that time was that the valuations were expensive, and there was too much greed in the market. The exuberancy could be clearly seen if you wanted it to see it. And now, on the other hand, the valuations are better. You're getting your portfolios 35-40% below. Even the mid-cap index is around 25-26% lower. So the valuations are right. And as you mentioned, since the mutual funds SIPs have stopped and the numbers are going down, this clearly indicates that there is fear in the market, or there is uncertainty. And if we see majority of the bull runs, be it COVID, post-COVID, or post-Russia, Ukraine war, majority of the bull runs, they stem from a period of chaos. So we are very, very optimistic on the market, but on the same side, we are maintaining a cautious stand as well, that if something bigger turns out to be, we are ready for that.
What about technology? Technology has been the rank underperformer. And now some stocks like Infi, TCS are trading below their long-term average multiples. That said, yeah, so where do you stand on tech, especially the large cap names?
Yeah, so you're absolutely right here. Tech in the last 1.5 months has taken a beating, which has brought down the valuations at very, very mouth-watering levels. But we do not hold anything in tech now. We buy value only when we believe that, firstly, there is overall in the value in the market. So this is the right time to buy value. But we should see, consistency or visibility of earnings for the next 2 to 3 years. And primarily, we want the rates to be higher, the rate of growth to be higher. That is why we are not, holding a large position. Barring a couple of stocks in the mid-cap tech, we are not holding any positions in tech, because that is the lack of growth is the only reason we feel that we do not venture into the ground. But if you look at value, I think large cap IT is surely, as you rightly said, there is value in the large cap IT now.
Anirudh, we want your views on two specific sectors. The first one has to be the pharma pack, has sold off significantly. There are still worries of impending tariffs, but are valuations now impending? And would you take a view on whether or not tariffs, especially for Indian generic makers, will be applicable? And secondly, one space that's doing very well is chemicals. Again, a sector that saw significant sell-off in recent times. Would you like that space as well?
I think I like both these spaces. I like pharma. Pharma is our top bet. So we would say around 20 to 25% of our portfolio is now pharmaceuticals, because we see that growth factor there. Though we focus more on the CDMO and CMO part of the market, where we feel that growth and relative change will both be very strong for the next couple of years. The point here right now is that we have to ignore these noises of what the tariffs will be. How Donald Trump will react, I think nobody in the world knows about it. What is his purpose? What is he doing? What are the strategy? Rather than focusing on all these noise, we should focus on where the fundamentals of the companies are and where relative change can be strong. So pharma, I think, is very, very nice. And you rightly mentioned chemicals as well. We are seeing strong tailwinds for chemical sector as well. And I think for the next couple of years, it should be a medium to good sector to invest in, chemicals. But pharma, we are very bullish.
In chemicals, could you give us some more color on what you like? What should investors look at?
So we are not holding very significant positions in chemicals, because they're not reached our top 25 to invest in, because we are finding better opportunities. But yes, I think if somebody is holding positions in the chemical sector, and I think all of them, primarily, this is a time where you have to be with the leaders. So if your company is a leader in a particular type or particular segment of chemicals, then I think it is right to hold on to them. I think the last 2 years, which were not very, very great for chemicals, the next couple of years should be better.
Anirudh, one clear avoid you mentioned is, or one clear cautious stance is the IT pack. FMCG, are you cautious there? Would you turn buyers at current levels?
No, so again, FMCG for us, we go to FMCG only when we need to be in a defensive space, okay? But okay, again, the relative change for FMCG is very strong. 1.2 lakh crores coming in the hands of the Indian consumer, and then inflation getting better, the prices softening, and overall, I believe that FMCG, as it has underperformed, again, like chemicals, as it has underperformed the last couple of years, should not underperform for here. But again, we're not holding a lot of positions in FMCG. On the other hand, we are focusing on newer market segments where growth rates can be higher in the consumption sector as well. Consumption is a number 3 bet, but again, some better companies here rather than the old traditional FMCGs.
Okay, and any view on quick commerce? Any view on as far as the new age tech companies are concerned?
I think new age tech companies should be all right. Especially delivery platforms, and all these new age companies still have a room to grow. They still, I believe the valuations are not that high, especially after this fall, the valuations have corrected, and I think they are okay to invest in. We like the new age companies now.
Thank you so much, Anirudh, for joining us, giving us your view on a whole host of markets and a marked change as far as your own stance is concerned from being quite cash-heavy to aggressively deploying across the market is something that we've noticed. Well, it's now time for a short break. We'll get you more on the markets on the other side.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs.
Welcome back to Trading Hour. Well, the strength in the market is continuing. The Nifty is now up well over 2%. Have a look at the mid-cap index, again over 2% higher, and the small-cap index 2.5% higher. Significant buying has emerged and continuing even over the last hour. But one particular sector that's doing very well is the chemical space, and within that, PI Industries is surging. This is after Donald Trump announced a 90-day pause on tariffs. Vamakshi is here with more details.
Well, Vivek, absolutely. PI Industries is surging in trade, up almost 7% now. The US put a 90-day pause on reciprocal tariffs. As we all know, the tariffs now stand reduced to 10% temporarily from 36% that they had, sort of disclosed earlier. Keep in mind that when the reciprocal tariffs were announced, in the next 2 sessions, PI Industries dipped by almost 6%. But today we're seeing a recovery that is mainly on account of the 90-day pause that has come in from the US. Keep in mind the current order book for the company stands at around $1.4 billion US. The exports as a contributor to the overall revenue stands at 83%. So PI Industries is heavily focused towards exports, and within exports itself, the revenue contribution from North America as of FY24 stood at 44%. So North America itself is a significant contributor as far as PI Industries is concerned. So therefore, earlier on when the 26% tariff was imposed, there was a note that came in from Jefferies as well, and they said that if 50% of the tariffs were absorbed, there would still be an EBITDA impact of almost 6% for PI Industries. With the 90-day pause now coming in, this immediate overhang of the impact on PI Industries actually goes away, and therefore the stock is seeing a strong rebound today.
Thank you very much for that. Let's now find out Muthoot Finance stock is under pressure. Ritu joins in with more on the gold loan regulations that have come through. Ritu.
Well, thanks for that, Reema. Muthoot, as you know, it has almost 95% of its AUM in gold loans, and therefore you're seeing the kind of reaction you're seeing on the stock. The big takeaway from the draft rules really is that they're not as bad as they were feared to be, but in the short term, there could be some impact on those gold loan lenders. Now, what the draft rules really say is, one, for bullet consumption loans, the tenor has now been capped at 12%. They also say gold has to be valued at 22 carat purity only. The loan to value ratio, now it remains remains capped at 75%. But here's the change. Earlier, this ratio had to be maintained throughout the tenure of the loans for banks only, and now it is going to be applicable to NBFCs as well. Now, for bullet repayment loans, RBI says the LTV will have to be calculated on the total amount, which means interest that is accrued at the end of the tenure of the loan along with the principal, and that means the origination LTV may decline because lenders will now have to build in these buffers. Apart from this, if the LTV ratio breach continues for more than 30 days, there will be 1% additional standard asset provisioning. So in summary, some of the arbitrage that existed between banks and NBFCs will be reduced if these draft norms are implemented, and therefore you're seeing some of the reaction in the stocks. If you look at the brokerage views, they say that it could affect loan growth in the year immediately after implementation. And Morgan Stanley, for instance, says Muthoot's business is still stronger compared to some of the other NBFCs, and they're building in an ROE of 20% in this financial year, 18% in the next, even if AUM growth is flat. Jefferies believes this could impact growth and provisioning generally for gold loan lenders, and CLSA believes this is marginally disruptive for the likes of Muthoot and Manappuram, and they're building in about 12 to 15% loan growth in the next couple of years.
Thank you so much, Ritu, for joining in and taking us through the draft guidelines that RBI has put out as far as gold loan financiers are concerned. But another stock that is in focus today is Tata Steel. This on the back of development as far as its Netherlands unit is concerned. Nigel joins in to tell us more.
Well, that's right. Tata Steel has said that they are taken on a transformational change at their Tata Steel Netherlands operations. And they believe that they're looking at making this particular unit one of the most profitable and cost-efficient units as well. So what have they stated? The management has estimated that by the second half of FY26, they are looking at a annual savings of close to around 500 million euros, which goes up by another 50 million euros in the following year, which totals close to around 550 million euros of savings at Tata Steel Netherlands by FY27 itself. Investec, they say that this translates to a cost saving of roughly around $80 on a per ton basis. Remember, in percentage terms, it constitutes close to around 15% of the total controllable cost. How do they come about this number of around 550 million euros? Well, a third of it will come in from cutting jobs at their Netherlands facility. As of now, they have around 12,000 employees. They are saying that they'll cut close to around 1,600 jobs. So a third of these savings will come in just by this. The other factors that they're looking at is improving volumes, product mix, better efficiency of the blast furnace, and also higher utilization of pellets, which in turn will help their profitability. So that's the broad breakup. Now, besides this measure, they also made two other important points. One is that the direct impact of the US tariffs is very, very limited on their operations. Point number one. Point number two is they say by second quarter of this fiscal, that's FY26, the UK business will turn cash break-even, which is very, very positive in itself. What are brokerages saying? Phillip Capital, they have a buy rating. Target price they placed at around 173. Earlier, they were working with Tata Steel Netherlands, having a profitability of around $40 to around $60 on a per ton basis of EBITDA. However, they are saying that the proposed plan now will save cost. And that's why they're looking at an additional benefit of around $80 in FY26, which goes up by another $7 in the following year. Investec, they have upgraded the stock to hold from a sell earlier. They say that Tata Steel Netherlands now has the capability to do $100 on a per ton basis, and they are considering only 60% of what they said in terms of savings. They also say that risk that Tata Steel India will have to support the Netherlands business, that goes out of the way, which is another positive. Put this together, Tata Steel is rallying in today's trading session.
Thank you very much for that. And not just Tata Steel, Pharma is higher today, Sun Pharma and Cipla in particular. Vinny is here to tell us why the street is so excited.
Hi, so yes, both these stocks surely are in focus today. Now, Sun Pharma, positive news flow coming in. If you remember, in November 2024, there was a preliminary injunction that came in that came in for Lexelvi, which was an important drug for the company. Now, this was something that was a court case that was going on with the innovator of the company. Now, just yesterday, what we got to know is the US Court of Appeals for Federal Circuit has ruled in favor of Sun Pharma. So, this injunction that was there has been lifted. That means they can now launch Lexelvi. Now, the company has mentioned in the press release that Lexelvi launch time, they will inform us as and when in the due course. But what analysts are expecting is that this could come in sooner. They're expected next few weeks is when we could see the launch coming in. Earlier, the anticipation was around Q4 FY27 because the patent was expiring in December 2026. This is a big positive for the company, is what UBS has highlighted, especially in terms of margin expansion for the company, as well as in terms of peak sales that are expected from this drug could be somewhere around $400 to $500 million is what UBS has highlighted, with an EBITDA at around 50%. So Sun Pharma surely is in focus and seeing a bit of an upside. Cipla too, positive news flow is coming in as they have received a US FDA approval for their generic Braxin. Now this is used for the treatment of breast cancer, also some other kind of small cell lung cancers as well. So different cancer treatments is what this one is related to. The product was expected to be launched somewhere around in the first half of FY26. Now that has come in second half of FY26. Now it's launched sooner, and that is why a positive sign there. Elara has already penciled in a $20 million revenue coming in for FY26 from this one, and it could also gain as much as $50 million from this drug going forward as well.
Thank you so much, Winnie, for joining us and giving us all of the updates as far as the pharma pack is concerned, a clear outperformer in today's trading session. Well, with that, it's a wrap on this edition of Trading Hour. Stay tuned. Halftime Report is up next.
Stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Rima, as I mentioned, overall, while we had a degrowth of 0.8% on a sequential basis, all the major markets grew. Most of the industry verticals grew. Our international business had a positive growth. Okay. I will not be able to call out what is the extent of BSNL degrowth here. What would be the international business growth?
So international will be approximately sequentially, right? 0.6%.
0.6%. Okay. On last quarter also I mentioned that we said CY25, we expect this to be better than CY24. We still believe, based on the order book that we have announced and kind of deals we have signed, while there could be some short-term uncertainties, FY26 would be a better year than FY25. Okay. On the business, overall business environment, while till February we were quite positive and we were seeing very optimistic about the quarter, we started seeing some amount of some uncertainty creeping in March and resulting in some project delays, some decision making delays. We have not seen any major project cancellations. There are some ramp downs here and there, but there are some delays in decision making, and that's what we observe at this time. And as I said, we believe that maybe over the course of next few months, this uncertainty should settle in and we should be back to business.
So, Rima.
It's an almost all green screen as stocks react to Trump's 90-day pause on tariffs after a trading holiday on Thursday. Metals and consumer durables, the biggest gainers today.
TCS misses the mark on revenues and margins as decision-making slows on Trump's trade tattle. The management points to some ramp downs but no cancellations and remains hopeful of a better FY26 on the back of a strong order book.
Tata Steel plans a significant transformation of its Dutch operations to improve competitiveness. The proposal involving a workforce reduction will be implemented post-consultations with key stakeholders. The stock gains on the news.
A US court lifts the injunction on Sun Pharma's drug launch, while Cipla gets a US FDA assent to sell a cancer drug, while Biocon Biologics' arm receives the go-ahead to sell a $2 billion biosimilar cancer drug in the US. These stocks perk up.
The RBI issues guidelines for gold loans that clearly define these loans, set out loan value limits and cap exposures of lenders. The guidelines aimed at addressing risks in the segment are seen as crimping growth for players like Muthoot Finance.
It's a roaring day for the bulls. You're coming back on the back of a trading holiday, but they want to go into yet another long weekend on a high. You're watching Halftime Report live from the CNBC-TV18 Motilal Oswal studios. I'm Hormuz Fatakia. With me as always is Manglam Malu. And Manglam, well, a lot of the bulls were hoping that the market should have been open yesterday, but I don't think they would be complaining today too much either.
Well, they won't be complaining too much either, but yesterday would have been a different one because had it been yesterday, it would have been weekly options expiry yesterday instead of day before yesterday, and further short covering would take place as well. But be that as it may, it's not, wishes were horses and all of that and stuff. Good trading session so far. The good part is that we've, made a double bottom at 21,950 to 21,750 sort of zone. From there itself, we've kept moving higher. And if there was one genre of music that the market would listen to, or market participants would listen to over this long weekend, would definitely be heavy metal. The reason why I say that is because the decline in the dollar index has led to an increase in commodity prices. Some sort of relief coming by on tariffs implies that maybe, for the near term, there is not that uncertainty over global growth. And add to all of that, there are specific news pieces that have come by for the likes of Tata Steel, etc. as well. So that stock, doing well. But we have Hindalco, which is up 6% as well. But the counterbalancing factors today have been in the IT pack. On the one hand, you have this 90-day pause, which may be looked at as a relief for IT stocks which were under pressure earlier. But on the other hand, we have a mild miss coming in from TCS's earnings as well, because they're speaking about delays in decision making. Rima joins in with more. Rima.
Thanks so much for that. A quick recap of the numbers first. Subdued quarter, modest miss on the company's top line. Revenues have declined in Q4. There's typically weak seasonality, and then you had macro uncertainty. Some of the decision projects which were expected to start in Q4 got delayed, and that also hurt the company's top line in Q4. So revenues have declined by 0.8% in quarter-on-quarter, and margins declined to 24.2% despite the BSNL, low margin BSNL revenue deal getting ramped down and some rupee depreciation, because the company made some tactical investments on the macro environment, because we quizzed the management a lot on that. They said that they've seen some project delays, some decision-making delays, but there is no major ramp down, no major project cancellation. It's not that tech budgets have been tightened in a very big way. So in that sense, clients are not panicking. The company maintains that FY26 growth, at least for the major markets, now major markets you mean US, Europe, UK, etc., will be better than FY25, which according to some analysts was about a 1.2% kind of a growth. That said, the company clearly is worried about the macro uncertainty because they have decided to pause on their wage hikes. They typically give wage hikes 1st of April, but this time they're saying due to the macro uncertainty, they will take a call on when to roll out wage hikes. Let's quickly run you through the brokerage view. The bullish view is TCS's valuations are below the 10-year average, which is why UBS has a buy rating. But Ambit says that the current valuations still factor in very high growth. The current valuations expect the company to grow at 8%, which is not happening. So therefore, they have a sell view. The moderate view is from Jefferies and JP Morgan. So Jefferies has a hold rating, target price 3,400. JP Morgan says, again, neutral rating, and their view is the company will underperform peers, Infy as well as HCL Tech. But on the other hand, that underperformance gets balanced by the company's very strong capital allocation policy. They give out, they typically, more than 100% of their profits is shared with the shareholders. So that will cushion the downside, and investors could look at it as a factor, especially when we are in a low interest rate environment. Back to you.
Indeed, Rima, thanks a lot for that. Not moving the needle much is TCS, but has still recovered from the opening low, still 0.3% higher, now back in the green. Is India's largest IT company. Let us also now listen to excerpts of the conversation that both Rima and Prashant had with the management.
Obviously, we also been watching the news like you've been. Our customers are also doing that. But what we are saying is many of our customers are also in a wait and watch mode in terms of what is the end game going to be. But good thing is like whatever we have seen so far, as much as the rhetoric, we have not seen our customers panic. Like there are maybe some programs what we thought that they would kick off, but some delays in decision making. But we have not seen any major cancellations or no major project ramp downs. Like there are few, but no major. So I don't think there is any major negative reaction so far. But have I seen any major budget cuts? I have not seen any major budget cuts. I have not seen any major project cancellations. There are some tactical ramp downs here and there, but I won't panic at this time.
Was Q4, have you managed to steer clear in Q4 of this macro uncertainty, sporadic instances of ramp downs or project cancellations, or did Q4 also see an impact?
So, the positive side of Q4, okay, all the major markets grew. Probably I think this is the first time in this year where all our major markets had a positive growth. And even from the business verticals, if you look at, of course, BFSI has been growing. BFSI, like every time I've been reporting BFSI in North America, but this time BFSI in Europe, UK also grew. And we had growth coming in energy resources and even comms. So we had, of course, comms and all grew marginally, but of course, all of them had a positive growth. So overall, if you look at from a major market perspective, it's been a good number. But was there an impact? Yes, there was an impact. There was an impact.
What was the extent of the impact?
See, I'm not going to quantify how much was the impact, but there's a marginal impact.
Okay. And what happens to the early signs of discretionary spending that you spoke about 3 months back? Where are we at?
See, if I look at this quarter's, the other indication could be our order book. Okay, our order book has come in still strong. In fact, better than last quarter. Our order book is at 12.2. And of that, almost close to 7 billion has come from North America, 4 billion in BFSI, and close to about 1.7 or 1.6 coming from consumer business. And if I look at the discretionary spend portion of that, it remains same as the last quarter. And the good thing is, all this 12.2 billion has come in without the support of any mega deals also. If I take mega deals, this is actually the highest TCV in our recent history. So, so where I'm coming to, discretionary projects have not died down. There are probably some pause, and clients are thinking, should I start now or should I wait for a couple of more months till some certainty emerge? But otherwise, there is no major disruption to the overall situation.
What's the percentage of discretionary? What would you call discretionary as a total?
I would say about 30-40%. Like I don't know.
We are not calling it out in the overall portfolio.
But roughly in that 30 to 40% or band, possible, right?
Possible. I say the ballpark could.
The investments through the quarter. So we did tactical interventions, mainly merit-based interventions, that impacting us by 100 basis points, and another 60 basis points on elevated non-employee expenses, the likes of travel, events during the quarter, and higher CSR expenses.
Q1 wage hikes on track. And given the uncertainty, will the increment amount be similar to last year or lower?
Given the uncertainty, you said, we will decide when to do the increments.
So typically, you roll it out 1st April.
Yeah, but this year we will decide when to do it increments based on the environment.
So you're deferring wage hikes as of now?
I'm saying, I will not use the word defer, but yeah, yes, it will decide it when it happens.
Kriti, while you're not majorly concerned, and you're not seeing major disruptions, major cancellations or ramp downs, there are some instances of it.
Sure.
Give us some more nuance on that. Which are the verticals which will be most impacted?
As I said, consumer business, auto. These two I hear most often. Like as I said, comms I want to, while we had a growth, but I need to see whether it sustains. Tech business has grown, I think last quarter also it grew, right?
Yes.
Tech,
but
tech
going forward in terms of headwinds?
That's what I'm saying. Like tech as a professional services could be within tech, like we also include professional services. There could be a softness in professional services. So I would say from order wise, like consumer business, which includes retail, CPG, travel, airlines, and auto, and professional services. I would say these could be softer. Core banking I am finding so far resilient, and there are good opportunities in pharma and healthcare.
And last time you also said that FY26, so calendar year 25, looks better than calendar year 24, especially for the international markets. Do you hold on to that?
So if you look at our FY25 growth, it's been better than FY24 growth. However small the difference is.
What about this year?
That's what I'm coming to. So I believe FY26 will be better than FY25.
Stripping out.
FY26 will be better than FY25, the big takeaway from the CEO of TCS. We take a short break. We get you more on the markets on the other side and also put the spotlight on the March mutual fund data. Stay tuned.
Q4 to Q4 margin perspective, I think TCS was the only company who probably gave a full cycle of increments and also did merit-based interventions regularly through the period. That, as well as combined with investments in capability building, in our infrastructure expansion further, is the overall impact which we are seeing. Sequential basis, the margin impact was 30 basis points. Also on merit-based interventions or tactical interventions which were done through this quarter sequentially. You asked about FY26, absolutely. So first, our overall guidance range, or the guidance beacon which we call it, still remains at 26 to 28%. There is a gap, and given the current environment, there might be some impact on the operating leverage, maybe because of utilization taking a impact. But overall, the operational levers which we have been talking about, whether it is in terms of pyramid, utilization and productivity, still remain, and we believe that should enable us to get through. Also, uncertainty provides an opportunity, and we'll use this opportunity from a cost optimization perspective as well. Sequentially, the tactical interventions were about 100 basis points.
And what were they?
They were mainly
Welcome back. 22,900 now on the index, odds 500 points higher exactly now. It's a wonderful Friday for the bulls as we speak. The highest point of the day for the index, led very ably by a lot of these metal names, be it Hindalco, be it JSW Steel. A lot of these metal stocks contributing to the gains in today's trading session. And it's not just the Nifty metal stocks. Of course, some of the other broader market names too seeing very healthy gains in today's trading session. There you can see Hindalco now 6.25% higher at the highest point of the day, and JSW Steel as well. Gravita India is the top gainer on the Nifty 500, 12.5% higher. Sarda Energy, another 12.5% gain there as well. So great going for a lot of these metal names. But put the spotlight on the March mutual fund data, then the equity inflows declined for the second straight month. But Winnie is joining in with the key highlights of the AMFI data. Winnie.
Hi, afternoon. So yes, we're seeing that overall, when you're looking at the flows also, there has been a decline. One, do not forget this is year end, so there are a lot of adjustments that are made as well. And liquid funds especially have seen a bit of a decline coming in this time. Corporates, treasury side, this is something that is impacting the overall performance and year end market volatility that we've seen in the recent time. Other main three factors impacting the inflows, equity inflows, and that is why we're seeing a bit of a decline on that front. Now, obviously, equity segment, the inflows, they came in for the 49th straight month that we've seen inflows coming in on the equity front. So that's not a bad sign there. Though they've been the lowest that we've seen coming in since April 2024. Last time also, we were seeing at those lows levels. So that seems like it's continuing this time as well. Second straight month of a bit of a decline in terms of equity inflows on a month-on-month basis. Now, total AUM, when you're looking at it, the total AUM is up by 2%. Interestingly, what is the equity in AUM also, net asset under management for equities, that has seen an increase of almost around 7% on a year-on-year basis, month-on-month basis. So that means that there is some deployment, seems like a bit more in terms of that point of view when you're looking at it for equity inflows. Now, SIP contribution coming in at 25,926 crores versus 25,999 crores. A bit of a decline on that front as well, but yes, still around and about the 25,900 mark. Small cap funds inflows have seen a sharp increase this time on a month-on-month basis. Mid cap inflows muted, 1% growth there. Sectoral funds, that's where the decline has come in. We've seen the trend on sectoral funds losing the fizz over the last few months, and now that has furthermore intensified because that is at 171 crores. That is down 97% on a month-on-month basis. NFOs also third straight month that we're seeing 4,000 around that mark. So 4,885 crores is what we're seeing. Weak inflows coming in for the NFO segment as well. And gold ETF this time have seen an outflow versus an inflow last month. So interesting data points coming in on that front. And we'll watch out for what's going to shape up in April, given that volatility is still something that has continued this time.
Take that point, Vinny. Thanks a lot for that. So we'll watch out for that. SIPs close to around 25,000 crores for the 3 straight months. Just keep an eye out on ONGC. That stock's now moved to the high point of trade. We've seen a bit of a spike in crude prices over the last couple of days. Now it's at $64 per barrel. Nothing really to worry, but the fact that they've stopped falling for now has kept these stocks higher. Take a short break. On the other side, Ajit Mishra of Religare Brokering joins in with some trading strategies.
If you look at our FY25 growth, it's been better than FY24 growth. However small the difference is, I believe FY26 will be better than FY25.
We'll decide when to do it increments based on the environment.
So you're deferring wage hikes as of now?
I'm saying I will not use the word defer, but yeah, yes, it will decide it when it happens.
Many of our customers are also in a wait and watch mode in terms of what is the end game going to be. But good thing is, like, whatever we are seeing so far, as much as the rhetoric, we have not seen our customers panic. Like there are maybe some programs what we thought that they would kick off, but some delays in decision making. But we have not seen any major cancellations or no major project ramp downs. Like there are few, but no major. So I don't think there is any major negative reaction so far.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go.
Well, it's a 500-point rally that we're seeing on the Nifty right now, just as we speak, virtually closer to the higher end of today's trading range so far, and that's led not only by the stocks that have been doing well so far. We spoke about ONGC. Just pull up Reliance, maybe. Yes, that's the one that is powering the frontline index ahead. So we have HDFC Bank, Reliance, ICICI Bank, all of them contributing well. But just the last smidge of an up move has come in from oil and gas players, and Reliance is most definitely one of them. So ONGC is up around 3.5%. Reliance is the big boy out there, which has powered the Nifty ahead above that 22,900 mark. Let's get in the F&O perspective on the market then. If you look at all the frontline indices, all of them are doing well today. We have the Nifty, the mid-cap index, the Nifty Bank, all of them up and about in today's trading session. And in them going higher, what we've also seen is that volatility has gone down. So that's a good sign that we've seen. The India VIX is down about 11%. The other thing that we're looking at is the advanced decline ratio. That's telling you that the breadth of the market is firmly in favor of the bulls. We have, both the advanced numbers and the decline numbers, 2,300 stocks in the green for about 219 stocks in the red. And that line has been the train track through this morning itself, telling you that there is a firm amount of support. The Nifty Bank also importantly has crossed its 100-day moving average, even as we're seeing an up move in Nifty Metal, Nifty Pharma and the Nifty IT indices, the ones that get most benefited from all of this. The Nifty Bank has crossed the 100-day moving average. So does it, 200-day moving average rather, does it cross past that or not is the big question. And if that were to happen, then we are looking at the Nifty, looking at some of these technical levels as well. 22,960 is the 50-day moving average. 22,992 is the 20-day moving average. For all of this to happen, we have to look at the 23,000 call. Those call writers are fairly active in today's trading session. And at the lower level, we are seeing some put writing visible at 22,500, 22,700 as well. Watching out for a couple of stocks. PI Industries and CAMS are seeing some long positions being added, and we are seeing some shorts being added on Muthoot Finance, understandably because of the RBI news that came by.
Muthoot Finance at one point on Friday was down 10%, still recovered some ground but ended 7% lower, adding on to those losses in today's session as well. By the way, Sarda Energy is now up 15%. At the highest point of the day now, is the top gainer on the Nifty 500, and a couple of these pharma names too making a good mark for themselves in today's session. Be it Wockhardt is up 9%, as is Jubilant Pharmova. That too is seeing healthy gains in today's session. A lot of these smaller pharma names are making a mark today. Kaplan Point is the other one, 7.75% higher there as well. Suven Pharma is up 7%. And a lot of these moves have come in the last few minutes. If you see the intraday charts of all of these, you can see a lot of these moves have come in the last few minutes. Suven Pharma too at the highest point of the day now, 7% higher on that stock as well. Good time to get in Ajit Mishra, the Senior Vice President of Research at Religare Broking, who is joining us now on the show. Ajit, good afternoon. Thank you for joining in. What do you do after a big gap up like this, right? Because you're now up 500 points. The Nifty is now at that very important 22,850, 22,900 levels, still struggling to cross that. But once it does, what happens next? And what are your stock recommendations this afternoon?
Yeah, good afternoon, Hormaz. So yes, we are back to the square. Means we've started this journey of this week with a sharp gap down, and we are ending the week almost at the similar level. Means 22,900 was the zone basically where we closed, pre-tariff era. So now 20 EMA, Hormaz, 22,900 is what we are currently striving to sustain and reclaim. Once we do that, then probably we can inch toward to the long-term averages around 23,300, 400 levels. Banking has already reclaimed those areas, so which is definitely a positive sign. Like Mangalam was mentioning about, India VIX also seeing some cool off, which is the added positive. So now sustainability is the key. So let's say if we manage to hold these key areas, definitely we are eyeing higher levels or further recovery in days to come. So keeping that in mind, obviously, the sectors wherein we are seeing strength, FMCG, like after this prolonged underperformance, we are seeing Marico outperforming within the sector. The stock is almost trading on the verge of making a new high. 750 is what we are eyeing in Marico in the near future. So with stop at 688, one can accumulate Marico at the current levels. Then we have from the banking heavyweights, Kotak Bank, where after the marginal dip, the stock has again filled the gap, and we are again seeing fresh momentum in the stock. So 2250 is what we are eyeing in the near future. The stop at 2075, one can accumulate Kotak also at current levels.
What about a lot of these pharma names, Ajit? They are doing very well for themselves in today's session. I'll ask you a question on the metal stocks as well. But a lot of these smaller pharma names is what I wanted to draw your attention to. Be it Wockhardt, Kaplan Point, Jubilant Pharmova. Is there anything among these that excite you, or would you like to stick to the large cap pharma names?
So in fact, if you see, Ormas, that Wockhardt didn't slip below its major averages, long-term averages, which is definitely a positive sign, because the way the stock moved up from 150 to 1650, it was more of time-wise correction that we were seeing in the stock and still holding above these levels. So this seems that probably this relative strength is likely to continue ahead also. And 1600, 1650, the previous swing high is something that the stock might attempt.
And what about these metal names, Ajit? Hindalco, Tata Steel, a lot of them doing well for themselves today. Also for the likes of Sarda Energy. Anything that comes on your charts here?
So here, metal definitely means we have seen a decent recovery, and Hindalco is definitely among the top performing names. But the way mostly metal counters were under pressure, I believe that one should wait for like some stability or some base formation before making any substantial move. Sharda at the other end, still we are seeing consolidation to continue in the near future. So for a time being now, it's prudent to avoid any aggressive bets in metal and Sharda Energy per se.
All right, we take that point. Are there any other stocks that you've listed out for us today that you wanted to talk about?
So like banking definitely is something, Mangaram, which one should continue to keep a focus on, because in this entire negativity, we were seeing that banking is holding above its major averages. It didn't breach its previous swing low. So large cap names like ICICI, Kotak, HDFC Bank is something definitely you should prefer. So despite all this, choppiness that we are seeing in the market, we believe that this kind of outperformance might continue in banking and financials in days to come as well.
Right, take that point. A big move is what we're seeing on Aarti Industries right now, up nearly 6.5%. Also, Laurus Labs along with Patanjali Foods are a couple of stocks which are spiking. PI Industries at the bottom of your screen, already spoken about by our ticker team. Take a short break. In fact, as we do that, let's hear out what the economist Jeffrey Sachs had to speak about India getting closer with the United States at the expense of its ties with China. Is there a risk out there? He spoke with Shireen Bhan. He did say that India should not be anti-China to just please the United States. He said that the US President Donald Trump is wrecking the global economy. Listen in.
Market capitalization in 2 days, you're probably on the wrong track. The United States is on the path of wrecking the world economy once again. This is not U.S. policy. This is not congressional policy. This is not U.S. public policy. This is Donald Trump's policy. He is single-handedly wrecking the world economy. And I think the damage is going to be done before it gets undone. India really needs normal relations with China. And India should appreciate this is a great civilization, and this is a country that's going to play a huge role in the world in the 21st century. I mean, a huge role in the world on all sorts of things, on culture, on economy, on technology, on global peace. Yes, have good relations with the U.S., but don't be played by the U.S. Don't be anti-China because that makes the U.S. feel so good and speeds your agreement.
CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown, and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most
for the trading week. Let's get into what we're seeing at a sector level, those that are perched higher and where the repositioning is taking place out of the gates today. It's construction and materials. We are up 1.3%, followed by basic resources. Technology are putting on 1.2%, autos and media. So some of the cyclical arms of this market are the outperformers first up today. The underperformers. Let's just catch up with those names to the downside. It's oil and gas, and that has been a fade around the economic resilience that we may see because of the tariff uncertainty. There are concerns still growing about the potential for a recession. That's not disappearing at this stage as we see the US and China still slug it out. So oil and gas as a sector is down 0.25%. Insurance showing us some slippage. From there, we still see green, but these are the underperformers from telecoms to real estate, travel and leisure. I've got to say, what a ride it has been for real estate this week, trying to judge the trajectory for interest rate policy, thanks to the flip-flopping around this trade signature policy. To the European bourses and the starting point, let's see the levels that we've got. The FTSE 100, we're up almost 0.8% thanks to that resources trade this morning. So you can see we're just shy of 8,000 points. The DAX, we're not going to get a signal there for a bit, but we were called higher. 1% pop on the French market. Yesterday, it was up about 3.8%, but still trading down 2% for the week. The Italian market also marching firmer. It is one of the better markets on the upside sometimes, and you saw that again yesterday, outpacing the other core markets, putting on about 4.75%. But again, it is still sitting on losses for the trading week of 1% before the session, so trying to close the gap, and we might be getting to that break-even point. So again, one of those weeks where you travel a long distance intraday to go pretty much nowhere for a trading week, telling you about the volatility. Let's get to some of the other indices across Europe. The starting point for some of these markets, and you can see the DAX just opening there up more than 1% too. Now the SMI 0.6 north, 0.8 on the Spanish market as we talk about trade between the Spaniards and the Chinese. The AEX is up 0.8 and the Portuguese market 0.9 in the round. Consistently to the upside is what we're witnessing as the starting point, Sylvia.
I want to take you to UK bond market. This because we got a new GDP data earlier today suggesting that growth came in 0.5% on the month in the month of Feb. That's ahead of economists' expectations, with growth across the services and manufacturing sectors. Now, the Chancellor, Rachel Reeves, described the figures as an encouraging sign, but warned against complacency. So just a quick look at how we're faring across the yield space.
Right, so that is the European market, just like our screens as well. The European indices, all of them in the green across the broader markets doing extremely well, as we're seeing the bonds do well as well. And that exactly is the CNBC edge that we bring to you from all the experts from across the globe, the wide network that we have at a time when there is so much uncertainty around Trump tariffs and all global markets, etc., all through the day and thereafter as well. Even after the Indian market shut, we get you the CNBC Edge. Speaking about Edge, let's get to our special segment, the Insight Edge, where Rima focuses on Orient Pro Solutions, the stock up 15% today after the management spoke to CNBC TV18. Rima.
So
So Orion Pro is the big mover in the mid-cap IT pack, and as you rightly pointed out, you chatted with the management too. Now the company has announced a 100% stake in a Hyderabad-based software company called Fintra Software. This is a company which has software solutions for wholesale banking companies like trade finance, supply chain finance, escrow, factoring. Small company, they will be paying 23 crore. The acquired company had revenues of less than 1 crore rupees. But this is the third acquisition the company has done in the last 1 year. And all three of them have been fairly small. We spoke about the current one, which helps them expand into the wholesale banking sector. In December of 2024, they expanded into Europe by acquiring Phoenixes. And in April of 2024, they further strengthened their banking channel by acquiring Arya.ai. We also chatted with the management today, and despite all the macro uncertainty, they're still very bullish. They're saying the demand environment is strong, not very affected by what's happening globally, because they get 60% of their revenues from India. They're just expanding in US and Europe. They've grown 30-35% over the last 4 years. No reason why that may not continue, and maintaining their FY25 guidance of 1150 to 1200 crore rupees in terms of top line. Stock is higher today, but bear in mind it's also down 50% from its 52-week high.
The demand environment, I don't think there is any change. We have, I think we've grown at about 34-35% now for 4 years. So there is a strong trajectory of growth. Demand environment remains reasonably strong. And US is less than 10% of our revenue, so it's not really a big market for us. I think that will sort of do what it do. If the entire world goes into a slowdown or something, then I suppose it affects everyone else. But for now, we don't really see much change in terms of demand. 3.5, 4 years back, FY21, we did 375 crores. This year, our guidance is to do between 1150 and 1200 crores, right? We'll see where we land up. We have a stated Vision 2030, where we have sort of the external articulation is qualitative. Obviously, we got an internal articulation of Vision 2030, which is quantitative targets and all that stuff. So we have numbers going from now till 2030. We've so far tracked ahead of it. The stated ambition is to be a top 3 global player in each of our chosen spaces. If we keep going at 30% from now till 2030, it would be probably 3 or 4 times, right? So, I mean, an Excel sheet exercise would take you there, right? We don't intend to slow down, right? We will not publish a number 5 years out, but we don't intend to slow down. So roughly, I think we will try to keep the growth trajectory we've been on.
14% higher, Orion Pro Solutions at the highest point of the day. Great going for that mid-cap IT stock, part of our Insight Edge segment. We'll take a short break, more on the markets and specific stocks on the other side. Stay tuned, we'll be right back.
Of policies and politics, the key news makers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
If you look at our FY25 growth, it's been better than FY24 growth. However small the difference is, I believe FY26 will be better than FY25.
We'll decide when to do it increments based on the environment.
So you're deferring wage hikes as of now?
I'm saying, I will not use the word defer, but yeah, yes, it will decide it when it happens.
Many of our customers are also in a wait and watch mode in terms of what is the end game going to be. But good thing is, whatever we are seeing so far, as much as the rhetoric, we have not seen our customers panic. Like there are maybe some programs what we thought that they would kick off, but some delays in decision making. but we are not seeing any major cancellations or no major project ramp downs. Like there are few, but no major. So I don't think there is any major negative reaction so far.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
Welcome back. 480 points higher still on the Nifty. We spoke a lot about gainers. Let's also look at some of the stocks that are bucking the trend in today's session. But just before that, pay attention to Rail Vikas Nigam, RVNL, which has emerged as the lowest bidder for Southern Railway project worth 143 crore rupees. So railway stocks coming back into the limelight. 1.7% higher is RVNL, of course, significantly off its all-time high levels, which is around about 650 rupees. From there, it's now down to 350. So RVNL and order win, the stock in focus. But a stock that is bucking the trend other than Muthoot Finance, as Mangalam just mentioned a few minutes ago, is Max Healthcare. Is around 3% lower there. Jyoti Laboratories was up 10% on Wednesday, seeing some bit of profit booking from higher levels there. 2.5% lower on Jyoti Laboratories as well. But putting the spotlight on Apollo Hospitals, who's looking to increase capacity by 2,500 to 2,700 beds. My colleague Parikshit caught up with Apollo Hospitals' Shobna Kamineni and started by asking her about the growth and expansion plans of the company. Let's listen in.
Apollo Hospitals, we saw that there was a necessity as our, as capacity of most of our hospitals is close to about 75+%, and we had to move into that new expansion. And I think my sister Sunita is always very cautious, but at this point, we were able to actually get some really fine properties, whether it's Gurgaon, Pune, Mumbai. So these are cities that we didn't have enough presence in, and moving there, and of course we're expanding in Chennai, doing another one in Hyderabad. So these are cities that we really have a strong presence. So going deeper into cities that we are and moving into other new cities. So yes, there's some exciting expansion happening in Apollo.
Right. If you can give us some numbers to quantify that, how much would you be investing in this expansion in FY26, and what is the overall bed capacity that could increase as a result?
So we're looking at increasing about 2,500 to 2,700 beds, and of varying investments, because some of them are really high tech, from things like a proton to a tertiary type hospital to just augmenting some of our secondary. So with all that, I think we're looking at something of over the next, we started last year. So the cycle of it, the investment cycle would be anywhere in the range of 3,000 crores.
Okay. Speaking about the story of Apollo 24/7, this enterprise is now completing about 5 years. Could you give us a sense of the journey so far and the contribution of Apollo 24/7 to the larger group?
So sometimes, I like to say that we're actually a COVID baby. We started on February 5th, 2020, just before the lockdown. And during that time, it was almost a trial by fire. We didn't sleep for at least 18 months, because all of a sudden you've launched a platform and you expect to kind of grow slowly. And all of a sudden what happens, it hits you when you get 70,000 orders a day, when doctors who are shut off from their patients, we onboarded 3,500 doctors in 45 days to be able to connect them to their patients. So this really is the ethos, the story of why we're there with that. We could have been just, creating an omni-channel, just making sure that pharmacy is doing well. We know that e-commerce, there was 1mg, there was PharmEasy and all these. So we said we need to have another muscle. And this is another capability. So we could have done that. But I think we stepped back and said, that doesn't serve. It still is so transactional. What is it that a patient needs? And it was so fortunate that we really had a platform that had consultation, that would give people diagnostics, that would be able to give them medicines. And just that capability that we started with was just amazing during that 1-2 years. Of course, there was a lot of failure, but then you're flying midair and refueling and keep changing. And then post-COVID, we fell off a cliff. Just like the rest of the world, telemedicine, they were almost, everyone wanted to come back to see their doctor. Then even in the other part, we were really burning, thinking we're an e-commerce company. So I think the last 2 years really got our act together. So I think this is the time that it's a very short maturity cycle to think that in 5 years you can go from start to actually becoming mature and profitable. But that's the journey of Apollo. That we had the capability to do it.
Right. So it was almost like a startup in a sense.
Totally.
Totally. And, startups sometimes have a long road to profitability. How has that panned out for you?
So I think they had at the beginning, they always said that it's a disadvantage to have an old founder who didn't understand burn with this when they kept coming to me with metrics and saying...
You can't call yourself old from any angle.
No. But look, I'm not. This is a business. E-commerce is a business that my kids should be doing. So they said, you don't understand this, of how you have to burn and you have to do all this. And then one fine day, I really learned. I listened for 2 years and then I said, enough. This just is not working. How can a company work that loses money? You have to make money. And at that time, when we really sat down and said, and we did a lot of true navel gazing, and we said, we have these customers. We have 40 million people who are loyal, who love us. How do we serve them better? By being omni. And I think that was the eureka, that we really started doing so much better. So I would think the journey of the last 2 years is just refocusing on our customer, saying that how do you serve these customers better, and then more will come in.
My final 2 questions, ma'am. One would be about the impact of Trump tariffs. He has imposed tariffs, then he has put a pause on it, then he said that the 10% baseline will continue. He gave a carve-out for the pharma sector, then he said, please be warned, pharma tariffs are coming like never before. How do you see this impacting the healthcare industry, the pharma industry, with investments, with manufacturing and operations?
I think with a large domestic market, so there's going to be a lot of focus on trying to sell. Even so, I feel for the Indian pharma. It's an $8.8 billion export business, and I don't think that Americans will allow Trump to take that away from them, because that's the only place they're getting a price advantage. So that's there, park that. But I think what's happening now is, for the last couple of years, I've noticed actually the last decade shift is that Indian manufacturers have become dominant in India. It used to be that the foreign guys would come to India and you'd import a lot of drugs. Now the top 10 sales of sales drug pharma companies are all Indian. And that's fantastic, because they've seen a large addressable Indian market. And this is something now that even the foreign markets want to come into. How can I get into India? So India's in a sweet spot with regard to this. And the fact that we have our own barriers, because the MRPs are so low. They're the lowest in the world. In one way, I'm so happy for the Indian customer, because they buy medicines cheaper than anywhere in the world.
listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
If you look at our FY25 growth, it's been better than FY24 growth. However small the difference is, I believe FY26 will be better than FY25.
Welcome back, and joining us now is Amit Goel from Pace 360. Amit, hi. Interesting times and unprecedented numbers when you look at gold as charts at $3,200 an ounce. What is it that you would advise investors?
Thanks for having me on, Manisha. So the sense which I get is that the world is getting out of US dollar and US treasuries. They are looking for safe havens because obviously this is like a crisis time for the financial markets, and the only assets which used to serve as havens, dollar index and US treasuries, they are actually they are the asset classes where everybody wants to exit. So people are investing in gold because they think that's the safe haven. That's like the only safe haven in town now. So we are contrarians to the core, and my sense is that dollar index, which is close to 100 levels now, it was 110 in January. My sense is that I don't see dollar index going down significantly from here. It is probably looking for a bottom. US treasuries are probably looking for a bottom. And my sense is that everybody wants to buy gold, and there are hardly any sellers in gold, because of which the prices have moved up by 10% in just the last 48 hours. My sense is that gold does not have much way to go higher, at least in the near term to medium term. And I would rather bet on dollar index bottoming out, and I would rather bet on US treasuries bottoming out.
So, Amit, what is your sense now? If we do see some correction, and I'm calling it a correction from these levels, where do you see supports coming in, and would those be good buying opportunities yet again?
Absolutely, Manisha, because see, long term, the case for gold is still very, very strong. So gold was range bound for almost 6-7 years before it broke out in 2023-24. And my sense is that breakout is for real, but the extension of the breakout to 3,220 odd levels that it made today, I think that's pushing it a little too far. While it, of course, it can still make a higher high at 32, 30, 40, 50. It's very difficult to exactly say what's the top going to be. But my sense is that over the long term, gold still remains a very important asset class for the next 3 to 4 years. For the medium term, it is looking toppish. So my correction levels over the next 6 to 10 months are probably going to be like a 2,600 level. There is a wider path for it to go down to 2,600. There is a much narrower path for it to go down to, let's say, 2,400, 2,500. But if it goes down to those levels, even if it is 2,600, it would be a very, very good buy because the long-term fundamentals of gold are intact, though it's a little overhyped and over-exaggerated story in the near term. And it doesn't work like this that, in the current global plumbing, the way the global plumbing of the markets happens, it's not that US dollar can go down the tube and rest anybody else can survive. There is no other currency in the world which can literally go up and still survive as an economy. So my sense is that there would come a point where people would not want to buy gold, and that would probably be good enough to give it a correction of 15 to 20% over the next 6 to 8 months. But at that level, it's going to be a phenomenal buy.
And when that buy does happen, then the next 3 to 4 years, how do you see that, Amit? Because we've got reports suggesting $4,500 and even $8,000 announced by 2028.
We've always given a target of $4,000 to $4,500 an ounce. That's like a low-hanging fruit for us if we look at 2028, 2029. And my sense is that while the path to 4,000, 4,500 is very, very wide, which means that the probability I can ascribe to it is more like 80% or even higher. But yes, there is a somewhat narrower path with a lower that it could skyrocket to $5,000, $6,000 an ounce. But my sense is that people, while of course we should be aware what it can go up to in the long term, but we should not allow ourselves to buy when there is like a frenzy to buy gold. But yeah, long term, the fundamentals are intact. And I would agree that 5,000 or even higher is something which is definitely probable. And 4,000 to 4,500, in my opinion, is, it's very, very high probability.
Achievable. A final question then, Amit, and this one is on the US Treasuries. I mean, you follow them very, very closely as well. With the way we've seen, and it's a frenzy across asset classes, I mean, with what equity has been doing, 1,000 points up and down on days when gold has been moving $100 as well. From here on until the next 90 days, that is when there's a pause on various countries in sense of tariffs, what way would you want to trade?
So I'm actually bullish on long-term US Treasuries at this point. So the 20-year US Treasury bond is now trading at 4.95%, and the 10-year one is trading at about 4.45%. So what has happened is that the gap between the short-term treasuries and the long-term treasuries has gone up a lot because of loss of confidence in the US economy, and plus the fear that the Chinese central bank may offload their treasury holdings. I don't think they will go that far. And I think the treasury market is one of the biggest asset classes and the biggest market in the world. I don't think that just because one central bank, of course, they are a big one, they have $3 trillion of dollar holdings, but I don't think they can really break the backbone of treasuries. And I don't even know whether they would want to do it. They would at some point of time get back into business with US. It's still not a game over for US and China to, again get along on some kind of a reconciliation mode. So my sense is that US long-term treasuries are a great buy. I think dollar index is kind of bottoming out, and I think it's probably topping out for the medium term.
Point taken. We've noted all of that down. Amit, thank you as always for joining in and making a sense of what the market really could be doing days ahead. And with that, that's all the time that we have on the show, but Business Lunch will take all the action forward.
We'll decide when to do it in increments based on the environment.
So you're deferring wage hikes as of now?
I'm saying I will not use the word defer, but yeah, yes, it will decide it when it happens.
Many of our customers are also in a wait and watch mode in terms of what is the end game going to be. But good thing is whatever we are seeing so far, as much as the rhetoric, we have not seen our customers panic. Like there are maybe some programs what we thought that they would kick off, but some delays in decision making. But we have not seen any major cancellations or no major project ramp downs. Like there are few, but no major. So I don't think there is any major negative reaction so far.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies.
It is an almost green screen as stocks react to Trump's 90-day pause on tariffs after a trading holiday on Thursday. Metals and consumer durables are the biggest gainers. TCS misses the mark on revenue and margins as decision-making slows on Trump's trade tattle. The management points to some ramp downs, but no cancellations, and remains hopeful of a better FY26 on the back of a strong order book. Tata Steel plans a significant transformation of its Dutch operations to improve competitiveness. The proposal involving a workforce reduction will be implemented post-consultation with key stakeholders. The stock gains on this news. The US court lifts the injunction on Sun Pharma's drug launch. Cipla gets a US FDA's approval to sell a cancer drug, while Biocon's biologics arm has received the go-ahead to sell a $2 billion biosimilar cancer drug in the United States. The stocks perk up. RBI issues guidelines for gold loan that clearly define these loans, set out loan value limits and cap exposures of lenders. The guidelines aimed at addressing risk in segments are seen crimping growth for players like Muthoot Finance. Hello, good afternoon. You have tuned into Business Lunch, coming live from CNBC-TV18 Motilal Oswal Studios. I'm Vinny Motiwala, and thank you so much for tuning in. As always, a good Friday coming in for all the markets today, and Nifty as of now also is managing to hold on to gains of almost 2% that we're seeing in this trading session. 2.26% day's highest point, 22,900 is what the Nifty is at, up 500 points in today's day. Contributors, we have seen the private banks are at HDFC Bank, ICICI Bank, Reliance, Bharti Airtel among the other names that are buzzing in trade. On the flip side, you have Asian Paints and Apollo Hospitals in the Nifty, which are a bit of a drag coming in. But surely, Nifty Bank, that's the one we should pull up as well, right? Private banks are doing well. Nifty Bank also trading at the day's highest point. Almost 2% gain is what we're seeing coming in for the Nifty Bank. Nifty Mid and Small Cap managing to hold on to good gains as well, in line with what the benchmark indices are doing. Both up almost 2%, small cap 2.6% uptick there as well. So yes, interesting move coming in the market. All sectors today are holding on to the green today, so no red from the sector point of view. But especially metals and pharmas as well as consumer durables are among the top performers in terms of sector-wise and sector gains coming in. So yes, that's what we're seeing coming in for the markets. But let's start by talking about earnings, right? And shift that focus to the earnings season that has started. Kick-started with TCS that reported its Q4 numbers yesterday. Now, there was a mild miss that came in on that front. The company's net profit missed their estimates, 1.3% lower on a sequential basis. Revenue also came in below the street expectation, while revenue in dollar terms, US dollar terms, that declined by 1% on a sequential basis. To understand whether the recently imposed tariffs had impacted this quarter, let's listen in to the conversation that we had with them. Rima and Prashant were in talks with the management. So what did they have to say on that front? Listen in.
Many of our customers are also in a wait and watch mode in terms of what is the end game going to be. But good thing is, whatever we are seeing so far, as much as the rhetoric, we have not seen our customers panic. There are maybe some programs what we thought that they would kick off, but some delays in decision making. But we have not seen any major cancellations or no major project ramp downs. There are few, but no major. So I don't think there is any major negative reaction. Have I seen any major budget cuts? I have not seen any major budget cuts. I have not seen any major project cancellations. There are some tactical ramp downs here and there, but I won't panic at this time.
And switching gears, the Reserve Bank of India has issued draft rules on loan against gold. Ritu is joining in with us to give us more details on this one.
Well, the takeaway is that the draft norms are not as bad as feared, although there could be some near-term impact. Now, there are single borrower sectoral limits that have been set. Lenders are barred from lending against financial assets or gold ETFs to repledge loans. Now, in the case of bullet repayment consumption loans, the tenor is also proposed to be capped at 12 months. The draft rules also say that gold should be valued based on 22-carat purity only, and the pledged ornaments should not exceed a kg per borrower. Now, here's where the pain really lies. The loan-to-value or LTV ratio, while that remains capped at 75%, here's the change. This 75% LTV must be maintained throughout the tenure of the loan, which previously was only applicable to banks, and this is now for NBFCs as well. For bullet repayment loans, the LTV will now have to be calculated on the total amount, that is principal plus interest. So the origination LTV may decline given the buffers that lenders will be required to keep for gold price fluctuations and interest payments. Now, if this LTV ratio breach continues for more than 30 days, there will also be an additional 1% standard asset provisioning on the entire outstanding amount. So RBI is trying to harmonize these rules, but really what it does is eliminate some of the NBFC arbitrage over banks, and so the worry is that this could reduce customer preference for NBFCs. Now, brokerages believe the LTV cap could affect loan growth in the year immediately after implementation, but overall it's a better outcome than initially feared, because markets, for instance, were fearing that bullet loans will be discontinued. Morgan Stanley says Muthoot's counter-cyclical business could ensure strong earnings versus other NBFCs, and estimates ROE of 20% in FY26 and 18% in the next year, even if the AUM is flat. Jefferies believes tighter norms can have some impact on growth and provisioning. CLSA says these guidelines are marginally disruptive for growth for Muthoot and Manappuram, and it is only building in 12 to 15% loan growth over the next couple of years.
Okay, Ritu, thank you so much for that. But on that note, we're going to slip into a very short break. When we return, we'll get you the tariff-related updates on the other side.
Expert opinion on the go.
Grow on the go with CNBC-TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? it takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBC-TV18.com.
Welcome back to Business Lunch on CNBC TV18. Now let's move on. In Asian stocks, they were struggling to stay up in trade, and this is despite US President Donald Trump's 90-day pause in reciprocal tariffs. CNBC's JP Ong is bringing us more details on this one.
The recent bounce back for Asian markets was short-lived, with stocks across the region mostly in retreat a day after US President Donald Trump decided to suspend reciprocal tariffs for 90 days. And after the euphoria that boosted markets on Thursday cooled, investors were reminded that tariffs on Chinese goods were still in place and are now effectively at 145%, stoking worries about new retaliation from Beijing. Bonds sold off and the US dollar slid overnight on recession worries, and that boosted the Japanese yen, which was already drawing strength from overall flight to safety. That stronger yen also weighed on the Nikkei 225, which closed out a week that saw the Tokyo benchmark swing between sharp losses and gains. Surprisingly, stocks across Greater China rose despite the rising tariffs levied by the US. Equities in Shanghai and Hong Kong came back from early losses, signs that state funds may be supporting the stock market once more. The yuan steadied as well, a day after tested its weakest levels since 2007. Elsewhere, the mood across Asia-Pacific was mostly muted, with stocks in South Korea and Australia in retreat. But Taiwan's TAIEX looked unusually strong, with the island's president Lai Ching-te claiming that they will be among the first to conduct tariff negotiations with the United States. For CNBC International, I'm JP Ong.
Thank you so much for that. Now, staying with Asia, even as Trump hikes tariffs on China, brokerage firms like Goldman Sachs have held onto the overweight view on China. Let's listen into Sunil Kaul of Goldman Sachs on what he had to say and why is he believing such a statement that he's making.
Sharp increase in the tariffs and the retaliation, the 145% number, that does have impact on the market. That does have impact on the growth as well. I mean, in fact, if you look at our numbers, we just recently cut China's GDP growth number by 50 basis points, both in calendar 2025 and 2026. So we are now looking at China's growth to slow down to from 4.5% to 4% this year, and from 4% to 3.5% this year. So clearly, I think these high tariff numbers are having are weighing on activity and growth. But at the margin, I think the policy is also going to be incrementally more supportive, and we do think that some of this impact from tariffs is going to be offset by policy stimulus.
And meanwhile, European Union is preparing retaliatory measures against Donald Trump's tariffs, and these could come into effect if no agreement takes place with Washington. Remember, after the White House paused tariffs for 90 days, the EU has also decided to put its countermeasures on hold. Let's go across to CNBC's Sylvia Amaro, who's here to give us more details on this one.
The European Commission President Ursula von der Leyen has warned the EU is preparing retaliatory measures to the US tariffs, which could be deployed if no agreement is reached with Washington. She said the measures could include levies on digital advertising revenues, which would hit big tech names such as Meta and Google. In an interview with the Financial Times, von der Leyen reiterated the bloc is seeking a completely balanced agreement with the US, but said there are a wide range of potential countermeasures. And here, first and foremost, very interesting to get this interview from von der Leyen, because she barely gives interviews. So now she comes out and she's talking about the EU's position amid these trade tariffs. And she's very clear in her message. We want a deal, but we are ready to retaliate if needed. and we are going to hit big tech because we know that's where we could hit the United States the most. So they have all possible solutions on the table at this stage. They remain flexible, however. They also yesterday announced that they were pausing their retaliatory tariffs for 90 days, again, as a sign to the US that they are willing to negotiate, that they want to find some sort of compromise. But ultimately, her position is we have all the tools that we want in order to retaliate, and they will use them. So let's see how these conversations will unfold, Karen. But at this stage, it seems that it is very much in the open whether the EU will manage to strike a deal with Donald Trump.
And earlier, we also spoke to Jahangir Aziz, who is the head of emerging market economies at JP Morgan, and he expects recession in the US in the second half of the year. Listen in.
So after the pause, we are still sticking with that, second half of the US will go into recession. That's our base. That was a baseline prior to the pause. That remains a baseline. For global recession, we still don't have it in a baseline, but we have a 60% probability. We haven't changed that probability.
And First Global's Devina Mehra says that Trump's policy has put an end to US equities outperformance as well as accelerating the end of dollar as a reserve currency. Listen into what Moshe had to say.
And US has been outperforming for about 12 years. So anyway, I'd been watching that sometime that outperformance would end. If you'd asked me 6 months ago, I would have said that, we are watching, but nothing looks imminent. But I think Trump has hastened the end of the US outperformance. And more than that, whatever US has done has hurt, I think, even on a long-term basis, the US dollar's position as the reserve currency of the world and the trade currency of the world. People will start to look at alternatives. 2 years ago, I made a video saying de-dollarization will not happen in a hurry because reserve currencies don't change in a hurry. But I think Trump has shaken something fundamental about the trust in US.
And moving on, the former White House official Lisa Curtis has hit out Trump's tariff policy, calling its rollout haphazard. She also said that Trump's policy could lead to US losing its soft power, paving the way for China's domination. My colleague Parikshit actually spoke with her and began by asking her about the rationale behind the tariffs. Listen in.
Well, I think the goal of the Trump administration is to bring manufacturing back to the United States. This is something that Trump was committed to on the campaign trail. So, it's not surprising that he is putting a lot of effort into bringing manufacturing back, bringing jobs back to the United States. I think the problem is how the tariffs were rolled out, and the fact that not only has he targeted U.S. adversaries, particularly China, but he has also levied tariffs on allies and partners, including some allies that the U.S. had a trade surplus with. So it hasn't made a lot of sense to people why he would do these broad tariffs on so many nations, including allies and partners. And I think it did backfire, and that's why he has stepped back and he's put on this 90-day moratorium. So, unfortunately, I think that the way the tariffs were rolled out, there didn't seem to be a good strategy in place, and it seemed like a haphazard approach to applying tariffs, across the board, across the world, and it badly backfired on him. So there may be, a lesson learned here. But right now, of course, the tariffs are still on with China, and the U.S. and China are virtually in a trade war. And so the question is, how will this impact the U.S. economy? And I think we've yet to see how it will all play out for the average U.S. consumer.
Right. Lisa, it's quite clear that Donald Trump is using trade as a weapon and trade as a centerpiece of foreign policy relations with other nations. yes, the tariffs have been paused, and you're saying that it's clear that somewhere the administration realized that the policy is backfiring. But this was long coming. Since his campaign, he has been saying that he will apply reciprocal tariffs, and the world has been very unfair to America. This was in the plan for the last 2 to 3 months. What do you think made the administration realize that, hey, we've made a mistake and we need to pause?
Well, I think one of the main reasons that we're seeing these tariffs and such a over focus on tariffs, it's really a one-track strategy. If you ask me, there is probably a broader strategy, a broader economic strategy, if you really want to bring manufacturing back to the United States, that you can't just rely on tariffs. But unfortunately, I think his advisors, people like Peter Navarro, who has been all tariffs all the time. He's written books about it. I think that he has influenced President Trump, and that's why we saw the disagreement. I think over the weekend, Elon Musk was very clear that he disagreed with this strategy, and he wanted to see the U.S. negotiating.
Okay, on that note, we're going to slip into a very short break. But don't go anywhere. After the break, we'll get you more news and updates. So stay tuned in.
CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
If you look at our FY25 growth, it's been better than FY24 growth. However small the difference is, I believe FY26 will be better than FY25.
We'll decide when to do it increments based on the environment.
So you're deferring wage hikes as of now?
I'm saying, I will not use the word defer, but yeah, yes, it will decide it when it happens.
Many of our customers are also in a wait and watch mode in terms of what is the end game going to be. But good thing is, whatever we have seen so far, as much as a rhetoric, we have not seen our customers panic. There are maybe some programs what we thought that they would kick off, but some delays in decision making. But we have not seen any major cancellations or no major.
Welcome back to Business Lunch on CNBC TV18. Now, Airbnb, that's seeing a surge in bookings from India, with Goa emerging as the top destination for both domestic as well as international travelers. With Gen Zs and millennials driving demand for experimental travel, Shilpa has filed a report on the same on the short-term rental giant's big India bet.
With a 30% rise in domestic bookings, India is one of Airbnb's fastest growing markets globally. Goa remains the platform's top destination not only for Indian travelers but also for international guests. Gen Z travelers are looking beyond hotels and traditional holidays. They want immersive, cultural and offbeat experiences, and that's where Airbnb is gaining traction.
we are seeing very strong growth, 20% bookings growth year over year in terms of 2024 versus 2023, and we are seeing the same momentum in 2025 as well. 9 out of 10 new bookings that happen on Airbnb are from the Gen Z millennial cohort. In fact, the Gen Z bookings that we've seen, in fact, in the last year have grown by almost 60% year over year. Now, we've seen almost a 30% growth year over year in terms of just domestic nights. And even in the last quarter of last year, Q4, that number was at about 35% year over year. When people stay in homes or lesser known neighborhoods, there is a multiplier effect that comes into play that benefits the entire microeconomy.
The growth for Airbnb comes at a time of heightened competition from new players like Saffron Stays, Stay Vista and similar domestic players. Airbnb says more competition augurs well for the industry and is working on increasing awareness among Indian hosts and guests.
All the players that you mentioned also are on Airbnb. So we are a marketplace, that a lot of young people prefer, and they come on Airbnb to find the best stay for their budget or for their type of travel that they're looking for. Until the time people are traveling more, as what we are seeing in the last few years, or new people are traveling and they are using newer accommodation stays or hosted stays as their preferred method of travel, it's good news for all of us in the industry. So I think Airbnb will continue to lead its way in terms of innovation. In the last 1, 2 or 3 years alone, we've had almost 350 plus upgrades to our service.
With travel patterns shifting post-pandemic and long-stay bookings on the rise, Airbnb is betting on flexible, remote-friendly travel as a long-term trend with a focus on immersive stays, local partnerships and Gen Z preferences. In Mumbai, Shilpa Ranipeta.
Okay, moving on to some more news and updates. Pakistani-Canadian doctor Tahawoor Rana, who allegedly played a role in the 2008 Mumbai attacks, has and was arrested by the National Investigation Agency after the extradition from the United States. News 18's Arunima is bringing us more on this front.
Questioning has started. Top officers of the National Investigation Team, along with other agencies, are questioning Tahawoor Rana. They want to know essentially how much he knew about Headley's plan and the plan that Headley's handlers had given him. For example, one question that NIA would want Rana to answer is, why did he tell Headley after the 26/11 attack that the attackers must be given Nishan-e-Haider, the highest gallantry award in Pakistan, which is usually given to army men for carrying out acts of valor in the battlefield. Rana had earlier claimed that he was only repeating what Headley had said, but the intercepted call would be played out by NIA in all likelihood, and he would be asked to clarify further. There are 106 emails between Headley and others, including Rana, which also could be utilized to confront him. NIA is building a case that says that Rana was not just an innocent bystander or a friend of Headley who was trying to help him get a visa document. His role was much more deep, much more sinister. His background in Pakistani army is also something that NIA would look at, trying to argue that Rana kept in contact with his Pakistani army colleagues even after he moved to Canada, and it was he who introduced Headley to the Pakistani army officials. So the questioning is going to continue over the next 18 days. There's a very high possibility that Rana could be taken to Mumbai. There is a test identification parade that will be carried out. People who have seen him either in Mumbai at the Immigration Law Center that he carried out, or others who perhaps knew him while he was in India, all of them could be asked to identify Rana in the test identification parade. There is a likelihood that even after the end of the 18-day period, NIA could seek further custody of this 26/11 plotter.
And in some international news updates, a New York City sightseeing helicopter broke apart mid-air and crashed into the Hudson River, killing 6 people, which included 3 children. The victims included a Siemens executive and his family and the pilot. Following the tragic incident, US President Donald Trump wrote on Truth Social that the Secretary of Transportation and his team were looking into the accident and that further details would be announced shortly. And as we wrap up this edition of Business Lunch on CNBC TV18, we leave you with some somber news. Former Vice Chairman of Bajaj Auto, Madhur Bajaj, passed away this morning in Mumbai. Bajaj was currently serving as the director of Bajaj Holdings, Bajaj Finserv and Bajaj Electricals.
project ramped down. So there are few, but no major. So I don't think there is any major negative reaction so far.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC
Final 2 hours of what has been a truncating but exciting week as we head into yet another truncated week. You're watching Midcap Radar live from the CNBC TV18 Motilal Oswal studios. I am Hormas Patakia. With me is Vamakshi Thoria. Vamakshi, good afternoon. The bulls are all set to end the week on a high, and they would hope that this 450-point surge sustains by the close of the trade.
Well, absolutely, Hormas. They've made a thumping comeback, and they're saying that we're here to stay because, you know, we've held on to that level 22,850, 22,900 since morning. But, you know, there's a lot lined up for our viewers on our show. So let's get started with some of the top headlines. It is an almost all green screen as stocks react to Trump's 90-day pause on tariffs after trading holiday on Thursday. Metals and consumer durables are the biggest gainers. Mid-cap index surges over 2%.
Tire stocks like Apollo Tyres, CEAT and MRF gain after CLSA initiates coverage with an outperform rating. Brokerage expects margin improvement led by softening of input prices. And just before we could finish these headlines, there are some important flashes on your screen. China has announced that they will be increasing their tariffs on US goods from 84% to 125%. This is after the US reiterated last night that the tariffs on Chinese goods is 145% and not 125%. We just heard public comments from Xi Jinping for the first time after this tariff escalation. He said that China is not afraid to take countermeasures against the US, and this will mean that these tariffs will now be imposed from the 12th of April. And just as we speak, the Dow futures are still up 120 points. They were up almost 400 points at one point of time, but still there are some very sharp swings that we are seeing in the Dow futures currently. But the trade war continues to escalate between the US and China, and that was one of the factors that led to a very sharp sell-off on Wall Street in yesterday's trading session, giving up a third of what it had gained on Wednesday. So now China has announced announced that they will be raising tariffs on US goods to 125%. It'll take effect from the 12th of April is what has been announced. So more escalation from US and China. It'll be interesting to see how the US response to this is later this evening. But for now, the Dow futures have now begun to cool off from that. Still 100 points higher. We'll get you more developments as the show goes by. But by the way, for our own markets, we are still hunky-dory as of now. 450 points higher on the Nifty, marginally off the highs of the day, if you could call it that, still around that 22,850, 22,900 levels. The broader markets too doing well for themselves in today's trading session, led ably by metal names, pharma names, and of course some bit of moves seen in a lot of these other stocks, including the likes of Atul and a lot of these pharma names like Wockhardt as well. But some of the other movers in the broader markets, there are plenty of them today on the gaining side of things, and Vivek is here to tell us just that. Vivek, good afternoon.
Well, good afternoon. The news flow doesn't abate at all, especially when it comes to retaliatory as well as reciprocal tariffs between US and China. But overall, Indian markets are very, very strong, especially in the broad end of markets. You are seeing a very good advanced decline ratio. Look at the pharma stocks. A lot of worries, but today all of them have rebounded very sharply. No specific tariffs have come about as yet, and also a lot of positive news flow. So the entire pharma pack, especially some of the broader, pharma stocks from the broader end of the markets, or mid-cap pharma names like Laurus as well as Granules, doing very well in this session. On the other hand, have a look at the agriculture as well as chemical stocks, the specialty chemicals names. Remember, they were the ones that were impacted the most on account of tariffs. On back of pausing of these tariffs, the entire pack, PI Industries leads the way, SRF, UPL, Navin Fluorine, Aarti Industries, all of these stocks doing very, very well. The metal pack, again, we saw the top line stocks or the stocks with much higher market caps doing very well in the morning, and that rub-off effect has come about even among the other names as well. Look at names like Lodge Metal up 6%, APL Apollo Tubes up 3%, SAIL 3% higher, so very strong, the metal pack as well. Look at some of the volume buzzers, Dixon Technologies and some of the other EMS names too doing very well. Dixon over 7% higher, Sirma again 7%, some positive rub-off as far as realty is concerned, Oberoi as well as HDFC AMC amongst the top gainers. But amongst the list of laggards, not too many today, but Muthoot Fin does stand out. Increased regulations coming in as far as gold loan lending is concerned. Muthoot Fin down 5%, and Max Healthcare on strong volumes. This particular stock is down almost 3% today.
Well, thank you so much for that, Vivek. That's quite a comprehensive list. It's a good time to welcome in Nagraj Shetty of HDFC Securities for a technical check on the market. Good afternoon, Nagraj. Thank you so much for joining with us. The market has seen a good recovery since, where we left off on Wednesday. It's the bulls have made a thumping comeback, but are they here to stay? What are the levels indicating?
Hi, good afternoon, Momakshi. The upside bounce of the last 3-4 sessions has certainly changed the sentiment of the market after a violent decline recently. I think Nifty is currently placed around the resistance of around 22,900, 950 levels, and the way it has bounced back from the lower levels, I don't think that hurdle is going to be there for a long time. So I'm expecting Nifty to upside breakout of this hurdle, and in that scenario we could reach the next overhead resistance of around 23,400, 500 levels in a quick period of time. So I'm expecting upside bounce for the market in the near term.
Nagraj, good afternoon. Thank you for joining in. Any specific stock recommendations that you have for the afternoon?
Yes, good afternoon. I have two stocks from the mid-cap side. First, mid and large cap side. First is the L&T Finance. Chartically, L&T Finance was moving in a consolidation, and recently it had made an attempt of upside breakout. The chart pattern is looking positive, even sector as well. Currently trading around 155. I'm expecting this to move further. One can look to buy at this point of time. 165 would be the target, and one can place a stop loss at 150. Second one is from a shipping side, Shipping Corporation. Shipping Corporation was moving in a consolidation pattern. High top, high bottom is visible on the daily chart. Recently, it has witnessed an upside breakout of the downsloping trend line, but showing consolidation. Currently placed around 170.50, and I'm expecting further upside from here onwards. One can look to buy at this point of time, and the target would be around 180, 182 levels, and one can place a stop loss at 165.
All right, thank you so much for that, Nagraj. We'll keep an eye out on L&T Finance and Shipping Corporation of India, which are your top picks. But on that note, let's slip into a very short break. We'll get you more on the markets and stock-specific action on the other side, so don't go anywhere. Stay tuned.
comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
If you look at our FY25 growth, it's been better than FY24 growth. However small the difference is, I believe FY26 will be better than FY25.
We'll decide when to do it increments based on the environment.
So you're deferring wage hikes as of now?
I'm saying, I will not use the word defer, but yeah, yes, it will decide it when it happens.
Or many of our customers are also in a wait and watch mode in terms of what is the end game going to be. But good thing is, whatever we have seen so far, as much as a rhetoric, we have not seen our customers panic. Like there are maybe some programs what we thought that they would kick off, but some delays in decision making. But we have not seen any major cancellations or no major project ramp downs. Like there are few, but no major. So I don't think there is any major negative reaction so far.
Welcome back. And just as the escalation between US and China intensifies, China has increased the tariffs on US goods to 125%. The US futures have seen a very, very sharp drop from the highs. The Dow futures at one point were up 400. They had started to cool off from the highs before this flash was on our screens, but now the Dow futures are down as much as 160 points as we speak. Very, very sharp swings already in the US futures as tensions between both the largest economies of the world escalate with regards to tariffs. But back to our own markets then, tire stocks are in focus after a positive CLSA note, and Sudarshan is here with more on this. Sudarshan, CLSA has some very interesting remarks, particularly on MRF.
So CLSA has initiated coverage on all the three major stocks, MRF, CEAT and Apollo Tires, and it sees an upside up to 35% or say more than 30%, with the most upside is seen in Apollo Tires, followed by CEAT and MRF. So target for Apollo Tires is 566, for CEAT it's 34.93, and for MRF it's almost 1.29 lakhs per share. Now what's the rationale between initiating coverage with outperform call? It believes that the sector, basically this tire market, is undergoing a structural improvement in terms of profitability. Also, the input cost in the last few months have come down. That's going to help margin, which is at a lowest point in the last few years, and that is likely to see an improvement going forward. Also, valuation is poised to improve over FY26-27. And another important point that it has said that base sector is currently at a bottom of the margin cycle. Now, this input cost coming down, even structural change that sector is seeing, all around, there is going to be an improvement. These are the reasons that CLSA has mentioned, and because of these reasons, it's positive on the sector.
So Darshan, thanks a lot for that. 3% higher is MRF and 4% higher is Apollo Tires. A high conviction outperform coming in there for Apollo Tires from CLSA. So in very firm grip are a lot of these tire names. At the highest point of the day now is Apollo Tires at 425. But the other one that's doing well today though is PI Industries. And after Donald Trump announcing a 90-day pause on tariffs, at least for now, Vamakshi, what do you have on that one?
Well, absolutely, Hormaz. There's a 90-day pause on the tariffs that is coming from the Trump administration, and a beneficiary of it turns out to be PI Industries. Why is that so? Because they have a very high export exposure. If you look at the 9-month FY25 revenue mix, exports as a percentage of revenue stand at 83%. And within exports itself, they have a very high exposure to the North American markets. The North American markets contributed almost 44% to the company's revenue. Apart from that, there's also a note that has come in from Investec, and they say that they have a buy call on the counter, target price of 4,170 per share. But what they're highlighting is that the US-China tariff escalation, with US raising the tariffs on China to 145%, will actually increase the cost of imports from China. This in turn will give a competitive edge to agrochemical manufacturers which are present in some other countries. Apart from that, what they've also highlighted that there were prior concerns on Chinese generic competition coming in for pyroxasulfone post patent expiry in calendar year 25, and these concerns now appear to be mitigated, which is a very big positive for PI Industries. In fact, as far as some other markets are concerned, apart from US, PI Industries enjoys patent protection, and therefore the potential Chinese dumping that could come through may have a limited effect on PI Industries. China de-risking may also continue to gain momentum given the kind of tariff war that is unfolding right now, and PI is expected to thrive in this backdrop. So the 90-day pause boding well for PI Industries.
Boding well for PI Industries, 8.5% higher there, a very good move seen on the stock. What's not boding well though is for the dollar index. After these announcements that China has made, the dollar index has now slipped below levels of 199.6 is where the dollar index currently is. The lowest level since July of 2023 is what we are seeing on the dollar index, currently at 99.9, but again below the mark of 100. Remember, at one point at the height of these tariff escalations, of course we don't know whether we have reached the heights of it yet or not, but at the start of the tariff escalations, the dollar index had gone up to levels of 110, but have now cooled off very, very sharply. Below levels of 100 is the dollar index. Take a short break, get you more on the markets, this tariff escalation, and a lot of stock specific action on the other side. Stay tuned.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits, and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.
Welcome back to this roller coaster edition of Midcap Radar. It's been quite a day today. When we look at, some of the stocks that are actually gaining momentum in trade today, look at the pharma pack, right? Wockhardt Pharma is one such name. That stock is up and away in trade. Kaplan Point is one such other name. Look, the stock is also, gaining momentum in trade today on the back of very strong volumes as well. Let's also pull up the chart for Jubilant Pharmova. That stock is also higher, and Laurus Labs is one such other name. Apart from that, companies with exposure to US are also perking up after the 90-day watch. That this list actually includes Welspun Living. Over the last couple of sessions, all of these names had been beaten down. Welspun Living is up, LT Foods and PI Industries as well, just a short while ago. But moving on, we let's also focus in on the FMCG space, because sources are telling CNBC-TV18 that Dabur's Hajmola candy is under the DGGI scanner. Timsy is now joining us now with exclusive details. Timsy?
Well, yes, as you rightly said, what we are picking up from sources is that the Dabur India and DGGI are at loggerheads. What we are picking up is that Dabur's Hajmola candy is under DGGI scanner, that is Directorate of GST Intelligence, that is currently investigating GST classification of Hajmola candy under GST. To be precise, this is the Coimbatore zone of DGGI, which is currently investigating whether Hajmola candy should be treated as Ayurvedic medicine, attracting 12% GST, or as a candy under 18% GST. Meanwhile, what we pick up during the investigations, Dabur is claiming that Hajmola candy is an Ayurvedic medicine and not a regular sugar-boiled candy. Meanwhile, when we reached out to Dabur for a formal response, the email query sent to Dabur remains unanswered. And also an alert here, Dabur in the pre-GST regime faced a similar challenge, and through Supreme Court had got a clarity in the favor of the company, stating that Hajmola candy is an Ayurvedic medicine. Also important here to note is that Dabur is already facing a tax demand, and Dabur on 1st of April actually disclosed that it has received an income tax reassessment order demanding 110.33 crores for the financial year 17-18, where the income tax authorities allege that Dabur made incorrect claims for tax deductions related to in-house research and development, and this is under Section 14A of the Income Tax Act. But Dabur claims that they plan to challenge the demand. So let's see what happens when it comes to the GST classification of the Hajmola candy, because whether it is a regular sugar-boiled candy or an Ayurvedic medicine, something that we'll have to wait and see. Whether the Supreme Court decision in the past actually is in favor of the company or not, something that we'll have to wait and watch for.
So keep an eye out on that, Timsy. Thanks a lot for that information. Shifting focus to Apollo Hospitals now, is looking to raise capacity by 2,500 to 2,700 beds. Parikshit caught up with Apollo Hospitals' Shobna Kamineni and started by asking her about the growth and expansion plans of the company. Listen in.
Apollo Hospitals, we saw that there was a necessity, as our, as capacity of most of our hospitals is close to about 75+%. And we had to move into that new expansion. And I think my sister Sunita is always very cautious. But at this point, we were able to actually get some really fine properties, whether it's Gurgaon, Pune, Mumbai. So these are cities that we didn't have enough presence in, and moving there. And of course, we're expanding in Chennai, doing another one in Hyderabad. So these are cities that we really have a strong presence. So going deeper into cities that we are, and moving into other new cities. So yes, there's some exciting expansion happening in Apollo.
Right. If you can give us some numbers to quantify that, how much would you be investing in this expansion in FY26, and what is the overall bed capacity that could increase as a result?
So we're looking at increasing about 2,500 to 2,700 beds, and of varying investments, because some of them are really high tech, from things like a proton to a tertiary type hospital, to just augmenting some of our secondary. So with all that, I think we're looking at something of over the next, we started last year. So the cycle of it, the investment cycle, would be anywhere in the range of 3,000 crores.
Okay. Speaking about the story of Apollo 24/7, this enterprise is now completing about 5 years. Could you give us a sense of the journey so far and the contribution of Apollo 24/7 to the larger group?
So sometimes, I like to say that we're actually a COVID baby. We started on February 5th, 2020, just before the lockdown. And during that time, it was almost a trial by fire. We didn't sleep for at least 18 months because all of a sudden you've launched a platform and you expect to kind of grow slowly. And all of a sudden what happens, it hits you when you get 70,000 orders a day, when doctors who are shut off from their patients, we onboarded 3,500 doctors in 45 days to be able to connect them to their patients. So this really is the ethos, the story of why we're there with that. We could have been just, creating an omni-channel, just making sure that pharmacy is doing well. We know that e-commerce, there was 1mg, there was PharmEasy and all these. So we said we need to have another muscle and this is another capability. So we could have done that. But I think we stepped back and said that doesn't serve. It still is so transactional. What is it that a patient needs? And it was so fortunate that we really had a platform that had consultation, that would give people diagnostics, that would be able to give them medicines. And just that capability that we started with was just amazing during that 1-2 years. Of course, there was a lot of failure, but then you're flying midair and refueling and keep changing. And then post-COVID, we fell off a cliff. Just like the rest of the world, telemedicine, they were almost, everyone wanted to come back to see their doctor. Then even in the other part, we were really burning, thinking we're an e-commerce company. So I think the last 2 years really got our act together. So I think this is the time that it's a very short maturity cycle to think that in 5 years you can go from start to actually becoming mature and profitable. But that's the journey of Apollo, that we had the capability to do it.
Right. So it was almost like a startup in a sense.
Totally.
Totally. And, startups sometimes have a long road to profitability. How has that panned out for you?
So I think they had at the beginning, they always said that it's a disadvantage to have an old founder who didn't understand burn with this when they kept coming to me with metrics and saying...
You can't call yourself old from any angle.
No. But look, I'm not... this is a business. E-commerce is a business that my kids should be doing. So they said, oh, you don't understand this, of how you have to burn and you have to do all this. And then one fine day, I really learned. I listened for 2 years and then I said, enough. This just is not working. How can a company work that loses money? You have to make money. And at that time, when we really sat down and said, and we did a lot of true navel gazing, and we said, we have these customers. We have 40 million people who are loyal, who love us. How do we serve them better? By being omni. And I think that was the eureka, that we really started doing so much better. So I would think the journey of the last 2 years is just refocusing on our customer, saying that how do you serve these customers better, and then more will come in.
And in the latest round of escalations between the US and China, China is now headed to the World Trade Organization, filing a new complaint against the tariff impositions by the US. And they have mentioned that there is no possibility of goods being exported to China at the current tariff levels. And this is the complaint that China has filed at the WTO against the latest tariff measures by the US, which now stand at 145%. And in response, China has just increased the tariff levy on US goods to 125%. The US futures are seeing very, very sharp swings between gains and losses at the moment. No clear direction whatsoever. The dollar index remains below 199.6 is where it stands. Gold prices though, which had seen some bit of cool off from record highs, is now back to levels of 32.40 as these tariff levels escalate. So a lot happening. It's still 5 hours away from US markets to start, and there is a lot that is still awaited. But we call time on this edition of Mid Cap Radar from Amakshimi and the team that put this show together. Thank you so much for watching. Your stocks on the other side.
CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
If you look at our FY25 growth, it's been better than FY24 growth. However small the difference is, I believe FY26 will be better than FY25.
We'll decide when to do it increments based on the environment.
So you're deferring wage hikes as of now?
I'm saying, I will not use the word defer, but yeah, yes, it will decide it when it happens.
Many of our customers are also in a wait and watch mode in terms of what is the end game going to be. But good thing is, like, whatever we are seeing so far, as much as the rhetoric, we have not seen our customers panic. Like there are maybe some programs what we thought that they would kick off, but some delays in decision making. But we have not seen any major cancellations or no major project ramp downs. Like there are few, but no major. So I don't think there is any major negative reaction.
Hello, good afternoon. You've tuned into Your Stocks, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwal, and thank you so much as always for tuning in. A look at the market right now, off the day's highest point, but 22,800 is what it's holding on to. An hour back, it was at 22,900 levels. So yes, surely keeping an eye out on where the market is headed. And as of now, also still 400 points uptick is what we're seeing. The tariffs and China and US, the trade tariff wars, that is continuing as well. So that's something that we'll be keeping an eye out on. But as of now, also Indian markets more resilient, managing to hold on to gains. All the sectors are trading in the green. But this is a show where we solve all your stock-related queries, and to solve all those doubts today, we are joined by our experts. We have Shaina Mukaddam, independent market expert, as well as Vaishali Parekh, Vice President of Technical Research, Prabhudas Leeladhar, joining in with us to help solve those doubts. Vaishali as well as Shaina, good afternoon, and thank you so much for joining in with us. Let's just get started with the queries then for today, because markets, they are their own path. Every day is a new story. So I want to start with the queries for today. We'll start with the first query. We have Deepak Keshan, who's writing to us from Bihar. He's holding 15 shares of Tata Technologies at an average price of 1,099. Long-term investor wants to know whether to hold or sell. Shaina, Tata Technologies in the recent times, in the last few weeks, I've seen a lot of queries coming in on this front. What should the viewer do now, right? Because we've spoken about this before as well. Since its listing, it's not managed to do anything well. Long-term investor continue to hold or maybe switch?
Hi, Vinny. Yeah, so we all are in black, so it shows the market is doing well. Yeah. So basically, unfortunately, that stock has not actually performed right from listing. And I think it's very difficult for the investor to get back his buy price, at least for the next 2 to 3 odd years. There are a couple of issues. One is, of course, the valuations are expensive. Despite the stock having corrected, it's still, if you look at P, it's 40 times. If you look at price to book, it's about, I would say, 8 times. Now, so these valuations are higher than its competitors. And I would suggest that even at current levels, it would be a good bet to, partly book the loss and switch even to a TCS, which actually the numbers were a bit disappointing largely, but to an extent, at least they are showing that their order wins are pretty healthy. And they remain, in terms of valuation, slightly higher than maybe an Infosys, but still, I believe for the longer term, a switch, same management, from the group, from a Tata Technologies to a TCS would make sense.
Okay, TCS is a preferred bet over a Tata Technologies. Vaishali, on the charts and technicals, what would you suggest the viewer? Because they are making a significant loss, right? From those 1,000 levels that they purchased today at around 600, I believe, or what is the level over there that we'll keep an eye out on. But Tata Tech, what should the viewer do? Yeah, 621 is what Tata Tech is trading at.
Hi, very good afternoon, Vinny. So I think, well, the stock has been a disappointment because it has attempted to give a bounce, but it's failing every time. So even right now, though technically it's in an oversold zone, but I don't see any clarity right now. So if, well, he's not in a hurry, he can wait because the loss is quite humongous. So wait for a bounce coming at least till 750, that is quite likely. And from there on, he can take a call to exit and shift to the other stock.
Okay, keep an eye on those levels over there. But let's move on to another stock coming in from the Tata Group itself. This query is also on Tata Power. Now, Ketan is writing to us from Thane. 30 shares of Tata Power is what they're holding at 350 rupees per share. Right now, the stock is trading just around, slightly above their buy price. Wants to know whether to hold Tata Power or sell this one. On the fundamentals, Shaina, how is Tata Power looking like?
Tata Power looks interesting to hold at current levels, given the fact that not only valuations are not very expensive, it's just about 9 times FY26, that's current year EV by EBITDA. Over and above that, the long-term plans are in place. They're looking actually to double their EBITDA over the next couple of years, maybe 5 years. They are actually expanding very aggressively in RE. Also, in terms of nuclear power, also they are exploring opportunities. Their balance sheet is improving, bringing down the debt. So I would believe it's a good hold.
Okay, a good hold coming in there for Tata Power on the fundamentals. On the technicals, Vaishali, what's your view?
I would say technically also, if I'm looking at the chart from all time periodicities, it's one of the good stocks with a good trend intact even on the longer term basis. It is a buy even at this level to those who wish to. And I think the projected target that we are looking at would be 480 to 500 levels from here on. So in my opinion, one can buy at these levels.
Okay. That's the buy at these levels also as a view coming in there. But let's move on to the next query, Bank of Maharashtra. Now, Sampath Sahu is writing to us from Mumbai. He's holding 2,900 shares of Bank of Maharashtra. The price is 63.89 rupees per share. Currently, the stock is trading at 45. Vaishali, let me take it to you first on the technical front. What should one be doing here?
So see, basically, the stock has performed well in the past, and right now with all the corrective move that the market is witnessing, this too has got into deep corrective move. So I would say, well, he should average out, because even if it corrects further on till 40, average out the stock, because once these PSU sector banks start performing, he will get good returns from here on. So anyway, the cost is much higher. So I would say it makes sense to average out at these levels to lower the cost, and when the going gets good, you can get good returns.
Okay. And your view on the fundamentals for this, Vaishali, Shaina, Bank of Maharashtra, what should they be doing here? Continue to hold Bank of Maharashtra, or maybe look at some other banks which are better options right now?
Bank of Maharashtra is a hold at current levels. Balance sheet is pretty strong. They have brought down their NPS. I mean, they've done a very stupendous job. If you look at it over a longer term, last 5-6 years, their net NPS are just now 0.22. The provision coverage is 98%. It is one of the 5 banks that the government will offload small part of its shares. That is, they are going to do an, I think, QIP of about 2,000 crores. But I think to that extent, it is a positive. The price is likely to sustain at current levels. Valuations are attractive. Price to book 1.5 times. So it's a hold.
Okay, a hold coming in for Bank of Maharashtra. Let's move on to the next query. For today, we have Khushi Mehta, who's writing to us from Gujarat. She's holding 50 shares of Adani Green. This is at a price of 870 rupees per share. Adani Green as an option, does it make sense to continue to hold this one? Buy more and maybe look to add some more at these levels as well. Shaina, on the fundamentals, Adani Green, what's the story playing out here? And would you suggest maybe adding some more as well?
Well, I think valuations currently are pretty expensive. They continue to remain expensive. So I would say instead of adding at current levels, in fact, you should keep a strong stop loss, say closer to maybe 800, but hold, because if you look at a 3-year period, they are one of the fastest growing in terms of capacity. They are targeting something like by FY30, they're targeting something like 50 gigawatts. So to that extent, actually, in terms of valuations, it will start looking more attractive 2 to 3 years down the line. One can continue to hold.
Okay. Adani Green, on the technicals, Vaishali, what's your view?
So technically, I would say the stock is corrected right from 2200 in the recent past and now completely in an oversold zone. And there is a good support base at 800 levels. So I would say continue holding. And I think the first target that one can look at is 1100. And further on, we can have a relook. It may go towards 1400 levels as well. So that is my view.
Okay. That's the view coming in from Vaishali as well. Keep an eye out on those levels over there. Next query for today, Prem Chauhan, writing to us from Kolkata, holding 25 shares of Tata Motors. This is at a price of 500 rupees per share. Wants to know whether to continue to hold this one or look to sell. Tata Motors, what's the view coming in for this two-wheeler? Shaina, let me take this to you first.
Yeah, so basically it's a 4-wheeler stock, of course. And, if you look at valuations, pure fundamentals, valuations are very attractive. Look at it, price to book 2 times, EV by EBITDA 6 times, financials are improving, the balance sheet is improving, ROC is Tata Motors. The main problem being the discussion that has come up on tariffs. Automobile tariffs, as you still know, is 25% for the US. And, Tata Motors, US is a big market for them. China is a big market for them, for JLR, of course, which actually is a big part of their turnover and profitability. So there's so many ifs and buts as to what will happen. And I think debt is pretty high. So any underperformance will impact totally on the profitability. So I would suggest it's, lighten your positions in Tata Motors.
Lighten your positions on Tata Motors. I beg your pardon, 4-wheeler stock is Tata Motors. And obviously, Shaina has mentioned some of the views coming in as well. And JLR, that is also an impact. Vaishali, your view coming in for Tata Motors?
So I would say, of course, the stock has been very badly beaten. But I think this was quite called for post these issues that we have been witnessing. But technically, I would say keep a stop loss of 560. 560, which was the previous low, which we saw in the recent past, that should act as a very strict stop loss and hold, because once when we get some clarity in the market, I think this stock can perform and it can go towards 850 to 900 levels. So according to me, of course, if wants to shift, then I think Maruti and Mahindra would be a safe bet. But Tata Motors, if the buy price, I think and buy price is much lower. So I guess once there is clarity, this can go towards 850. In my opinion, hold with a stop loss of 550.
Hold with a stop loss of 550 for Tata Motors is what Vaishali is suggesting. Okay, on that note, we're going to slip into a very short break. Don't go anywhere. We'll be back with more of your stock-related queries after the break.
informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurs.
Welcome back, and you've tuned into your stocks on CNBC TV18. Markets as of now is managing to hold on to that gain. More than 1.8%, 7% gain is what we're seeing. A bit of a slip, that we've seen coming in the markets in the last few minutes. In the last 30 minutes specifically, if you look at it, there's a bit of a fall coming in. Now, obviously, right now it's 22,700, so it slipped below the 22,800 mark as well. Let's just watch out for the next hour, especially of the trading session, the last hour of the trading session, what's going to be happening on that front. And in terms of just a few losers, in the last few minutes that we could talk about as well, Lloyd's Metal, Gillette India, Concord, those are seeing, and more declines have also come in on that front. See TCS, Infosys, Asian Paints and Apollo Hospitals in the contributors from the Nifty 50 as well. We're seeing a bit more in terms of the drags coming in over there. Look at Gillette also, like I was mentioning. These are few of these names that have seen a decline coming in the last few minutes. So surely interesting to watch out for where the market will be headed in the last 1 hour. Will be key to watch out for that. But let's keep it going with all your stock related queries. For today, we have our expert China as well as Vaishali here and have been solving all your doubts in the last 15 minutes as well. Now, let's move on to the next query, ladies. We have this one coming in on, I think everyone's favorite on the street has been Ola Electric. It listed, everyone was enthused by it. And then since then, some of the other problems keep coming in. We've seen the stock fall. Pankaj Kumar is writing to us from Haryana. He's holding 100 shares of Ola Electric at a price of 50 rupees per share. Right now, not making right. It's the buy price and the price at which the stock is trading is very same. So outlook on the stock, Ola Electric, China, what should they be doing, right? EV, everyone is excited about it, but Ola Electric has faced a lot of issues. So what should one do?
Since the investors bought it very close to the current level and probably recently, in a couple of last maybe months or weeks, I would say you can hold, but it is a risky hold. Basically, they are trying to do whatever they can to improve their service, add more service centers, improve their efficiency. At the same time, competition that is coming in is very aggressive and very good new products. To top it all, of course, you have issues with, maybe China and what they will do with the market for EVs. So two-wheelers also. So to that extent, it is a bit risky. Domestic also competition is going to be aggressive. So I would say you hold, but hold with a stop loss, maybe a couple of rupees lower than your current buy price.
Okay, hold, but hold with a stop loss, maybe a couple of rupees lower than the current buy price of the viewer. Vaishali, on the technicals, is it possible to give any view or understand where it could be headed? And is there an upside that one could watch out for right now?
Well, so there right now it's only been consolidating with a corrective bias. But I think as far as I'm looking at the indicators, I think there is exhaustion in selling. Also, it has made a good support base at 50 levels. So I would say keep a stop loss of 45. And I think once we see a bounce coming in, there is a volume pickup and a trend picking up. This can go towards 75, 80 to start with. From there on, we can have a relook. But I guess this is not the right time to exit unless we break the support levels.
Okay, not the right time to exit as of now is what Vaishali is saying, so keep an eye out on that one. Let's move on to the next query for today. We have Ritu Saxena who's writing to us from Mumbai. She's holding 100 shares of Canara Bank at a price of 60 rupees per share, making a profit on this one. For the long term, is it a good story to hold on to, Shaina?
Yeah, she can continue to hold. It is one of the better managed, better quality PSU banks. Valuations also are not expensive. It's 0.8 price to book. They are showing a bit of lower than market growth in terms of their deposits as well as advances. But I believe that could rectify over the next year. And they have got a decent growth in terms of their profitability. NIMs slightly may be under pressure for this quarter, but I think fundamentally the bank looks good to hold, given that the valuations are attractive. So you hold for the long term.
Okay, hold for the long term. Fundamentally, the banks is looking nice. So keep an eye out on that one. On the technicals, Canara Bank, is it a similar view and does it make sense to hold on, Vaishali?
Yes, definitely, because this bank also fundamentally also it has a good coverage and technically also it's fairly priced. So in my opinion, it's showing signs of reversal also. So this stock, even if one needs to buy, 85 would be the near-term support level. And once we see a pickup coming in, this has a lot of growth prospect. It can go towards 110 to 120 to start with. So yes, it's a buy or a hold, yes.
Okay, let's move on to the next query for today. We have Bhargav Reddy who's writing to us from Noida. 170 shares of Samvardhana Motherson is what they're holding. Price is 166 rupees per share. Currently making a loss on this one. Wants to know whether it makes sense to hold this or look to sell. And Shaina, in the recent time we had those initiations that came in from the company as well on cost optimization measures that they spoke about as well. That'll be implemented in the phased manner. Your view coming in for Samvardhana Motherson, could we expect a bit of an upside?
Well, I would think it is consolidating, after this huge correction. And basically, they have put in place number of measures to actually bring down the debt, and that is actually supporting the profitability. If you saw last quarter also, while the margins were steady, turnover was in the single digits growth, but at the same time profit jump was there because of lower interest. I think that scenario will continue, which is a positive. Also, it is a large MNC which has, multiple markets which it caters to. It has huge product portfolio. Now, the problem over here, so I would say it's a hold because the valuations are not too stretched. Now they have come off and they're pretty reasonable for the size. But the only issue over here is you can hold with a stop loss because you have 20% of their revenue still coming from the US market. Now, US still has 25% on the duties. They continue that for auto and auto components. So we really don't know how, they will manage to sort of manage these duties and manage their turnover going forward in that market. China is also another market for them. So we really need to see, wait and watch. So you can hold with a stop loss.
Hold, but hold with a stop loss, given that, those trade tensions that are there. That is the main reason. Otherwise, fundamentally, the company is good. Only these certain issues because of US exposure that they have. China as a market for them as well. Okay. Vaishali, on the technicals, right? Because even Shaina right now was mentioning as well, right? It has been in that correction phase. Last 6 months also, we've seen it fall by almost more than 40%. What should the viewer do now? And is average an option that comes in here?
So, yes, so I think the correction is still not over. If market were to correct furthermore and if the stock is also take a beating, this can go towards 105 to 100 levels. That would be the ideal level to add more because that will be a good level for a fresh entry and perhaps even to average out your cost. So let's not be in a hurry. Let's wait. Let's see some stability or a confirmation of a reversal. In my opinion, it can go towards 105 to 100 levels. That is where definitely add on.
Okay, let's move on to the next query for today. We have Venkat who's writing to us from Chennai. 100 shares of Canfin Homes at a price of 588 rupees per share. Making a profit on this one. Wants to know whether you should continue to hold, sell, or maybe look to buy more as well. Shaina, what is your thought coming in for Canfin Home?
Canfin Home is an interesting hold, and it's an interesting add also at current levels. Valuations at 1.4 times, very reasonable. It's very well placed. It's, of course, it's a small cap, so it offers you that additional possibility of getting multi-bagger returns if you're holding it for the very long term. Very steady returns. The company has given their ROA is about 2.1%. They have given a decent guidance of about 17 to 18% growth. So I would say it's a hold, and you can add also at any dips that you get.
Okay, keep an eye on Canfin Home over there. But that was the last query for today, ladies. Thank you so much for joining in, and hope you all have a great long weekend as well. So Vaishali as well as Shaina, thank you so much for joining in with us. But with that, viewers, we're absolutely out of time on this edition of Your Stocks on CNBC TV18. Up next, you have closing bell, so don't go anywhere. The last hour trade will be important to watch out for.
Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
If you look at our FY25 growth, it's been better than FY24 growth. However small the difference is, I believe FY26 will be better than FY25.
We'll decide when to do it increments based on the environment.
So you're deferring wage hikes as of now?
I'm saying I will not use the word defer, but yeah, yes, it will decide it when it happens.
Or many of our customers are also in a wait and watch mode in terms of what is the end game going to be. But good thing is, whatever we are seeing so far, as much as the rhetoric, we have not seen our customers panic. Like there are maybe some programs what we thought that they would kick off, but some delays in decision making. But we have not seen any major cancellations or no major project ramp downs. Like there are few, but no major. So I don't think there is any major negative reaction so far.
Beyond market headlines to understand the reasons for the day's movers and shakers and get your portfolio ready for tomorrow. Beaming live from the CNBC TV18 Motilal Oswal studio.
Asian markets, as of now, what you're looking at, they are sliding in today's trading session.
The Bank Nifty resistance, similarly, is the 61.8% retracement, which we almost got to on Tuesday.
A short squeeze holds the key today, whether or not we can end virtually at the day's high.
I think having these kinds of tariffs on China and US on China on US and US and China is untenable.
I have not seen any major panic. Like there have been some industries where it's been difficult.
1.5 higher on the Nifty is what you have. The Nifty Bank is up about 1%.
On a relative basis, it was a possibility that you could actually be gainers.
The Sensex has surged 1,200 points. The Nifty is above 22,800.
The significant volatility that we saw in the equity indices, there's been a clear moderation as far as flows are concerned.
It's construction and materials. We are up 1.3%, followed by basic resources.
450 points higher on the Nifty, marginally off the highs of the day, if you could call it that, still around that 22,850, 22,900 levels.
Well, so far so good. We're off the highs by a little bit, but broadly this Friday, things are looking pretty solid. Markets are up and up in a strong fashion. So that bounce is very much still there. I'm Prashant. With me, my colleagues Surabhi and Reema here in the studios. Nigel is joining us from the newsroom floor. And of course, we're coming to you from the CNBC-TV18 Motilal Oswal studios. Guys, good afternoon.
Thank God it's Friday. That's all I'll say.
TGIF, guys. That's the word.
Because those numbers, I mean, beyond the point, they stop making sense. I think while I walked into the studio, now it's 125% tariff, which China is levied on US. So US is still higher at 145, right? It's like really two kids brawling in class. Reminds you of school.
They can make it 500% because there's not going to be any trade. So what are you going to tariff, right? But it's just posturing. China doesn't want to appear weak. That's it. I mean, otherwise, 125% tariffs.
145%, 125%.
So you can keep throwing those numbers out. But I think eventually, hopefully, they'll also start talking. I think either both the guys are waiting for the other guy to pick up the phone and call.
Like who's going to blink first?
So I don't know.
Which is why I'm saying two boys brawling in school. At some point, the teacher has to come and say, stop it.
Who's the teacher?
I don't know. That's the thing. Maybe Nigel has some thoughts.
No. But in the next 9 days, guys, the good news is you're going to be working only for 3 days. So
I knew that was coming.
Six holidays.
Best.
So, yeah.
Best piece of analysis this Friday.
I think this general cheer that we have on screen is not so much the market bouncing; it is the fact that
but Prashant, to be fair, the whole of last weekend, people were rooming circuit limits for the Nifty. We're trying to see the last time we went down. All those comparisons, we've done quite well. We're flat for the week. I mean, I don't think you could ask for more.
I just looked at Nigel. I just looked at where we are compared to 1st of April. The Nifty is down just 500 points. So it's actually been an absolutely phenomenal ride if you just go back and look at the last 6-7 days. But point to point, I think we've of course come out pretty stock-wise, and I think you'll have to dig deeper. But at least at a Nifty level, 500 is nothing with what markets around the world, etc., have seen. So it's looking very, very good. So 22,786 is where we're at, 1.7% lower, about 388 points higher. By the way, I just looked at the sort of resistance numbers we put out in the morning. We hit the 22,806 level. The high is 22,900 plus today. And that is basically the 50% retracement of the fall that we saw, the last fall that we had. And then we are now under it. So just under that 50% retracement. For the Nifty Bank, we kind of took out the first, the 61.8% retracement, which we already did last Tuesday before and then of course the markets sold off a little bit. The number for the Nifty Bank is 52,063, which is the swing high. So that is, again, not very far away, given the overall scheme of things. So we'll see how things progress from here. Prima.
Well, what a week it's been, right? A wild ride for the markets. But here's the tally at the end of it. The Nifty, the mid-cap index, is down close to about 0.5%. Week to date, metals has been the biggest casualty. The Nifty metal index is down more than 3%. IT is down close to about 3%. And even today, in the recovery, TCS and Infosys, both of them are not participating. Infi, TCS, at last count, are down in the red. Not by a whole lot, but they're in the red. Realty has been a big loser. The Nifty Realty Index is down 4.2%. And the only sectoral gainer worth mentioning this week is the FMCG. The Nifty FMCG Index is up more than 3%. So top honors there. And individual stocks, it's Britannia with a 6.5% up move. HUL, 5%. These are all gains from last week to this week. So week to date, 4 days of trading. You've got a Titan, Nestle. These are stocks with gains of about 4, 5, 6%. So top honors here.
No, absolutely. I mean, it has been a very, very steady week given everything that was thrown at the market. It's not too bad at all. If I talk about some of the mid-cap and small-cap gainers, because even that part of the market is fairly stable right now, PI Industries, and we'll talk about this stock. So the market has already started sifting through, looking for pockets of potential opportunity, and that explains the move on PI Industries today. What are these changing global supply dynamics? What will they mean for some of the Indian exporters? Can they stand to benefit? That's exactly what's playing out on PI as we speak. Some of the pharma names like Suven and Wockhardt, they're actually doing really well. Though this whole issue of pharma tariffs, who knows what's the last word on it. But for the time being, it's looking good. Sirma, stock like Sirma, again, I think the market's trying to now decipher between where the opportunity lies. Even in disruption, there's opportunity. And for some of the Indian companies, perhaps EMS or pharmaceuticals or chemicals, perhaps there could be some market share gains to win if this China versus US continues the way it is. So that's how some of these stocks are playing out. But having said that, guys, I just want to point out on the mutual fund data, and we'll pull up the flows tally in just a bit. The flows for this month, March, they are just about 25,000, which is not bad, which is okay. We were at around 29,000 in February. And the SIP number is fine. But from a peak of 41,000, 40,000 around Diwali, Nigel, it has come down to 25,000. There's no taking away from the fact. The retail investor is resilient, but his patience has been, there we go. This is what I'm talking about. So December was 41, and even October, November, we were at 40,000 crores every month. Now that net inflow is down to 25,000. So, yeah, nerves getting tested.
Well, indeed, Surbhi, you pointed that out. Well, let's get in Mitesh Thakkar to help us out with what's the trade on the index. Hi, Mitesh. Good afternoon, and good to see you win. It's been a good trading session, actually. If someone told you that the Nifty is going to be 400 points higher getting into the last hour of trade, I think you'll take that. But that 20 DMA and the 50 DMA still remains elusive. Well, what would you do?
Yeah. So, Nigel, I think, one good session. My only worry is that, we kind of slightly tapered off below the 22,800 mark, which is what I was hoping that the index will hold. But I think otherwise it's a good session, and the good thing is that it will kind of arrested the negative signals. Now, a close about 22,800 will definitely add to the positive strength, which is what I'm hoping for, and we're not very far from that. It could still happen. But just hoping that, we do it faster so that then we can possibly be looking at 23,100 as the first target, and then possibly 23,354 zone as the next target. So positive stance on the Nifty, waiting for the index to either break above 22,800 and close above it, or get an entry around 22,650. So that's the way we are positioning ourselves on the index.
All right. What about individual stocks, Mitesh?
So I have a buy on IDFC First Bank. I think that was a call given earlier as well, but still remains very strong and gives you a good entry opportunity. That's a buy with a stop just below levels of around 58.5. Look for a target of around 63 to about 64 on the upside. While on the sell side is Phoenix Limited. I think slightly tapered out below the earliest pivot levels of 15.10, 15.15. So keep a stop at about 15.10. Look for a target of around 14.15 on the downside.
Got that. PI Industries is a big mover, 10% up. Vamakshi is here to tell us the tariff impact or the relief that it's seeing right now.
Well, absolutely, Rima. The US has gone ahead and imposed a 90-day pause on its reciprocal tariffs. The baseline tariff is at 10%, so it is much lower as compared to the 26% reciprocal tariff that it had imposed on India earlier. And a big beneficiary of this is PI Industries. Why is that so? Because exports as a percentage of its total revenue is a major contributor. It stands at 83% as compared to 17% domestic. Apart from that, within exports itself, North America is a very big market for the company. It comprises of almost 44% of its revenue if we look at it on an FY24 basis. Apart from that, there's also a note that has come in from Investec. They have a buy rating, target price of 4,170 rupees per share on this counter, and they say that US-China tariff escalations, wherein US has raised tariffs to 145%, and similarly there are retaliatory tariffs coming in from China as well, will increase the cost of imports from China. This in turn will give a competitive edge to some of the agrochemical manufacturers in some other countries. Apart from that, there were concerns on Chinese generic competition for pyroxasulfone. post-patent expiry in calendar year 25, and these appear to now be mitigated in Investec's opinion. Apart from that, PI enjoys patent protection in most major markets, and therefore it is largely shielded from any Chinese dumping that could take place. Moreover, the de-risking from China may also gain momentum, and in this entire scenario, PI Industries stands to benefit. So therefore, given those factors, PI Industries is surging in trade.
Okay, very, very interesting. And thanks for pointing this out, Vamakshi. Very clearly, PI Industries getting investors excited with the prospects going forward. Let's take this up with our experts and talk about it. I think before that, we actually have Vinny as well. Do we have her? Okay, I think we'll go to Vinny as well, because Vinny is doing a similar analysis on pharma stocks and what's behind perhaps today's surge. Prakash Diwan is with us. Prakash, afternoon. Great to have you on as always. PI Industries, imagine these stocks, chemical stocks, they've anyway been broken down, beaten and bruised for the past many years because the chemical cycle went into a downward spiral. But now I think investors are looking at them with a new set of eyes for obvious reasons. What would your thoughts be?
Good afternoon, Surbi. So I think primarily the reason to look at these stocks is that they are available at absolute bottom prices. The reason why they fell was, of course, different. PI had a lot of issues with one of its largest Japanese clients. The product line that they have an overlap on went through a little bit of a reset. But this particular disruption that's happening is very similar to the emergence of China +1 after COVID. So that time it was COVID as a trigger. Today you have tariffs as a trigger. Now, we can't take this for granted for sure that India will continue to be at 26%. Or at 10% if you're more optimistic. But the key is that people will reinvent the supply chains. There's absolutely no doubt. And the emergence of some of these larger players who are exporting to the US is actually much more favorable this time around because of the acceptance or reliability and dependability of supplies from India. I think PI industry is just a case in point. You'll probably have a whole slew of smaller to mid-sized companies also participating in it after the large ones benefit. I spoke to one of the exporters of specialty chemicals out of Gujarat the other day, and just trying to figure out what's the impact on profitability and margins. And they actually said that the buyers are willing to take a little bit of that, partly share the impact of tariffs, and hence keep getting things from India. So yes, you're right. It's working well in favor of most of these companies. You'll probably see more names come in. It could be Aarti next. It could be at some point, the exporters, SRF, and all of them don't have so much of export, but a lot of the China substitution will probably benefit from this. And those are, mind you, slightly mid-sized companies in the chemical space, not very large.
No, absolutely. Got that. Pharma is the other space, right? I mean, names like Sun, Biocon, Cipla are buzzing. Vinny is here with a quick roundup of what's happening, what's keeping these excited. Vinny, over to you.
Afternoon, yes, so all these three stocks are in focus today, mainly. Biocon, firstly, positive news flow. They're expanding their oncology portfolio in the United States. US FDA has given an approval for one of its biosimilars, bevacizumab, which was an important one for the company. Now, this has a market size of around $2 billion in 2023. So an important biosimilar launch that could come in for the company soon. Phillip Capital has spoken about an incremental sales of around $63 million coming in for FY26 from this biosimilar, and $88 million benefit in FY27 for the company. Now, Sun Pharma, again, a positive news flow coming in here. The preliminary injunction on its Lexelvi drug has been lifted. There was a court case that was going on for a while with the innovator. Now, the US FDA, the US Court of Appeals and Federal Circuit has lifted this injunction so the company can launch this product now. Now, when is the launch time? That is something that has to still be decided by the company, but a big positive that comes in for Sun Pharma, and because this is a margin accretive side of a drug for the company, peak sales could be in the range of around somewhere $400 to $500 million for Sun Pharma at one point of time, and that is a word coming in from UBS. Lastly, Cipla, that also is seeing a positive news flow coming in. US FDA approval for their generic drug, that is Abraxane, is what they've received the approval for. It's a drug which treats breast cancer as well as other different kinds of cancers as well. And this drug was was expecting an approval of around in somewhere in second half of FY26. It's come sooner than expected. So some bit of a benefit on that front is what one is watching out for. Elara is saying that everyone has already penciled in that $20 million US dollars coming in for this drug in FY26. But going forward, also a lot of potential that comes in for Cipla on this front, and that is why I'm positive.
Good analysis, Vinny, and good on the pronunciations as well. Thanks a lot for joining and giving us that piece. Prakash, what do you like from the pharma pack?
So, Nigel, I'll tell you what. There's one, within this whole cloud of uncertainty, there's one particular thing that's very certain, and that's services from India are not likely to get, tariffs imposed. The government, the US administration is very clear. It's a goods part that they're very worried about. So services, if they will continue to be, absolved of this tariff burden, there's one company in the pharma space which is extremely positive, and that's Indigene. Global footprint, amazing work that they've done in terms of, advising pharma companies in terms of what they should be expecting in terms of cycles on launch and, commercialization and all of that. They use a lot of, data mining to do that. It's a platform which is kind of unique. So Indigene is the one that I'm talking about. If I were to play the pharma card this time around, instead of betting on players which are slightly more individually driven on operations, on production, and on products, here's one company that's primarily into services and something that you can't live without. And when the global supply chain is reset, there will be a lot of demand for these inputs from specialized companies like this. So, and look at where it is from its 52-week highs or all-time highs or whatever. It's really not lost too much ground given the fact that there is so much salience, and it's available at a fairly decent, price as compared to what it used to be. The only thing is you could see valuations to be a bit stretched. That's because the earnings are yet to catch up. And once I think March numbers are done, you'll probably have a little bit of a comfort coming there as well. But I'm quite positive on this thing.
Indigene being an example. Okay. Prakash, in light of what we were just discussing on PI Industries, market now looking out for export opportunities. I mean, exporters who could stand to benefit. So chemicals we've discussed. In this electronics manufacturing space, would you pick any stock right now from a Dixon, Amber, that entire universe?
The likes of Dixon and Amber are probably benefiting because they are more inward looking. And then, whatever they supply ends up kind of getting assembled and sold out. The iPhone China-US access is something which probably brought a lot of attention to these companies. Again, they were in the spotlight. But I wouldn't bet too much on it yet till the dust settles, for the simple reason that it's going to be very specific on products and segments which they're competing with. Now, most of the players who are looking at EMS for the India market probably will continue to grow unaffected. But there's no need to kind of start getting very optimistic that Sirma will start getting to supply too much to the US. As a matter of contribution, it's really not very significant for most of these players, for the US buyers to kind of take cognizance. PI industry was very different. This thing, it's almost 80% plus exports and some very critical products. Here, I don't think the criticality is yet in their favor. So I would wait for it. It could work out favorably, so you're right. But do you want to do it on Friday or do you want to wait for Tuesday? There's a lot that's happening these days over the weekends. And I would give it that benefit of doubt in terms of waiting for it.
No, got it. I mean, take your point because with the stocks like PI, maybe you have straight evidence. I mean, they're already geared towards the US. They already export to the US. But these other companies, they've been more domestic oriented or maybe, exporting to other ASEAN regions or Asian regions. Not directly right now. I mean, the US is not a direct part of their export revenue, at least right now. So take your point on that. Though, of course, the stocks today are having a great run. All of them, Sirma, Dixon, Amber, all the stocks up and about, guys.
Prakash, wanted to get your thoughts in on Orion Pro. Is that a company that you've looked at? It's a product company. It largely has banking software products. It also caters to data centers. And it's quite insulated from the global heat because 60% of its revenues comes from India. It's been growing very well under the CEO, Ashish. I think 30-35% has been the annual run rate for the last 2 or 3 years. Steady margins between 20-22%. And it's been periodically making acquisitions. Even today, they've made a small acquisition. I think they're spending about 23 crore rupees. But is this a company you've analyzed? Because stock is off 50% from its 52-week highs.
No, absolutely, Rima. This is in a great spot. Optically, all looks very much in favor of this thing. They started off with simple ATM machine, softwares in India long back, and then they've kind of evolved themselves into a decent play. The only thing is that a lot of the acquisition in the recent past are yet to be digested and start reflecting in a way which is very accretive to either revenue or to margins. So I think the street is also willing to wait for that kind of a time. Once that happens, your EBITDA margins go beyond this 20% band that probably they've been around for a long time. And I do understand there's a lot of salience around it. It's just that things have been promised and they've been taking much longer. So once that happens, and then the market today is in a mode where you only reward something which is visible, which is seen, which is post facto rather than what is anticipated. So I would give it some time, but yes, it's definitely something which stands out. Niche player, but has the promise. People are not yet looking at very small niches at this point in time. It's only when the big money starts coming from the FIs that, and there is a lot of retail participation, you'll see some of these stocks get back into their mojo. But otherwise, you'll have to wait.
Okay. All right, Prakash. We will leave it on that note for this afternoon. Have a good, restful, long weekend so we can be ready for all the action and the roller coaster come Tuesday. Thanks for joining in today. Well, with that, we have to take a very quick break. Come back on the other side, and we will be in conversation with Tushar Pradhan of Hexagon Partners to get some more perspective.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the
Okay, welcome back. 400 points, 22,800 plus is where we are trading at this point in time. So, I mean, it's looking pretty good out there. What we'll do is just quickly play out, a soundbite from our conversation with TCS earlier. Numbers were kind of muted, but the commentary was okay. Given the environment, etc., the Management said they've not seen any deal cancellations per se, maybe a little bit of delays, ramp downs as they called it. So listen in and we'll come back with Tushar Pradhan.
Have I seen any major budget cuts? I have not seen any major budget cuts. I have not seen any major project cancellations. There are some tactical ramp downs here and there, but I won't panic at this time. Many of our customers are also in a wait and watch mode in terms of what is the end game going to be. But good thing is, whatever we are seeing so far, as much as the rhetoric, we have not seen our customers panic. There are maybe some programs what we thought that they would kick off, but some delays in decision making. But we have not seen any major cancellations or no major project ramp downs. There are few, but no major. So I don't think there is any major negative reaction.
So far, at least that's essentially the managed commentary from TCS. Stocks not reacting. With the stuff which is up today, LTI Mindtree is up 3.5%, Persistent is up 3%, Emphasis is up about 2%. But TCS, Infi, TechM, HCL Tech, Wipro, I mean, some are up, but up small. Tushar Pradhan is with us, director at Hexagon Partners. Tushar, good to have you with us here. Let's just start with this IT space. I mean, actually, if you look at the IT index, it's down 25% from the beginning of this year. What are your thoughts, Tushar, and anything you like here?
I think the reason why most of them are down clearly is because of an indirect impact of the tariff. So people are expecting that the US might go in a recession because of the challenges faced by the tariff regime, and as a result of which, US companies will be then constrained in terms of their IT budgets, etc., and that is actually been seeing having an impact on the stock prices. But I think that is maybe a second or third level impact that we need not be excited about at this time. And I think it is very necessary to kind of keep a close focus on the actual number rather than the sentiment here. Having said that, I think you have to remember that pre-COVID, most of these companies were trading at multiples which were much less than what the multiples even now are after a slight correction in most of their prices, which tells you that in a more benign environment, IT companies had come down to a level which was more or less a par for the course kind of year-over-year dollar revenue growth rate. And because of the COVID impact, the base impact took the revenue and the earnings growth significantly higher for the last 2 years. But if you're going now forward, I think we should be ready for a much more, I would say, muted multiple for these companies going forward. Again, nothing wrong in terms of the business model, etc. But I think the base impact is behind us. So I think the prices may adjust downward to a much more average multiple going forward. As a result of which, I think the only excitement I see in this place is about more specific areas of growth where the continuation of the earnings growth can be significant. But the larger, more diversified IT players may be more in for a more benign time from here on.
So do you have IT in your portfolio at all, Tushar?
Yes, we do. And as I said, it is more to do with the smaller, more, I would say, focused IT offerings, which we like, as opposed to the more generic IT space as such.
So what are they focused on? If you could just give us some indication. Are they the ER&D plays focused on auto? Are they some of the mid-cap IT companies which are growing much fast, but they have a discretionary exposure? What are the companies that excite you right now?
So we, at the moment, are excited about auto in specific. So what we understand is that increasingly the value for any automobile going forward is going to be more in the electronics than in the machine. As we all know, anyway, the ICE is going to be replaced by an EV. But more importantly, it's the gadgetry, which is really the critical aspect for a differentiation between one automobile versus the other. And I think anything which services this area, whichever way you look at it, is going to be of interest. And the percentage increase in the value for the automotive going forward clearly will come from here. So any company servicing that area, that's a principal interest. There are other interesting companies which go into a lot more specific area of travel, etc., which also are fairly interesting, but we don't hold them as of now.
You were also looking to add Select Pharma when we last spoke to you. Where do you stand? I mean, have you already added to your positions in pharma? Is it the CDMO space? How are you thinking about pharma right now?
Pharma is in a fairly interesting space, I must say, because of the whole, expected level of new tariffs to be added from here on. But having said that, I think Indian pharma continues to remain in a very strong space. There are companies which we like in the CDMO. There are companies which we like in the generic pharma space, because that will continue to remain one of the bright spots going forward, no matter where US healthcare costs go. Because whichever way you look at it, I think the direct impact of tariffs would be on customers who pay for healthcare going forward. And I think there will be extra care to ensure that the medical costs, which already are fairly high in the US, do not shoot up due to pharmaceutical costs. We all, of course, agree that the pharmaceutical cost is a smaller component of the total healthcare cost for anyone anywhere in the world, especially in the US. But that will still be a relatively bigger impact for consumers. So I think this is a fairly protected space from what I gather, and that's why I feel continued to be excited about the Indian pharma space. But as I said, nothing specific at this time. There are areas in generic pharma and the CDMO space which are very attractive to me right now.
Tushar, hi. Good to be listening into you this afternoon. So just a question on the broader market. I mean, for a moment, if we just let go of the global tariff headlines, and for a moment, if you assume that the worst of the financial market damage maybe is over, the crazy volatility, 6-7% swings on a daily basis, if we leave that aside and focus on the rest of the cues here, which is whether it's flows, whether it's the earnings recovery, then how much would you give this market over a 12-month horizon? I mean, will we get back to our winning ways, or do you see a prolonged patch of consolidation ahead?
Yeah, so I think I clearly want to distinguish between markets and the earnings growth, because over the long run, we all know that the markets do follow earnings growth. But in the interim, even if you have strong and robust earnings growth, which we clearly expect in FY26 as well as 27 especially, if the sentiment is blurred by either an ongoing trade war which takes longer to resolve, or actual impact on the economies leading to recession in the US, for example, then your domestic earnings growth is not going to actually get the limelight. When I call limelight, I mean the multiple it deserves. So earnings growth may roll in. Economic growth can be shown in various parameters. You will see IIP growth continue to be very strong. However, the markets may not want to respond because of the sentiment being bad. So I think this is really where I draw the line in terms of the estimate for what we think the market is likely to do. But if you ask me what is the prospect of earnings going forward, I think the domestic economy continues to remain a bright spot. If you look at all of the things which have happened in our economy lately, and the possibility of continued investment into production and maximization of capacity utilization from here on, with the kind of demographics that we continue to have, I think the Indian economy is going to be a bright spot for a long time. Having said that, if international capital starts to identify that and would want to participate in the markets, I think that will be the kind of silver lining that we would like to see for the case that we have to make. So if you were to ask me, are earnings going to remain robust? I would think so. Would you think the market would react to that? That's a matter for global news at that time for us to kind of take a look at.
All right, Tushar, thank you very much for joining us. It's a pleasure having you with us here on CNBC-TV18, and I look forward to our next one. Have a good weekend. I think we all need it. Let's take a quick commercial break here. We're going to come back with a quick check on what's happening in dealing rooms. D Street Chatter comes up with Nimesh in just a bit.
macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
If you look at our FY25 growth, it's been better than FY24 growth. However small the difference is, I believe FY26 will be better than FY25.
We'll decide when to do it increments based on the environment.
So you're deferring wage hikes as of now?
I'm saying, I will not use the word defer, but yeah, yes, it will decide it when it happens.
Or many of our customers are also in a wait and watch mode in terms of what is the end game going to be. But good thing is, whatever we have seen so far, as much as a rhetoric, we have not seen our customers panic. Like there are maybe some programs what we thought that they would kick off, but some delays in decision making. But we have not seen any major cancellations or no major project ramp downs. Like there are few, but no major. So I don't think there is any major negative reaction so far.
Welcome back. Well, the markets continue to hold with good gains. One stock that's moved high in the last few minutes is Varun Beverages. Good uptick is what we're seeing on that one. Credit Axis Grameen as well. That's the other stock that's spiked up. And India Cements, after seeing a sharp pullback, that as well has seen a bit of an up move. But Nimesh is with us. It's 3 p.m. Nimesh, what are you picking up? How are the flows? I mean, fair to say that India has actually outperformed. It's been a pretty good week going by all the volatility, all the cues that we've been getting.
So again, Nigel, a good day. Actually, it's holding up to the early morning gains, which is a positive sign. Again, a lot of the beaten down sectors, which gets impacted because of the tariffs, that's in a big pullback. Having said that, the flows are very negative. That's overall feedback. So looks like the rally is largely driven by short covering, and some of the sectors which are so heavily beaten down, they're seeing a bit of a pullback. So need to see how things pan out in the global markets as well. I guess that will be very interesting to watch out for. Selling is happening in banks, OMCs and real estate. So these are the three sectors which stands out today in terms of supply from larger institutions. Metal, a bit of short covering as well, and also because of the dollar index cooling off, are seeing a bit of a pullback rally. So as I said, metals, commodities, all those sectors which are so beaten down and has a bit of a positive impact because of tariffs, they've seen a bit of a pullback today. On the upside, 23.800 is a level to watch because that's a big resistance, so to speak. But frankly, again, we are heading into a truncated week. Next week, we have 2 holidays, Monday and Friday.
Yeah.
So not much to read into today's pullback, but from a flow perspective, there is selling from larger FIs.
Negative flows, then that's something you'll watch out for. So it appears the shorts getting squeezed, at least for today's session. What about individual stocks? What are you picking up?
Well, so in terms of individual names, the first couple of stocks is NHPC and SJV, and not much reacting today, but in general, there is a sense that both these companies are likely to back very large orders very soon. So that's a trigger in those names. Second stock is Max Healthcare, in a bit under pressure today, but there is a buzz of a large block deal coming soon in Max Healthcare. So that's the buzz to track there. The third name is Tata Consumers. We've seen a bit of rally in the consumer staple names in the last few days, and again in today's trade, Tata Consumers stands out largely on back of FI flows. So expect high delivery volumes and a bit of FI buying has resumed, is what I understand, in Tata Consumers. And the last is DB Realty, a big move in that name as well. It looks like the HNF flows are quite strong today, and there is a buzz of some corporate development. So remember, the demerger of the hotel business is still pending, so that's likely to come. And also they might announce a joint development very soon, so that's a trigger as far as DB Realty is concerned.
Nimesh, Morgan Stanley has also come out with a note, positive on consumer staples, and consumer has been one pocket of strength today. In fact, this entire week, safe haven buying. Tell us more about this report.
Well, Rima, as you rightly pointed out, there has been an upgrade on a couple of names within the consumer basket from Morgan Stanley today. But surprisingly, GCPL, which has been the big upgrade from Morgan Stanley, that's relatively under pressure today. But having said that, they've upgraded two stocks, which is GCPL, Morgan has upgraded the stock to an overweight now, and they've raised the target price there. And also they've upgraded Hindustan Lever to an equal weight from underweight earlier, and they've raised the target price on both those names. The trigger for, or the rationale for upgrading both the stocks is A, they expect strong earnings growth and also recovery in the margins going ahead for both these names. So that's the key trigger for the upgrade. On the other side, the one stock that they've downgraded in the consumer staple, that is Dabur. And Morgan Stanley believes that for Dabur, while earnings have been weak, there has to be a business reset as far as Dabur is concerned for them to outperform from here. So that's the rationale for them to downgrade Dabur. And for overall for the sector, Morgan Stanley believes that in this global environment, consumer names will be seen as a bit of a defensive play, and they may relatively outperform in such environment. Having said that, they very clearly believe that it's going to be very stock specific and not a broad-based rally for the consumer names. So hence, two upgrades, which is GCPL and Hindustan Lever, and a downgrade on Dabur.
Okay, all right, got that. Thanks very much, Nimesh, for all the buzz and the chatter. With that, let's get back to the market. The market's been holding nice and steady. It's going into the weekend on a high with a flourish, 420 points up on the Nifty. Mitesh is back with us for some final thoughts and calls. Mitesh, final advice, index and stocks.
Yeah. I think, on the index, the good thing is that highlighting this at 22,800 seems to be captured on the closing basis. So that gives you some kind of a long bias. PNB Housing Finance is on BTST. Disclaimer, we had some positions which we booked in the morning because you're not sure to clear the earlier high of 970, but it's done that. So there was interest, but we are out of it. But the stock chart is still good. BTST here the stop at 974 and look for a target of around 995 to about 1,000 for tomorrow. And Poonawalla Finance is another BTST call with a stop at about 363 for target of 372.
Just keep an eye out on the bottom of your screen. Actually, Concord, they have come out with an update and they have missed their FY25 guidance, and they've missed it by quite a large deal. The ticker team is putting it down for you on the screen, so just keep an eye out on that. The total volume growth has come in only at around 8%. At the start of the year, they were talking about 18 to 20%. Exim volume growth is little south of 7%. Earlier, they were talking about close to the guidance given is 15%. So they've just achieved, half of that. In even the domestic volumes, up by only around 12%. The guidance was 25%. So Concord, the volume miss actually has been quite large in comparison to the guidance that they've given, as our ticker team is pointing out at the bottom of your screen. The stock is pulled back from the top, but this is quite a sizable miss on all the parameters, total, Exim, as well as domestic volumes. So just thought I'll point that out. But tire stocks, they're in focus. CLSA has come out with a note. Sudarshan joins in to tell us more on that front. Sudarshan?
So all the tire stocks are buzzing in trade after CLSA has initiated coverage on all the three major stocks, Apollo Tyres, CEAT and MRF, and it has outperformed call on all the stocks. And for Apollo Tyres, target is 566, for CEAT it's 3,493, and for MRF it's almost rupees 1.29 lakh shares. And if you look at the target price, it's implying an upside. That's the maximum for Apollo Tyres. That's more than 30%. For CEAT also, it's almost 30%. And what's the reasoning behind this initiation with outperform call? It says the sector is undergoing a structural improvement, especially in terms of profitability. And also, this mix is going to improve via increasing share of higher margin tires. And currently, the margin is at the bottom of the cycle. And now with input cost coming down in the last few months, input costs have fallen sharply, and that's going to help gross margin, which is likely to improve over the next few quarters. Also, it believes that valuations are going to improve considering all the factors over FY26-27, and that's the reason CLSA is positive on tire sector.
Got that. Thank you very much for that. Sudeep Bandyopadhyay, Group Chairman of Inditrade Capital, now with us. Sudeep, do you have a view on tire companies? Do you think margins are set for improvement?
Oh, absolutely. I think, the raw material prices have come down and that definitely helps the margin. So there's absolutely no doubt. Now, there is a lot of confusion over this tariff war and what will be the consequences of this, whether there will be an indirect negative impact, whether the Chinese dumping will increase. These are the things which we need to carefully examine. But fundamentally, leave aside the tariff part, structurally the business is in for good time because of the margin improvement possibility, strong margin improvement possibility.
Okay, all right. Sudeep, that's a sense on some of these tire names. On financials, Sudeep, now the policy is behind us. We know the stance has changed and there's ample liquidity in the market, probably more rate cuts coming. How would you play financials beyond the large blue chip bank names?
I think a couple of things, Survi. I think, we have seen a bit of meltdown in the gold loan companies. The new regulations which have been proposed are on the lines of what is in existence for the banks. And, NBFCs were working on a bit of a lenient mode. That will not be there in the future. That's the assumption, and that's why I think all the gold loan companies have taken a hit in our past few days post the policy announcement. But I think structurally it's a good thing to have happened. And at current level, after the correction, I think it's a good time to buy the gold loan companies. If you're looking at a kind of a 1 year kind of a time horizon, the world is going to remain volatile. The gold prices will have an upward bias. Gold loan company regulations have by and large stabilized, and with this latest round of RBI policy announcement, I think we should be in for a stable regulatory regime in the gold loan space for quite some time. Now, with that understanding, I think Muthoot and Manappuram both at current level does look good. Apart from gold loan, I think if one looks at the overall BFSI space, I continue to like the insurance space, and LIC continues to remain my favorite stock amongst the life insurance companies, sheerly based on the potential as well as the opportunity which is emerging on the healthcare space where LIC is supposed to be entering in a big way. Also, the bank assurance being questioned and some regulation on those lines being expected. I think LIC has the least amount of bank assurance presence, so indirectly the benefit there as well. Valuation wise also it looks attractive. So LIC from the life insurance pack does look attractive.
Okay, all right. Sudeep, I wanted to ask your view on Tata Steel. Out of nowhere, they came out with the announcement on Wednesday, and they had a call as well. And what they mentioned basically is they're looking at making the Tata Steel Netherlands operations very, very cost effective, and they're looking at increasing profitability out there. So just give our viewers a brief outlook out there. They're saying in the next 2 years, as FY26, the second half, and FY27, they're looking at savings of 500 to around 550 million euros. That's a large deal that they're talking about. On the cost base, it could be close to around 15% or thereabouts, which is quite large. Investec, they say that these cost savings could result in a saving of close to around $80 per ton. So that's quite a large number. How do they achieve this? They're going to be pulling down employees by close to around 1,600 employees on a total base of around 12,000. So employee cost cutting will constitute close to around a third of this 550 million, which tells you it's around 160 to around 170 million dollars. The remainder of the factors would be operational efficiency, volumes, value enhancement, the blast furnace enhancement, and high utilization of pellets as well. Besides talking about the Netherlands operations, they also said that the US tariff impact will have a minimum direct impact on them. And the second factor they said is that the European operations, which have been under pressure, they'll turn cash positive in the second quarter of this fiscal. Heartening to hear on both those two factors. So put this together, there's good news coming in that the Netherlands operations will turn up the profitability in the next couple of years, and also a clarification on the US tariffs as well as Europe is in a better space. And that's why you have brokerages like Phillip Capital. They're quite positive about that. The EBITDA per ton for Netherlands was only around $40 to around $60 per ton, what they were working with. Now this will save another $80 or thereabout, $70 to $80. So that's an uptake out there. And Investec, they have upgraded the stock to hold because they say that this is positive. Tata Steel Netherlands business can do nearly around $100 per ton. And also they're saying that always the fear for Tata Steel is the Indian operations will have to support Europe. With this cost-cutting measures, that goes out of the window as well. So that's why Investec relatively more positive. Sudeep, at around 130, how do you think Tata Steel behaves from here on? Because it's seen a correction from, I think, 185 or thereabouts. The world is in a flux. Otherwise, these moves are quite positive. Your take?
Absolutely right, Nigel. I think I've been positive on Tata Steel for the last about almost a month. I think very clearly, much before all these cuts were announced and cost savings were announced, I think the demand for their product is increasing significantly in Europe. With the rearmament of Europe being a reality, I definitely expect significant demand for steel going up in Europe. And with that, I think the biggest problem as far as Tata Steel Europe was concerned was a demand point of view, the volume pickup. Now that's definitely going to happen, and they're also acknowledging the fact that very soon the volume pickup will ensure that they become, they turn profitable, EBITDA positive, and going forward they will become profitable as well. Now, overall consolidated Tata Steel, the drag was the Tata Steel Europe operations, and with that drag, once it goes away, because they are becoming operationally profitable as well, I think things should start looking good significantly. Now, with these new steps announced, with the cost cutting and focusing on efficiency, I think this will be the icing on the cake. I think definitely this does look very good, and they're absolutely right. This tariff war with US will have negligible impact on Tata Steel Europe, as well as, of course, Tata Steel India. So I think in this stormy market conditions and trade environment, Tata Steel is one place where one can definitely look for shelter.
Okay, Sudeep, do stay on. Need to slip into a very short break. By the way, Europe is firmly in the red. It's down more than 1%, so it's swinging back to losses, the key indices there. So there's still a lot of concern surrounding whether the US will tip into a recession. What will happen to trade? Listen in to excerpts on that note from our conversation with Jahangir Aziz from JP Morgan.
So after the pause, we are still sticking with that, second half of the US will go into recession. That was a baseline prior to the pause. That remains a baseline. For global recession, we still don't have it in a baseline, but we have a 60% probability. We haven't changed that probability. US-China trade will virtually freeze. I mean, unless you critically need something, you are not going to participate in any transaction between US and China. Most of the trade that India does outside of US and China is also related to the supply chain that goes through US and China. So if the trade between US and China comes to a halt, this is a actual shock to the global trading system. So if global trade is under attack and global trade actually stumbles in the next 2, 3, 4 months before, let's say, we have a negotiated compromise, then I do not think that emerging markets growth gets spared.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business.
Welcome back. Well, Sudeep is still with us. Sudeep, what about delivery? I recall when it listed, there was a lot of excitement on that counter. But from there, actually, it's been, downsliding. And over the last weekend, they went ahead and they made an interesting acquisition. It appeared quite, attractive at the valuation that they did it. The problem was that, in fact, the street believes that now they'll get back into losses and it'll take a bit of time to turn around that entity. Your view on the stock, because after rallying at the start of this week, it's actually given away everything up.
Nigel, you're right. I have been very positive on delivery for quite some time, and I strongly believe that this business has significant potential. Look, logistics is a very, very important, part of the entire, the value chain, which all these e-commerce guys and every other form of commerce requires, and delivery plays a very important role there. Unfortunately, their operational performance hasn't been up to the mark, and that's pretty much the reason why the market has not given the kind of valuation which they would have probably, and we all thought this would attract. The acquisition, I don't find really any problem with that. Yes, market didn't like it. Initially, it gave thumbs up, and subsequently they didn't like the acquisition. But I think, leave aside the fact that to an extent dependence on Meesho increases, and Meesho themselves are setting up their own delivery platform and things like that. But I think, consolidation and strengthening their market position, I think is a good idea. The valuation was at a very attractive price. And, short term, yes, there will be pressure on profits and they may slip into a loss in the coming quarters because of this acquisition. But I still maintain my long-term positive view on delivery. And if somebody is willing to give it 1 year, I would still recommend buying at current level.
Okay, all right. Sudeep, stay on. We'll have some final questions for you in just a bit. Let's play out a slice of some more market opinion that we've gathered today. We caught up with Devina Mehra of First Global, spoke with her about what she thinks of this whole tariff storm, whether the worst of it is over or not, and what should the expectations be from the market from here on.
India, in any case, even when the tariffs were imposed before the rollback, was relatively a little insulated, one, because we don't have that much external exposure, and two, on a relative basis, it was a possibility that you could actually be gainers because the tariffs were vis-a-vis the US and all your competitors had higher tariffs. But I mean, for the moment, that's on the pause button has been set on that. Whatever is your equity allocation, which should never be 100%, you should remain invested. But in a steadier portfolio, if you had invested in the themes of 2024 or were overexposed to small and micro caps, you have to recalibrate. So don't try to make it up from the same stocks or the same strategy or the same scheme. Broadly, I would still say remain invested because the risk of a crash for the large cap steady state is not very high, which is not to say there's absolutely cannot be any downside in the indexes from here, but the risk reward is in your favor. And US has been outperforming for about 12 years. So anyway, I'd been watching that sometime that outperformance would end. If you'd asked me 6 months ago, I would have said that, we are watching, but nothing looks imminent. But I think Trump has hastened the end of the US outperformance. And more than that, whatever US has done has hurt, I think, even on a long-term basis, the US dollar's position as the reserve currency of the world and the trade currency of the world. People will start to look at alternatives. 2 years ago, I made a video saying de-dollarization will not happen in a hurry because reserve currencies don't change in a hurry. But I think Trump has shaken something fundamental about the trust in US.
All right, that was Devina Mehra. Sudeep, so coming down to final thoughts, you give us some ideas. I mean, actually, the market's recovered already quite a bit. For this week, we are down just about 0.5%. It's been quite good, all things put together. So maybe one or two more ideas?
Well, I do like power sector, Survi, and I've been talking about it for quite some time. And it's got nothing to do with all this tariff war and, the confusion surrounding it. So if you believe in the power sector, which I do, I think it's a great opportunity. So, you go ahead and buy NTPC for long term. Go ahead and buy the power financials, PFC, REC, even IREDA for long term. Maybe you can look at some of the power ancillaries as well. There is a structural positive which is going to last for 5 to 10 years in the power sector in India. So there's absolutely no harm in going and buying these. The other segment is the engineering, construction, infrastructure. Now, the government of India is going to spend almost $1 lakh per month based on their capital expenditure budget. Now, a lot of this money will be flowing through these construction infrastructure companies. So maybe the leader in this pack, Larsen & Toubro, can be looked at. Maybe some of the other companies working in this segment can be looked at. Again, they don't get impacted directly or even indirectly because of this tariff war. So focus on these stocks, let the tariff things settle down, and then we can look at the exporters and others who are exposed to this tariff war.
Okay, all right, fair point, got it. Thank you very much, Sudeep, for taking us through what has been a turbulent week, to say the least. Test of nerves for investors in all markets, including, of course, our own. Thank you very much for joining in. Okay, we're down to the last 2 minutes, so let's wrap it up. What a good way to end the week, and hopefully this green is going to stay. That's what investors will really pray and hope for. Almost a 450-point rally on the Nifty as we are winding up, and we are closing very close to the highs of the session as well. So that's the Nifty heat map. It's a sea of green out there. And the biggest gainers include, of course, the metal stocks, metals, commodities, materials, Hindalco, Tata Steel, JSW Steel, Coal India. These stocks have surged between 4 and 6.5%. You can see them right on top. That is followed by names like Jio Financial Services, Grasim, looking good, NTPC, Supply. It's been everything goes up kind of a market, so to speak. The big boys, of course, are supporting and performing well. Reliance, for instance, is at a 3% move. So there's absolutely no fault you can find with that. L&T, 2% higher. HDFC Bank, 2.5% higher. Bajaj Finance, 2% up. So financials and banking have done well. Talk about some of the pharma names. They've had a decent run as well today. Sun Pharma, Dr. Reddy's gains are between 2 to 3% on these stocks as well. Maybe the market is sensing that Donald Trump is just going to put the pause button even on fresh pharma tariffs, at least for now. Maybe nothing will come immediately. That's the hope. IT has been relatively the weaker link. TCS, let's pull up that stock. It is ending down about 0.25%, slightly off the lowest points of the day. But nonetheless, muted quarter and slightly cautious commentary, so 0.25% down there. Infosys also 1% higher. So comparatively speaking, the IT part of the market has been more subdued. Tech Mahindra, HCL Tech, these are stocks up about 1% each. The gains are coming in from commodities and they're coming in from financials. Let's talk about the mid-cap screen. The mid-cap screen is looking pretty good, 2%, almost 2% up on the mid-cap index, in line with the large-cap gainers. Let's talk about some of the key movers and shakers here. PI Industries, 10%. Wockhardt, 10%. Something like Sarda Energy, up about 10 to 11%. Look at the moves on Gravita. Gravita, by the time we've closed out, has surged 18%. And a bulk of this has happened in the last 20 to 30 odd minutes. Big move there on Gravita, about 18% on the higher side. Some of the EMS stocks like Syrma have had a very good run. Syrma is up about 10.5%. Pull up Dixon and maybe even Amber. Both of those stocks are also up between 5 to 6%. So that's been the shape of the market in general. Looking very, very good. Just have to point out one name. From the gold financier side, Muthoot has ended with a cut of about 6%. So about 6% yesterday as on Wednesday, and another 6% down today. That takes the weekly loss on Muthoot Finance to 14% after these new gold financing draft norms from the RBI. Well, the bell has gone, the week is over, and we have managed to end with a cut of less than 3% for the week on the Nifty. It's a wrap on this edition of Closing Bell. Thank you very much for watching, but do stay tuned because we have Editors Roundtable coming up next.
At these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
If you look at our FY25 growth, it's been better than FY24 growth. However small the difference is, I believe FY26 will be better than FY25.
We'll decide when to do it in increments based on the environment.
So you're deferring wage hikes as of now?
I'm saying, I will not use the word defer, but yeah, yes, it will decide it when it happens.
Or many of our customers are also in a wait and watch mode in terms of what is the end game going to be. But good thing is, whatever we are seeing so far, as much as a rhetoric, we have not seen our customers panic. Like there are maybe some programs what we thought that they would kick off, but some delays in decision making. But we have not seen any major cancellations or no major project ramp downs. Like there are few, but no major. So I don't think there is any major negative reaction so far.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Despite a minor fall on Dalal Street this week, India outperforms its global peers. Friday's gain of 2% helps cut its weekly losses. IT, realty, metal fall the most. On this week's edition of Editors Roundtable, we decode the week on Dalal Street. We tell you how markets around the world reacted to Trump's trade tariffs. We put the spotlight on the IT sector earnings. And we'll tell you what to expect from the rest of the sectors. I am Reema Tendulkar, with me Prashant, Nimesh and Nigel, and joining us in the newsroom, we've got Mahesh Patil, CIO, Aditya Birla, Sun Life AMC. Hi guys, TGIF. What a week, right? What a week. It's historic in terms of headlines, gyrations, volatility, the bond market meltdown.
In a strange way, today actually seemed slow. Because it was just one way. We started higher. It was not like zigzag.
Yeah, we had a gap up and then we've just stayed there.
Yeah. I mean, because the last few days it's been up 7, down 8, up. So today was calm, and I hope it stays like that now for the next few days.
It's been quite a roller coaster ride for us and global markets.
Well, that's right. Normally you could say I went home and I didn't look at the screen at all. You'll be lying if you said that this week, because you had to look at the screen at all points in time.
1 or 2 days, Prashant would have not even slept overnight, right? I mean, so much of Trump announcements, watching all the bond market and all.
No, I'm telling you, Nimesh, it reminded reminded me of, all the 2008, and back then, of course, I mean, it was different. But yeah, it had those vibes for 1 or 2 days, and quickly it passed quickly. So,
but here, this time there's too much of uncertainty.
Too much of uncertainty.
There it was like, right? I mean, you don't know what to expect. I mean, that was the biggest challenge.
The biggest in that sense, the head fake was that headline which came on Monday. It was right. They said that they're going to pause. Markets went up low to high. It went up 8%. Right. And then, of course, within 30 minutes, inside of 30 minutes, there was that news which came
that is fake.
That it is fake news. So now people are wondering whether it was actually fake or it was a trial balloon by the White House to see how markets would react. And now actually, they actually went ahead and did it. But
I mean, bad for traders, I would guess, But I think it's a good opportunity for investors, right, long term, because you get prices at levels, right, where you want to buy.
So you shop, Mahesh, at a fund house. You'll have been buying. What have you been doing in this volatility?
Yeah, so I think in this volatility, I think during the market fall, I think steep fall, I think stock prices, which normally good stocks, right, they're out of your reach sometimes because of valuations. I think this is the time to buy those stocks because, see, your market value of a stock doesn't change, right, because by 1 or 2, 3 quarters, even for 1 year, the earnings are slightly, right, because a lot of value comes from terminal value. And that, assuming that picture is intact, say a 10% correction or 15% is a good opportunity to buy.
Right. So what have you been buying?
No, so I think we've been looking at some of the domestic plays, whether it is consumption, for example, while it has been a underperformer in the last whole year, we think that this year, it can look better because rural economy is starting to look up better. Monsoons are going to be good, right? There's some stimulus in the budget for the tax relief next year, the pay commission. So look at sectors which have been underperformed in the previous days, not much of a froth over there. And where they could turn around, I think those are the sectors which we would look at. But I think it's more stock specific.
All right, Mahesh, before we throw a few more questions to you, just want to give our viewers a quick check of what went on during the week. We started the week looking at Black Monday that turned into Green Friday by the time we ended. And we ended the week more or less flattish. At the start of this week, if you told someone we'll end flat, well, they would grab it with both hands. India outperformed amidst all the uncertainty. And the FIs, though, they remain sellers. The good point is they are net short on the index. And that could be a bit of a cushion because that's what helps you with a bit of a short covering bounce, even if flows are negative. The sector of the week was the consumption pack. As Mahesh said, various people are turning positive on that pack. It's been an underperforming space, consumption, FMCG, but for this week itself, it was actually an outperformer. The Nifty ended with a mild negative tinge, while high beta, metals, real estate, they got a bit of a pullback during the course of the week. What works for India? Now there is increasingly, some kind of confidence building into the Indian equity markets after a while. Remember, for India, it's not the first month that we're going through a bit of a downturn. We have been in a broad 9-month correction, actually, a time-wise correction. So we're relatively protected from these US tariffs because as a percentage, the US goods, the goods that are exported from India to the United States is only 2% of our GDP. Services hasn't been touched as of now. And Trump's commentary as well is not indicating he's going to be very harsh on India. Can't trust what's going to happen, but at least as of now, those are the positives. RBI actions seem to be focused more on growth, which is good. Earnings are expected to compound by around 12 to around 13%. And SkyMed, they came out with their forecast. They're saying that this monsoon is going to be normal, which is actually good. And it could help some of these consumption names as well in the time to come. So India is looking better, Mahesh, and we take heart from the...
One thing which you missed out was the oil itself, right?
Oh, that's another big
That's from $80 average of last fiscal year to around 60. That's almost like a 20% delta, which is almost like $15-20 billion, right, of savings, right,
Indeed.
which is there. It gives some fiscal room for the government, right, which is a bit of a challenge.
Mahesh, earlier, when we just started off the show, we were talking about 2008. In 2008, we had that spell for around 7-8 months where things were very, very weak. And then you had the Lehman crisis. And in the next 5 months, the equity markets actually started looking up. Right. This time around as well, it's not the first month that we're seeing pressure. Actually, we've gone through 8-9 month, corrective phase. The Indian markets have lost only 15%. But it's been a painful last 9 months, actually, for investors here in India. Do you think in the next few months, things will actually bottom out and then turn around? At that point of time, we didn't have President Trump, so you don't know what he's going to do next. Yeah. But do you get a sense of that?
That's very interesting what you said. In fact, that's what we've been saying. India pain started much earlier. Much because of our own problems. Right? Yeah. We had a large fiscal contraction because, of the elections, right, which was there. The monetary policy also was fairly tight. I mean, a lot of restrictions on the banks. And we saw that pain actually in last fiscal year to some extent, right? And some of those things are actually easing off, right? Whether it's on the monetary side, I think we've seen now the new RBI governor, we've seen 2 rate cuts, right? Already And liquidity, in fact, at the month of March, normally when it is very tight, we had actually a neutral.
Yes.
Or a slight surplus which was there. So I think at least the monetary trying to support growth, I think, which is a good thing over here. And a lot of the earnings downgrade for us has already happened this year. I mean, last fiscal year, I mean, we started off with around 15-16% for the Nifty. We'll probably end at around 5% or so, right? In other markets like US, now the downgrade cycle will start now. I mean, they are still sitting at around 10% kind of a growth for this year. So I think we have seen that pain and taken that, and we were about to recover, right? And that's what we're expecting. Because of this global turmoil, there might be few setbacks in a few sectors, but I think we should see I think next year, as we step forward, growth on the lower base should start to look a bit better, right? And valuations, which was the biggest concern last year, right?
Has cooled off.
Nifty has now pulled off in probably a Nifty at least now it's slightly below, I think, the 10-year average.
And,
right?
and the FI is selling as well. In various markets, They didn't sell so much. Here they were actually selling for quite a long time. And maybe if US is not as strong as people thought, that maybe some of those flows makes their way into some other markets.
I just bring some data. So FI's ownership in India, right? They are now
at a multi-year low.
Yes. So they are underweight by almost like, I think, 3% underweight vis-a-vis the emerging market, which is like what they had during the Asian financial crisis, right? So I don't see there is enough room for them to sell. So I think once the dust settles down, you don't know when it will happen, but there will be a trade out from US, right? I mean, this is a trade short US, both dollar as well as US equities. And it could move into emerging markets, okay, wherever there is a better growth, and India would still have a better growth, right? If not 6.5%, even 6%, okay, for next year, I mean, this fiscal year, that will still be a good growth. I would say that you might see that coming in. It might take some time, not in this volatility, but that's another kind of way to look at it, right? If you want to be positive, these are the positives which one can look at this point in time.
So Mahesh, from that perspective, for the benefit of the viewers, do you think 4-5% downside from here and India see a base there around 21,000 on the Nifty? Is that your base case?
I mean, I would say, I mean, one never knows, because I think the worst thing is the US gets into a deep recession, right? There is a tariff for Chinese, they use currency as a war, and then it's a different scenario. But another base case scenario, I would say, that's even at these levels, okay, it's becoming an interesting market to look at for investing over the next 3 to 5 years. Clearly, I think you will make normalized returns.
Sorry. Go ahead.
Mahesh, just one thing. Friday, I mean, today we saw a big move, right? And on the way higher. Do you think it was just repair, or do you think, I mean, the correlation with the US starts to break down a little bit here? Or do you think we're kind of still dependent on what happens in the US in a large way?
So I think if you look at even in this volatility globally, I think this thing was, I mean, correlation was much lower, right? I mean, if you look at across, I mean, if you look at what happened even in the Asian markets or even in the European markets, our walls were much lower in that sense, right? So that clearly shows that we have got something which is working for us on the domestic side, which is not so much correlated to what's happening in the US. But clearly, I think there is some impact to growth which could be there. And people are trying to factor in whether that impact is going to be 50 basis point, or what if US GDP growth goes down to around, say, whatever, 0% or so this calendar year, by the end of this calendar year. You might have some impact around 50 basis point to our GDP growth, but that's about it. I think that needs to get factored in a bit in terms of earnings. But I would guess that to some extent, I think India could actually emerge beneficiary out of this, right? As you mentioned, right? I think we would probably we have been classified under the not so, I mean, there's 4 categories which he has got, right? So where he will be slightly more lenient, and we might for the first time actually benefit. Okay, we talked about it eventually, right? If China, right, if clearly the way things are, I think they will not be able to, supply, to the US at those tariffs. So in certain sectors, okay, if we are able to really scale up, and we could actually benefit in the longer run. I mean, currently there could be demand impact, but that's how I would look at it.
Many industries could benefit. You know, I'm just going to take a minute to go back and recap the big global moves that we saw. And it really is, these are historic moves. So guess what the average daily swing in the last 4 sessions on the S&P 500, largest equity index in the world, has been? 7.8%.
Wow.
You know, daily average over the last, and we'll find out what it is today. What about volatility? So if you take that April 2nd as a start point, which is what Trump said, Liberation Day, when tariffs were announced, the VIX is up 143%. You know, you can go back and compare GFC,
the Greek debt crisis, and many other crises. I mean, the only time it's been this high or has gone up in such a dramatic fashion is COVID. Otherwise, I mean, this move has dwarfed everything else. Bond markets, again, since April 2nd, Liberation Day, and this is where the problem is. The 2-year is flat. The 10-year is up 26 basis points. The 30-year is up 35 basis points, which basically means that the long end is rising, signaling rising term premium, equity risk premium, which I think is what people are kind of at the margin worried about. The dollar index, which is the broader dollar against a basket of currencies, it slumped 4.5% since the 2nd of April. And now, of course, it's at 100 or slightly under 100. The dollar is not behaving like it should. I mean, neither are US bonds. I mean, in times of extreme stress, people go into US assets, which is not happening. It's not happening more in the the dollar here is lagging, even the US treasuries in that sense. Basically, the question of safe haven status is coming up once again. What about China? 145% tariffs by Trump. The Shanghai Composite is down just 3% week on week. I mean, this week. So that's quite incredible, of course. But authorities are taking measures, and they're out there. I just took one other country, South Korea, which is very exposed to US in terms of trade, etc. Again, historic week. Inside of a week, that market was limit down, then it was limit up. So it's never seen before. So basically, from fear to FOMO, if I can sort of call it that. A few commodities, gold fell 5% high to low from the 2nd to the 8th. It's bounced almost 8%. It's back at all-time highs. Mahesh was talking about oil, 16% fall, high to low, in 6 trading sessions. And I also looked at the Bloomberg Commodity Index, which is a basket. That's fallen 9% in that same stretch. And maybe now it'll start to come back up a little bit. We'll see. So, yeah, that's it. I was, on a lighter note, I was, saying earlier that every crisis needs a name. So, we had the global financial crisis, GFC. The last one 2 years back was SVB, Silicon Valley Bank. There was, pigs crisis, Asian crisis, Greek debt crisis. What should we name this one?
Mahesh?
You can call it a Trump
tariff, TD.
Trump tariff.
Yeah, TD crisis, Trump tariff.
Yes.
Yeah,
So
that's it.
I put one out. It's called, I'm calling it global trade crisis. There's no Trump.
Yeah.
But if you slip in global
Yes.
Trump trade, becomes
Trade.
GTTC. Doesn't have the same ring to it. So we'll need to find a...
Yeah, I think people remember this for the kind of a short period kind of volatility which we saw, right?
Yeah.
That is.
I think high to low, about 18% fall, actually, for the US,
Right.
which is smaller than what we saw during COVID and previous instances as well. Short-lived, hopefully.
Right.
And I think the worst is behind us.
I think this still has to unfold, right? We don't know, right? Because it's still not over in that sense, at least globally, how things will, what are the implications are there? Nobody knows actually, right?
Yeah. So 2 years later, when we look back and say, what happened in GTC?
No, I think you want a bettering maybe Trump's tariff tamasha. Triple T, no?
It's actually a tamasha because the way flip-flop happened, right? That's it.
No, Prashant asked for a better ring, so I said,
T-Cube.
Anyway.
All right, moving on to the other T, TCS. So just before that, TCS came out with the numbers. So on one hand, after the 20% correction in share prices like TCS, Infosys, even the Nifty IT, valuations now getting to long-term average. In the case of Infy and TCS, valuations have now dipped below the 10-year average. So that's on one side. But on the other hand is that there is no growth. Jefferies is now anticipating TCS to grow its top line by 2% from FY25 to FY27 and its EPS by 5%. We're talking about low single-digit revenue growth from FY25 to FY27. So, that's the picture. Valuations may now be looking cheap relatively, but then there is no growth. So what should you be paying for? Also, perhaps investors will wait and watch for Infosys. That's the next catalyst. Now, Infy comes out with its numbers on 17th. Now, before it became a tamasha crisis, there were expectations in terms of guidance. 2 to 4%, 1 to 4%, 2 to 5% at best case for Infosys in terms of an annual guidance. But now the street is feared that will they guide at all, given the uncertainty? And if they don't guide, that means for 3 months or more, you will have no idea what IT companies are growing at. So that is an added uncertainty. And we just quickly pull up the earnings calendar. Next week, Wipro, Infosys, Bastec. And the following week, HCL Tech, LTI, Mindtree, Cyient, LTTS, Emphasis, Persistent, Tech Mahindra, basically the rest of the IT pack. And some key lines from TCS's interview this time. Well, clients aren't panicking, no major deal cancellation or ramped out, but they are seeing some tactical, there are some delays in decision making or some tactical ramp downs, as they called. They're pausing on wage hikes. So that's a bit disappointing for all, employees as well. They will decide, they'll take a call when to give wage revisions or increments this year. But they continue to hold on that FY26 will be better than FY25 if you strip out the BSNL, majorly for their international or their developed markets. But Mahesh, come in on tech. What was your positioning? Has it changed in the last 2 months?
Yeah, so tech again has started to underperform even before this, right? Because of concerns about US growth and other factors. So we had been positive on tech earlier, right? Because the sector, which had underperformed. And we were expecting that this year, I mean, say 6 months back, we were expecting, last year was not a great year, right? In terms of the top line growth. So this discretionary spend should have been good, but that is now kind of a turnaround. But I think beyond a point, I think the tech offers some kind of a support because a lot of these stocks which you talked about, right, while the growth is going to be very, very weak over there, they are, compared to the earlier cycle, if you look at it, and now the cash flow generation is much stronger. Yeah. Right? If you look at prior to 18, the growth also there was around in the mid-single digits, right? This time around the cash flow dividend payout, so the dividend yields in some of these stocks, large names, are around 4 to 5%. So that provides some kind of a support. Obviously, that at least gives a downside support to some export. That doesn't mean that you might see a big outperformance.
So you're still positive on IT? I mean, you're
we are kind of a neutral-ish. We are neutral on that sector, right? But I would not go too negative. No? It's already there because it will be too risky to really bet down. Obviously, the mid-cap and small-cap, I think that shift is yet to happen. Mid-cap IT stocks, some of them are still very expensive. Yeah. I think that is a space where you might see some derating.
Mahesh, what kind of valuation you will give as a fund manager to IT companies? Because as she pointed out, 2% revenue growth, 5% EPS growth.
Right.
And a lot of the large cap companies are still quoting about 20 times 1 year forward, Rima. Yeah. So as a fund manager, what kind of valuation you will be comfortable with? Or are you comfortable with this?
No, I think it's, again, if you look at the FMCG sector, just for example, right, there also the growth is kind of similar, right? Yeah. I mean, if you're looking at the volume growth is around like 2% or so, I mean, for lever it's much lower, right? But you're looking at earnings growth of around in high single digits, right, over there. Again, these are also companies which are giving high cash flow and good dividend yield. I mean, so there the multiples are...
You're comfortable with this kind of valuations?
We are okay. I mean, now with this, with a 10-year average, slightly below that, probably a slight down it could be there. I don't think... the valuations is a question at this point in time. Yeah?
And plus, there is an angle of high dividend yield. Like a company like TCS pays 100% of its profits out to its shareholders.
So 4-5% dividend yield is what is for most of the large
if we are in a low interest rate environment,
I would not go short on this sector. Let me put it this way, right? It might not be a great thing. It might, but that's how I would look at it.
Okay, we'll hold that thought. We'll get into a very short break. We'll come back and tell you what to expect from the rest of the sectors in terms of earnings.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out.
Welcome back. You're tuned into Editor's Roundtable. Well, before we move on, the key focus in the next few days and for the next 45 days is going to be earnings. Nimesh, tell us, what do we expect from out there? Couple of companies you're focusing on as well. Run us through the list.
Well, Nigel, at the headline, do not expect any fireworks. That's the broad message from the Q4 earnings. So expect contraction across all the sectors. The revenue growth it will be 4-5%, but there will be margin contraction for the first time in 2 years across the board. So the margin expectation is just 0.5% to 1-2% for most of the companies. So that's the kind of margin contraction we're going to see in this quarter. The number to watch in terms of the Nifty EPS for this year and next year. The average Nifty 50 EPS for FY26 is around 1145, 1150-ish for 26 and around 1300 to 1315 for 27. So that's a number to watch out. Will there be further cuts in terms of the full year EPS for next year and year after? So that's something which only this quarter earnings will throw up for. In terms of sectors now, which are the sectors which are expected to report weak numbers? Banks will report weaks because of NIM contraction because of the rate cut. So that's one big sector to watch out for. There would be some outliners is what I believe there. Commodity chemicals is something to watch out for. There will be some inventory pressures. Demand is still muted, and there will be a bit of an operating leverage concerns as well. So that's the commodity chemicals sector. Construction material also expect a weak quarter this time around, and across the board, oil and gas, those are all expected to be weak numbers. So that's a broad 4-5 sectors which are expected to be weak. In terms of strong earnings within the financials, watch out for NBFCs. They are likely to report good numbers, and even for MFIs, the feedback is you will see probably the last of the worst quarters as far as the MFIs are concerned. So that's the one sector which can report good. Healthcare will also expect to report good numbers this quarter. So all those hospital names and all should report good. Metals and mining, the expectation is on a weak base, they will report good numbers. So that's a sector to watch. And telecom is another sector to watch because ARPUs have been increased. So watch out for the likes of Bharti and Indus Towers. For Indus Towers, there's going to be a bit of a dividend play as well in Q4. So they may announce a large dividend payout. So that is something to watch out for. So that's broadly from a sector perspective. Citi puts out some interesting stocks where they expect positive and negative surprises in the earnings. In terms of positive surprises, HDFC Bank can surprise positively. Varun Beverages, that stock was up in today's trade. Citi is expecting 13% volume growth. So one will be the good, strong growth numbers for Varun this quarter. Tata Steel, Citi is expecting strong. Voltas and Eicher are the other two names where Citi expects a good Q4. So that's from a positive surprises. In terms of negative surprises, Titan can surprise negatively on lower margins, and there could be cuts as well in the next year estimates. So that's something to track. Within the IT, watch out for Coforge. That's been the best performing in terms of growth, but now expect some decline there in Coforge in Q4. It could be a quarterly thing, but watch out for that. Vedanta weak, ICICI Pru Life expect weak, and M&M there could be a bit of risk on the weak mix for M&M. So these are the few stocks where Citi expects a negative surprise. But at the margin, no fireworks, a flattish quarter with a margin contraction the first time in 2 years. That's the overall summary.
A lot of the questioning and commentary will be
a key to watch. Yeah.
Tariffs will come up in conference calls, Mahesh.
I don't know whether they have the answers.
But, we were in the break, we were talking about any sector particularly which, according to you, has got dislocation, where price is as compared to opportunity. And I think maybe you like chemicals as
I think this is a sector which has underperformed, right, for a long period of time, almost like 2 years now, right? And there was inventory build-up which was there, and that was taking time to kind of go down. While in the near term, because of the global disruption, it could still be impact. But I'm looking at more slightly longer term, right? Again, coming out from China. China is still a large part of the global chemical trade, right? Almost like 28% or so. India is around 5% or so. So whether India can take a larger share. I mean, it's been a talk about it for quite some time. But now probably there is more reality to it, right? Because this war between US and China is not going to end immediately. It is long drawn kind of an affair. So that probably poses some opportunity for Indian companies, right? Because you will be more competitive, right? Vis-a-vis this thing. So that can be a sector to watch out for. Okay. Even for that matter, even textiles, right? Again, a relative competitive position vis-a-vis say Vietnam, this thing, okay, where their tariffs could be much higher once they sit on the negotiating table. So these are opportunities, I think, which can emerge for
play out over a period.
Even in exports.
Okay, it's been a great conversation, Mahesh. Look forward to having you more often with us in the studio. Thank you. Newsroom.
Thank you.
Thank you. Well, we're off for 72 hours, but we'll be tracking all the news, the Trump tariffs. So keep it with CNBC TV18. We'll join you bright and early on Tuesday morning. Thank you for watching the show.
ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
If you look at our FY25 growth, it's been better than FY24 growth. However small the difference is, I believe FY26 will be better than FY25.
We'll decide when to do it in increments based on the environment.
So you're deferring wage hikes as of now?
I'm saying, I will not use the word defer, but yeah, yes, it will decide it when it happens.
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. China increases tariffs on US goods to 125%. Beijing says it will ignore any further tariff increases by the US government. Xi Jinping says there are no winners in a trade war and China is not afraid as he plans to visit Vietnam, Malaysia and Cambodia to strengthen trade ties. The sell-off resumes across global markets as the trade war escalates. European markets trade with sharp cuts. Wall Street futures point to a weak open. Stocks tumble across Japan and South Korea. But China and Hong Kong buck the trend thanks to domestic buying. The Sensex and the Nifty gained 2% as stocks react to the US pausing the 26% reciprocal tariffs on India by 90 days after a trading holiday yesterday. Both markets end the week in the red as tariff tensions keep investors on the edge.
पहले भी कई बार कहा है कि हम बंदूक रख के कभी नेगोशिएट नहीं करते.
Commerce Minister Piyush Goyal says India will not rush into free trade agreements and refuses to put a timeline. Adds India will not negotiate with a gun to its head. New Delhi is actively engaged in trade talks with the US, European Union and the UK. India is unlikely to offer any unilateral concessions to the US auto industry, say government sources. Officials are considering substantially lower tariffs on imported cars, which cost more than 40 lakh rupees. No final decision yet. Gold prices hit a record high again as investors rush towards safe haven assets. Oil prices fall over demand concerns. TCS sees some minor ramp downs and delays in decision-making by clients, but no major project cancellations so far due to Trump's tariffs. CEO Krithivasan says clients are in a wait-and-watch mode and there is no panic yet. Apple airlifts more than 1.5 million iPhones from India as it looks to avoid the US tariffs. Amazon CEO Andy Jassy expects sellers to pass on the increased tariff cost to customers. Hajmola candy under GST enforcement agencies. Lens, the DGGI is investigating whether Dabur's Hajmola candy should be classified as an Ayurvedic medicine, which is taxed at 12%, or as a candy that would attract a higher GST rate of 18%. Well, the top story this evening, the world's two largest economies are raising the stakes in an all-out trade war. Now, remember, just a day after the U.S. clarified that its tariffs on Chinese goods now stand at 145%, China hitting back. Beijing has now raised the tariff on U.S. goods to 125%. In a statement issued by the Chinese Commerce Ministry, China says it will not react to any further tariff increases by the U.S. Beijing said, and I quote, "Even if the U.S. continues to impose higher tariffs, it will no longer make economic sense and will
will become a joke in the history of the world economy, end of quote. The statement went on to say, and I quote again, with tariff rates at the current levels, there is no longer a market for US goods imported into China, end of quote. China's President Xi Jinping welcomed Spain's Prime Minister Pedro Sanchez to Beijing and held bilateral talks. Speaking after the meeting, Jinping said there are no winners in a trade war and China is not afraid, in what was his first reaction to the US tariffs. He's also called for closer trade relations between China and the EU. Jinping will visit neighboring Vietnam, Malaysia and Cambodia later this month to boost trade ties. All these nations have been hit with higher tariffs by the Trump administration. Now, the man who started the tariff war remains unfazed. US President Donald Trump called Xi Jinping a good friend and a smart guy as he expressed optimism about striking a trade deal with China. Take a look.
What happens with China? We would love to be able to work a deal. They've really taken advantage of our country for a long period of time. All we're doing is putting it back in shape. We're resetting the table. And I'm sure that we'll be able to get along very well. I have great respect for President Xi. He's been, in a true sense, he's been a friend of mine for a long period of time. And I think that we'll end up working out something that's very good for both countries.
China has decided to up the ante, raising the additional tariff to match President Trump's 145% tariff. So it's raising this additional tariff on all American goods that come here from 84% to 125%. Again, this would cover all American goods, and it would start on April 12th. Now, the other interesting part of this announcement is this sentence. Given that at the current tariff level, there's no market acceptance of U.S. imports, if the U.S. continues to impose tariffs on Chinese exports, China will ignore it. In other words, they're saying that they don't believe that Chinese people will actually buy American goods because they would be so expensive with these additional tariffs. So they said that if President Trump does continue to impose tariffs, then China is just going to ignore that. In fact, the Commerce Ministry also echoed that, saying today that China will ignore President Trump's, quote, numbers game. Now, while all of this is going on, China's President Xi Jinping has been courting all different sorts of countries. Today, he met with the Spanish Prime Minister, and he actually invited the EU through the Spanish Prime Minister to help China resist what he described as a unilateral bullying. In addition to that, we've been hearing more reports that the EU is going to be sending leaders here to plan a summit with Beijing, potentially in July. Now, in addition to that, President Xi is also looking towards Southeast Asia. In fact, the government here announced that President Xi is going to visit Cambodia, Malaysia, as well as Vietnam.
Eunice, many thanks for joining us. Important to point out, as Eunice was saying, that China trying to re-engage with the rest of the world. Remember, as the U.S. imposes tariffs not just on foes like China, but on friends, on its allies, there is a vacuum that's been created there in terms of global leadership, and China certainly hoping that it can move in and take some control. Stock markets resuming their sell-off today after temporarily cheering President Trump's 90-day pause on reciprocal tariffs on all nations except for China. Now, U.S. futures are pointing to another weak opening on Wall Street. It's been very, very volatile. European markets turned sharply lower after China retaliated with 125% tariffs on the U.S. Asian markets also saw a sell-off following yesterday's relief rally. But stocks in China and Hong Kong ended in the green, and that was thanks to domestic buying. Back home, the Sensex and the Nifty gained nearly 2% in trade as the Wall Street reacted to President Trump's 90-day pause on reciprocal tariffs after a trading holiday. Remember, we were not trading yesterday on account of Mahavir Jayanti. The U.S. has paused the 26% reciprocal tariffs, but the 10% increase in the baseline tariff remains in place. That's the Sensex, 1,300 point higher. Nifty up by about 429 points, and the bank Nifty and the mid-caps also saw a jump of between 900 and 700 points. But for the week, both the Sensex and the Nifty ending with minor losses as tariff tensions continue to keep investors on the edge. The Nifty Bank Index has lost 1% this week despite Friday's rally. Well, it has been a wild ride for markets across the world this week, and it's not just stocks. Commodities, bonds and forex market have also seen intense volatility. Prashant joins us now to wrap up the week that was for global markets. Prashant, what a week, but we're clearly nowhere close to being done yet.
Well, it's been nothing short of a wild, wild ride on the street across asset classes, across continents. Let's start with the big one, the S&P 500. The average daily swing on the S&P 500 over the last 4 sessions is 7.8%. I mean, that is absolutely a whiplash, and you can call it volatility, but really a whiplash. What about volatility itself? I'm talking about the CBOE Wix. If you take April 2nd as the starting day, which is the Liberation Day, the CBOE Wix from the 2nd to the 8th shot up 143% from low to high. To get to these kind of moves back in the past, you have to go to the dot-com bust, the Asian crisis, the GFC, or the Greek debt meltdown. Now to the bond market. Since Liberation Day on April 2nd, the 2-year yield is flat. The 10-year is up 26 basis points. Remember that Friday, the 10-year got to about 3.9%. The 30-year in this period is up 35 basis points. Basically, the long end is rising and is signaling higher risk premiums ahead. The dollar index itself, the dollar index has gone the other way. It slumped 4.5% since April 2nd, breaking below the critical 100 mark. I mean, the dollar is not behaving like it usually would in times of extreme stress, not like a safe haven. What about China? Now, China is central to this crisis, with Trump trying to correct perceived wrongs with respect to that country. Well, despite the 145% tariffs imposed by the US, the Shanghai Composite is down just 3% week on week. Do remember, though, that what is called the China national team is out there in full force trying to stabilize markets. Let's take a look at a country like South Korea. Big exposure to the US market in terms of trade. Inside of the same week, the Korean stock index hit both limit down and then limit up. It's a historic first for that market, fear and FOMO back to back. Now, a few commodities, gold to begin with. Between the 2nd of April and 8th, gold dropped 5% high to low as everything was liquidated, but then bounced 7.6% to where it is now, and it's hit a new all-time high. Oil got crushed. It's lost 16% high to low in just 6 days. Another casualty, of course, of the macro mayhem. Overall, commodities have had it tough. I looked at the Bloomberg Commodity Index. It's fallen 9% in the same stretch, a broad-based signal of economic concern. So as we sort of head into the 3-day weekend for some much-needed rest, I was thinking that maybe we need a name for this crisis. You know, we have the SVB, the Silicon Valley Bank, the GFC, the global financial crisis, the Greek debt crisis, pigs, Asian crisis, whatnot. So here is my suggestion. GTC, the global trade crisis. Back to you.
All right, the global trade crisis, GTC it is then. Prashant, many thanks for joining us. That's the story across the equity and commodity markets for the week. Now, equity mutual fund inflows fell by 14% in March. According to data released by the Association of Mutual Funds, net equity flows saw a dip of 40% from the peak of 42,000 crore rupees in October last year. Now, despite the sharp decline, SIP inflows have remained steady at nearly 26,000 crores. Gold ETF saw a net outflow of 77 crore rupees as investors booked profits after what has been a bumper rally. Prices of cryptocurrency surging, with the Bitcoin hovering near the $82,000 mark after President Trump reinforced his pro-crypto stance. Now, President Trump has signed a bill to overturn a rule from the Internal Revenue Service, that's the IRS, that classified decentralized cryptocurrency exchanges as brokers. The rule had aimed to crack down on crypto users who may be failing to pay their taxes, so relief there coming in for the crypto markets in the US. Jahangir Aziz, head of emerging market economics research at JP Morgan, expects a recession in the US in the second half of the year due to the ongoing tariff war. He also warned that if US and China trade comes to a halt, it would deliver a shock to the global trading system. Take a look.
So after the pause, we are still sticking with that, second half of the US will go into recession. That was a baseline prior to the pause. That remains a baseline. For global recession, we still don't have it in a baseline, but we have a 60% probability. We haven't changed that probability. US-China trade will virtually freeze. I mean, unless you critically need something, you are not going to participate in any transaction between US and China. Most of the trade that India does outside of US and China is also related to the supply chain that goes through US and China. So if the trade between US and China comes to a halt, this is a actual shock to the global trading system. So if global trade is under attack and global trade actually stumbles in the next 2, 3, 4 months before, let's say, we have a negotiated compromise, then I do not think that emerging markets growth gets spared.
Jahangir Aziz there of JP Morgan. IT giant TCS reporting its Q4 earnings yesterday. It did miss street estimates on both revenue, profit and margins. When asked about the impact of tariffs on the company, CEO K. Krithivasan said the company was seeing some minor delays in decision-making by clients, but no major project cancellations so far on account of the global uncertainty. Krithi added that customers are in a wait-and-watch mode, but there is no panic yet. Take a look.
Many of our customers are also in a wait and watch mode in terms of what is the end game going to be. But good thing is whatever we are seeing so far, as much as a rhetoric, we have not seen our customers panic. Like there are maybe some programs what we thought that they would kick off, but some delays in decision making. But we have not seen any major cancellations or no major project ramp downs. Like there are few, but no major. So I don't think there is any major negative reaction.
Well, that's TCS. Commerce Minister Piyush Goyal has said that while India has been talking to the US, UK and the European Union for standalone FTAs, that's free trade agreements, the country will not be rushed into an agreement. Speaking at an event today, Goyal said that India will not negotiate with a gun to its head. Abhimanyu joins us now with more details. Abhimanyu, where are things currently in all of these ongoing negotiations on these three FTAs? And, a lot of speculation on advancing the timeline and so on and so forth. What are you hearing?
As per the current estimates, India had exported total goods and services worth $820 billion in the previous financial year, which was a 6% year-on-year increase from the previous FY. India is intending to increase exports further this year. However, several challenges do remain with respect to imposition of tariffs and reciprocal tariffs, also uncertainty in global demand and geopolitical challenges which continue to persist. So India, of course, is exploring newer geographies. What the Commerce and Industry Minister had indicated that though a timeline is usually ascribed to sign FTAs, but an FTA cannot be signed forcibly to adhere to a timeline while forsaking national interests. So India continues to remain engaged in trade negotiations with several geographies, including the United States, with the EU, UK and also several Latin American countries. India is also trying to increase the overall mix of its exports by including more processed goods, more agricultural goods, and more importantly is trying to hedge the risks emanating from a possible fall in demand in several developed economies by possibly looking at places in Latin America and Africa to increase its exports to in order to hedge the risks emanating from a fall in demand from several OECD countries.
हमने पहले भी कई बार कहा है कि हम बंदूक रख के कभी नेगोशिएट नहीं करते. समय की पाबंदियां अच्छी रहती हैं कि वो प्रोत्साहित करती हैं कि तेजी से बात हो, लेकिन जब तक देशहित और जनहित को हम सुरक्षित ना रख सके तब तक कभी भी जल्दबाजी करना अच्छा नहीं है.
That's the Commerce Minister. And staying with tariffs, sources tell CNBC-TV18 that India is unlikely to offer unilateral tariff concessions to the US on automobiles. However, the government could lower tariffs on imports of cars worth 40 lakh rupees. And Anubhav Parikshit is standing by with more on the government's plan. Parikshit.
Well, India's tariffs on the automobile industry have taken center stage in trade negotiations with US, UK and EU. And for many nations, when it comes to auto tariffs, it's really a make or break situation when it comes to a deal. Sources say, despite the pressure from the US government, India is unlikely to offer any unilateral tariff concessions to the United States in the automobile sector, where the highest tariffs on import of fully built cars is around 100%. The Indian government's focus right now is to reach an early understanding on the bilateral trade deal with the US and get a reprieve from America's 25% tariff on the auto tariffs. But sources say the government is considering lowering tariffs substantially on imported cars, and there is a strong intent to do so as well. The government is considering lowering tariffs on import of premium cars from US, which cost above 40 lakhs with a fixed quota per annum. The government is right now exploring different scenarios to offer tariff concessions on imported cars, but the final decision is yet to be taken. Tesla's India entry would also be contingent on India-EU FTA, as cars would be imported from Berlin and not from the United States. And Tesla would wait and see the kind of tariff arrangement India and the EU reach as well. India would have to offer the same tariff cuts in the automobile sector to US, UK and the European Union, as all three have sought auto tariff cuts. Even response to India's scheme for manufacturing electric cars is likely to depend on tariff cuts offered to US, EU and the UK. While the scheme offers 15% concession import duty over the 100% currently imposed, companies have to commit to making in India with a $500 million investment. Guidelines for the scheme are yet to be issued, and all car makers would first like to see India's tariff cuts before applying for such a policy.
Well, Parikshit, many thanks for joining us. Now, former White House official Lisa Curtis believes the Trump administration paused the reciprocal tariffs because the strategy backfired. Curtis was part of the first Trump administration, and she spoke with Parikshit on the tariff blitz and the mood inside the White House. Listen it.
It hasn't made a lot of sense to people why he would do these broad tariffs on so many nations, including allies and partners. And I think it did backfire, and that's why he has stepped back and he's put on this 90-day moratorium. Elon Musk was very clear that he disagreed with this strategy, and he wanted to see the U.S. negotiating. And, you know, I think it's good that he came out and gave another perspective to this Peter Navarro pro-tariff perspective. So, you know, in that case, I think some of the infighting within the Trump administration played out in a way that helped the United States in the end, because it did, you know, finally lead President Trump to back off.
Lisa Curtis, who was a member of the White House administration under the first Trump innings. Tech giant Apple has airlifted 600 tons or 1.5 million iPhones from India in a bid to beat the new tariffs, according to a Reuters report. Apple shipped about 1.5 million iPhones in cargo weighing roughly 600 tons. The tech giant has been ramping up production in India, which has far lower tariffs compared to China, but Apple continues to make most of its iPhones in China and has not announced any plans to scale back its plans. Amazon CEO Andy Jassy said that its third-party sellers will likely pass on the cost of increased tariffs to consumers. In an exclusive conversation with CNBC, Jassy also added that they have not seen a meaningful shift in consumer behavior yet. Take a look.
I'm guessing that that sellers will pass that cost on fully. Yeah, I think they'll try, and I understand why. I mean, depending on which country you're in, you don't have 50% extra margin that you can play with. So I think they'll try and pass the cost on. And you know, as I said, it's so early right now, but we haven't seen any change in consumer behavior in a meaningful way yet.
Andy Jassy there for Amazon, and as he's rightly pointing out, a bit premature at this point in time to talk about any particular trends on account of the tariffs. But up next, Hajmola candy under the GST Enforcement Agency's lens. We'll tell you why when we return.
Or many of our customers are also in a wait and watch mode in terms of what is the end game going to be. But good thing is, whatever we are seeing so far, as much as the rhetoric, we have not seen our customers panic. Like there are maybe some programs what we thought that they would kick off, but some delays in decision making. But we have not seen any major cancellations or no major project ramp downs. Like there are few, but no major. So I don't think there is any major negative reaction so far.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights and
The big macro data of the month, India's industrial output grew by 2.9% for the month of February. That's lower than the 5.2% growth in January. Manufacturing and the mining sector have seen a bigger slowdown compared to other sectors. So that's the latest there as far as IIP is concerned. Shifting focus to sovereign gold bonds, the government has covered almost 50% of the underlying liability for gold held under the scheme at the current market price. Sources tell us that the Gold Reserve Fund has sufficient balance to manage redemptions for the next 3 to 4 years. Sapna standing by to take us through the details. Sapna.
Absolutely. What we're getting to hear as a clarification from government sources is the fact that around for the next 4 to 5 years, the Gold Reserve Fund, carries or has sufficient monies to take care of any redemptions that will be coming through under the sovereign gold bonds. Having said that, the numbers that have been put out are absolutely bang on. Basically, 130 odd tons worth of gold is being held under the sovereign gold bonds, and sources are claiming that around 60 to 65 odd tons worth of sovereign gold bonds carrying that much of underlying gold, are up for redemptions over the next 4 to 5 years, and that is what the government has basically covered. They are fully covered is what sources are claiming. So that's one aspect. The second aspect, however, we need to keep in mind is that all of this is, of course, happening at the prevailing market price. So, sources are indicating this at what the current gold rate is. We really don't know where gold is going to settle over the next 4 to 5 odd years. And the way the rally has happened, that's something that we need to keep in mind. Last but not the least, look at the amount of funds that have actually gone up in the Gold Reserve Fund from the government side. So in FY24 actuals, it was just around 3,500 odd crores. That number in the last financial year has jumped to 28,000 crores. So that basically indicates that sovereign gold bond story is not as simple as it appears to be. There is a lot of money that the government has kept aside for the same. Since these are sovereign bonds, there cannot be any question of any kind of a default. As of now, as per sources, they are covered for next 4 to 5 years worth of redemptions, but we'll have to keep a watch on how that prevailing market price of gold behaves.
All right, many thanks. On to CNBC-TV18 exclusive. Hajmola candy is under the GST Enforcement Agency's lens. Now, here's why. Sources say that the DGGI is investigating whether Dabur's Hajmola candy should be classified as an Ayurvedic medicine, which is taxed at 12%, or as a candy that would attract a higher GST rate of 18%. Timsy standing by with more. Timsy, medicine or candy?
Well, Dabur India and DGGI are at loggerheads. What we are given to understand from sources is that Dabur's Hajmola candy is currently under DGGI scanner. The Directorate General of GST Intelligence is investigating the classification of Hajmola candy under the GST regime. To be precise, DGGI's Coimbatore zone is currently investigating whether Hajmola candy should be treated as an Ayurvedic medicine, attracting 12% GST, or as a candy under 18% GST. Dabur, during the investigations, claims to DGGI that Hajmola candy is an Ayurvedic medicine and not a regular sugar-boiled candy. Meanwhile, email queries sent to Dabur India remains unanswered, and Dabur, also important to note here that Dabur in the pre-GST regime faced a similar challenge through Supreme Court, and it had got clarity in the favor of the company, stating that Hajmola candy is an Ayurvedic medicine. Also important here that Dabur is already facing a tax demand. Dabur on 1st of April disclosed that it has received an income tax reassessment order demanding 110.33 crores for financial year 17-18. The Income Tax Authority alleges that Dabur made incorrect claims for tax deduction related to in-house research and development under Section 14A of the Income Tax Act. Meanwhile, Dabur said that it plans to challenge the demand. So let's see what happens finally, whether government actually goes back to the council to change the classification of Hajmola candy, or the previous Supreme Court ruling comes in the favor of Dabur when it comes to this particular DGGI case. Something that we'll have to wait and watch for.
All right, Timsy, many thanks for joining us. Well, with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. Stay tuned. We're back in a moment with more.
From top Indian honchos before putting your money on the line. How about making every trading day profitable with strategies from the market masters, macro pundits.
अमित जी, मोदी जी ने कहा कि उस वक्त के जो नेता थे उन्होंने राष्ट्र हित को के ऊपर सत्ता को रखा। तो मैं ये जानना चाहता हूं आपसे कि मोदी जी किन लोगों के बारे में बात कर रहे हैं, कट्टरपंथियों का साथ किन नेताओं ने लिया और ऐसा क्यों किया? और पार्टीशन के लिए वो कहते हैं कि जो है मुसलमान नहीं चाहते थे कि पार्टीशन हो, गरीब मुसलमान नहीं चाहते थे ऐसा हो।
नहीं, देखिए, ये तो सब जानते हैं कि जब मुस्लिम लीग चुनाव में खड़ा हुआ और 2 राष्ट्र के सिद्धांत के आधार पर खड़ा हुआ, पार्टीशन के पहले जो अंतिम चुनाव हुए स्थानीय विधानसभाओं के, उसमें पाकिस्तान के हिस्से में भी मुस्लिम लीग का पराजय हुआ था। मुस्लिम जनता सच अर्थ में नहीं चाहती थी कि इस देश के टुकड़े हो, और ये बात मोदी जी ने ठीक ही कही है कि उस वक्त के कांग्रेस के नेता ही राष्ट्र के विभाजन के लिए जिम्मेदार हैं। उनकी तुष्टीकरण की नीति ही राष्ट्र के विभाजन के लिए जिम्मेदार है। और आज मैं आपके कार्यक्रम के माध्यम से मैं देश के युवाओं को विशेषकर कहना चाहता हूं, बाकी कुछ भी सहन करना, मगर तुष्टीकरण ऐसा जहरीला नासूर है जिसको देश से हमेशा के लिए युवा पीढ़ी ने उखाड़ कर फेंक देना चाहिए। जो तुष्टीकरण की राजनीति करते हैं वो देश हितों के साथ समाधान करते हैं, वो देश हित की नीतियों के साथ वोट बैंक के कारण कॉम्प्रोमाइज करते हैं और देश के अंदर ही एक नया देश बनाने का बीज बोने का काम करते हैं। मगर मोदी जी थोड़े चिंतित दिखते हैं। मैं भी कहना चाहता हूं युवाओं को कि समय बहुत निकल गया है। मोदी जी ने ही 10 साल में इस देश को जातिवाद, परिवारवाद और तुष्टीकरण से मुक्त कराकर विकास की राजनीति की ओर ले जाने का काम किया है। हमारी युवा पीढ़ी ने इसको आगे बढ़ाना हो। दल कोई भी तय करिए, दल के अंदर युवाओं को समान मौके होने चाहिए। दल की नीतियां दल के हित में नहीं बननी चाहिए, देश के हित में बननी चाहिए। और दल जातिवाद, प्रांतवाद, भाषावाद से ऊपर उठकर देश की चिंता करने वाला दल होना चाहिए। दल कोई भी चुनिए, वोट उसी को दीजिए जो दल जातिवाद, तुष्टीकरण और परिवारवाद से मुक्त हो। और यही हमारे देश के विकास का, हमारे देश के लोकतंत्र की रक्षा का सच्चा रास्ता है।
कांग्रेस में उस जमाने में बहुत बड़े बड़े नेता हुए, आपने मेरे सवाल का जवाब नहीं दिया। किस नेता के बारे में बात हो रही थी? वो कौन से नेता थे जो ये कर रहे थे?
नहीं, ऐसे सिंगल आउट करना तो बहुत तकलीफ होगी, मगर कांग्रेस ने बाद में प्रधानमंत्री नेहरू जी को बनाया था,
तो इशारा उन्हीं की तरफ है।
इशारे का सवाल नहीं है। प्रधानमंत्री तो अंततोगत वही बनता है जो फैसले करता है। हमारे सर्वोच्च नेता मोदी जी है तो मोदी जी प्रधानमंत्री बनेंगे। अब कांग्रेस ने उस वक्त नेहरू जी को बनाया था, परंतु मैं इतना सुनिश्चित रूप से कहता हूं, आज देश के युवाओं को खड़ा कर दीजिए, किसी को भी उठाकर मंच पर लाकर पूछ लीजिए, उस वक्त आप विभाजन लेते क्या? विभाजन किया नहीं गया है। कांग्रेस पार्टी के उस वक्त के नेताओं ने विभाजन को स्वीकार किया है। और ये मैं मानता हूं, इससे बड़ा देश, इससे समझौता कोई हो नहीं सकता था।
अमित जी, दूसरे सवाल की ओर चलते हैं। आप कहते हैं कि वक्फ बिल लाकर आप लोगों ने मुसलमानों पर अन्याय खत्म कर दिया, और मुसलमान समुदाय ये कहता है कि उससे बड़ा कोई अन्याय ही नहीं है।
देखिए राहुल जी, आप पूरे समुदाय के नाम से इतना बड़ा लोडेड स्टेटमेंट मत करिए, आपको तकलीफ आएगा। मुसलमान समुदाय ऐसा नहीं चाहता है उनके साथ अन्याय है, कुछ गिने चुने नेता चाहते हैं। मैं आपको 2-4 सरल सवाल पूछता हूं
जी।
अभी का जो वक्फ का कानून है, इसके अंदर महिलाओं के लिए कोई कंपलसरी प्रावधान है क्या? आना चाहिए या नहीं आना चाहिए? इस देश की मुस्लिम महिलाओं को वक्फ बोर्ड और वक्फ काउंसिल में हिस्सा मिलना चाहिए या नहीं मिलना चाहिए? 80% मुस्लिम समाज पसमंदाओं का है, जो गरीब है, एक प्रकार से ओबीसी है, उनको वक्फ में प्रतिनिधित्व मिलना चाहिए या नहीं मिलना चाहिए? जी। सिया, आगा खानी, दाऊदी वोरा, मोहम्मदिया, अहमदिया, ये सारे मुसलमानों का कोई प्रतिनिधित्व नहीं है। वो भी मुसलमान है, क्यों नहीं मिलना चाहिए भाई? और कांग्रेस पार्टी तो माइनॉरिटी की बात करती है, तो माइनॉरिटी विद इन माइनॉरिटी को हम रखते हैं तो विरोध करते हैं। ये जो बिल आया है, वो बिल मुस्लिम समाज के हरेक अंग का प्रतिनिधित्व करने वाला बिल है। दूसरा, आज मैं, आपने बहस देखी ही होगी, कांग्रेस के नेता कहते थे कि क्या गलत हुआ है। मैं आज देश की जनता को टीवी 18 के कार्यक्रम के माध्यम से बताना चाहता हूं कि आजादी से लेकर 2013 तक, आजादी से लेकर 2013 तक, इस्लाम जब से भारत में आया तब से जितनी वक्फ में भूमि वक्फ घोषित की गई, वो 18 लाख एकड़ थी, जिसमें मुगलों के पहले से भी जो वक्फ हुए हैं वो सारे आ गए, क्योंकि दिल्ली में तो वक्फ सल्तनत काल में हो गया था। और 2013 का कानून आने के बाद 18 लाख एकड़ में 21 लाख एकड़ भूमि और बढ़ गई। तो यही बताता है कि 2013 के कानून में आपने ऐसी व्यवस्था करी जो न्यायपूर्ण नहीं थी। किसी की भी भूमि को आपने वक्फ घोषित कर दिया, चाहे भूमि हिंदू की थी, पूरे के पूरे गांव वक्फ घोषित हो गए जिसमें लोग रह रहे हैं। कहीं मंदिर, 1500 साल पुराने मंदिर वक्फ घोषित हो गए जहां पूजन अर्चन होता है। इस तरह से कैसे चल सकता है? और ये 2013 के पहले नहीं था। 2014 के चुनाव के एंड मौके पर कांग्रेस पार्टी ने अपनी वोट बैंक सुनिश्चित करने के लिए काम किया था। और मैं आपको कहना चाहता हूं, सारे मुसलमान भाई भी मुझे सुनते होंगे, ये 39 लाख एकड़ भूमि हुई है। इसमें से आर्गुमेंट करते, कुछ तो कब्रिस्तान है, कुछ तो मस्जिद है, कुछ तो दरगाह है, ये सब मिल मिलाकर 5% से ज्यादा नहीं है। 39 लाख एकड़ की भूमि से राजस्व क्या मिलता है, आय क्या मिलती है? 123 करोड़ रुपया। रेलवे और सेना से बड़ी भूमि है भाई ये। तो ये आय कहां जा रही है? जो बैठ गए हैं वो भ्रष्टाचार करते हैं, क्योंकि ऑडिट की व्यवस्था ठीक नहीं है। हमने कानून के माध्यम से ऑडिट की व्यवस्था ठीक करी है। कानून के माध्यम से मुस्लिम समाज के हर तबके को इसके अंदर प्रतिनिधित्व दिया है। और उनका एक बहुत बड़ा आर्गुमेंट है कि हमारे धार्मिक मामलों में दखल देना। राहुल भाई, इससे बड़ा झूठ कोई हो नहीं सकता। वक्फ जो है वो वाकिफ बनाता है और मुतव्विल इसका मैनेजमेंट करता है। वक्फ बाकी सारे धर्मों के हिसाब से देखे तो ये ट्रस्ट है। ट्रस्ट तो उसी का होता है जो वो बनाता है। वक्फ उसी का होता है जो बनाते। इसमें कोई नॉन मुस्लिम रखने का प्रोविजन हमने नहीं किया है।
पर 2 मेंबर वो तो आपने डाले हैं ना?
वो वक्फ बोर्ड में डाले हैं और वक्फ काउंसिल में डाले।
वो कहते हैं टेम्पल ट्रस्ट में।
सुनो ना भाई, टेम्पल ट्रस्ट है ना जी। टेम्पल ट्रस्ट में नहीं रख सकते, वक्फ में भी नहीं रख सकते। पर चैरिटी कमिश्नर हिंदू होगा, ये कंपलसरी है क्या? वो सिख भी हो सकता है, मुसलमान भी हो सकता है, क्रिश्चियन भी हो सकता है। टेम्पल ट्रस्ट में नहीं रखना चाहिए, मैं भी मानता हूं। वक्फ में भी नहीं रख रहे हैं। जैसे ट्रस्ट होता है, इसका मैनेजमेंट अगर रिलीजियस ट्रस्ट है तो हिंदुओं के हाथ में होना चाहिए। वक्फ अगर अल्लाह के नाम पर दान दी गई संपत्ति है तो मुस्लिमों के हाथ में होना चाहिए। मगर ट्रस्ट चैरिटी के कानून के हिसाब से बरोबर चल रहा है नहीं चल रहा है, इसकी देखरेख ये तो व्यवस्थात्मक काम है, इसमें धर्म कहां से आता है? फिर भी हमने तो 22 में 2 रखे हैं भाई, 14 में 2 रखे हैं। और एक बात मुझे बताओ, जो मैंने पहले कहा पूरे के गांव कर दिए वक्फ, कोई मंदिर भी कर दिए, तो इस संपत्ति का डिस्प्यूट नॉन हिंदू का भी है या नहीं है?
जी
हुआ या नहीं हुआ? जी। तो वो पार्टी है या नहीं है? 2 हिंदू इसका पक्ष न्यूट्रलिटी से देखेंगे तो क्या बिगड़ जाएगा? क्या इस देश में हिंदुओं को इतना भी अधिकार नहीं है भाई? ये बिल्कुल खोखली बात है जो कांग्रेस ने फिर से उनके समाप्त होते हुए अस्तित्व को आधार देने के लिए अपीसमेंट की पॉलिसी। और अगर इतना ही था तो प्रियंका जी तो वोट डालने भी नहीं आई, राहुल जी ने भाषण भी नहीं कराया। अगर आपकी पार्टी की प्रमुख पॉलिसी है तो पार्लियामेंट से बड़ा मंच क्या हो सकता है? लोकतंत्र में सबसे बड़ी पंचायत है। राहुल जी वहां बोले ही नहीं। इनकी पार्टी को 50% समय दिया था हमने, 50%, और कहते हमें बोलने नहीं देते। भाई आपकी पार्टी के वक्ता तो आप तय करोगे, आप बोले ही नहीं। अब हम क्या कर सकते हैं? अब चिल्लाएंगे रोड पर, हमें बोलने नहीं देते, हमें बोलने देते थे। उनकी पार्टी को जो टाइम दिया है उसमें पूरा टाइम राहुल गांधी बोल सकते थे। ना उनकी पार्टी चाहती है ना वो चाहती है।
ये ऑपोजिशन पार्टीज ये भी कह रही हैं कि ये जो नैरेटिव आप बना रहे हैं, आप भी बहुत दमखम से बोले लोकसभा में, कल प्रधानमंत्री जी ने भी शानदार स्पीच दी यहाँ पे। वो कह रहे हैं ये पासमंदा मुसलमानों और महिलाओं को, गरीब मुसलमानों को अपनी तरफ वो करने का एक तरीका है, एक वोट बैंक को उनका वो करना। पर मेरा क्वेश्चन थोड़ा लार्जर है। क्या आपको लगता है कि मुसलमान भारतीय जनता पार्टी के संग कभी आएगा? क्या कोई ये ट्रस्ट बिल्ड हो पाएगा आने वाले समय में, जिससे कि आपको उधर से भी कुछ वोट मिलेंगे?
देखो राहुल जी हर काम वोट के लिए नहीं करते हैं। अगर हर काम वोट के लिए होता तो हमने इतने बड़े बड़े फैसले किए, वो न कर पाते। जी। कुछ काम देश के अंदर गलत पॉलिसियों को निकालने के लिए भी करने पड़ते हैं, और वो ही कर सकते हैं जो देश का सोचते हैं। और अगर ये लोग ऐसा सोचते हैं कि हमारा ऐसा करने का उद्देश्य है कि मुस्लिम बहनें हमें वोट दे दे, पसमंदा मुसलमान हमें वोट दे दे, सिया, बोहरा, आगा खानी, मोहम्मदिया, ये सारे हमें वोट दे दे, तो आप क्यों नाराज कर रहे हो भाई? आप भी ले लो, स्वीकार कर लो इसको। वो करने की खातिर आर्गुमेंट करते हैं। उनको भी मालूम है वोट का मामला नहीं है, व्यवस्थापन का मामला है।
अमित जी, जब सीए का बिल पारित हुआ था तब उस वक्त थोड़ा हिंसा का माहौल बना था देश में। कुछ आप लोगों को कोई इस बात की चिंता है कि इस बार भी
बहुत
कुछ हिंसा
अच्छा किया आप सीए निकाल दिया। मैं चाहता था कोई पूछे, कोई पूछता नहीं था, आपने पूछ लिया, अच्छा हो गया। भाई पूरे देश के सामने ढिंढोरा पिटा राहुल गांधी एंड कंपनी ने कि सीए से मुसलमानों की नागरिकता चली जाएगी। अब सीए पूर्णतः लागू होने से 2 साल हो गए। मैं राहुल गांधी को सार्वजनिक चुनौती देता हूं, एक भी मुसलमान की अगर नागरिकता गई है तो हमें बताए। पूरे देश को कांग्रेस पार्टी ने गुमराह किया, इनके इंडी अलायंस वालों ने गुमराह किया। मुसलमानों की नागरिकता चली जाएगी, नागरिकता चली जाएगी, नागरिकता चली जाएगी, और देश में हिंसा करे। यही जिम्मेदार है हिंसा के लिए।
तो इस बार नहीं लगता आपको कि ऐसा कोई डर?
कुछ तो समझे होंगे।
अमित जी, थोड़ा दूसरे सब्जेक्ट डिलिमिटेशन की ओर बढ़ते हैं। ये मुद्दा भी बहुत गर्म रहा है पिछले कुछ महीनों में। तो डिलिमिटेशन से क्या आप आज ये आश्वासन साउथ सदर्न स्टेट्स को दे सकते हैं कि डिलिमिटेशन से उनकी सीटों पे कोई कमी नहीं आएगी प्रोपोर्शनेटली?
देखो, मेरे कोरे आश्वासन से शायद साउथ के हमारे भारतीय है वो नहीं समझ पाएंगे। मैं थोड़ा कहना चाहता हूं।
जरूर।
हिमाचल में कांग्रेस की सरकार है
जी,
वहां डिलिमिटेशन के लिए कुछ हो रहा है? जरा बोलो ना भाई।
जी जी,
नहीं हो रहा है। कई जगह इंडिया अलायंस की सरकार है, वहां डिलिमिटेशन के लिए कुछ हो रहा है?
नहीं।
सिर्फ तमिलनाडु में क्यों हो रहा है?
चुनाव आ रहा है।
चुनाव है। अभी डिलिमिटेशन सरकार ने घोषित किया है क्या?
जी नहीं।
नहीं। एक सेकंड।
जी जी।
डिलिमिटेशन एक्ट हमने बनाया है क्या? नहीं बना।
जी नहीं।
डिलिमिटेशन कमीशन में किसी सुप्रीम कोर्ट के जज को अपॉइंट किया है क्या? नहीं किया है। तो आज है क्या? क्योंकि रैंपड करप्शन कर कर तमिलनाडु की जनता आपके खिलाफ हो गई है, इसको ढकने के लिए ये मुद्दा आज उठा रहे हो। आज बुरहत क्या है डिलिमिटेशन लाने का? मगर आपने कहा है, मैं स्पष्टता कर ही देता हूं, दक्षिण के किसी भी राज्य ने, किसी भी मतदाता ने, किसी भी पॉलिटिकल पार्टी ने चिंता करने की जरूरत नहीं है। भारतीय जनता पार्टी का वादा है कि किसी को अन्याय नहीं होगा, आपकी प्रोरेटा सीटें बनी रहेंगी।
तो मतलब अगर 7.5 सीटें होंगी तो प्रोरेटा के हिसाब से उनकी जो बनती है 180 वोट।
मैंने कह ही दिया भैया, पहले भी कह चुका हूं, मगर ये सुनना ही नहीं चाहते
जी।
क्योंकि ये शोर शराबा बंद कर देते हैं तो उनको करप्शन का जवाब देना पड़ेगा, उनको परिवारवाद का जवाब देना पड़ेगा। चुनाव मुद्दे पर वो चाहते नहीं।
तो जैसे 750 सीटें अगर हो गई तो उत्तर प्रदेश की सीटें भी बढ़ के 110 120 हो जाएंगी, तो ये बहुत बड़ा नंबर है।
राहुल जी, ऐसा है कि डिलिमिटेशन कमीशन का हर बार एक्ट बनाना पड़ता है। अभी तक की एक्ट का आयुष्य 25 तक था। अब नया एक्ट आएगा तो वो भी समझते हैं, हम भी समझते हैं, पार्लियामेंट में आएगा। छिप छिपा कर नहीं हो सकता। इसके पहले ऑल पार्टी कंसल्टेशन होगा, एक्ट आएगा, शायद समिति को भी जाएगा या डायरेक्ट भी होगा, तो चर्चा होगी ना
जी।
अभी कुछ आया ही नहीं और आप हो अल्लाह कर रहे हो क्योंकि आपको चुनाव में मुद्दा चाहिए।
मैं ये कह रहा था कि अगर उत्तर प्रदेश में इतनी ज्यादा सीटें हों तो जैसे मायावती जी एक समय कहा करती थी कि उस प्रदेश का विभाजन होना चाहिए, 4 टुकड़ों में उसको बांटना चाहिए।
देखिए, वो वोट बैंक के लिए कर रहे हो, आप टीआरपी के लिए कर रहे हो। अभी भैया आया ही नहीं है डिलिमिटेशन। काहे को डिलिमिटेशन करते हैं?
डिलिमिटेशन अमित जी तभी हो सकता है जब नया सेंसस आए। तो ये कैसे होगा, कब होगा? और इसमें कास्ट सेंसस की जो बात चल रही है, जो ऑपोजिशन की भी डिमांड है, उस पर आपका क्या विचार है?
गट डिलिमिटेशन भी 2001 के जनगणना के आधार पर हुआ था। ऐसा जरूरी नहीं है, परंतु डिलिमिटेशन जब भी करना पड़ेगा, किस प्रकार से करेंगे, किस जनगणना के आधार पर करेंगे और किस प्रकार से करेंगे, ये सारा एक कानून बनकर संसद में पारित होता है, तब जाकर डिलिमिटेशन की प्रक्रिया शुरू होती है। क्योंकि वो हमारे लोकतंत्र का मूल आधार है। जो लोकतंत्र को सत्ता तय करने का कॉलेजियम है, हमारी संसद है, हमारी विधायिका है, वो वहीं से चुनकर आती है। तो उनकी कॉन्स्टिट्यूएंसी का डिजाइन करना, इससे बड़ा महत्वपूर्ण कार्य लोकतंत्र में और कोई हो नहीं सकता। और पार्लियामेंट के कानून से, और पार्लियामेंट के कानून को राष्ट्रपति महोदय के अनुमोदन के बाद ही होता है और उसमें कोई पार्टी इन्वॉल्व नहीं होती है। इसमें सुप्रीम कोर्ट के एक जज इसकी अध्यक्षता करते हैं।
अमित जी, एक और बड़ा मुद्दा आप लोगों का रहा है वन नेशन वन पोल। काफी चर्चा भी हुई है, उसमें आपने काम बहुत किया है। ये कैसे कर पाएंगे आप? इसको पारित करने के लिए आपको 2/3 बहुमत की जरूरत है, तो और कौन सी पार्टियां जुड़ सकती हैं आपसे? इस मुद्दे को कैसे, इस कार्यकाल में इसमें हम कुछ देखेंगे क्या?
देखिए भाई, आप तो ऐसा सवाल कर रहे हो, गांधी जी ने देश को आजाद करने की मांग की तो वो कोई पूछ लेगा उनको, कैसे करोगे भाई, अंग्रेजों का राज है। ऐसा है भाई, हम हमारा मुद्दा लेकर जनता के सामने गए हैं, हम जनता के बीच में कार्यक्रम कर कर भी जा रहे हैं। 2-3 साल होते होते माहौल ऐसा होगा कि कोई पार्टी वन नेशन वन इलेक्शन का विरोध नहीं कर पाएगी, क्योंकि ये देश के भले में है। कोई मुझे बताए कि बार बार चुनाव कर खर्च कर हम क्या करना चाहते हैं इस देश में। एक साथ चुनाव क्यों नहीं होना चाहिए, कारण क्या है? ये कहते हैं संविधान सम्मत नहीं, कोई आर्गुमेंट नहीं करता, एक वाक्य लिख कर दे दिया है, बोले रखते हैं संविधान सम्मत नहीं। कैसे संविधान सम्मत नहीं? और नहीं है तो आपने 3 चुनाव कैसे कराए? जी, कांग्रेस पार्टी ने जब तक सरकारें तोड़ने की शुरुआत नहीं करी, उनकी सरकारें आती थी, तब तक तो सभी चुनाव एक साथ करे, और 2-3 राज्य 4 राज्य नए बन गए, इसके चुनाव आगे पीछे हो गए। तो वो एक साथ करने के लिए असेंबलियां डिसॉल्व कर दी कांग्रेस ने। वही कांग्रेस पार्टी ये कह रही है कि लोकतंत्र के विरोधी है। 7 राज्यों के असेंबलियां डिसॉल्व कर वन नेशन वन इलेक्शन कराया था, और आज वही विरोध कर रहे हैं। जनता वो मानते हैं, ऐसे नहीं सोचती है। जनता के अपने के सोचने के तरीके, कुछ नेता ऐसा मानते हैं कि मैंने कह दिया तो बस जनता मान गई, और फिर परिणाम आते हैं तो कहते हैं कि भाई ईवीएम में गड़बड़ हो गया। एक्चुअल में भैया आप जो बोलते हो वो जनता मानती नहीं है।
अभी तो कह रहे हैं महाराष्ट्र का इलेक्शन भी जो है उसको भी चोरी कर लिया आप लोगों ने।
अगर हम जीत जाते तो क्या, वो जीत जाते तो क्या कहते? हम तो वो है 10 साल, हमारे 10 साल में इनकी तेलंगाना सरकार बनी, चेन्नई में सरकार बनी, बंगाल में बनी, हिमाचल में बनी, वो कैसे बनी? फिर तो
कांग्रेस की बात हो रही है तो एक सवाल यहां पे आपसे पूछना चाहूंगा। ये एआईसीसी का सेशन चल रहा है, उसमें जो खबरें हम पढ़ रहे हैं, देख रहे हैं, जो वहां से निकल के आ रही है, तो उसमें लीडर्स का मानना है 2 तरीके के थॉट्स हैं। एक तो ये है कि मोदी को गाली दो, मोदी के खिलाफ भाषण देते रहो, मोदी के पीछे पड़े रहो, और दूसरा कुछ नेता ये मानते हैं कि आप अपनी ऑल्टरनेट सोच, अपना विजन भी सामने लोगों के रखें। आप क्या कहना चाहेंगे इस पर राहुल?
देखिए, इसका मतलब है कुछ तो समझ वाले लोग अभी भी वहां बचे हैं क्योंकि इतने सालों का अनुभव है, 2001 से लेकर 2025 तक का, जितनी बार मोदी जी को गाली दी, इनकी माता जी ने भी दे दी, इन्होंने भी दे दी, जितनी बार गाली दी मोदी जी और मजबूत होकर बाहर आए हैं। उनको मालूम नहीं हमारे दल का चुनाव चिन्ह कमल है, जो कीचड़ में ही खिलता है, ज्यादा खिलता है। तो हम तो गालियों के कीचड़ में ही खिलकर बाहर आते हैं, वो उनको मालूम नहीं।
अमित जी, आपको काफी दिनों बाद इस बार इंटरव्यू कर रहा हूं। 2024 के चुनाव के समय आपसे बात हुई थी, एक सवाल उस पर भी। 2024 में आप लोगों को उम्मीद थी, नारा था अब की बार 400 पार, सीटें आई भारतीय जनता पार्टी की 240। कहां गड़बड़ हो गई, कहां रणनीति में कमी रह गई?
देखिए राहुल जी, हम भी मानते हैं कि हमारी सीटें कम हुई, वो तो आंकड़ा है जी। मगर ये जो कह रहे हैं कि भाई ये तो ये कह रहे थे ये आए, ये कह रहे थे ये आए, मुझे बताओ, कोई खिलाड़ी मैच खेलने जाएगा, सामने टीम कैसी भी हो, पिच कैसी भी हो, वो क्या कहेगा? नहीं हम आज हार जाएंगे, ऐसा कहेगा क्या? अरे भाई हमारा 300 था तो हमने 400 कहा, इसमें क्या बुराई की है भाई? हम तो सोचते ही हम बढ़ोतरी करेंगे और करेंगे। अभी भी मैं कहता हूं हम तमिलनाडु जीतेंगे, बिहार भी जीतेंगे और इनका सुपड़ा साफ हो जाएगा।
नहीं, 2024 की उसके बाद आपने 3 शानदार विजय भी वो की हैं, दर्ज की हैं। आप हरियाणा में जीते बहुत अच्छी तरीके से। महाराष्ट्र में तो मुझको फडणवीस जी ने कहा कि वो सोच भी नहीं रहे थे कि इतनी सीटें आएंगी, और उससे कहीं ज्यादा सीटें आई। तो दिल्ली में आपने जो है केजरीवाल जी की सरकार को परास्त किया। तो ये कैसे हुआ? ये आप लोग बाउंस बैक कैसे करें?
देखिए, जनता ने चुनाव में कुछ झूठा प्रचार किया गया, कुछ भ्रामक बातें फैलाई गई, इसका कुछ तो असर हुआ, कुछ वोट कम मिले। जब परिणाम आया तो सबके मन में एक प्रकार की रंजिश थी कि हमने मोदी जी के साथ ये ठीक नहीं किया, और इसके कारण ही भारतीय जनता पार्टी का समर्थन भी बढ़ा है और बड़े जोर के साथ मोदी के काम पर थप्पा लगाने का काम ये 3 राज्यों में।
थोड़ा सा आप हिंदी के पक्ष में बहुत बातें करते हैं, तो थोड़ा एक लैंग्वेज मुद्दे पर भी बात कर लेते हैं। ये भी साउथ से जुड़ा हुआ है।
पहले मैं थोड़ी स्पष्टता कर दूं, मैं हिंदी भाषी नहीं हूं, मैं गुजराती हूं। मैं हिंदी के पक्ष में बात करता हूं, ये विपक्ष का प्रचार है। मैं भारतीय भाषाओं की बात जरूर करता हूं और मैं मानता हूं कि इस देश को अपनी संस्कृति, अपने संस्कार और अपने इतिहास के साथ जुड़ना है तो देश की हर एक भाषा को जिंदा रखना पड़ेगा। और ये मेरा अकेले का नहीं, देश का हर नागरिक का दायित्व, क्योंकि व्यक्ति अपनी मां की भाषा में ही सोच सकता है, अपनी मां की भाषा में ही व्यक्ति विश्लेषण कर सकता है, मतलब एनालिसिस करता है, तर्क कर सकता है, मतलब लॉजिक इसका डेवलप होता है। इसके आधार पर वो निर्णय लेता है और इसके आधार पर इंप्लीमेंटेशन की वो योजना बनाता है। ये पूरी प्रक्रिया मां की भाषा में ही होती है। मगर अब कुछ लोगों की भाषा यहां की नहीं है मां की, तो मैं क्या कर सकता हूं भाई। मैं तो भारत में जन्मा हूं, तो भारत की भाषाओं की बात करता हूं। ये सब निरर्थक हो अल्लाह करते हैं। मैं आपको बताता हूं कि हमारे आने से पहले, मेरा स्पष्ट मानना है, हमारे आने से पहले कांग्रेस पार्टी ने इतने सालों तक हिंदी और अंग्रेजी को सभी भाषाओं के बच्चों पर थोपा था। यूपीएससी की परीक्षा जो आईएएस आईपीएस की थी वो अन्य भाषा में नहीं आती। 2015 में नरेंद्र मोदी ने निर्णय किया कि आप तमिल में भी पेपर दे सकते हो, गुजराती में भी दे सकते हो, मराठी में भी दे सकते हो, मलयाली में भी दे सकते हो। 2020 तक सीएपीएफ की जो भर्ती होती है, इनका पेपर सिर्फ हिंदी और अंग्रेजी में लिखा जाता था, आज 13 भाषाओं में लिखा जाता है। हमने तो तमिल की एंट्री की है, गुजराती की एंट्री की है, मराठी बंगाली की एंट्री भारतीय जनता पार्टी ने की, आपने अंग्रेजी पर छोड़ दिया था। इनके समय के अंदर लोकल स्टेशनों पर लोकल भाषा में अनाउंसमेंट भी नहीं होते थे, वो भी हमने किए। इनके समय में मेडिकल और इंजीनियरिंग कंपलसरी अंग्रेजी में ही पढ़नी पड़ती थी, हमने उसको स्थानीय भाषा में एंट्री करा दी और आज मध्य प्रदेश में हो चुका है, उत्तर प्रदेश आगे बढ़ चुका है, राजस्थान आगे बढ़ चुका है। पूरे के पूरे मेडिकल के कोर्स हिंदी में अनुवादित हो गए। 13 भाषा में इंजीनियरिंग पढ़ाने की व्यवस्था 2026 के पहले हम कर देंगे।
तो डीएमके का ये कहना हिंदी, हिंदू, हिंदुस्तान, ये गलत है कि आप लोग?
नहीं भाई, मैं देखो अभी मोदी जी गए थे, उन्होंने बहुत अच्छे तरीके से कहा कि एक भी डीएमके नेता का सिग्नेचर तमिल में हो तो बताओ मुझे।
अंग्रेजी में करते हैं।
हमारे राज्यों ने तो अपनी भाषा में मेडिकल इंजीनियरिंग के कोर्स का अनुवाद कर दिया है, वो तमिल में शुरू भी नहीं करते हैं।
Hello and welcome to News Center. I'm Parikshit Luthra. Trump tariffs, trade are top focus this evening. The world's two largest economies are raising their stakes in an all-out trade war. Just a day after the US clarified its tariffs on Chinese goods now stand at 145%, China has hit back. Beijing has raised the tariff on US goods to 125%. In a statement, the Chinese Commerce Ministry said it will not react to any further tariff increases by the US. Beijing said, and I quote, even if the US continues to impose higher tariffs, it will no longer make economic sense and will become a joke in the history of the world economy. End of quote. The statement went on to say, and I quote, again, with tariff rates at the current level, there is no longer a market for US goods imported into China. End of quote. China's President Xi Jinping welcomed Spain's Prime Minister Pedro Sanchez to Beijing and held bilateral talks. Speaking after the meeting, Jinping said there are no winners in a trade war and China is not afraid in what was his first reaction to the US tariffs. He also called for closer trade relations between China and the European Union. Jinping will visit neighboring Vietnam, Malaysia and Cambodia later this month to boost trade ties. All these nations have been hit with higher tariffs by the Trump administration. The man who started this tariff war remains unfazed. US President Donald Trump called Xi Jinping a good friend and a smart guy as he expressed optimism about striking a trade deal with China.
what happens with China. We would love to be able to work a deal. They've really taken advantage of our country for a long period of time. All we're doing is putting it back in shape. We're resetting the table. And I'm sure that we'll be able to get along very well. I have great respect for President Xi. He's been, in a true sense, he's been a friend of mine for a long period of time. And I think that we'll end up working out something that's very good for both countries.
Tech giant Apple has airlifted 600 tons or 1.5 million iPhones from India in a bid to beat the new tariffs, according to a Reuters report. Apple shipped about 1.5 million iPhones in cargo weighing roughly 600 tons. The tech giant has been ramping up production in India, which has far lower tariff levies compared to China. But Apple continues to make most of its iPhones in China and has not announced any plans to scale back in China. The Wall Street Journal Asia's business editor, Peter Landers, joins us now. Peter, first of all, the kind of trade tensions between China and China and the US at this point. China has said that any further tariff increases by the US will just be a joke. They're not practical anymore. How do you see the war escalating? And what are some of the measures that you expect China to take in the coming months?
Possibly the war is finally coming to a close. I'm not sure, but at least China suggested, as you mentioned, that they won't retaliate in terms of higher tariff levels anymore. And the suggestion was really that the tariffs have gotten so high against American goods that it would be very difficult to sell anything American in China anymore. So why bother to retaliate tit for tat, as has been happening so far? And I think the same probably is true of U.S. tariffs on Chinese goods. Now at 145%, it really makes it uneconomical to send anything from China to the U.S. And that's why we see Apple trying to ship more iPhones from India instead of China. And so I think rather than escalate further, China certainly would love to take Trump up on his offer and sit down at the table to try to make some kind of deal that might incorporate other issues dividing the two countries, such as the app TikTok, which is banned in India and I believe is subject to a potential ban in the United States.
Right. Peter, what's your sense? Do you expect Apple to import more, maybe invest more in manufacturing and deepening its linkages with India?
I do. I think they have no choice unless there's a deal very quickly between the U.S. and China and the tariffs go back to where they were before Trump became president for a second time. Then Apple would probably try to stick closer to the status quo. And there is a lot of uncertainty about what Trump will do because his tariff policies have changed so frequently, sometimes day by day. So there is uncertainty, but in general, the trend for Apple has already been to increase production in India, perhaps by some estimates we hear, perhaps 15% or more of the iPhones this year will be made in India. And where possible, I think they will try to export more from India to the US to avoid those tariffs.
Right. One more final question, if I would ask you. Now, we will see Xi Jinping making this trip to Malaysia, Vietnam, Cambodia. What's going to be the kind of foreign policy approach that Xi Jinping could take? Now, the worry is that the space that is being vacated by the US, it will be taken up by China. And do you think China is rushing for that opportunity right now?
They're definitely grasping for that opportunity, meeting more officials from the European Union. And we saw the Spanish Prime Minister in Beijing just today, and Xi Jinping telling Pedro Sanchez that we want to have closer ties, presenting China as a reliable, steady, consistent partner that's, clearly making the distinction with the United States. And I'm sure he will deliver that same message when he visits Southeast Asia next week.
Right. Thank you so much, Peter Landers, for joining us and giving us your view on the tariff escalation between US and China and the kind of foreign policy approach that Xi Jinping is now taking in response to US tariffs. And staying with the United States, US Vice President J.D. Vance is likely to visit India soon for trade talks. Sources say more visits by Indian officials to the US is also on the cards. However, sources tell us that a bilateral agreement with the US may not materialize by this fall. Abhimanyu Sharma gets us more.
Amidst the global discourse on reciprocal tariffs, sources have indicated that it's difficult to have a BTA, that is a bilateral trade agreement between India and the US in 90 days. However, the shape and form of the BTA may be finalized in a period of 90 days. Also, India remains in constant engagement with the United States, with the EU and several other geographies, and it's likely that more Indian officials may visit several other countries and geographies in the coming weeks to finalize negotiations or to proceed for a trade deal. Sources also added that there is a likelihood of trade diversion from various countries, including China, where it's possible that there are excess capacities for exports due to a fall in overall demand of imports from several OECD countries, as well as imposition of reciprocal tariffs by the United States on China. Hence, the Customs Department has been asked to keep an eye on any unusual surge in exports or imports from India to check if any trade diversion is being undertaken from India. Sources added that government has also cautioned the industry that India will not be a source of trade diversion, and the industry needs to prepare for a time of zero tariffs or no tariffs and to ensure that there is no protectionism. Sources also added that protectionism may save 1,000 jobs, but it may cost 140 crore Indians dear by breeding inefficiency. It remains to be seen how early the negotiations are going to take place between India and several other countries, while it's also likely that US Vice President J.D. Vance may visit India in the coming weeks.
All right, thanks Abhimanyu for joining us. Now, the President and CEO of the US Semiconductor Association believes the current global environment favors diversification of the supply chain. I spoke to John Neufer on the ongoing trade war and its implications for the semiconductor industry and also India.
Certainly we're in a kind of disruptive time, but it's in times of disruption that there's often many opportunities. And so we see some real potential here in India. Over the last couple of years, for example, there have been 6 new semiconductor projects announced. That's very positive. And now there's 2 vectors for change in this technology cooperation agreement called TRUST, and potential bilateral trade agreement, or BTA. We think those 2 mechanisms working together can create a stronger ecosystem here for our investments on the one hand, to help India become a bigger part of our supply chain, but also creating greater market access for our technologies in India.
Right. Do you see more investments coming into India from US companies in the next, say, 12 to 24 months? You spoke about 6 companies. You've got the likes of Micron, AMD, which have operations which are expanding. Are we going to see more?
So I don't run a semiconductor company, but I would just speculate that two things. One, the broader geopolitics suggests there's going to be increased movement toward diversification and more opportunities for India. But India still needs to make the business case. There has to be the right ecosystem here, whether it's regulatory or trade or standards, that make sense for us to invest more here.
Right. Now, speaking about the expectations of the US government, one, of course, a company will invest if there is a business case to do so, and the regulatory environment and the tax environment is viable for them. Secondly, one is a political intent. Is there now a greater push from the US government to make sure that US semiconductors or US made chips and technology has greater access in India?
Yeah, so no doubt kind of the leaders meeting in February and the government's talking about a bilateral trade agreement create very positive atmospherics for us. But at the end of the day, we have to run businesses, and so you have to have the right business environment here for that to happen. I think if you kind of look broadly, the overall trends suggest there's going to be more of our participation in this market. What I'm hopeful of is that India seizes the opportunity and and undertakes the change and reform that's necessary to really grab the opportunity and make the most out of it.
Currently, India and US are negotiating a bilateral trade agreement. How beneficial is that going to be for businesses on both sides? Indian experts are actually calling on the Indian government to reduce tariffs on 90% of industrial goods to zero. What would be the best case scenario that you would be looking for and expecting from the BTA?
Zero tariffs would be wonderful. Our industry is possibly the most global industry in terms of supply chains that's out there. We have parts and components that are and finished products that are moving across the borders all the time. That's both to build fabrication facilities or fabs, but also to run them. And we need zero tariff treatment at the border, and we need customs clearance facilitations that's smooth and quickly. And if India can provide that, it'll make a big difference.
Right.
So through a bilateral trade agreement.
Right. There is a window of opportunity when it comes to semiconductor manufacturing, but it will not be there forever.
So what's happening more broadly is that we're now about a $600 billion industry globally in terms of sales. We're probably going to be a $1 trillion industry by 2030. And it's a 8% growth every year. If you do the math, we get to $1 trillion. It's being driven by AI. It's being driven by autos. So the reality is we need to get a lot of infrastructure in place now to feed that future demand. And the good news is for India, it's not, for our industry, it's not a choice of India or somewhere else. The ideal outcome is India and somewhere else, because the pie is growing for the world, and that means each piece of the pie can be bigger if the right ecosystems are in place.
You know, one thing that we hear, wherever tariffs are going up, even in India, we're hearing that companies in the US are either cancelling orders or they're seeking greater discounts. Do you expect?
Well, I think not just for semiconductors, but I think that's a concern for all industries. Is that trade slows down, and not the ideal outcome.
Right. And finally, on US-China tariffs, even though the US president has put a pause on reciprocal tariffs while continuing the baseline tariff, the tariffs on China have been increased to as high as 145%. How bad is that going to be for the semiconductor industry?
It's not just that. That's not just that. China has slapped back with its own tariffs.
Retaliation, especially.
Yeah. So again, China is obviously a very important market to us in the industry, and again, we're in a wait and see mode, and hopeful that the two countries can find a way out of this so that we can get these tariffs out of the way.
John Newfer, thank you so much for speaking to us here in New Delhi, and let's see how the semiconductor industry progresses this year in light of the global trade uncertainties.
Good
Thank
to
you
spend
once
time
again.
with you again. Thanks, you.
John.
Thanks very much.
Time now for a break, but up next, an exclusive conversation with Shobna Kamineni, Apollo HealthCo's executive chairperson, on the other side.
If you look at our FY25 growth, it's been better than FY24 growth. However small the difference is, I believe FY26 will be better than FY25.
We'll decide when to do it increments based on the environment.
So you're deferring wage hikes as of now?
I'm saying, I will not use the word defer, but yeah, yes, it will decide it when it happens.
Or many of our customers are also in a wait and watch mode in terms of what is the end game going to be. But good thing is, whatever we have seen so far, as much as the rhetoric, we have not seen our customers panic. Like there are maybe some programs what we thought that they would kick off, but some delays in decision making. but we are not seeing any major.
Launched during COVID-19 pandemic, Apollo 24/7 is clocking 3,000 crore rupees in revenue and will hit a profitability mark by Q4 of FY26. That's the word coming in from Shobhana Kamineni, Executive Chairperson, Apollo Healthco. In an exclusive interview, she unveiled the growth strategy for Apollo 24/7 and how the digital offering could potentially contribute to 50% of the revenues of the Apollo Hospitals Group.
I think that Apollo Hospitals, we saw that there was a necessity as our, as capacity of most of our hospitals is close to about 75+%, and we had to move into that new expansion. And I think my sister Sunita is always very cautious, but at this point, we were able to actually get some really fine properties, whether it's Gurgaon, Pune, Mumbai. So these are cities that we didn't have enough presence in, and moving there. And of course, we're expanding in Chennai, doing another one in Hyderabad. So these are cities that we really have a strong presence. So going deeper into cities that we are and moving into other new cities. So yes, there's some exciting expansion happening in Apollo.
Right. If you can give us some numbers to quantify that, how much would you be investing in this expansion in FY26, and what is the overall bed capacity that could increase as a result?
So we're looking at increasing about 2,500 to 2,700 beds, and of varying investments, because some of them are really high tech, from things like a proton to a tertiary type hospital to just augmenting some of our secondary. So with all that, I think we're looking at something of over the next. We started last year, so the cycle of it, the investment cycle, would be anywhere in the range of 3,000 crores.
Okay. Speaking about the story of Apollo 24/7. This enterprise is now completing about 5 years. Could you give us a sense of the journey so far and the contribution of Apollo 24/7 to the larger group?
I would think the journey of the last 2 years is just refocusing on our customer, saying that how do you serve these customers better, and then more will come in. Today, like last year, we did about 330 million transactions, both physical and digital, online, offline, from the pharmacy. So how does this happen? It's just that people start trusting you, and this the app has become so much better. I used to go on saying I can't use this app, but now I look at it, and it's really something that I go to, because not only do I know that I'll get my medicine, whatever I want, I'll be able to get it in within a day. So here in Gurgaon, 19 minutes, and in Delhi, 19 minutes, Hyderabad, 19. So then, because we sat down with the team and we said, look at these guys, what's this? Do you have that capability? Because we have 6,000 stores. And they went back and they said, yeah, we can do it. But then we put a caveat saying, you're not going to lose money doing this stuff.
Yeah.
So then they said, okay, it's a little harder. Just give us 5 minutes more. And so I said, why 5 minutes? Let's take 9 minutes more instead of 10 minutes. Do it in this thing. And the guys really are making that work. So between a 19-minute to that same day delivery, in about 3 months, 90% of anything you order with us is going to come. And that's what I love.
So by when do you expect to be profitable on a consistent basis?
Q4
of FY26. Q4 of FY26. And
25-26, yeah.
Right. And could you also give us a sense of the kind of profitability you are looking at right now, and the kind of margins?
So, as you know, when we were just running the pharmacy, we were doing really well.
Right.
We had almost like a 7%, 7.5% margin, EBITDA. Compare that with who would look like us, MedPlus. So MedPlus is about 2.5–3%. So we were doing 7. So just the ability of our organization. Then of course we started investing in this, started investing a lot of money, and in that process, so you know this has been this has been tough cycle. I think we'll come back and more. So this has an ability to actually do more, and probably we should be doing it at about 8%.
Right. What I would also like to ask you about the importance of Apollo 24/7 in the larger Apollo Hospitals Group and Apollo Hospitals enterprise. Could you give us a sense of how much would the company want to invest in expanding in this digital business all across the country?
We are across the country, and the investment cycle is over.
Yeah.
Really quietly, 5 years. We've invested about 600 crores in the actual tech and making all this happen, you know, the capability of the whole product. But we also, you know, altogether it was around 2,000 crores, which includes the losses that we managed to contain but had to spend. So this investment cycle is over. From last year, actually, it's not unit level positive of the digital, but overall it's profitable.
Right.
So Apollo's invested a lot, and tech is such that, you know, and pharmacy and all these are such that they're regular investments. We open two stores a day. So these are all investments, but they're not super large like a hospital investment, but and these continue to create the road. Just look at us. For the last 20 years, we've grown at a CAGR of 20% plus. But the nice thing about this, about what keeps me, really coming to work every day, is that I see that there are new things that I can continue, that this is in India where you can grow at another 20%.
You know, we've been hearing that you're likely to launch a new intuitive AI tool for Apollo 24/7. Is something like that on the cards?
Ask Apollo.
Ask Apollo.
It's an agentic, this word agentic is like suddenly very sexy, but truth is, it really works for you, because why would you want to search on ChatGPT, which is so generic, or on Google or any of these? And Google also believes that, because they said, yeah, it's true. When you can search, if we have your health records, we know who you are, what's your age, basic stuff. But more than that, we know some of your deeper conditions. So otherwise, when you search, every fifth search tells you something scary. But this is not the case.
Right.
For you, by the third time, it'll actually give you an answer and give you an opportunity to act on it. Do you want to see the doctor?
Right. You know, this definitely is a priority for you, ma'am. But in the next, say, 5 to 10 years, how do you expect Apollo 24/7 to contribute to the overall revenues of the company as a group? How will this be? How big will this business be for you?
I think the business will be such that it's already clocking 3,000 crores of revenue. So this revenue is growing at 30%. So they have a faster trajectory, just because, I think that all digital first businesses really are still, they're in the growth phase of India. And then once you get to an inflection point, I see probably that'll be almost 50% of our business, going forward. So for the next 10 years or something, this will continue to propel as India becomes more digital first, they understand the usage of it. It becomes a lot easier. My physical presence is still super important, but I think the fact that we can be truly omni is a capability that very few people have, even around the world.
Now, speaking about the weight loss industry, we were chatting about it as well. So many of these weight loss drug manufacturers are making their way to India. How big a industry would this be, and how do you expect to leverage that as well?
Walk around. Just think, Indians are no longer that picture of starvation. So many people, whether it's the wealthy to the, this weight thing has no class distinction, except if you're really on your feet all day, and I love the way that, you know, this physical labor, they manage to stay thinner and healthier. But that's not true in urban areas where you have, you know, this, everything is there, no places to play, kids are putting on weight, and people still want to look good. We still have that thing that, you know, you have to look, that you have to be fair, that you have to be thin. And, you know, these are the big two things. So I think that's the case for abuse, but the case for use is really people who have type 2 diabetes, that have conditions, that this is proven to help. And India is such a huge diabetic capital. And if we just use that to start helping people, you will see that their longevity, that their quality of life, everything will improve. So I do think, managed well, this is such a boon for the country. And it's come at a great price point. It's not the kind of pricing that was there in the US, because it's going off patent. There are 4 Indian manufacturers that are going to come out with it by the end of the year or early next year. So this thing is going to become rampant. The problem for us is, how do we make sure that, you know, anything good in excess actually becomes an evil? So how do we prevent that? That's my worry. And I think that's the challenge of what hospitals and good doctors and everything will be, is that this is not something that you should walk and buy off the counter. It should be prescription backed. It should be, you should be monitoring it, because we still don't know, right? It's been around only for about 5-6 years. So we need more clinical evidence to say what are the secondary problems.
Right. Ms. Kamini, thank you so much for joining us here, telling us about the story of Apollo 24/7, the larger expansion plans of the group as well. It was fantastic.
Thank you, Parikshit. Thank you.
No major project ramp downs. Like, there are few, but no major. So I don't think there is any major negative reaction so far.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategy?
Hello and welcome to the CNBC TV18 special. The global markets have been in a state of mayhem ever since President Trump decided to go through with his tariff policies. In fact, 9:30 a.m. today, India's tariffs have kicked in at 26%. The other worrying aspect that's come in overnight is President Trump reiterating the call on tariffing pharmaceuticals. Remember, pharmaceuticals have been exempt so far, but this is the second time in the last few days that President Trump has talked about tariffing pharmaceuticals like we've never seen before, in his words. President Trump also speaking at a dinner last night and claiming that countries were calling him up, leaders were calling him up to try and get deals done. The USTR, of course, making it clear at this point in time that there will be no exclusions to what has been proposed by the US as far as tariffs are concerned. But to talk us through what we should now expect as far as America's intent to do business with the world is concerned, the impact of all of this on the global economy, and more importantly, how India finds itself positioned in the global markets, is noted economist and a very vocal critic of the tariff policies, Jeffrey Sachs. Thank you very, very much for joining us here on CNBC-TV18. A lot has happened over the last few days. A lot has happened overnight, as I pointed out. As you look at these tariffs and playing themselves out, what worries you the most today?
If something wipes out $10 trillion of market capitalization in 2 days, you're probably on the wrong track. The United States is on the path of wrecking the world economy once again. I say once again because the U.S. has a bad habit of wrecking the world economy. It did it in 1930 with tariff increases, the infamous Smoot-Hawley tariffs, which were one of the major provocations that led to the worldwide Great Depression of the 1930s. It did it in 2008 by blundering in its forced bankruptcy of Lehman Brothers on September 14th, 2008, and that put the world into a tailspin, the Great Recession. Now it's doing it a third time. This is out of the fervid imagination of one person. This is not U.S. policy. This is not congressional policy. This is not U.S. public policy. This is Donald Trump's policy. He is single-handedly wrecking the world economy. And I think the damage is going to be done before it gets undone. So we're not in a good situation. The markets are not the only ones telling us that. We're hearing from business people all over the world that long-made value chains, supply chains for critical commodities, for consumer goods, for industrial products, for making automobiles, for making smartphones, you name it, are being profoundly disrupted. And we have somebody laughing as the world economy burns, and that is our president. So this is not at all a case with the silver lining, unfortunately.
Well, it doesn't look like there is any silver lining at this point in time, Professor Sachs. But, you know, you talked about the wrecking ball approach that President Trump seems to have taken and the impact it's going to have as far as global growth is concerned. But let's talk about America. You know, Larry Fink saying we're already in a recession. Bill Ackman, one of the biggest supporters of President Trump, coming out and saying we're headed into a long winter now as far as the economy is concerned. The impact so far is largely been felt in the financial markets. When do you start to see this impact the real economy?
If the survey data are correct, we're going to see it in consumer purchases declining sharply in the coming months because consumer sentiments are falling through the floor. That means that we're going to have a significant demand shock in addition to all the multiple supply shocks of disruption of global supply chains. These businessmen expected to be making fortunes at a business-friendly administration. For them to be speaking out after they invested so much money to buy the presidency for this person is also indicative of their state of mind. So I think what we're hearing, again, I'm not a short-term macro forecaster, but we're hearing that the odds now are odds on for a U.S. recession in 2025.
Odds on a U.S. recession in 2025. But let's talk about the latest development with respect to China. And the president saying that China is going to be tariffed higher, another 50%, which takes the total quantum to over 100%. China saying it will retaliate with countermeasures. Now, do you believe that the possibility of China selling U.S. bonds, it holds about $800 billion in U.S. bonds directly, you know, there are many in the market who believe that that will be the option of last resort. How do you believe China is likely to play this out?
China, of course, has been diminishing the share of its foreign exchange reserves held in dollars for several years now. China is not naive when it sees that the U.S. has confiscated the reserves of several countries now in which the U.S. has geopolitical opposition. So the U.S. took and froze, of course, the more than $300 billion of Russian reserves, technically in Belgium and Euroclear. The U.S. grabbed the foreign exchange reserves of Venezuela. It did the same for Iran. It did the same for Afghanistan. It did the same for North Korea. The U.S. weaponized the dollar well before this latest round of trade hand grenades. So China already has been diminishing its holdings of dollars. The BRICS have been working on, and I hope that they accelerate, non-dollar payments, because we're going to need, the world's going to need alternative ways to make payments when you have this kind of obstreperous and unstable government at what is now the core of the payment system in the world. So China definitely will not just sit there with its forex reserves in dollars. Whether it will act abruptly in a reaction or whether it will gradually continue the direction of sell-off, I don't know. But it will continue in the direction of disgorging itself of U.S.-denominated assets.
You know, the question is whether this is the end of American exceptionalism, and you certainly seem to believe that it is. But is it also the end of China's isolationism? Has the Trump administration, the unintended consequences of this tariff policy, as well as the way that he's going about addressing friends and foes, will it push people to actually re-engage with China?
Well, first, it's not the end of American exceptionalism, and what America is doing is absolutely exceptional, just exceptionally damaging. So it's the end of
a different kind of exceptionalism.
It's the end of American leadership, I would say. It's the end of other countries looking to the United States as a stabilizer, as a rule-based order, although that was quite frayed already, but now no one could utter those words with regard to the United States. Similarly, China was not in any way isolationist. It was the major trade partner of probably 150 countries in the world. But China has aimed for the last decades to be a responsible participant in the international system, not to put its head out too far in leadership. Deng Xiaoping famously advised China, bide your time, keep your head down. We need to rebuild after a long century and a half of economic difficulty, what they call the century of humiliation. And so Deng Xiaoping said, keep your head down. Now China can't quite keep its head down. China is under direct attack by the Trump policies, and this is one of the core dimensions of the Trump policy. Part is protecting American economy in a very naive and, I think, doomed to fail way. But part of it also is a hostile action vis-a-vis China especially, which is that China must be broken in its global success story because it's a competitor with the United States. So China now has to take a more leadership role. I think China will have to enable the renminbi to play a more international currency role. It's been very gradual, step by step, but I think it's going to have to accelerate. China, I think, will accelerate the calls for the BRICS, of which, of course, India is a founding crucial member, to play a somewhat of a balancing role to the United States in the international scene, especially calling on the BRICS to reinforce their open trade with each other, because after all, the BRICS is more than 40% of the world economy. It's about half the world population. It matters a lot. And so I think that grouping is going to play a more important role. So I believe that China reflected on this and said, we're not going to be bullied, we're not going to be blackmailed, we're not going to be cornered by the United States. And so the brawl is very real right now and very dangerous.
masters, macro pundits and chart wizards. Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Jeffrey Sachs, as we look at the negotiations that are likely to take shape, and President Trump, pardon my language, saying last night at a dinner that leaders are calling him up and, in his words, to kiss my ass.
It's not your language, it's his
it's not
language.
my language, it's his
Right.
language, and I want to be clear about that. And I'm trying to look at this from the perspective of countries that are trying to negotiate agreements with the US, including countries like India. What should we be mindful of?
Don't trust that there's going to be some breakthrough. India's vision is, well, the US hates China, so India will, in a way, replace China in the value chains. Companies like Apple or others who are investing heavily in India, they'll produce in India rather than producing in China, and they'll export to the United States. Don't count on it. It sounds plausible, but Donald Trump's idea is to stop international value chains, period. He says, of course, he's an economic illiterate, but he says that we're going to bring all of that production back home, that the hollowing out of American industry has to end. So his idea, yes, he hates China. He wants to confront China. But his idea is not that India is going to be a massive supplier to the United States, because if that were to happen, and it could very well happen in an open trading regime, the U.S. would turn on India exactly the same way.
So don't take the relationship for granted.
Don't even expect there to be an agreement this fall. By all means.
The External Affairs Minister, who was speaking at the summit this morning, said that we've had more engagement with the US in the last few weeks than we've had with the EU in the last few years. He, in fact, went so far as to say that he doesn't see a reason why an agreement can't be in place before fall. You're suggesting that don't expect that to be the case.
I'm not disputing his optimism. I'm just saying don't count on this. The U.S. is in turmoil. The U.S. has been likened to China's Cultural Revolution in the 1960s. We are in a cultural revolution right now. We are in a political meltdown right now. Very odd, sounds weird. The United States doesn't exactly give that image, but remember that what's happening is not based on law. It's not based on congressional action. It's not based on public debate. It's not based on public policy. This is a one-man show right now. Weird for us, by the way. We don't have one-person rule in the United States. But people can go online. It's quite interesting and a little frightening to read the executive order which launched this trade war a few days ago. Says, by the powers invested in me as President of the United States, and then it lists 3 emergency actions. I declare an emergency. Are you kidding? I might expect that of some tin pot dictatorship. I don't want to insult to tin. It's crazy that the United States acts this way. A $30 trillion economy, and one person stands up by the emergency powers vested in me. This also has a term that I can't use in polite company, but it is nonsense. It is illegal. It is unconstitutional, not only reckless. It is completely against our laws and our Constitution. Whether that matters or not, I don't know. Are the courts going to stand up, or are they going to?
What about Congress?
Congress is pathetic right now. The problem is Donald Trump came back into office in a system that was already so corrupt that it's brittle. Why corrupt? Because the 2024 elections had $16 billion changing hands, visibly. We're a corrupt political system based on large campaign donations or contributions, so-called, that are legal, but is nothing but corruption. Who bought this government? Elon and his friends in Silicon Valley and some of the Wall Street people. Maybe they have purchasers' regret right now, but they bought this election. They paid for it fair and square. They think they own this government. Maybe they don't really own the government, but the politics are deeply corrupt. So all Congress people care about is their donors. Now, if their donors, by the way, tell them we got a crazy guy making all of these crazy emergency decrees and this has to stop, it's possible that Congress will come back to life, but it's been a doormat up until now. The president is taking congressional authority. Article 1, Section 8 of the U.S. Constitution says that tariffs are a congressional responsibility. If you look at Article 2, which defines the president's responsibilities, believe me, it doesn't say that the president can set duties or tariffs or taxes. We had a whole revolution against England on this exact basis, that no one person could set taxation. But Congress has been completely a doormat up until now. Maybe their donors will start to tell them, we don't like one person rule, in which case we'll start seeing some congressmen act.
Well, you know, Democrat Senator Ron Wyden has said that he would push for a vote on the issue of tariffs. So do you believe that that could be possibly the pause, the speed breaker in the kind of action that we're seeing?
There are several possible speed breakers. One is that the courts could just declare this is completely unconstitutional, which it is, by the way. Yes, a president can have emergency powers if there's a Category 5 hurricane, if there's a massive forest fire, if the United States is under military attack or terrorist attack, not for 20 years of trade deficit. Sorry, that's not an emergency. That is an economic condition. It's not an emergency. So what Trump has done is plainly illegal. And there are some lawsuits starting, and we don't know whether the judges, many of whom have been appointed by Trump, are going to follow through. So that's one possible break. The second possible break is Congress itself. We already saw 3 Republican senators side with the Democrats to vote against the tariffs on Canada, because these senators in the Republican side had some particular interests in the Canadian-U.S. trade. But it's a sign that already in the Senate side, at least, there's a break. Congress is much more pathetic. These people who go every 2 years for elections, they're really corrupted and pathetic. But maybe on the House side, which is crucial in this, there are only a few votes on the Republican side, and maybe there are a few honest Republicans who will say we don't want the whole economy to come crashing down. That's another possible break. The next possible break, by the way, is I doubt that there's a single advisor around Trump who really believes in this, other than one crazy guy named Peter Navarro. Other than that, I don't think the Treasury Secretary believes in this at all. Most of the advisors know that this is completely shambolic and reckless. They're making excuses. You know, it's very hard to contradict the boss in general, but it's very hard to contradict Trump in particular. But Elon Musk, you know, he was our prime minister, at least for the first 3 months of the year. He's saying that it makes no sense. We should have
a very public spat with Peter Navarro.
Zero for zero. I don't know how much longer Musk is going to last in Washington. He's going to go back to SpaceX and Tesla, I'm pretty sure, pretty quickly. But inside, everybody knows this is reckless, but nobody tells the boss. This is the emperor has no clothes. I hate the image, but anyway, this is really the situation right now. They're all afraid, but maybe something will prevail inside.
As we wait for some of these scenarios to play themselves out, if at all they do, I want to come back to your point that you were making on India to say that we must not take the US friendship or the relationship for granted, especially as India has its own aspirations of making India. It is poised to be the third largest economy. And I go back again to the negotiating table because the agreement is at this stage in conversation between both sides. What should be the red lines from the India perspective?
One overarching point, don't be played by the United States. Don't get into the rhetoric, by the way, which some politicians are using here, that, in fact, some politician said in India recently, this is China's fault. My God, don't fall into that trap. Don't do with Trump the words you used, to use that kind of rhetoric to divide India's role in the world, to play the game of Trump, to believe you're going to have some special relationship with Trump. There are no special relationships with Trump. Trump has one great love, Donald Trump. No other. And India is not going to be a competing suitor for that. India, and I know this is quite unpopular in India, but it's really true. India really needs normal relations with China. And India should appreciate this is a great civilization, and this is a country that's going to play a huge role in the world in the 21st century. I mean, a huge role in the world on all sorts of things, on culture, on economy, on technology, on global peace, an enormous role. India should play that role respectfully and carefully. And that means good relations with China. It means good relations with Russia. It means good relations with Europe. It means good relations with Africa. Yes, have good relations with the U.S., but don't be played by the U.S. Don't be anti-China because that makes the U.S. feel so good and speeds your agreement. And purely on the economic side, the hostility now inside India to dealing with China in trade is not beneficial for India. India is on the cusp of huge advances in technology, but that's not against China. China-India tie-ups in different sectors would be hugely beneficial here and for China as well. And so the whole idea that this is an enemy on this side and America's the friend on the other side, that's the main thing that I'm really warning against. The second thing that I want to warn against is, by all means, try to negotiate, but don't be surprised if it doesn't work. And don't count on it. Look for multiple options. Don't think that the rescue point is we cut the deal with the U.S. Maybe yes. I think likely no. Maybe I'll be proved wrong, and I'll be happy if I'm proved wrong. But don't count on it. Make a multilateral trading arrangement. Promote trade with the rest of the world, including China, including Russia. Don't let the United States say, no, that one's against. That's a sanction. Don't trade with Iran. Don't trade with Russia. India's been very good at that in the last year. Also, as a footnote, India's a little bit been dragging its feet inside the BRICS, saying, this alternative payments mechanisms, we don't want to get into that. The Americans don't like it. We'll keep with the dollar and so forth. That's another related area where India should understand, be careful. Don't depend on the dollar. The rupee should be an international currency. The renminbi should be an international currency. The BRICS should have multi-currency payments mechanisms. The BRICS should not be vulnerable to U.S. unilateral sanctions, which are plainly illegal and plainly destructive. So my main point is India should be a great power, and it should act like one, not taking sides, but rather saying we need a global order and global peace.
Well, Jeffrey Sachs, before I let you go, Donald Trump has come up with a new term, the panican. So, I would imagine that you would be squarely put in that camp by him. Are you not concerned about the fact that you're very vocally criticizing the Trump administration's policies?
Look, the world is 8 billion people. We've got a lot of challenges. We can't have one person rule in the world, in my country, period. We've had one of my students dragged off out of his house a couple of weeks ago by unmarked police, so-called, without a judicial warrant. And this student is still in detention in Louisiana. The courts haven't even issued a writ of habeas corpus yet. It's shocking to me. His wife is 8.5 months pregnant right now. We can't have one person rule in this world. We can't tolerate it. We can't play the game. We can't humor craziness. We have to be straightforward adults. This is my view of things.
Jeffrey Sachs, always a pleasure. Thank you very much for joining us here on CNBC-TV18. Appreciate your time, and we look forward to hearing more from you. This is a developing story, and it's not done by a long shot, so we look forward to hearing more from you on how this plays out. But thanks very much for joining us here.
Great to be with you
today. That's Jeffrey Sachs. We are going to take a break here, but there's a lot more coming up. Don't go anywhere. We're back in a moment with more. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
If you look at our FY25 growth, it's been better than FY24 growth. However small the difference is, I believe FY26 will be better than FY25.
We'll decide when to do it in increments based on the environment.
So you're deferring wage hikes as of now?
I'm saying, I will not use the word defer, but yes, it will decide it when it happens.
Many of our customers are also in a wait and watch mode in terms of what is the end game going to be. But good thing is, whatever we are seeing so far, as much as the rhetoric, we have not seen our customers panic. There are maybe some programs what we thought that they would kick off, but some delays in decision making. But we are not seeing any major cancellations or no major project ramp downs. Like there are few, but no major. So I don't think there is any major negative reaction so far.
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. China increases tariffs on US goods to 125%. Beijing says it will ignore any further tariff increases by the US government. Xi Jinping says there are no winners in a trade war and China is not afraid as he plans to visit Vietnam, Malaysia and Cambodia to strengthen trade ties. The sell-off resumes across global markets as the trade war escalates. European markets trade with sharp cuts. Wall Street futures point to a weak open. Stocks tumble across Japan and South Korea. But China and Hong Kong buck the trend thanks to domestic buying. The Sensex and the Nifty gained 2% as stocks react to the US pausing the 26% reciprocal tariffs on India by 90 days after a trading holiday yesterday. Both markets end the week in the red as tariff tensions keep investors on the edge.
पहले भी कई बार कहा है कि हम बंदूक रख के कभी नेगोशिएट नहीं करते.
Commerce Minister Piyush Goyal says India will not rush into free trade agreements and refuses to put a timeline. Adds India will not negotiate with a gun to its head. New Delhi is actively engaged in trade talks with the US, European Union and the UK. India is unlikely to offer any unilateral concessions to the US auto industry, say government sources. Officials are considering substantially lower tariffs on imported cars, which cost more than 40 lakh rupees. No final decision yet. Gold prices hit a record high again as investors rush towards safe haven assets. Oil prices fall over demand concerns. TCS sees some minor ramp downs and delays in decision-making by clients, but no major project cancellations so far due to Trump's tariffs. CEO Krithivasan says clients are in a wait-and-watch mode and there is no panic yet. Apple airlifts more than 1.5 million iPhones from India as it looks to avoid the US tariffs. Amazon CEO Andy Jassy expects sellers to pass on the increased tariff cost to customers. Hajmola candy under GST enforcement agencies. Lens, the DGGI is investigating whether Dabur's Hajmola candy should be classified as an Ayurvedic medicine, which is taxed at 12%, or as a candy that would attract a higher GST rate of 18%. Well, the top story this evening, the world's two largest economies are raising the stakes in an all-out trade war. Now, remember, just a day after the US clarified that its tariffs on Chinese goods now stand at 145%, China hitting back. Beijing has now raised the tariff on US goods to 125%. In a statement issued by the Chinese Commerce Ministry, China says it will not react to any further tariff increases by the US. Beijing said, and I quote, "Even if the US continues to impose higher tariffs, it will no longer make economic sense and will become a joke in the history of the world economy," end of quote. The statement went on to say, and I quote again, "With tariff rates at the current levels, there is no longer a market for US goods imported into China," end of quote. China's President Xi Jinping welcomed Spain's Prime Minister Pedro Sanchez to Beijing and held bilateral talks. Speaking after the meeting, Jinping said there are no winners in a trade war and China is not afraid, in what was his first reaction to the US tariffs. He's also called for closer trade relations between China and the EU. Jinping will visit neighboring Vietnam, Malaysia and Cambodia later this month to boost trade ties. All these nations have been hit with higher tariffs by the Trump administration. Now, the man who started the tariff war remains unfazed. US President Donald Trump called Xi Jinping a good friend and a smart guy as he expressed optimism about striking a trade deal with China. Take a look.
What happens with China? We would love to be able to work a deal. They've really taken advantage of our country for a long period of time. All we're doing is putting it back in shape. We're resetting the table. And I'm sure that we'll be able to get along very well. I have great respect for President Xi. He's been, in a true sense, he's been a friend of mine for a long period of time. And I think that we'll end up working out something that's very good for both countries.
China has decided to up the ante, raising the additional tariff to match President Trump's 145% tariff. So it's raising this additional tariff on all American goods that come here from 84% to 125%. Again, this would cover all American goods, and it would start on April 12th. Now, the other interesting part of this announcement is this sentence. Given that at the current tariff level, there's no market acceptance of U.S. imports, if the U.S. continues to impose tariffs on Chinese exports, China will ignore it. In other words, they're saying that they don't believe that Chinese people will actually buy American goods because they would be so expensive with these additional tariffs. So they said that if President Trump does continue to impose tariffs, then China is just going to ignore that. In fact, the Commerce Ministry also echoed that, saying today that China will ignore President Trump's, quote, numbers game. Now, while all of this is going on, China's President Xi Jinping has been courting all different sorts of countries. Today, he met with the Spanish Prime Minister, and he actually invited the EU through the Spanish Prime Minister to help China resist what he described as a unilateral bullying. In addition to that, we've been hearing more reports that the EU is going to be sending leaders here to plan a summit with Beijing, potentially in July. Now, in addition to that, President Xi is also looking towards Southeast Asia. In fact, the government here announced that President Xi is going to visit Cambodia, Malaysia, as well as Vietnam.
Eunice, many thanks for joining us. Important to point out, as Eunice was saying, that China trying to re-engage with the rest of the world. Remember, as the U.S. imposes tariffs not just on foes like China, but on friends, on its allies, there is a vacuum that's been created there in terms of global leadership, and China certainly hoping that it can move in and take some control. Stock markets resuming their sell-off today after temporarily cheering President Trump's 90-day pause on reciprocal tariffs on all nations except for China. Now, U.S. futures are pointing to another weak opening on Wall Street. It's been very, very volatile. European markets turned sharply lower after China retaliated with 125% tariffs on the U.S. Asian markets also saw a sell-off following yesterday's relief rally. But stocks in China and Hong Kong ended in the green, and that was thanks to domestic buying. Back home, the Sensex and the Nifty gained nearly 2% in trade as the Wall Street reacted to President Trump's 90-day pause on reciprocal tariffs after a trading holiday. Remember, we were not trading yesterday on account of Mahavir Jayanti. The U.S. has paused the 26% reciprocal tariffs, but the 10% increase in the baseline tariff remains in place. That's the Sensex, 1,300 point higher. Nifty up by about 429 points, and the bank Nifty and the mid-caps also saw a jump of between 900 and 700 points. But for the week, both the Sensex and the Nifty ending with minor losses as tariff tensions continue to keep investors on the edge. The Nifty Bank Index has lost 1% this week despite Friday's rally. Well, it has been a wild ride for markets across the world this week, and it's not just stocks. Commodities, bonds and forex market have also seen intense volatility. Prashant joins us now to wrap up the week that was for global markets. Prashant, what a week, but we're clearly nowhere close to being done yet.
Well, it's been nothing short of a wild, wild ride on the street across asset classes, across continents. Let's start with the big one, the S&P 500. The average daily swing on the S&P 500 over the last 4 sessions is 7.8%. I mean, that is absolutely a whiplash, and you can call it volatility, but really a whiplash. What about volatility itself? I'm talking about the CBOE Wix. If you take April 2nd as the starting day, which is the Liberation Day, the CBOE Wix from the 2nd to the 8th shot up 143% from low to high. To get to these kind of moves back in the past, you have to go to the dot-com bust, the Asian crisis, the GFC, or the Greek debt meltdown. Now to the bond market. Since Liberation Day on April 2nd, the 2-year yield is flat. The 10-year is up 26 basis points. Remember that Friday, the 10-year got to about 3.9%. The 30-year in this period is up 35 basis points. Basically, the long end is rising and is signaling higher risk premiums ahead. The dollar index itself, the dollar index has gone the other way. It slumped 4.5% since April 2nd, breaking below the critical 100 mark. I mean, the dollar is not behaving like it usually would in times of extreme stress, not like a safe haven. What about China? Now, China is central to this crisis, with Trump trying to correct perceived wrongs with respect to that country. Well, despite the 145% tariffs imposed by the US, the Shanghai Composite is down just 3% week on week. Do remember, though, that what is called the China National Team is out there in full force trying to stabilize markets. Let's take a look at a country like South Korea. Big exposure to the US market in terms of trade. Inside of the same week, the Korean stock index hit both limit down and then limit up. It's a historic first for that market, fear and FOMO back to back. Now, a few commodities, gold to begin with. Between the 2nd of April and 8th, gold dropped 5% high to low as everything was liquidated, but then bounced 7.6% to where it is now, and it's hit a new all-time high. Oil got crushed. It's lost 16% high to low in just 6 days. Another casualty, of course, of the macro mayhem. Overall, commodities have had it tough. I looked at the Bloomberg Commodity Index. It's fallen 9% in the same stretch, a broad-based signal of economic concern. So as we sort of head into the 3-day weekend for some much-needed rest, I was thinking that maybe we need a name for this crisis. You know, we have the SVB, the Silicon Valley Bank, the GFC, the global financial crisis, the Greek debt crisis, pigs, Asian crisis, whatnot. So here is my suggestion. GTC, the global trade crisis. Back to you.
All right, the global trade crisis, GTC it is then. Prashant, many thanks for joining us. That's the story across the equity and commodity markets for the week. Now, equity mutual fund inflows fell by 14% in March. According to data released by the Association of Mutual Funds, net equity flows saw a dip of 40% from the peak of 42,000 crore rupees in October last year. Now, despite the sharp decline, SIP inflows have remained steady at nearly 26,000 crores. Gold ETF saw a net outflow of 77 crore rupees as investors booked profits after what has been a bumper rally. Prices of cryptocurrency surging, with the Bitcoin hovering near the $82,000 mark after President Trump reinforced his pro-crypto stance. Now, President Trump has signed a bill to overturn a rule from the Internal Revenue Service, that's the IRS, that classified decentralized cryptocurrency exchanges as brokers. The rule had aimed to crack down on crypto users who may be failing to pay their taxes, so relief there coming in for the crypto markets in the US. IT giant TCS reporting its Q4 earnings yesterday. It did miss street estimates on both revenue, profit and margins. When asked about the impact of tariffs on the company, COK Krithivasan said the company was seeing some minor delays in decision-making by clients, but no major project cancellations so far on account of the global uncertainty. Krithi added that customers are in a wait-and-watch mode, but there is no panic yet. Take a look.
Many of our customers are also in a wait and watch mode in terms of what is the end game going to be. But good thing is, like, whatever we are seeing so far, as much as the rhetoric, we have not seen our customers panic. Like there are maybe some programs what we thought that they would kick off, but some delays in decision making. But we are not seeing any major cancellations or no major project ramp downs. Like there are few, but no major. So I don't think there is any major negative reaction.
Well, that's TCS. Commerce Minister Piyush Goyal has said that while India has been talking to the US, UK and the European Union for standalone FTAs, that's free trade agreements, the country will not be rushed into an agreement. Speaking at an event today, Goyal said that India will not negotiate with a gun to its head. Abhimanyu joins us now with more details. Abhimanyu, where are things currently in all of these ongoing negotiations on these 3 FTAs? And, a lot of speculation on advancing the timeline and so on and so forth. What are you hearing?
As per the current estimates, India had exported total goods and services worth $820 billion in the previous financial year, which was a 6% year-on-year increase from the previous FY. India is intending to increase exports further this year. However, several challenges do remain with respect to imposition of tariffs and reciprocal tariffs, also uncertainty in global demand and geopolitical challenges which continue to persist. So India, of course, is exploring newer geographies. What the Commerce and Industry Minister had indicated that though a timeline is usually ascribed to sign FTAs, but an FTA cannot be signed forcibly to adhere to a timeline while forsaking national interests. So India continues to remain engaged in trade negotiations with several geographies, including the United States, with the EU, UK and also several Latin American countries. India is also trying to increase the overall mix of its exports by including more processed goods, more agricultural goods, and more importantly is trying to hedge the risks emanating from a possible fall in demand in several developed economies by possibly looking at places in Latin America and Africa to increase its exports to in order to hedge the risks emanating from a fall in demand from several OECD countries.
हमने पहले भी कई बार कहा है कि हम बंदूक रख के कभी नेगोशिएट नहीं करते। समय की पाबंदियां अच्छी रहती हैं कि वो प्रोत्साहित करती हैं कि तेजी से बात हो, लेकिन जब तक देशहित और जनहित को हम सुरक्षित ना रख सके तब तक कभी भी जल्दबाजी करना अच्छा नहीं है।
That's the Commerce Minister. And staying with tariff, sources tell CNBC-TV18 that India is unlikely to offer unilateral tariff concessions to the US on automobiles. However, the government could lower tariffs on imports of cars worth 40 lakh rupees. And above Parikshit is standing by with more on the government's plan. Parikshit.
Well, India's tariffs on the automobile industry have taken center stage in trade negotiations with US, UK and EU. And for many nations, when it comes to auto tariffs, it's really a make or break situation when it comes to a deal. Sources say, despite the pressure from the US government, India is unlikely to offer any unilateral tariff concessions to the United States in the automobile sector, where the highest tariffs on import of fully built cars is around 100%. The Indian government's focus right now is to reach an early understanding on the bilateral trade deal with the US and get a reprieve from America's 25% tariff on the auto tariffs. But sources say the government is considering lowering tariffs substantially on imported cars, and there is a strong intent to do so as well. The government is considering lowering tariffs on import of premium cars from US, which cost above 40 lakhs with a fixed quota per annum. The government is right now exploring different scenarios to offer tariff concessions on imported cars, but the final decision is yet to be taken. Tesla's India entry would also be contingent on India-EU FTA, as cars would be imported from Berlin and not from the United States. And Tesla would wait and see the kind of tariff arrangement India and the EU reach as well. India would have to offer the same tariff cuts in the automobile sector to US, UK and the European Union, as all three have sought auto tariff cuts. Even response to India's scheme for manufacturing electric cars is likely to depend on tariff cuts offered to US, EU and the UK. While the scheme offers 15% concession import duty over the 100% currently imposed, companies have to commit to making in India with a $500 million investment. Guidelines for the scheme are yet to be issued, and all car makers would first like to see India's tariff cuts before applying for such a policy.
Well, Parikshit, many thanks for joining us.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive Let's now focus on CNBC-TV18's Future Female Forward campaign. Rachna Dhanrajani caught up with Mantra for Change founder Khushbu Awasthi on the sidelines of our Mumbai event. A Bengaluru-based NGO, Mantra for Change is pushing the envelope to close the learning divide. Here's that chat.
You work at a very grassroots level. You start very young. Is there any initiative that you think should be taken when kids are young to sort of imbibe this whole equality and diversity theme when you can in school as a part of education?
No, absolutely. I feel school is the best place to get started with these conversations, because when as a boy and a girl they're sitting in the same classroom, the whole discrimination starts beginning from there. For example, if there are some outdoor activities, the teacher would be far more likely to call out boys to go out and play, right? So how do we catch these things very early on and actually encourage consciously among educators, among parents, to say you have to encourage your girls to participate in such activities which requires maybe physical activities that may require staying outdoors even in late hours. I mean, I come from Bihar, and I remember throughout my childhood I was never allowed to step out of house after 5 p.m. And that meant really losing out on so many wonderful opportunities. And if we can do that in school, I think girls will grow up with that confidence to say, hey, I can do things. In the panel right now in this event, I think Amira was sharing how girls don't take up sales jobs. That's precisely because of this. I'm so afraid to step out on the field. What if something happens? What if someone tells me something? I think these are just mental barriers that we have to overcome, and schools are the best places to work on those things.
Right. You know, from safety perspective, of course, while growing up, all our parents said that you have to be home early before sun. But it's also a part of the societal conditioning that don't go out, you'll probably get dark-skinned or something. And those are the kind of additional barriers that a woman has to go through, and then to be told that, oh, you're beauty with brains and all those things being said. What do you think can be done against this conditioning? Because as women, we also sort of fall for it and become the watchdogs of this conditioning.
I think that's a very loaded question. Yeah, again, going back to the idea of social conditioning, right? Like as I think as parents, as mothers, we have to really change our own perspectives. And I think what's helping is having role models. Now there are people in every area, like whether it's sports, movie industry, or education, technology. We have women who may not be fair-skinned but are doing amazing and are helping at really playing amazing leadership roles. So just celebrating those stories a bit more, showing what real success and real leaders look like would really help change these norms.
Well, in our society, we also look at women as somebody who would go to a different house, right? When you grow up, you have 2 houses to manage, and then your husband's home is your home. All of that, how do we break away from that and say that, no, your life is your life, and then there are additional people in it?
I don't think breaking away is a solution. It's more about how do we bridge the mindsets. I mean, in my personal, with my personal experience, I think my mother-in-law has been the biggest support that I could get after getting married in terms of how I'm able to balance my work and, life at work and life at home. So yeah, it's just having those conversations, showing them, engaging them that what success means to me and what joy, how would I gain joy. And if I take them to my work environment, if I make them meet my stakeholders, my supporters, and when they tell very proudly that, hey, your daughter-in-law is doing great and she's such an amazing leader, I think they also start kind of imbibing that sense of pride. So again, I would just say, don't break away, bridge in, bring people along, and make them into your champions.
Right. Now, you've been doing a lot when it comes to kids' education, be it through partnerships or be it through your own initiatives. How do you think the landscape is changing in terms of the education system that we have, the new education policy? Where do you think this is going forward?
One, I think particularly with respect to gender equity, it's very, very heartwarming to see that at least today when a girl is born in a family, the parents are not asking whether or not to send that girl to school, right? So that has definitely changed, and that's a huge success, huge milestone to celebrate. I think in terms of when girls start growing up and when they reach the age of say 11, 12, 13, that's where the dropout problems start to creep in. And again, a lot of reasons. One, infrastructure in the school. Sometimes there could be issues related to the availability of toilets. There could be issues about eve teasing. I mean, we have been doing these statewide projects, especially in states of Bihar, UP, Odisha, and society has a big role to play. The moment somebody says, hey, you are struggling a bit, rather than saying, how do you cope with that challenge or how do you navigate the situation, they say, come out. You know, whether it's family situations like taking care of younger siblings, girls are the first one whom parents say that, hey, you know, it's your responsibility. You have to take care. You have to support family. I think these are just very, very deeply seated mindsets that need lot of support, lot of hand holding to be come out of. And but the good news is that many of us, many of non-profits, for-profits, organizations that are really wedded to the idea of gender equity and are consciously working on these aspects.
Right. Thank you so much, Khushbu, and good luck for bringing this change about that our society definitely needs.
All the best for this wonderful initiative.
Thank you so much.
Winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
If you look at our FY25 growth, it's been better than FY24 growth. However small the difference is, I believe FY26 will be better than FY25.
We'll decide when to do it increments based on the environment.
So you're deferring wage hikes as of now?
I'm saying, I will not use the word defer, but yeah, yes, it will decide it when it happens.
Or many of our customers are also in a wait and watch mode in terms of what is the end game going to be. But good thing is, whatever we are seeing so far, as much as the rhetoric, we have not seen our customers panic. Like there are maybe some programs what we thought that they would kick off, but some delays in decision making. But we are not seeing any major cancellations or no major project ramp downs. Like there are few, but no major. So I don't think there is any major negative reaction so far.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Hello and welcome to Startup Street. I'm Arundhati Ramnan and with me as always Shruti Mishra and Ritu Singh. These are the top headlines from the startup space. LOLO backs $13.5 million in a Series B round to expand into new markets and accelerate its monetization efforts. The round was led by Singapore-based Play Ventures in participation from new and existing investors like Kalari Capital, Gamescraft and others.
Creative Fuel acquires Miss Malini Entertainment from Good Glam Crew for 6 crore rupees. Creative Fuel to take ownership of the Miss Malini domain name and social media assets, while the talent management vertical of the business stays with Good Glam Group.
Zoop partners with Unicommerce and Shipway to scale its fast-growing multi-channel operations. Unicommerce's one-stop integrated solutions helps Zoop with order and warehouse management, automated shipping and payment reconciliation.
Goldman Sachs backed More Engaged looks to shift its domicile to India ahead of a possible IPO. According to Money Control, the SaaS firm is evaluating a reverse flip to tap into India's favorable IPO environment, whereas listing thresholds are more startup friendly.
Apple airlifts more than 1.5 million iPhones from India as it looks to avoid US tariffs. Amazon CEO Andy Jassy expects sellers to pass on the increased tariff cost to customers. Those were the headlines that we're tracking for you from the startup world. Now we head to the big story we're tracking for you. Tech giant Apple has airlifted 600 tons or 1.5 million iPhones from India in a bid to beat the new tariffs, according to a Reuters report. Apple shipped out about 1.5 million iPhones in cargo weighing roughly 600 tons. The tech giant has been ramping up production in India, which has so far lowered tariff levies compared to China. But Apple continues to make most of its iPhones in China and has not announced any plans to scale back in China. However, as per Wall Street Journal's business editor Peter Landers, Apple is likely to increase production in India by over 15%. Take a look.
They have no choice unless there's a deal very quickly between the U.S. and China, and the tariffs go back to where they were before Trump became president for a second time. Then Apple would probably try to stick closer to the status quo. And there is a lot of uncertainty about what Trump will do because his tariff policies have changed so frequently, sometimes day by day. So there is uncertainty, but in general, the trend for Apple has already been to increase production in India. Perhaps by some estimates we hear, perhaps 15% or more of the iPhones this year will be made in India. And where possible, I think they will try to export more from India to the US to avoid those tariffs.
All right. Also on what's brewing, battlefields are getting smarter, and so is the tech behind them. Leading this defense tech revolution from India is Tonbo Imaging. The Bengaluru-based company has just raised 175 crore rupees in a Series D pre-IPO round backed by Florentry Advisors, Tata Steel Ventures and Export-Import Bank of India. The funds will power next-gen infrared sensors, directed energy systems and autonomous warfare tech. With us now is the man behind it all, Arvind Lakshmi Kumar, founder and CEO of Tonbo Imaging. Arvind, welcome back to Startup Street. Now, Tonbo is gearing up for an IPO. How soon can we expect a listing? And what does this 175 crore rupee funding mean for you at this stage? And with new investors like Florentry and Tenacity on board, how do they align with your vision for growth?
Thank you, Shruti. Thank you for having me. It's good to be back. We're very glad for this investment from Florentry. Matthew Syriac is a very established tech investor. He's led investments in MTAR, Data Patterns, all at their growth stage, and took them successfully public. So we're very glad to have Matthew backing us at this stage. The timing for the IPO would be towards the end of this year. We have finalized our bankers. JM Financial and IIFL Capital Markets will be our bankers for the deal. We expect to file our DRHP sometime in July, August, and we expect the IPO towards the end of the year. We are also grateful for the support of Export-Import Bank of India, who's been one of our very early bankers. They've backed us for a lot of our international programs. It's actually unusual for Exim Bank to actually be a participant in a private equity round. But they've been with us for a while, and this was a good opportunity for them to invest along with the Series D investors. And we are grateful to have them on board.
All right, Arvind, so you're looking to list by the end of the year. But talking about the fundraise, how will this funding fast-track your work in infrared sensors and directed energy systems? Are there any upcoming innovations or deployments we should watch out for?
So, Tonbo traditionally has been building electro-optics and imaging systems, which is the optical system, the computer vision systems, and the low-power imaging systems. Now, we had never touched the detectors, and we had not built end systems or end platforms, which are essentially replacements to traditional conventional munitions. So one of the things we set out to do was, we said we need to be able to push the envelope on building the detector stack, because today the detector is a component which is imported. It comes largely from US or Europe or Israel. And nobody in India designs and builds the detector stack. So one of the things we're doing to do right now with this capital is build new kinds of infrared detectors, very specifically in long-wave infrared and in short-wave infrared. So we have a lot of intellectual property in designing infrared detectors, and we intend to put this to good use in building these detectors. And the second thing we've set out to do was, we've always supplied our electro-optic systems to other people who integrated into their platforms. We supplied it to Israel Aerospace Industries, we supplied to Bharat Dynamics. All of these people integrated into their missiles, integrated into their platforms. And one of the things we decided was that, look, we'd like to start making the end platforms. So we don't want to make the conventional munition platforms. We don't want to make loitering, and we don't want to make ATGMs, or we don't want to make the traditional missiles. Directed energy weapons are the next phase of battlefield warfare, because it allows you to take down large swarms of drones. And so that's something which we are investing in. And we think that's going to be the next frontier in defense.
All right. Your systems are deployed in over 30 countries, and like you just mentioned, including elite forces like the IDF and US Navy SEALs. How has that global traction shaped your R&D, Arvind, and how will this funding help you scale internationally?
So global traction is extremely important to move your R&D, because when you don't know what you don't know, right? And if you build only for the domestic market, or you build in a very small insular market, you just don't know how capable your systems are. So while Israel and the US, both the IDF, the Mossad, and the Navy SEALs, they are not a primary customer, we still chose to sell to them first, because we learned a lot from them, because you're able to experiment with the best of the best. You're competing with other companies who are building and supplying to them, and that allows you to fine-tune your R&D for your own domestic markets. So we find, selling internationally, because when you sell only in one country, it's the value of the blind, right? And the one-eyed person is a king. But when you sell in a globally competitive international market, where someone is buying from you, not because you're cheaper or not because of Make in India, but buying from you because you're the best that exists, that allows you to actually build better R&D. So, I think that's extremely important for any company coming out of India, that they do, strive towards global traction.
All right. Tonbo emphasizes autonomy and real-time battlefield intelligence. With global security threats becoming increasingly sophisticated, how are you preparing for the next frontier in defense technology? You touched upon this earlier, but what's in store?
So, in the past, battlefield was all about people, right? How many soldiers did you have on the battlefield? Then it moved towards, how many tanks do you have? How many submarines you have? How many fighter jets you have? But today's battlefield is changing a lot. Today's battlefield is all about how do you, inflict maximum damage with the least amount of damage or collateral damage to your own soldiers. So autonomy in the battlefield is extremely important, right? So our vision is to be able to assist, augment, and replace humans in the battlefield. So we are building all components of a stack which allows you to have enough intelligence in the battlefield. So whether it is, imaging systems to help soldiers fire remotely, whether it's loitering munition systems so that you don't have to have, be in the line of fire, or autonomous tanks, we essentially build a portfolio of technologies which enable autonomy in the battlefield. Because we think that the next set of wars, and that's what we're seeing right now in Ukraine, that's what we're seeing in Israel, are not going to be people on the field. They are going to be robots. They are going to be autonomous aerial vehicles. They are going to be autonomous munitions. And it's extremely important that India especially is self-reliant, where we own this technology for this autonomous stack.
All right. One final question before I let you go. It is a competitive and sensitive space globally. Where do you see the company 1 or 2 years down the line, and also any targets that you can share with us?
So, it is sensitive in terms of, globally, wars are not going away, right? There are different kinds of being fought. And one of the things which we are seeing right now is, in the past, a lot of emerging markets, our business is the emerging markets. In the past, the emerging markets depended on, technology from the US or Israel or from Russia. Now, one of the things they have realized is all these countries have their own battles to fight, and they can't be necessarily relied upon when these countries need to expand their technology or their arsenal. India is positioned interestingly because India is in the space where we've had great relationships with people in the East and in the West, and India is a great potential supplier to every country in the emerging market as they look to modernize. So the way we are looking at our global expansion is we said, look, let's prove our technology in the developed market. And then let's make sure that everybody in the emerging market essentially can buy from you and buy from India, because they can buy a whole range of unrestricted technology from India.
Right, Anwar, with that, we'll have to wrap up our conversation. But many thanks for your time and joining us on Startup Street. And we'll surely keep a track of your IPO plans. Thank you.
Thank you, Shruti. Good to be here.
Payments platform EaseBuzz has raised $30 million in a Series A funding in a mix of primary and secondary rounds led by Bessemer Venture Partners. Now, the company says this funding is going to help EaseBuzz expand its vertical SaaS stack, enhance product capabilities in online payment aggregation, and strengthen its merchant network and market penetration. Now, EaseBuzz is also entering the offline payment space with POS machines and UPI QR-based soundbox solutions. For more on their plans ahead, joining me now is Rohit Prasad, the founder and CEO of EaseBuzz. Rohit, thanks very much for your time here on CNBC-TV18. Start by telling us briefly about this funding round. How much of the $30 million that you raised is primary and how much is secondary?
Sure. Thanks, Ritu, for having me here. So we've raised overall 240 crores of Series A funding, in which about 180 crores, 200 crores is primary and 40 crores is secondary.
Okay, well, how do you plan to deploy this money then? What kind of product enhancements are you looking at? And how do you plan to strengthen your merchant network?
Yeah, so we would be basically investing mostly in the new products that we would want to build. Apart from that, some leadership hiring will happen this financial year, where we will invest some of the amounts, and also new licensing activities where we're also planning to go into cross-border payments. So these are three major heads where we will invest, apart from marketing and usual operational activities that is also there in the picture.
Okay, so when it comes to entering the offline payment space with point of sale, UPI, QR, solutions, what are the plans there? How soon are you looking to launch these products, and what kind of additional revenue will this unlock for you? Also, this space is quite dominated by a few large players in the market. What kind of market share could you carve out?
Sure. So we are already strong in the online payments, where we are building solutions around payments for merchants, and we are basically verticalizing it with respect to different industries. So we go deeper than any other PA. And what we are doing in offline is that we are basically adding up to the wallet share within our existing online merchant base. So overall, if you look at about 2 lakh merchant base that we already carry, all these merchants will be given an offline particular product, which basically they can use for the counters or face-to-face transactions. And that will add up to the overall revenue. I believe that about 5 to 10% of our revenue share next financial year should come from offline. And we should see a market share in the next 2 to 3 years.
Well, Rohit, you said you have about 2 lakh merchants online. How fast is this base growing? And how many more merchants do you expect to add in the coming year or so, especially as you also foray into the offline space?
So overall, we are adding up, I would say, about 5 to 10,000 merchants on a monthly basis. We see that all these merchants mostly are small, medium-sized merchants, usually in the range of about 10 to 50 crores of turnover. We are very strong in some sectors like education, BFSI, real estate, and even in government municipal corporations, where there is a lot of informal activity in terms of the transactions that they do. So we believe that we can digitize them faster than anybody else, and we're also winning in these sectors. So these are the sectors which will add up in the next financial year.
Well, you have the final authorization from RBI for an online payment aggregator license. You're also in the process of applying for a cross-border payment aggregator license. What exactly are the plans on this front? How soon do you expect to have this in place?
No, so we are in the process of applying, and we should be basically getting this license because we've already been authorized for PA. So hopefully this process should be faster for us. That's what I'm assuming. So hopefully this financial year is when we are assuming this license to come.
Well, we also understand you're eyeing a public listing in the not so distant future. What are the plans on that front? What should we expect overall?
Yeah, sure. So we are a profitable entity. We've been profitable since last 5 years, and we basically are building in a more sustained manner because we are cost effective and we're a little conservative. So overall, we feel that we will be ready for an IPO stage by 2030. because we are growing well. This year, we should be at about 650 crores of revenue with about 25 crores of profit after tax. And in the next 3 years, we assume our revenue before IPO should be around 2,000 crores with, profit should be around 100 crores is what we assume it to be. So that's the size at which we want to go to a public stage and of course build not only for India but also for the global market with similar kind of use cases that we built for India. So that's the idea.
Well, I have to ask you about the most hotly debated topic in the payment space today, and that is the merchant discount rate or the MDR fee discussion. What are your expectations on that front?
I think it should be because UPI in itself has become very popular and we've seen almost every second transaction happening from UPI. So the kind of infrastructure cost that anybody incurs is very high, and we assume that it should happen anytime soon. But for EaseBuzz, it's not something that affects the business because we are more of a software solution provider. We are a SaaS company which has built itself on the payments infrastructure. So we basically book our revenues on the SaaS model, and revenues basically comes from the GTV that we process from the platform. So overall, we basically make revenues from the SaaS that we enable for our merchants. But having a UPI play would basically increase our top line revenues a lot. And the kind of volumes we see, obviously, that will add up to the overall gross profits as well.
Okay, and finally, what are the longer term plans for the company? Any white spaces you want to fill in, new products or distribution that you're eyeing?
No, so we want to be a tech company and we will remain a tech company. We don't want to be a financial institution. I think there's a lot of white space around the B2B play where there is supply chain driven business, where we have built something on the Bharat Bill Payment Operating Unit. We launched this in the last Global FinTech Fest with NPCI. And this product is something that we're really positive about because we are the first aggregator who has built the B2B flow on Bharat Bill Payment Operating Unit. This is one of the first products that will help the suppliers and buyers to come on a single platform and have a complete invoice management solution with the subscription-based management system enabled for automation. So I think this is going to be a big play because ultimately the supply chain driven business is very informal in nature, and that will add a lot of value, I think, for the ecosystem. So that's something that we're really going after.
All right, Rohit, we'll leave it at that. Thanks very much for your time today on Startup Street.
On that note, it is time for us to head into a short break, but it is National Pet Day, and we put the spotlight on Super Tails as India's pet care market doubles in size from 2019. Details when we come back. Stay tuned.
Grow on the go with CNBC-TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community.
Welcome back to Startup Street. In news just in, the founder and CEO of Delivery, Sahil Barua, has resigned as an independent director on the board of Swiggy. The food delivery company informed this to the stock exchanges. In his resignation letter, Barua cited increasing work commitment and said he was unable to dedicate the necessary time and attention to fulfill responsibilities as an independent director. Now remember, Barua was among the first independent members of the Swiggy board who joined 2 years ago as the company was gearing up for an IPO. The resignation comes days after Delivery acquired rival firm Ecom Express in a fire sale.
Moving on, India's love for its pets is evolving and fast, from just $1.6 billion in 2019 to $3.6 billion in 2024. Pet care spending has more than doubled, driven by a new generation of pet parents. But while the emotional bond is growing, access to structured care still lags behind. That's where Supertails steps in. Supertails is one of India's largest integrated pet care platforms, which is looking to transform the way we care for our furry family members. On National Pet Day, we speak to Vineet Khanna, the co-founder of Supertails, on the company's growth plans going forward. Thank you so much for joining us on the show today. You know, India has more than doubled its spending on pet care, right? If you could sort of take us through the kind of trends that you're seeing and what you're doing new at Supertails to sort of, you know, cater to this demand.
Thank you so much for having me over. First of all, happy National Pet Day to everyone, for all the pet parents across the country. As you mentioned about the growth in this category, I think the trends are emerging for the reasons and the pillars of growth itself. There are three very, very distinct areas of growth which is happening. The first one being the growth of population, which is the rising pet adoption. The second one being the growth of knowledge, which means the pet parents that are adopting pets now are getting more aware about their pets, so they have needs which are more knowledge-based, like preventive healthcare or need for technology-based solutions. And the third is growth of involvement, which is where non-discretionary spends and accessories, etc., and categories, those are growing. So with all these three kinds of growth coming in the category, obviously there will be growth happening on the front of the necessary needs, which is food and supplies, on the more knowledge-based needs, which is healthcare, pharmacy, and preventive aspects about their pets, and on the non-discretionary needs, which is accessories, and from the needs to the wants and the desires, all of these trends are getting captured by this really booming category.
Absolutely. But let's also talk about a necessity, right? Like one of that is clinics, and Supertails has expanded into the offline pet healthcare space with your first clinic that you launched in Bangalore. When you made the announcement, you said you'll have 3 more clinics opened, within 90 days. Has that happened? And if you could sort of talk to us about the offline expansion plan and the number of cities you want to be in by the end of this year.
So the idea is very simple. I think pet healthcare in the country is underserved. On our vision to solve for healthcare as a part of the large ecosystem play for Supertails, we'd want to launch clinics in every nook and corner of the country, and that is what we want to do. As a part of that, we've started with Bangalore. We are already live with 2 of our clinics and about a couple of weeks away from our third. So we're living up to a promise of launching at least more than 10 clinics in Bangalore itself, and more than 100 of them in the country in the next 18 to 24 months. All of this fits very well in our ecosystem play, wherein we want to be closer to the consumer and address whatever needs they have in whatever form they have, in whatever channel they have. In that sense, healthcare remains the focus for us.
Absolutely. And you're launching all of these clinics. What do you think are the biggest deterrents when it comes to veterinarian care for pets? How are you going to use these clinics to sort of help reach more pet parents? And, affordability is one of the key things. So how affordable are you?
So first of all, you have to make it accessible, which means you can't be very far away from the consumer. So that's why there would be a need for a dense network. The second is, it takes a lot of hassle and, pain to take a pet to a clinic. And even after that, the anxiety and stress levels are, not, that the pet parents enjoy more, and neither does the pet. So with our stress-free and fear-free certified professionals at our clinic, we solve for the environment of the pets and the pet parents when they walk in, which gives them a superlative healthcare experience. And that is what, matters the most. I think, pet parents put a little lesser, importance to money when it comes to right care for their pets. But still, we would be, affordable and accessible, convenient and quality at the same time. So that has been, our thought process with regards to healthcare.
Right. So access, affordability and quality for every pet parent that's out there. And you claim to have seen 100% growth on a yearly basis, and you're targeting 500 crore rupees in ARR by 2026, right? Are you on track to achieve this? Where do you hope to end this year? And which are the verticals that you want to double down on going forward?
I think by God's grace, we've I think cracking the code well in the last couple of years as well. So we continue to grow, more than 100% year on year. We are on track for the 500 crore promise that we made to ourselves in the timeline that you mentioned. The verticals that are growing, or what is causing this growth, is largely we are now actually coming into form of our complete ecosystem play. What started as a pet supplies business has now transformed into a multi-vertical business, wherein the consumer is brought into the ecosystem once and we address all forms of their needs. The main thing that is playing well for us and the verticals, getting benefit from there, is that we know our customer and our consumer, which is the pet parent and the pet, both very well through a very integrated data and technology layer. So which is where we are very relevant in our engagement. We are very to the point in knowing the needs of our consumers. And that just bodes well for all the needs, all the, verticals that Supertails has. With a specific focus, obviously, healthcare is one of the largest and the most exponentially growing vertical for us, given that, it has been to some extent launched recently, and as well as has a higher potential for growth as well. But deep down within, I think our customer obsession and our, want to not just fulfill, what is necessary and required, but to delight every consumer for every touch point and do it in a very data-enabled way, in a very relevant way, gives us a lot of edge.
All right, Vineet, thank you so much for taking time out and being here with us on Startup Street, and we wish you all the best on this journey going forward.
Thank you so much, and happy National Pet Day once again.
Thank you. Same to you.
Moving on. It's Friday and it's time to take stock of all the deals from the startup world. This week saw a total of 15 deals worth $169 million. According to Venture Intelligence, some of the notable deals included fintech company JustPay got $60 million from Kedara Capital, Axel India and SoftBank Corp, while payments infra company EaseBuzz attracted $30 million from Bessemer, Atai Ventures and Varenum Capital. Consumer health platform Mosaic Wellness bagged $20 million from Think Investments.
And that's not all. Personal care brand Innovis secured $16 million from ICICI Venture, Mirabilis Investment Trust, Nivesha Sambhav Fund and others. Finally, social gaming company LOLO raised $13.5 million from Kalari Capital, Mixi Play Ventures, Rocket Capital and others. According to Venture Intelligence, this year has seen a total of 254 deals worth $2.3 billion.
Well, with that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.
Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show.
Dr. Jaishankar, thank you very much for joining us at the Rising Bharat Summit. You've come here every time we've had a Rising Bharat Summit, so this is your third edition here. But I want to start off with something significant which some of our audiences may also be interested in knowing. It is the number 2,140. Does that hold any special significance for you? I shall enlighten our audience and maybe even enlighten you. That's the number of days that...
This sounds like one of Elon Musk's tweets.
That's the number of days he's been External Affairs Minister. He's the longest serving External Affairs Minister of India since Nehru. So we can have a round of applause for that. And what a time to be in charge of India's foreign policy. You look back at the last 5 years and 10 months now, it's going to be almost 6 years. What do you think has been Indian foreign policy's singular achievement in these last 6 years? One thing, if you were to name, with the mic, sir.
I would say, this is Bharat rising. So how do you manage the process of rise under extremely turbulent conditions? Because managing a process of rise is tough enough, but countries normally hope that you get a very conducive environment. We've got as tough an environment as anybody could sort of. No, not hope for.
Not hope for.
Anybody could actually
imagine.
And I think getting through that. I mean, just look at these last 6 years from a foreign policy perspective. I mean, you've had Ukraine, you've had the Middle East, you've had the whole Indo-Pacific turbulence, you had Afghanistan, you've had Myanmar, you've had COVID, you've had meltdown of various kinds, political changes in our neighbors. Actually the stresses and it's not just change. There have been big events, there have been fractures, there have been stresses, there have been surprises. So it's been as turbulent as it could have been.
I do want to, so since you said it's been challenging circumstances, it's beyond what anyone could have imagined, let's address the elephant in the room, and that is the tariffs that have kicked in today. That's what our business editors have been telling us. The reciprocal tariffs have kicked in today. And first of all, I'd like to understand from you, what is your assessment, what is your reading of, what is going to be the impact of these reciprocal tariffs on India? What is India's strategy to try and deal with the fallout of it? If you could sort of, elucidate what your views are.
I don't think it's possible to speak about what would be the impact because we don't know. What is our strategy? I think that's pretty clear. We decided that we will engage the Trump administration early on this set of issues. We were very open with them, very constructive with them, as they were with us. What we agreed to do was to try to negotiate a bilateral trade agreement by fall of this year. To the best of my knowledge, and I could be corrected here, I think we are the only country after President Trump has assumed presidency the second time, which has actually reached such an understanding in principle. So I don't know, every country, because every country is tariffed, okay? So every country in the world today is fashioning its own strategy of dealing with the United States. In our case, our strategy has a goal, and the goal is to see whether it's possible to actually deal with this situation by concluding a bilateral trade agreement. And I should add that in an interesting way, this has long been our objective. The present situation may have created the circumstances for such a serious conversation. But if you look at President Trump's first term, we were actually negotiating a trade deal which could not fructify. And if one looks even at Biden's administration, we discussed trade possibilities and we ended up with the IPEF initiative. They were very averse to doing a bilateral agreement. So from the Indian perspective, actually doing, working out something bilaterally with the United States is is not at all a sort of a negative or a sort of unwanted situation. On the contrary, it is something which has long been our objective.
But tell me, Dr. Jaishankar, as you take a moment to drink water, you've been part of many bilateral negotiations, trade negotiations in the past. These things take time. You said we're hopeful that the BTA will be wrapped up by the fall. Two things. What happens if it doesn't, and if it takes longer than that? And two, how confident are you that you can actually wrap it up by the fall?
Well, I've always wondered why it takes such a long time. Frankly, I've never figured it out.
You tell us.
No, I've never figured it out because, I see, we have trade negotiations which have been going on for decades. And the negotiators meet, I think, every 6 months or 3 months or 4 months. And I wonder why. I mean, if I were doing a negotiation, I'd be at it till I got the job done. And I think today, when I look back at the last, since the Prime Minister's visit, I'd say mid-Feb, so we're about 6 weeks since then, we've actually had multiple rounds in this period. I think we've had more periods, discussions with the Americans in the last 6 weeks than I suspect we've had with the Europeans in the last 2 years.
Wow. More discussions with the US in the last 6 weeks than what you've had with Europe in 2 years. But you're also sort of accelerating the FTA talks with EU, with UK and so on. Do you think that, this is a 35,000 feet view question, do you reckon that Mr. Trump, by doing what he's doing, is forcing other countries to, start trading more with each other and start, processing these FTAs in a quicker fashion?
Look, you are attributing everything in a way to President Trump. I understand why. But I want you to look at it for a moment from an Indian perspective.
Sure.
Okay? Since the beginning of reform, 1990s, in 30 years, what are your FTA agreements? They're largely to the economies east of India, with the ASEAN, with ASEAN members, with Japan, with Korea, Australia, which is not the same. Now, where are actually your many of these are competitive economies.
Yeah.
Okay. In fact, with most of these countries, we are running today trade deficits. Now, where is the natural growth potential for our exports? It's to the countries west of us. It's in the Gulf, it's in Europe, it's in the UK, it's in the United States, possibly in Latin America. And actually, those are the agreements which have lagged behind. So, it's been our endeavor, I can tell you. I mean, from 2014, for example, we've been pressing the Europeans saying, look, can we re-engage, because we had stopped engaging. Then after Brexit, we responded very quickly to the UK's interest in reaching an agreement. We see an opportunity, in the current situation vis-a-vis the United States. These are, to me, really the priorities which we should be doing. We should be doing it in our own interest, not because some other president of another country says he's created a situation.
I want to talk a little bit about Europe, because you had sort of become a bit of a lightning rod for them about talking about oil imports from Russia, saying how can you import from a country that's gone into war and invaded and so on. And you've laid out very articulately for India and for the rest of the world what India's position is. Now the same Europeans are scampering for an FTA with India. Do you see a double standard there? Or
No. I think you're being unfair to Europe. Yes, you're being unfair to Europe. I think the Europeans were serious about an FTA earlier. It's just we haven't seen that kind of urgency. Maybe their way of working is different. So I can't expect everybody to be the same. So they take, typically they have taken much longer periods between interacting with each other. My point is that, Europe today, I think, realizes the importance of deeper ties with India and the relevance of the FTA for that purpose. We had in the end of February 21 European commissioners led by President von der Leyen visiting India, very unique happening, not just for India, even for them. They don't normally do that. I think there's a very serious message coming out of Europe saying we want to move forward on this. We welcome it, we reciprocate it, and I'm pretty confident that just as we are seeing a very intense engagement with the United States, and by the way with the UK as well, I expect the pace to pick up with Europe. We have an aspirational goal. We'd like to close out the FTA this year, but you know, when we get there, we'll see.
I want to talk about the neighborhood. Last time you were here at the summit, the big concern, the big talking point was the relationship with China, and you had said that the relationship is not normal, and we need to deal with the situation at the border for the relationship to become normal. Now there's been a disengagement process. The Prime Minister has met with the Chinese President. You've met with your counterpart, I think, on a couple of occasions since then. How would you describe the state of the relationship with China? How far away from normal is it?
Well, it's obviously better than the last time I was here. Sure. I think the disengagement, particularly the Depsang-Temchok, was important. We are now addressing, to some extent, issues on the border because there's been a force build-up over a period of years. But there were many other things which also happened during this period. Some of it was a collateral of the situation. Some of it was actually a carryover from the COVID era. For example, our flights, direct flights, stopped during COVID. They were not resumed. The Kailash Mansarovar Yatra stopped during COVID. It did not again resume. So I think there is work to be done. We are at it. We are, sort of trying to see whether a lot of this post-COVID and, parallel to the border tension, the combination of these issues, how much we can progress on this. We are looking at it because at the end of the day, we have always maintained that the situation which we saw between 2020 and 2024 was not in the interest of either country. It was not in the interest of our relationship. And I think there is a recognition of that now.
So it's on the road to being normal again?
Well, I think we are moving in a positive direction. The problem with your profession is you want instantaneous transformation. The challenge of my profession is it's a very arduous and painstaking one.
President Trump has made that the point of conversation. You referred to, we have trade imbalances with a lot of countries to the east, right? Is this, you reckon, an opportunity, again, academically speaking, an opportunity for India to look at some of those trade relationships and say that, these imbalances cannot sustain? Just like America is saying that, an imbalanced trade relationship is not working for them.
Well, we've had concerns. We have articulated those concerns. This is not my direct remit, but I have a visibility into it, and we work as a team within the government. I think one of the issues for us, for example, has been the review of the ASEAN-India Trade in Goods Agreement, ITIGA, which we believe has been unnecessarily prolonged. I think it's important for all countries today to realize that the nature of the global discourse on trade is changing. There are new parameters, there are new metrics of judgment. I think countries will do what they need to do to protect their businesses to protect their labor, to protect their societies. We cannot be an exception to it. So I think we have concerns with many of the countries east of us, countries with whom we have FTA arrangements, and also countries with whom we don't.
Prime Minister was recently at the BIMSTEC summit. You were there with him. It's the first time that he met with the new interim leader of Bangladesh, Professor Yunus. There's been a lot of concerns here in India about some of the statements that have been made by the leadership there, some of the goings-on the ground, whether it's attacks on minorities, so on and so forth. From within whatever you can divulge in the public domain, what did the Prime Minister tell Professor Yunus, particularly on this comment about India's northeast being landlocked and, Bangladesh being the gateway to the ocean, and also on the attacks on minorities, on both those issues?
No, look, I think the main messages from our side, which came out at the meeting, one, that our relationship with Bangladesh, for historical reasons, is a very unique relationship. It's a very fundamentally a people-to-people connect, much more so perhaps than any other relationship than I can think of. And that's something we need to recognize. So, it's not necessarily one of the garment of the day. Secondly, we have concerns. We have concerns about the rhetoric which is coming out of people in Bangladesh. We have concerns about radicalizing tendencies we see. We have concerns about the attacks on minorities. And I think we were very open about sharing those concerns. Again, as a country which no country wishes Bangladesh well more than us. That's in our, I would say almost in our DNA, if you can say that. And as a well-wisher, as a friend, I think we hope that, they make go the right way and do the right things. And as a country with which has a democratic tradition, democracies require elections. That's how mandates are given and mandates are renewed. So, we hope that they go down that path.
From well-wishers to not-so-well-wishers, I want to talk about Pakistan. Two questions. One, because this news just came this morning, the Tahir Rana, who's the convict in the 26/11 attacks, is likely to be extradited perhaps in the next 24 to 48 hours. So I want your comment on that. And second, this whole thing, Balochistan seems to be in a bit of a flux, and Pakistan has resorted to its old, copybook that, India is doing this, so on and so forth. So on both those issues, I would like your
there's nothing really new that I can say on the Tahir Rana issue. I mean, obviously, we welcome the decision of the American legal process. On the Balochistan issue, look, I don't want to say anything. I mean, there is clearly a very disturbed situation there. People are suffering there. And if I say something, there'll be finger pointing. So I don't want to say it.
But just on the principle that, every time India says there is terrorism emanating from Pakistan targeting India, you're met with a stone wall.
Look, Zaka, I don't have to say it. It's visible. Even they say it. But it's not like I'm making an accusation and everybody in Pakistan is there saying, no, this is completely untrue. You have people in Pakistan who openly declare that they are doing terrorist activities in India. So this is not an argument. I mean, this is not a hypothesis. This is something they proudly claim. So I think, we've always maintained, not just us, I mean, all sensible people have maintained that if you start a terrorism industry, you will be consumed by it. And that is exactly what we are seeing today in Pakistan.
So at a time when, there's an acceleration for regional partnerships and so on, you don't see any future for SAARC, given if Pakistan does not change its tack and does not use or employ terror as an instrument of state policy?
Well, let me pose that question to you. I mean, would you be okay if we were nice to each other in the morning and I come and attack your house at night?
Certainly not.
I mean, would you live with it?
Certainly not.
Then why would you even ask me that question?
No, just in the context of SAARC. Let me also come to last few questions. The relationship with Canada. We've had a pretty, certain issues that plagued the relationship in the last couple of years. There's going to be an election there soon in the next few weeks. Are you considering reinstating the Indian High Commissioner in Ottawa? Is there anything moving in that direction post the election?
Look, again, I'm very cautious in anything I would say publicly about Canada. They're heading for elections. I don't want a remark become an issue out there in their politics. For us, the direction in which ties have gone is something which, again, we believe has not served the interests of Canada. The kind of latitude that was given to people espousing extremism, secessionism, violence, if you import such people and encourage such people, it's going to have consequences in your own landscape. And, what we were saying, in a way, the cautions we were uttering inside the room, unfortunately, played out outside the room as well. So we would like certainly to see, after all, it's a big country, Commonwealth country with whom we've had, generally good relations. Yes, things, again, for almost exactly the same reasons had happened in the 80s. So to the extent that, we see them recognizing the problem and, not giving that kind of political space to such forces, if we would then naturally take that into account. I mean, I have no gain by having bad relations with Canada. I would like them actually, I would like both sides to mend the relationship. But I would also like people to recognize that there's a real problem out there. And the problem is, the kind of space given to these forces.
One final question. We're anticipating President Putin of Russia to visit India at some point this year. In this new emerging global order where, President Trump wants to end the war, he's talking directly to both Russia and Ukraine, how does India figure in this emerging matrix? Because India is one of the few countries, yesterday the Prime Minister was here, India is one of the few countries that can speak to both Russia and Ukraine and has good relations with both.
We've had a very, I would say, both a sensible position and a helpful position. Sensible in terms of very early on, we took the view publicly that this conflict cannot be resolved on the battlefield, that it was necessary for a return to dialogue and diplomacy, that it was important for the parties concerned to talk to each other, because that was not happening. And there was actually a view at that time that everybody else will gather together and somehow produce a solution, and the other party, in this case Russia, would be confronted with that as a choice. Now, much of what we held in 2022, 23, 24 has actually come to pass. And there's no vindication in it. I mean, in fact, if anything, there is regret that, so many lives have been lost, so much time has gone, so much damage has been done, not only to the countries, but to the global society and to the international economy. But, okay, now there is a greater understanding that we need, appreciation that we need to they need to engage each other. So, to the extent we can sort of motivate that, foster that, encourage that, we would do that. And again, I maintain that we've always, what we said in Moscow was not different than what we said in Kiev and what we said in third places. And we've tried to, have conversations here, take those there with the approval of each party. And so that's one part of what we've tried to do. The other is, there have been different dimensions of this conflict which have popped up from time to time. Different countries have weighed in, and I think it's such a really serious issue. It's natural. It's not a single or a small number of countries. We approve of all of that. I think anything which any country can do or any group of countries can do to help, we welcome that. We've tried to do a few things ourselves. We weighed in with other people. It could be some of the nuclear-related issues, or it could be grain corridor, or whatever it is. But the objective is to help. The objective is not to put yourself ahead. I mean, we're not, actively searching for a role. But if, either of the parties or any other country comes and says, look, can you help out on this? We'd be open to doing it.
And I'll wrap up. I know you like cricket a lot, so these 2,140 days as the longest-serving foreign minister post-Nehru, you look at it as a test match, as a T20, as a one-dayer, or this is your career with an asterisk, not out. S. Jaishankar batting at 2-1-4-0, not out.
No, I think on this one, look, it's been, again, it's been a very interesting heading to 6 years as foreign minister, but I treat it to some degree as a continuum of what I was doing earlier, and in a way, I think the next few years will be extraordinarily challenging. It'll be challenging for the world. It'll be challenging for us as a country, precisely because we have to keep rising through all this clutter, through all these tensions, and to be associated with that process, to be given responsibility of that process, I think is a great honor, it's a great responsibility, and I'm very, very, grateful for it.
Dr. Jaishankar, thank you very much for joining us at the Rising Bharat Summit. You've come here every time we've had a Rising Bharat Summit, so this is your third edition here. But I want to start off with something significant which some of our audiences may also be interested in knowing. It is the number 2,140. Does that hold any special significance for you? I shall enlighten our audience and maybe even enlighten you. That's the number of days that...
This sounds like one of Elon Musk's tweets.
That's the number of days he's been External Affairs Minister. He's the longest-serving External Affairs Minister of India since Nehru. So we can have a round of applause for that.
If you look at our FY25 growth, it's been better than FY24 growth. However small the difference is, I believe FY26 will be better than FY25.
We'll decide when to do it increments based on the environment.
So you're deferring wage hikes as of now?
I'm saying, I will not use the word defer, but yeah, yes, it will decide it when it happens.
Or many of our customers are also in a wait and watch mode in terms of what is the end game going to be. But good thing is, whatever we are seeing so far, as much as the rhetoric, we have not seen our customers panic. Like there are maybe some programs what we thought that they would kick off, but some delays in decision making. But we are not seeing any major cancellations or no major project ramp downs. Like there are few, but no major. So I don't think there is any major negative reaction so far.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
If you look at our FY25 growth, it's been better than FY24 growth. However,
Hello and welcome. You are watching Global Eye and I'm Parikshit Luthra. US President Donald Trump has put a 90-day pause on the sweeping tariffs announced on trading partners last week. The baseline tariff of 10% continues to be in place, but the rest has been suspended till July. However, Trump refused to exempt China and instead hiked the tariffs, instigating an all-out trade war between the two countries. After a lot of back and forth, the Chinese Commerce Ministry said it will not react to any further tariff increases by the US. It said, and I quote, "It will no longer make economic sense and will become a joke in the history of the world economy." End of quote. China's President Xi Jinping held bilateral talks with Spain's Prime Minister Pedro Sanchez and said there are no winners in a trade war. And China is not afraid. This was his first reaction to the US tariffs. Meanwhile, US President Donald Trump called Xi Jinping a good friend and a smart guy as he expressed optimism about striking a trade deal with China. Many countries have reached out to the US to strike new trade deals, and India is one of them. Government sources have told CNBC-TV18 that US Vice President J.D. Vance may soon visit India for trade talks, and Indian officials could visit the US. Sources also say it will be difficult to have a bilateral trade agreement in 90 days, but the form and shape of such a deal could be decided as well. All right, let me go across to Todd Buchholz, who is a former White House official, in fact, the director of economic policy at the White House. Todd, thank you so much for joining us. You've had tremendous experience in working with the White House on economic policy, a regular commentator on US markets as well. Give us a sense that Trump may have paused the tariffs, the reciprocal tariffs, but the 25% tariff on steel, aluminium, autos still remain. The 10% baseline tariff is still in effect. The China tariff has been hiked to 145%. Enough grounds for a recession?
Well, we're certainly putting the world economy in a squeeze, in a vice, and the screws are turning and the risks are rising. And one way to see that is through the performance of the bond market. Usually, when the prospects of a recession become greater, when it looks like the economy is weakening, interest rates go down. But this week, and this is what really, I think, had shaken the White House and shaken the Oval Office, interest rates started crawling up, which meant world investors were getting very concerned about the stability of the global system and the stability of the US Treasury market. And so we are now at the point where the word stagflation is rising. That is recession plus inflation simultaneously. So that's the risk. That's what President Trump needs to avoid. I believe that's why he imposed on himself this 90-day hiatus to allow for further negotiations.
Right. That indeed is an important point. So you said that there is, of course, a risk of recession. There is a risk of heightened inflation as well. Could you give us a sense of the factors that are going to weigh in and weigh on the U.S. markets in the months to come? We've seen a strong impact on Asian markets, European markets, but when it comes to U.S. markets itself, they have been rattled. Many have said there's going to be a further downside. What are some of the pain points that you expect when it comes to job, when it comes to cost of living?
Well, look at it this way. We all, well, I shouldn't say we all, thank God most of us survived COVID, right? Many millions died. During COVID, there were massive supply chain problems where companies could simply not get parts. If you were building a refrigerator, you might be able to build the shell of the refrigerator, but you might not be able to find a little tube that connects the ice tray to the ice dispenser. So you had refrigerator companies that had items that were 98% done, but they couldn't deliver them because they weren't 100% done. So even though trade may be a smaller part of the U.S. economy, exports are a much smaller part of the U.S. economy than other economies, including India. So for instance, India exports about 22%, I believe, of GDP is from exports. In the U.S., it's about half that. But still, if the last piece of equipment cannot be accessed, you don't have a refrigerator. Same thing with automobiles. The U.S. automobile companies, even if 98% of the automobile parts were made in the U.S., if the last 2% includes the radio and somehow that was imported from China or Japan, that becomes a big problem. So we've got product markets that are going to freeze up because of lack of parts. And if they freeze up, that means that the shop foreman tells the workers, well, you better go home. There's no point in building 98% of a car if we can't sell it. That leads to layoffs. And if tariffs are increased, that means there are higher prices on the imports. So all of that is a kind of constellation of chaos that has now been unleashed.
Right. I would also like to ask you about the worries and what certain senators have called for a probe for into insider trading. They went on to say that Donald Trump, by first saying that this is the best time to buy, and a couple of hours later he announces a pause on tariffs. This was nothing short of insider trading. What do you feel about that? Trump's current decision only driven by politics, or could there be a larger economic interest, or are there certain companies or people, individuals getting benefited?
Well, no, honestly, I think it's a silly argument that somehow Trump was manipulating the market in order to make money for himself. No president wants the market to go down. Anytime a president talks about the stock market, he's going to say it looks like a buying opportunity. That's been going on since Franklin Roosevelt in the 1930s. I believe that Donald Trump sat in the Oval Office watching television, listening to advisors, and he suddenly decided 90 days, and I'm going to announce it now. I don't think it was a matter of he whispered to various people, hey, buy now. I'm going to make some announcement. Nobody knows about it, but you can make money. No, that's not how it works. President Trump is in some ways a mercurial character. He's a what, in some ways, you could call him a devious character in his pursuit of what he calls the art of the deal. But I don't think it's a matter of trying to enrich certain people by giving them inside information.
Right. We just heard Larry Fink a short while back on CNBC, and he said that it's painful to say, but the US has become the biggest trade destabilizer. And he also said that there is going to be a worry about, embedded inflation in the months to come. Would you agree with him to some extent?
Well, look, ultimately, inflation comes down to what the Federal Reserve does. It comes down to monetary policy. So if Jay Powell, my old buddy from the Treasury Department, if he doesn't provide any more money, then while it is true that the price of imports may go up, there won't be enough money to pay for those and keep other prices where they are. So in other words, the price of imports may go up, but other prices will be forced down. That might mean, for instance, people don't go to restaurants. People conserve or economize on non-imported products. So I think the initial impact of higher tariffs is, yes, prices will be going up. But then what you're going to see is downward pressure on other parts of the economy because there simply won't be enough money in the overall system to pay higher prices for all the imports and pay higher prices for domestic products.
Right. I would also like to ask you about the long-term impact of what Donald Trump has done. Do you feel that a course correction, as some believe that Trump has initiated by putting a pause on the reciprocal tariffs, do you think there will be a further course correction? These reciprocal tariffs will be completely set aside, or you think what has happened right now is going to have a long-term impact and impact the U.S. economy over the next 4 to 5 years?
I think President Trump wants to settle down on the chaos, especially, as I said, in the bond market. Here's what your viewers need to remember about Donald Trump. He began as a developer. Actually, he spent 65 years as a real estate developer. My grandfather was actually a friend and colleague of Trump's father as a real estate developer. What do real estate developers want? Low interest rates, low financing rates, which is why this week, when he saw the chaos leading to a sell-off in U.S. Treasuries, leading to a climb in interest rates, that's when he backed off. So I think he is now bracing himself and trying to figure out how to declare victory on trade without pursuing a global trade war. So maybe increasingly we are focused more and more on China, but I think for countries such as India, where the president has a very warm relationship with Mr. Modi, I think there is going to be better news coming on the trade front. And I'd say the same thing for Japan and many other U.S. trade allies, partners, and competitors. You know, I'd written a piece recently that said nations that march together should trade together. That is, if we, the U.S., have joint naval maneuvers with